And there you go. I hope you enjoyed week one. It was a little bit of basic, I would say, but definitely very, very important and hopefully a good eye opener for most of you. And hopefully also a little bit aha moments because yeah, that's the basics of how they induce these retailers left and right all the time. And now, slowly but surely, we are ready to start the fun with week two. So week two is Discover Intraday Mastery. What are you going to do inside this discovery session or week? We, of course, introduce you to technically intraday mastery already. So we don't mess around anymore. It's straight into intraday mastery. We will look at the beauty and clarity of intraday trading, of how clean it actually can be if you structure it properly. And we know out of experience that that's something most traders struggle with, like to find like where you even start from and where to end. And now you will never have that again because you always started the same time and same point with this intraday mastery. That makes it very, very structured and amazing to follow every day, literally similar. And that's the power of intraday mastery, where you know exactly where to look and what to expect after that. So of course, we will dig into a little refresher about week one, just to give you the basics again, right? And then we already will dig into the lit cycle, and that's again where the true fun begins. We show you the beauty and simplicity of the lit cycle. And of course, we have multiple other cycles like the daily cycle. But first things first, the lit cycle will show you how to do it wherever you want, right? So independently of intraday mastery, just to give you the basic cycle of how they induce literally everyone all the time. And then, of course, the beginning of intraday mastery, the daily cycle. We will show you one of our basic cycles we have, not all the cycle variations as of now, because there's multiples. And of course, we don't want to blow this week completely out of the roof, right? So we start off with the daily cycle of what to expect out of a normal daily cycle. But be aware, there's also multiple different daily cycles, which we, of course, cover in different weeks. And then one of the most insane things ever, we dig already into the simplicity approach. And that's where a lot of minds will be blown and you will be, oh my God, that's insane. And guess what? That's literally only week two, right? But you will see how crazy that shit is, and obviously you can imagine of what to expect overall. So enjoy week two. It's absolutely amazing already, and from there on the true fun just begins. Enjoy and have fun. Like pretty much what is going on inside this world, how they're doing it, how they have all this knowledge, how do they putting all these things together and deliver price like so efficient for them and so pretty much inefficient for the retail traders. That's of course why 90% of traders lose money in the markets. Who are those people? Again, they have the smartest people in the world. So starting with the syndicates, the people or the companies to have all the data, the brokers, the liquidity provider that provides them with all the hard numbers to know exactly when people are buying, where's the liquidity at, and so on and so forth. Then, of course, they're having the brightest scientists, which provide them with the knowledge of the how pretty much and the what, meaning technical analysis, fundamental analysis, and all those reasons, also indicator trading, tool trading, whatsoever. That's all the reasons retailer have, right? We have the data, we have the reasons, technicals, fundamentals, tools, indicators, whatsoever. And then, of course, we have all the psychologists, meaning the pretty much the psychology reasons of why do people enter, because of FOMO, of course, excitement, of euphoria, even sometimes even being afraid of not taking a position, even being afraid of taking a trade because maybe you are afraid of losing money, and so on and so forth. That's all the psychology reasons. They know, of course, exactly what makes you excited, what makes you fearful, what makes you, gives you all those types of emotions. And of course, they're building it all inside these markets and taking advantage of that psychology reasons. And of course, they know very well about what's going on. Now they're taking all this information of the data, the information of the reasons in terms of the fundamental technical analysis tools and whatsoever, and also the psychology reasons. And of course, put it all inside the Enigma, which is of course an AI, which builds it all together. And this Enigma, of course, takes all this information and delivers price, how it's obviously effectively built the liquidity, and to order to take it out afterwards. Of course, who put it all together? We don't know. We have a very good understanding, and we just overall can call them the architects. Your fundamentals right now. So, I mean, kind of getting there, right? But of course, the objective for today should be more like this. Not really fighting, but at least making some proper moves in here, right? And again, remember, day 1 and day 2 should not bring you to the stage where you can head on Monday and go into the charts and like trade all the time. That's not the objective what we're trying to do. We want to give you the basics so you can take this whole week then and just backtest what we gave you, make some markups, see the overall cycle, see the liquidity buildup, see the inducements, and see the overall daily cycle components to put things together. And then next week, we show you obviously way more in detail stuff, give you more confluences, give you some more tools, and then we will dig into trading. Okay, so just write that down. There should no be trading the whole week until we actually show you how to trade it. So this week, backtesting, practicing, getting the foundationals good. Okay, so just some quick revision about what we covered so far. We started with the basics of the inducements. Of course, we have the main inducement areas, how they, of course, induce breakout inducements. And you see this is the most obvious form of liquidity. The moment you see these equal highs or equal lows, and someone even asked us, they need to be equal. No, it can be something like this as well, whatever. It should not be too obvious. If it's something like that, obviously that's not equal anymore, right? It's more like a structure at this point. But again, if it's like whatever, close to equal, that is perfectly fine. It acts like a liquidity. They will take it out and they go lower, okay? So that's the most easiest form of liquidity. The breakout inducement, of course, always spot these equal highs, equal lows. And of course, we have the reversal trader. When these points get broken out and then retested, they enter it in here. I always enter it long. And then we have the same thing for smart money, where they have your demand zone with some sort of imbalance. They're faking these zones a lot, give the false reaction, taps into there, and then they expect the price to move higher. And then, of course, we have the trend traders, which they try to building a trend, show the whole world that they're building the trend, and of course, trick everyone in the illusion that the price will go in this direction forever. And of course, they're using it all for what? Of course, the inducement here, inducement here, inducement here, and inducement here. But before they do it, of course, they build up the liquidity, show them the breakout, show them the retest, show them the reaction of the supply demand zone, and show them the trend. That's how they trick people in. And then, of course, the moment everyone is in the wrong direction, then they can take it out and then obviously move in the different direction. Okay. Then, of course, our structure master Alex gave a pretty good example about the efficiency of the pullback that helps you identify in the bigger picture of it. For example, we showed you in green, that's the valid zones you can look for. For example, if you have this demand zone in here, and let's say this creates an imbalance inside this area, it's completely valid, right? Of course, to tap in, but also now we're talking about this zone when we have this equal lows in here. And this acts as the inducement, and this creates the imbalance area, and maybe also induce something to the left, which is liquidity in here maybe, right? So this becomes a point of interest for your obviously zone you want to get retagged. with the mitigation, obviously, after, guess what? The internal break of structure, or in this case, break of structure in here. Then, of course, you expect something like maybe even liquidity buildup in here. This acts as the internal inducement now, and now mitigates the bigger picture inducement in here, right? That's totally valid until price action goes to the bigger demand zone in here. And then, of course, you're trading in line with the overall higher time frame trend. The difference is, though, if you have the same scenario until here, like if you cut out all this one and just look at this right here, it's the same exact thing. You have the build up in here, inducement area, perfect, maybe grabs liquidity to the left as well, but then taps into this overall demand zone first. You see, it never really gets mitigated in here. It taps into the overall demand in here. Then again, there's no reason anymore to that this get mitigated. It obviously will be broken. And that's why this zone in here gets invalid afterwards. And that will be called, again, the efficient pullback in here. So just a quick recap about that. I hope that's clear. And I think it is. So definitely we can move on now with all the traps combined. So again, what do? Of course, they're faking the break of structure. They're breaking the structure here, stop loss is getting built up, right? They're building the trend, stop loss is getting included as well. New trend again, of course, building some more structures, more stop losses. Then smart money traders come into place here. They're getting the reaction. They're putting their stop losses, of course, in here as well. Then they're taking it out. And then, of course, we're done for the play. But before they're doing it, they're always building up this false trend. They always give these retailers all their reasons to entering their positions to the wrong side of the market. Then the final inducement high. Then of course you wait for the internal break of structure, and then you look for these imbalance zones. How structure got taught by Alex. Okay. Then of course if you look at the charts, of course that's for example a 1 minute chart. It's always the same. It doesn't matter if it's a 1 minute chart or a 5 minute chart, as we told you. In terms of basic structure, again, you're always looking for these liquidity buildups, like in these equal lows, right? You're seeing the false trend being built up. It's never got an inducement to the high side, and everything they got, like obviously liquidity buildups, even here and here. Then this is finally the inducement of these equal lows. Then you're having this internal break of structures, obviously very minor in here. Then getting the pullback, mitigating this demand area, right? And then of course you're getting the internal break of structure, and then you can take a look at this one, and then obviously aim for the main break of structure, and then go for these areas to move higher. And of course you can do the same thing for breaking the whole thing down into time frames. So if this is the 1 minute chart overall, what do we do? On the 50 minute it would look something like this, and on the 5 minute it would look something like this. As you can see here, the 5 minute is very clean in terms of this imbalance zone, right? This is the imbalance from here to here, and gets perfectly mitigated. Of course, you break it down to the 1 minute to get even tighter zones like this. And as you can see here, gets perfectly mitigated after the inducement to the low side, main break of structure now, smart money trap before that, makes this type of movement. And again, we can give it a weight right away. These movements in here, when they're inducing something with speed. Speed is very, very important to move further, because again, what do these candles do? These huge candles in one side direction. They causing this FOMO, they're causing this, oh my God, the market moves crazy in this direction. Don't let me miss out that move. Oh my God, right? So again, these candles with speed are called vector candles. And if we dig more into like inducements, you will see they happen all the time. Again, same thing here. If you look at this in here, this candle was solid black at some point. After they broke this structure point in here, grabbing the liquidity. So all the breakout traders and the whole world who sees this short trade in here, or this bearish cycle or whatever, bearish trend, right? They're seeing this excitement of this candle being fully black and like, oh my God, I need to jump in because now we have a new lower low, whatever. This thing will go forever. And in order, this is the inducement. That's how our understanding switches to the whole world. Because again, the whole world sees this channeling downwards, bearish. We see the inducement grabbing the liquidity, and then internal break of structures, filling the imbalance, and then of course taking out this minor liquidity, making the new main break of structure now. Then we look at this point, obviously with the imbalance area, we refined it, And then, of course, we expect the mitigation to move higher later. Okay, but of course, it will get clearer the moment you're tagging or adding the whole into the cycle. Just another one, very easy one. For example, this is the 5-minute one. You see it's always the same anyways. So again, equal highs building up here. And again, same thing, equal lows building here, main break of structure. This is the inducement before that, grabbing the final point in interest here, right? Of course, this becomes the inducement, creates the imbalance area. Now we're having an internal break of structure. So guess what? This becomes the extreme with the imbalance that should mitigate it later. After the main break of structure confirms it, of course, we expect price to come and mitigates, delivers price fairly from the inducement and after the break of structure, and goes for, of course, the liquidity in the other direction. Anyway, so to make this whole picture clearer, because some might ask like, okay, what about this though? Like, why is not this one a point of interest and we look for short in here? That's a very solid question. You should understand why not. First obvious answer is internal break of structures. Why is this not a point of interest then? If you just use the structure, let's see, why not this one? No break of structure yet. This is the point, obviously, that created this overall push. So this point needs to be broken first in order to lock in this area. Did that do that? No. It stayed short of that, never broke it here, and then comes back. So this is a no valid zone. So this gets induced. Now you have an inducement, and guess what price action does? Makes pushes, lower, 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 makes an internal break of structure. We don't care about this one, to be fair. We care about the main break of structure to here. Now this zone gets locked in, confirmed by structure, and now we can expect price come higher, mitigates this area, builds process imbalances in here, and then of course you trade the order flow, and after this, aim the next. And again, as you said, very good. Gray, that's also, you see these candles, huge candles to break these zones. That's also these vector candles with the inducement, which is always very juicy. And if you notice it, they do it all the time with speed to make people even more excited. And we can make it even more obvious, right? Because we have even more something to make it even clearer. It's of course now the Asia range, right? We always want the Asia range to be induced, best case in London or Frankfurt, and then obviously goes the other direction, right? So if we just include the Asia range in this example in here, guess how clean it will become out of a sudden? So just by this understanding now, everyone should see that this point in here will definitely not be a point of interest. We never induced Asia low. We created equal lows in here. Never get a break of structure anyways. Of course, this gets induced, best case in London Open, right? Then we have a valid break of structure in here. This becomes the inducement with the imbalance. We expect this to be mitigated. And then, of course, price can continue lower to aim for the higher time frame liquidity. That's how we slowly combining and digging deeper and putting things together and make it clearer and clearer and clearer. And hopefully this in here is already clean to almost everyone in here, because that is essential to understand so far. We're combining stuff. We started slow, as you can see, but now we're just starting to combine. And now we do a lot of repetition to get this play into your head, because again, just because of one or two examples, that's not enough. So pretty much to sum it up, so what do we do if we just analyze this intraday play? We have Asia range. What do we see right away? They did a false break of structure. So you should not get induced by this area, as we just had this example right before that, right? You should already know that this becomes a smart money trap. Of course, it has imbalances whatsoever, but it is Asia high. And of course, you expect that to be induced, right? So guess what? We can mark it up as a smart money trap right away. And they induce low to do what? To go higher. They tap into this area to fake the false reaction. Of course, they do it on purpose to make it seem like, oh yeah, this is valid. And now they're adding positions even here and expect this. Whatever, that's the reversal traders or the smart money traders. That's also not what we do. We expect the smart money trap. Asia range got never induced to the high side. Right, so now what we expect after, of course, we expect the inducement. Then we look at the clock. Okay, perfect timing. London Open. a little bit later, but it's completely fine. That's why, by the way, we created this box, right? So of course, it's not always to the minute, but that's why we made a box. So it's obviously a little bit of a time difference in here, right? And of course, what do we expect after this one? Please let me know what should happen now, just by the understanding of this intraday play. There you go. Perfect. Love it. There you go. There's the first tube, but guess what? Now what do we have? Now we have the inducement confirmed by timing, confirmed by the false break of structure, confirmed by the smart money trap, inducement of Asia range high. The whole world is buying that thing. Look at the channel they're building. They're doing it here before, inducement low first, building the channel here again. Now inducing all the breaker traders long. The whole world is long. Obviously now London comes in, says thank you for the information. Everyone is long now. Let me start our session. Now they're doing an internal break of structure. And by the way, just to clarify that, very easy stuff. This one is not a break of. Oh well, maybe actually make that. Let me make that clearer. So let's make it like this. This one in here is not a break of structure. This is just a lower low. Like this would be a break of structure. Okay. Always take the structure from the left. Again, this one is not a structure point. This did not lead to a new high, right? So you always need to take the structure point to the left. As you can see here, this one, this push in here led to the new high. So this becomes a structure point, and now this one gets broken. So this now is a break of structure. You see the difference? Again, if it just makes this in here, that's just a new lower low inside this. This does not break anything. But the moment it gets lower than this point, which created the new push, of course, this is now your valid break of structure. And of course, you expect the mitigation in these areas. Okay? Makes sense? So now we have it. Now we have this break of structure in here. So how they're faking the break of structure here in the wrong area. So they're building all these traps all over again. You see how they do it on purpose, but now we're just utilizing it with more confirmation. So this is Asia high. So of course, this is a false break of structure to induce people the wrong direction, of course. Now everything is locked in with all the confirmations we gave you. Inducement of Asia range, timing confirmed it, building up the whole false trend, inducing low first, giving a smart money trap, and then inducing finally high to stop out every short sellers. Now we're having a break of structure in here. So guess what we can do next? We find our mitigation area with imbalances or demand zones, right? Or in this case, supply zone, whatever, it's all the same, right? Guess what we expect after that? After the internal break of structure, after the inducement of timing of Asia range, of course, a mitigation. So what should come next? A reaction. Now we're getting a main break of structure. So what do we expect next? After main break of structure, how Alex teaches them, the push that led to the break of structure is this one. This one has also an imbalance. This is the push that led to the break of structure. So of course, like this, you mark out again the mitigation area with the imbalances, mitigates it. And question for everyone now, very easy one. What should be our target if we took this short trade? Where should we target at least? There you go. 2 people got it right. Perfect. There you go. You guys are picking up very good. Perfect. Of course, Asia low, done. Perfect trade. Okay. So just to sum it up here, it can look like this, of course. This is the ideal scenario. Of course, that happens not every day. You have to understand the bigger picture. It can look like this, where it doesn't give an internal break of structure. But of course, something like this is freaking gold. That is literally a gold mine if something like that happens. If you have an inducement in London Open here, then you get an internal break of structure, creates imbalances, and then make something like this on the 1 minute. So this is the moment you break this zone down into the 1 minute and see something like this. And that leads us to the next thing we will cover is build up, internal break of structure like here. And then, of course, this is a liquidity area above this mitigation area. Then price induces this internal structure, internal inducement, and simultaneously mitigates the bigger picture in here, the 5-minute play. And that's how you refine trades later. Then, of course, this whole thing will play out in the overall direction. And that's how you're combining time frames later. Okay, how to enter and stuff like that, of course, we show you all in day 3 and 4. This week is just to understand the basics, but we're not covering trades. Okay, we don't, because if you cover trades, it's too much. It's too much. That's why we need to first get you some material and to backtest it. Then on day 3 and 4, we dig into how to actually trade it. But as of now, see the overall picture, Asia range, building the short trend, inducement low, London open, internal structure gets broken, internal break of structure, creating imbalance zones. Now you're looking at the 1 minute, seeing this internal structure play, building up liquidity, equal lows above the structure point or above this, in this case, demand zone. Find the imbalances, whatever, refine it like this maybe, right? And then of course expect the inducement internally of here, simultaneously mitigating these areas. And then of course you take a look back at the bigger play and aim for Asia range high. Okay, beautiful. And of course you have all the traps combined just to know how they build up liquidity of the internal plays and stuff like that in order to identify where they should induce next, and makes it easier for you to identify the liquidity properly. But of course we show you so many examples. The lit starter kit is literally like this, right? So understand the overall cycle of the internal plays. Of course, you have this external inducement in here. Best case, again, if the lower time frames look like this, you have this internal break of structure in here, mitigates after the inducement of London open. Then, of course, makes this bigger internal break of structure. So now this becomes valid as well. And now see the internal inducement building up liquidity. This by itself is the inducement. But what does a bigger picture do? Mitigates the overall area. And of course, this becomes a smart money trap because again, we expect the liquidity to be taken out. In this case, Asia highs even being an equal highs. So makes it even more choosier place to target for. So expect the smart money trap to give the false reaction, to trick people the wrong direction. And then of course, being broken. But before they do that, they're even faking the triple bottom or triple top even once, giving a false reaction. Then of course, inducing finally. And then you can do the same thing the other direction. Is an external inducement outside of Asia range? Yeah, because as you can see, if you're just analyzing the day, this is an overall push in here, right? So this is the main push for the day. So the moment this, of course, this push gets induced, it's already an external inducement because again, the overall push for the day, which is in Asia, gets induced. But of course, we expect it even with the inducement of Asia. To push price higher, they induce low first and vice versa. Meaning if they want to go lower, they induce price high first. So again, if you just look at the random days, whatever, that's Asia range in here, gets induced low first to do what? Push price higher, getting your break of structure, creating your imbalances. That's the mitigation. We can look for more highs now. Next day, again, we will not do that for every day, but again, what do? Induce low first, mitigates this area. This is the order flow now. And of course, to do what? To go higher. And over again. I do it literally all the time. Again, if you look at the last day, why not? What do? Again, building up, inducement low, Asia range, creating this equal lows in here, induce it finally then, mitigate these areas to do what? To go higher and aim for the higher liquidity in here. It's over and over and over and over again. Again, if you look at the bigger picture, it's literally always the same. It doesn't matter when you look at charts, it's always the same. Those induce high to go lower, induce low to go higher, induce high to go lower, induce high to go lower, all the freaking time. I do it over and over again, Just you need to see the bigger picture and see that better. Again, if you even zoom more out, it's the same thing over and over again. Right, guess what? Asian range, induce slow to go higher. Asian range to go induce low to go higher. Asian range to induce low to go higher. Asian range to induce high this time to go lower. And so on and so forth. You continue it. It doesn't matter where you are. It's always the same thing. It's always the same exact thing. Just need to identify properly. Okay? So pretty much we will be like this. Remember, this is the retailers thinking like, woo, woo. Let's revise like why some of the survivors are still in the game. So if you look at retailers in general, maybe some of them actually make the stuff work. Maybe there's even traders in the whole industry that make obviously a very good living out of it. But what's the main difference of those people who make it? And what's the difference of those people who shatter in the long run? So what you see in here is a warplane or an aircraft, whatever you call it in English, from World War II, all again, right? And what you can see here in these red dots is all the areas where the plane got shot, but then removed to the airplane. What is it called? Like, what's the freaking landing space area? How's it called? I forgot the freaking name. You know what I mean? When it returns, let me know what it is. Airport. There you go. Oh my God, what's wrong with my English? So again, if the airplane actually returns from whatever the battle, they analyze all the aircrafts and obviously try to see what's going on. And all these red dots simulate where the airplanes got shot when it got come back from war. So question from you, for you, where would you armor these airplanes if you're now building them again? Where would you armor them? Most traders armor the wrong parts and they try to protect and save where it makes no difference at all. Then you would see the answer is we need to focus on what actually keeps the plane flying and what drives the plane and not what does not make a difference anyway. So if you rethink this example now, if that is an airplane that come back from a battle and it got shot here or here or here, it obviously came back. So that means the airplane was still flying. But guess what? What does all the airplanes have in common here? It never got shot here, or it maybe shot here, but then it never come back because there's no red point in here. So that means if the airplane gets shot in these areas where there's no red points, that just means that is pretty much the places or the parts of the plane which have a significant role. And if you get hit in the engine or in the driver's seat, whatever, or in this area, you will crash. See the difference? So if you armor it here, you can save the material and save the weight because again, if you get shot here, it's most likely that you still can fly. But if you get shot here, you will crash. So you better armor these areas. And a few of you already marked up very, very good. And I'm so proud to see. because that's essential. And I'm very glad that we have some people in here that already think a few steps ahead. If not, then again, hopefully now it makes sense. Focus on what actually keeps the plane driving and flying. And most traders, which are doing it for a while, and I hope Daniel is here, by the way. So I love that guy. He's a trader for like a long time now. And I think hopefully you get some aha moments already in this time. You can tell us your journey a little bit when you have time for it. But for example, he's trading for like for 16 years. You can confirm if that's right. There you go. I love it. Right. So that's dedication right here. So we just need to work on the things that keeps obviously flying and focus less on the points where maybe it doesn't work. Right. Or maybe, again, maybe you tried that in the past to focus a little bit on the wrong areas. So hopefully we get you to these points which matter the most. And I hope so far you're having a good some moment already. Right. So with that being said, what could be other reasons though? Like, again, now we know like that we should focus on stuff that works. But again, so what pretty much stops the plane from flying in the first place? If you now obviously transaction to the trading analogy, so let's see what actually stops people from flying. So obviously it's emotion, it can be FOMO, it can blame other people. Like if you bought like a course from a guy with a Lambo and said like, oh, I blame this guy, he taught me shit, whatever, or market condition, this was news, or that was FOMC, Or of course, if you have wrong or even no risk management at all, too emotional in general, like cannot be not only FOMO, but the fear of losing or being too euphoric or whatsoever, gambling aspect of it, whatsoever, then maybe also quitting too early. If you just try it out for like a few weeks and then say like, oh shit, whatever, I'm not a millionaire yet, so I will quit that shit. That's quitting too early, of course. Then maybe no consistency. That means, of course, if you don't show up every day, if you just think like you can show up like once a week and look at charts like for 5 minutes, what the hell? What do you expect after that, right? Maybe reverse range trading, that's some sort of psychology as well. Again, if you're making a losing trade and then think, oh, I need my money back, whatsoever, double down on the next trade and shit like that. Or, of course, wrong trade management. And that will be a huge part about intraday trading, because guess what? If this is Asia range, for example, you got the perfect trade in here. Perfect buy trade, whatever limit order hit, like you saw us do it all the time. Perfect limit order, zero drawdown whatsoever. Then the mitigation in here after the break of structure, perfect. Also with a limit order, perfect, zero drawdown. Also, oh yeah, my God, then you're up like 1 to 10s, 1 to 15s. Awesome, awesome, awesome. But guess what? You have the wrong target and think this will go up here. And then the whole thing gets a break even. That's horrible. That's wrong trade management. And we will dig into that a lot as well, because not only the entry is important, the entry only is half of the rent. Like a good entry is obviously necessary and essential, but the right exit is what actually makes you money. The moment you're closing out the trade, that's what makes you money, not the entering the trade. The closing makes you trade. And to close it in the right areas, that of course is the most important point, because if you don't do that, you're just giving it away or getting a break even in the worst case, right? And of course, not having a trading plan or proper rules. Again, what we will give you is all technically step-by-step formulas, even with the cycles. It's literally step 1, step 2, step 3, timing, step 1, step 2, step 3, timing, so on and so forth. So it will be very easy to follow up. Okay, so the other question is, what makes and keeps the plane flying then? Or in other words, for traders, what keeps them in the game? It's obviously being patient, let the market come to you instead of chasing it. Again, if you see Asia range, whatever, in here, and now this is the inducement high this time, and you should not chase the market in like, oh, I entered here, short. No, just be patient. Know that this is an area of interest and should come back, gives you an entry in here, and then goes lower. Right? You'd never chase the market. That's a huge thing. Just be patient. And again, this is the hardest part, because you need to be patient and know that they will come back to fill these areas. And that's again the time aspect they will use against you, because they know you just want to execute a trade right now. Just run into the charts and give me a trade right away. That's not how it works. You need to be patient, of course. And make the analysis, and then be patient. Let the market come to you instead of chasing it. And of course, take control over your own faith. If you look at this one, it's exactly the other thing. You don't blame whatever. You don't write me a mad email if you hit a one stop loss because you tried something, whatever. No, you actually should see what's the issue and sort of understand, like, maybe there's an issue. If there's anything else, whatever, we can talk about it. But first, try to see maybe you did something wrong. Of course, you need to start at you, and then you can blame me afterwards, right? Okay. Anyways, then again, use proper risk management. We also will give you like a proper trade management tool, which we call the execution helper, to make sure that there will never be a blame on wrong risk management or no risk management at all. Because of course we give you a tool for MT4 and MT5 that also makes sure that you have proper risk management even for market executions, which is insane. Okay. And of course, trading what you see and not what you want to feel like. Of course, like, just if you see like, oh yeah, but I feel like it should go up and on. No, trade what you see and don't make stuff up. Okay. And of course, stick to your plan and focus. Of course, we give you a proper plan. Just focus on that because it's a proven thing that works. And just focus means, of course, follow one course until success. Okay. And show up every day. Very important. Show up every day. Repetition, repetition. Practice what we show you. And of course, backtest, backtest, backtest. And keep emotions out of it. That's literally an instant changer. If you just not afraid of losing money. I mean, it's hard for a lot of people, I know, but if you just get into this mindset, keep emotions out of it, the whole thing will be so much easier, right? And of course, know the when, where, and why. Of course, we will give it to you and just understand what is going on. And only take trades that fall into your trading plan. Again, we will not make stuff up and then just following the rules, okay? So then again, we just dig again into the basics of the retailer backtesting strategies of why it doesn't really work. Because again, that's why we pretty much discovered that these market conditions change all the time. And that's why retailer backtesting doesn't work on the long term. So if you program a normal, strict expert advisor whatsoever, on the long term, it will always fail. Maybe it works short time, but in the long term, it will always fail. Okay. Right? So that's why we focus on the reasons why those happen. We don't focus on these crazy strategies, like whatever, these retail strategies. No, we dig so much deeper to understand what is going on with the inducement, build-up, mitigation, because every market condition can change. These three main things can never, ever change, because that's how they deliver price, induces them in the wrong direction, and then mitigating their own imbalances, which they need to be mitigated, or price needs to be fairly delivered. That's the only three facts that can never ever change. Okay, but all these other retail stuff that can change, of course, right? Because it's just random stuff. So that's why we dig deeper into that, right? So again, just an example, the S&P 500's volume, for example, skyrockets since the 90s. The yield curve, for example, has shifted, causing the 30-year bond to lose volume, and the volatility in gold has dramatically increased over the last year. Okay, but question, like, why test a strategy on market condition that occurred years ago? And that's some issue as well if some people dig into charts and back test, which pretty much on charts would happen like 16 years ago and shit like that. Like, what's the point? That's why we, in most cases, show you literally charts, examples of how we did yesterday, from literally Friday. That's not stuff we show you from like whatever 5 years ago. It worked there. No, that's stuff we show you literally from 2 days ago. Think about that. 2 days ago, and we teach you that now. Like, how much more reason it can be. So again, if the Manchester United prepared for a game against Liverpool by studying tapes of the 1975 team, what the hell? Like someone would question this coach sanity. It doesn't matter what's going on like 5 years ago or 15 years ago. The only thing which is the most important is what happens now. Now. And guess what? These retail strategies, they're around for decades. Why we even focus on that stuff? It never worked and it will never work. So you need to focus on what happens right now. And that's, of course, the cycles and all the stuff we give you. And that's, again, examples from literally 2 days ago. Okay? So anyways, so when the majority of traders lose money in the markets for so many reasons, again, why do they keep coming back? Why do they keep trading this nonsense? Again, because the architect, you remember that guy, of course, they will feed these fishes from time to time and make it seem like, of course, in hindsight, that these retail strategies work so good all the time just to keep the wheel spinning. I hope everyone saw the movie Wolf of Wall Street when they talk about how to keep the customer in. Just keep the wheel spinning, because whatever, right? Don't let them out. Just keep it spinning forever and create this illusion of these nonsense strategies for all the time, pretty much. And that's why so many people keep trading this nonsense and don't really wake up and dig into the real reason, because they look at chart and see, yeah, but I see there's a trend forming. That's a trend line. I tried the third touch. It works in hindsight. Yeah, nonsense. Okay. Anyways, so what we will do, and again, before we dig into the more advanced stuff here, you need to make me a promise here. Okay, because there is one absolute rule we use as lit traders, and that is we never predict, we will react what market is doing. That will help you so much. And if you're starting out, you will see how, for example, structure in general will be so much helpful. Because again, if let's say you understand like the Asia range, whatever, you understand they should build a whatever cycle in here, false breakout, awesome. You should not predict now, oh, I'll take a sell here. No, just wait for confirmations, for example, like whatever, internal break of structure. There's your imbalance, that's your decisional. Now imbalance mitigation, other components which will teach you later. And then of course like this. Now you're reacting and you know this one will be a point of interest later on after the inducement, after the cycle is built to the upside. You're reacting to the market. You're not predicting and, oh, let me take a short here. Gosh, let me chase the market. No, you just wait until the market comes to you. And then best case, we enter always with limit orders. Right? And that again keeps FOMO away because you're just putting your zone and you react what is going on. We never predict. So everyone together, we never predict, we react. Okay? Awesome. Liquidity inducement theorem. Pretty much that's what we will do. And later on, and of course, we will look like that. Right? Strong as shit. So we will look into now the 4 main steps, and that's universal facts. Okay? That will always be the same no matter what. No matter what market, no matter whatever. We have 4 main steps, bigger steps. Again, that's why it's main steps. Okay? And we of course start with number 0. And number 0 will be, first, we will always identify the liquidity. That's the first thing we will always do before we even consider doing anything. We need to see what are they doing, where do they build up liquidity, where's the next liquidity zone, where's market most likely to go for, because again, we need to understand what is going on. We will not predict, we just see and line out these zones before, of course, market goes there, so we're not surprised anymore. So that's why we identify the liquidity first. Then we have something we call an intraday cycle. And then we need to understand like where we are in this intraday cycle. But of course, we teach you exactly what this internal cycle is in a bit. But then the next spot would be looking for an inducement. Again, if we identify the liquidity, then we understand where we are in the cycle, then we can expect, of course, an inducement, and only then, we're looking for a trade opportunity. And then the whole thing repeats. It's rinse and repeat. It's literally very easy steps, and you will always need to do it in that order. And if you do that in that order, you will have a very good time in the markets, okay? Because you have to understand one very important thing about these markets. The markets, of course, they can be very rapid. They can be very speed-wise. They're creating all these crazy pushes whatsoever. So, and now if I give you like a little analogy about how to build a little bit more sense into that. John Danaher, which is one of my favorite guys of all time and one of the best Jiu-Jitsu coaches or Brazilian Jiu-Jitsu coaches in the world, for example, trained like best Jiu-Jitsu players in the world like Gordon Ryan and stuff like that. He gave an amazing analogy about fighting in general. And he asked, so let's say you're one of the best fighters in the world, and you get asked like, okay, so I heard whatever, you're like one of the best coaches in the world about fighting in general. Like, what is the basic approach of fighting? What's the safest way of fighting? Because again, if you get in this unfortunate situation, you need to fight. Of course, you will not swing random punches with the dude and get hurt yourself and maybe get knocked out. No, there needs to be a good approach to actually do that in that worst situation. And again, trading is literally the same exact thing, because again, you need to kind of fight the market. And you don't want to exchange like random haymakers with the market. No, you need to fight safe if you want to fight. So now if you think about the market or a guy, pretty much, like what is a human person capable of doing? And now we take the analogy of a spear thrower. So if you look at this guy, how he throws a spear, okay? So look at this. His whole body completely, pretty much full force, he extends his whole body to throw the spear in full force as much as he can. So he's pretty much extending his whole body, complete kinetic energy, completely just throwing it out there. Okay, awesome. So what does that mean though? So what happens if you take this guy now and just put him on his knees and let him throw the spear? So how much or how far do you think he can throw the spear out of a sudden? Probably not like whatever 80 meters anymore, maybe only whatever 30 meters in the best case, if that's a very good throw then. But what happens if we actually take this guy and put him on his back and then he needs to throw the spear? He probably cannot even throw it 5 meters anymore. So that's how you have to approach the markets very similarly. So if you, again, take the analogy of fighting, what's the safest way of fighting? Because again, you want to make sure that the guy cannot completely extend his body and whatever, sprint at you and whatever, gives you a haymaker from the side. The safest way of fighting is, of course, getting the fight to the ground to take this rapid movement away from him. Of course, you can avoid the punch, but then again, this guy is still standing and can want to run at you again and swing the punch. Same thing with the market. So how can you take the market to the ground? Because again, if it's on the ground, the kinetic energy, that the rapid completely extension is gone. Okay, it's more safer on the ground and it's way more unlikely getting knocked out whatsoever. Or a different point is you're getting in line with the punch. Again, if that is JP, right, and he wants to punch me, what I can do instead, I can whiff the punch and then obviously throw him over. Maybe not, because he will throw me over, but anyways, you get the point. You can either avoid the punch, get him on the ground, or go in line with the punch. But guess what? Going in line with the punch is harder. Okay, so if we go back into the cycles, so what are we going to here? Identifying liquidity. That's really identifying what's going on, identifying your empowerment, whatever, identifying what's actually going on, what's happened to go next. Then where you're on the cycle, and then again, you expect the inducement, which is the punch. So if you're getting more experienced, you can add a different step in here, and you roll in line with the punch. Does that make sense? So again, if you have Asia range in here, builds up the buy trend in here, never breaks out, builds like a false break of here, So what do you expect already? Now London Open is here. What do you expect already? You expect the inducement high and you can roll with the inducement, but then get the hell out of there. And then of course you expect this. So you can do either two things. You wait for the inducement to happen, or you trade in line with the inducement before it happens. You roll with the punch. But that's the advanced approach. So the safer approach is to wait until the inducement is done, and then you find your trade opportunity. Again, when does it happen? You have this or whatever structure point here, inducement, let's call this inducement, internal break of structure, getting the market on his back, internal break of structure, finding the mitigation zone after the inducement. There you go, mitigation, and then go. That's the safer, way safer approach. That's taking the market on the ground and getting the force away of being whatever. The inducement can be like this. And you're chasing the market and getting punched. No, you wait until the market is on its ground, show its intentions, and then you line with it. Okay? Or, of course, you can take this buy if you expect the inducement, but then you need to get out of there. Okay? Sounds good? Slip like Canelo. There you go. That slip was actually crazy. That one was really good. So, and then again, this is the overall main steps we gave you, but in overall you have to understand that note, you can add or remove steps. That's just the basic guidance we give you, but of course, all these steps are identification areas and processes. And each one of those will, of course, be discussed in way more detail. But for now, I just want to understand this overall fact. So again, the moment you're getting more experience, you can trade in the inducement, taking the momentum and speed. Of course, that always leads to very quick and awesome trades. But again, it's dangerous because again, you're literally rolling in line with the punch. And again, it's better if you wait for the miss of the punch, wait it out, and then he falls over because he loses balance. And then you wait for the break of structure and enter after that. So for this week, again, we will show you some even more intense stuff. But for this week, before we continue, I want you to be like this. This lioness in here, again, look at it. It sees so many preys, whatever you want to call these things. My English is completely whatever, buffalo. I don't even know what it is, right, in English. But again, you see, it easily could rip a few of those like things apart. But guess what? It's just being patient for whatever reason. And for this week, you should be like this. Just observing and seeing what is going on. You should not jump in the markets right away. You should not fight right away. Practice the basics, what we give you even today. Put everything together and make sure you're prepared to fight. You should not fight before you're not prepared. Again, there's a saying, the more you sweat in training, the less you will blood in a fight. Okay, so better make sure you sweat in training a lot to avoid whatever an injury in a fight. And again, don't be like this kid and jump right away and don't know what is going on and try to utilize everything, whatever, and jump in the market and confuse yourself and whatever, include like an indicator in that and da-da-da. No, just be patient like a lion. Take a lion, again, what does he do before he sees like a herd of buffaloes? What is he doing? Goes the lion here and just jumps straight into this herd and just attacks one random one? Of course not. What is he doing? He just lies there and observes. Observes the herd and sees and observes and finds weaknesses. He sees maybe he looks at the smallest one, maybe the oldest one, the weakest one, whatever. Maybe this guy is limping in here. Whatever. He finds obviously weaknesses in the whole herd, and that's how you find weaknesses in the market in terms of liquidity areas. And then you just wait for the right moment. Again, if this buffalo herd, whatever, goes to water place, and then this old one in here, which has a limping foot, he wants to drink, and out of a sudden, he slips. Again, that's the moment. Then you jump in. But you wait for the right moment. You don't jump in right away. First you observe, then you wait, and the moment an opportunity shows, then you jump in. Make sense? Awesome. So again, 4 main lit steps. So what is going on here? First things first is identifying the liquidity. We already touched upon this, but of course to go deeper and obviously give you a quick summary as well, liquidity is a form of attraction all the time. Again, we talked about it so many times now, but again, the easiest forms, of course, for example, something like this, building equal lows, that's maybe an inducement in here. That's your imbalance areas. Price makes like this. You already know that this point in here is liquidity. Then you expect the inducement of this internal structure, internal inducement, to make overall complete the overall play to mitigate this area. Price is fair delivered, and then it can continue higher, right? Again, that's how you utilize the liquidity aspect. You just need to spot, of course, these areas before they even happen. Otherwise, how would you even trade them if you can't spot them? Enigma delivers, of course, market by hunting this liquidity. So first, they will build up the liquidity. First, Enigma is saying, okay, let me build a buy trend now to get everyone on the buy side. Let me show this huge, strong support area to get everyone on the buy side. To do what? To build up liquidity, and then, of course, to come back further, building up, showing the trend, everyone is buying, thank you, grabbing the liquidity, making an imbalance, making an internal break of structure, comes back, mitigation, there you go. First, observing and waiting what they're doing, showing the equal low, showing the false trend, showing the inducement, showing the imbalance, showing the internal break of structure, coming back here, mitigating, off to races. Okay? Liquidity and inducements go hand in hand. You need to understand that. Of course, if there's liquidity, there most likely will be an inducement. There cannot be an inducement without liquidity. Again, if it's just like a trend, there's no inducements here. There's whatever, where's the liquidity? They're just building it up. This is an inducement. It induces long, short side, and then it continues higher. That's your inducement in here. So if this creates liquidity in here with equal lows, guess what? You expect the inducement of this internally in balances here, mitigation, and you can go higher. See the difference? Important. Lower time frame can always become higher time frame liquidity, and when it does, it becomes very important. The concept of liquidity, just to make it very clean for everyone, just because they're building up like these equal highs in here, does not mean the market needs to go up immediately and grab that and go lower then. No. The concept of liquidity only works if they show their liquidity. So this equal highs in here can stay there for like a week, and then a week later, they will get neutralized. It doesn't need to be always the case. So again, just because you identify the liquidity doesn't mean it needs to be taken away right away. And that's how you need to start being like a chess player and have to think a few steps further or ahead. Right? So the liquidity doesn't always need to be taken out immediately, because again, if it would be like that, of course, people and also programs will notify that. That's why they need to show the liquidity first, and sometimes they show it for a while. So again, just before we show an Asia high in here with equal highs, and they inducing low here, doesn't mean necessarily they need to go immediately up there. No, they can mess around in here, make this, go sideways, whatever, inducing low first, whatever, and then the next day happens, okay, Asia range, inducement low, and now grabs this liquidity. It doesn't need to be immediate all the time. You see how that works? Of course, we'll show you some way more better examples later. Okay? So one of them being, for example, this. So if you have Asia range, normally as you do, what do you see already? Liquidity is being formed. Awesome. So what do you do? What do you see at this point already, just to back up pretty much what you learned so far? What is going on here? Please let me know what they're doing in here. What is the rest of the world doing? What do they see? Is that a double top? Whatever. Is there a huge ass resistance area? Is that a trend forming? Is that a whatever breakout in here? I don't even know. What is the world doing? So are they selling, or are they buying, or what do they do? Right? Selling, of course. They're selling. So now what is going on here? Play it with your mind. So now what did you learn? What is going on? Session changeover. London kicks in and says, thank you. Thank you, thank you, thank you. Chup. Right? Make the first chup. And now guess what? What is going on? Now you're having your internal break of structure. Finding your imbalance area. This is already mitigated. Let's say like this. That's the more advanced approach of entering. That's the safer approach of entering. So you will learn from us, of course, how you can enter those areas, like literally with a limit order. Then you can learn how to enter these areas as the first re-entry, and then the safer entry in here. All of those 3 entries, of course, we will show you in depth on day 3 and 4, and of course, in way deeper depth on day 5 and 6. Right? So technically, we'll always have 3 entries. The extreme, the first mitigation, and the second mitigation. Of course, there's so many multiple confluences for this trade, for example, and stuff like that. We will learn them more. But for now, just understand, the overall bigger picture. So what should happen next? Question, is this an area you should sell for? There you go. Love it. Smart money trap. Of course, what should do a smart money trap do? It gives a false reaction to trap even more people in. And guess what? This is the double top. What do they do in here? They don't smoke it right away. They show even a little pullback to fake the triple top now. And then, of course, inducing in here. Same thing, gives the now going on. Now inducing all the people going long now. What do we see? We see, of course, a break of structure in here. What is going on? We identify our liquidity zones or imbalance zones. There you go. Mitigation. What can we expect? Moving lower. And then we trade the order flow. Same thing all over again. Seems easy. You will see in charts. It can literally be that easy. Sounds too easy, but it's definitely not. You will be surprised and you will love it. So if you look at the cycle though, like identifying the liquidity. So where is all the liquidity in this point? Of course, if this is Asia range, of course you see already there's liquidity, but where is it? It's just internal, it's just intraday liquidity. So of course they're inducing low to induce even this medium areas from the previous day in here. Doing it when London open. Of course, best case scenario would be like in here, mitigation here, but let's say they just didn't do that. It's okay. Where's the next liquidity areas? Of course, above the next equal highs, liquidity areas whatsoever. What do they do before that? They're building even more equilibrium, liquidity, right? Forming whatever the quadruple top whatsoever, and then finally taking out. And then guess what? Of course, they can reverse. So what's all the fishies doing? Of course, first of all, we have lower time frame liquidity and medium liquidity and higher time frame liquidity. Okay. To make it even easier, again, Alex will touch upon it like in a second as well. He, of course, will use multiple time frame analysis, but for now, of course, we will stick mostly to the 5 minute to give you the overall bigger picture. And just think about that. If we can talk about like 5 minute structure for an overall bigger picture, that's funny, isn't it? So that's how we see how much details we actually can get out of the whole thing. Of course, we can utilize like other time frames at the 15, even the 1 hour, sometimes in the 4 hour, whatsoever, the 1 minute. And of course, if you're getting more advanced, you can use the 30 seconds, of course, as well. As you can even use the 15 seconds. It's totally possible. Just need to understand one thing. Because if you're being observant, it's all about being observant. So let's see if some people actually notice something. Did you notice something in here? There you go. This guy's a third hand, right? So again, the moment you're getting into the seconds time and whatsoever, you need to be very observant. You need to be very patient because, of course, there's a lot more traps and so on and so forth. It's all the same anyways.
So I will be covering a little bit more about the liquidity aspect and what you can typically expect in a day. So in front of us, of course, you can see this illustration, and you probably have guessed what this purple box right here is from the last week's modules. It is Asia range, of course. So remember, Asia range typically holds a lot of liquidity in the form of breakout, trend line, equal highs, equal lows, also known as your support and resistance, and then more so the newly founded smart money concepts that we identify your mitigation zones and how they fail, essentially. So remember, again, go back to those videos if you may be struggling a little bit with the liquidity aspect, because right now I will also be covering a little bit more on that aspect. So currently looking, I can, of course, identify basic liquidity aspects. Now, I know this is an illustration, but again, for orientation purposes, this is a much easier way to learn. And don't worry, right after this example, I will have a chart example as well. So we essentially have equal lows. And remember, what is your Asia low? It's always a minor inducement. So currently price has induced right at this point, minor inducement out of Asia range. So likely this is the beginning of the day from what it looks like. It could be Frankfurt or London at this point. So what we essentially have then is, of course, the minor inducement right here. We get those vector candles essentially here. Now apply this to your charts as well. I know it may look a little bit weird with the lines, but honestly, it's very key to understand this whole cycle and how it can help you essentially understand the whole lit cycle. So what do we have now? We've had a minor inducement low. It's important to understand if we want to take buys and we identify that our inducement is complete, do we also have a target to the high side when it comes to liquidity? Because essentially when we've had an inducement low, we have essentially induced enough liquidity. In this case, it being a minor inducement. Now remember, if it's a minor inducement and we get our reaction low, that does not necessarily mean our inducement is complete. We may get reactions like such over here, taking out liquidity points, only for price to then continue. So it's not wrong to take the buy that may occur here, but then of course take the sell over here when you understand that there's more liquidity to the left. So that's a key understanding of how you can trade essentially all the pushes in that case. So if we look next, what is our next targets? We have, of course, equal highs. They're pretty clean at that point. So I'm sure you can understand, of course, very clear equal highs right there. So next, what we also have is the reaction. So after our minor inducement reaction, we get, of course, essentially mitigation areas. We have other confluences that will help you enter such after the inducement, as well as areas like such over here, and how you can essentially take more than one entry. And also at the same time, we have these internal inducements of points like such here. So essentially, if that provided somewhat of an imbalance or whatever it be, that would be your smart money trap or FFS in this case, as of course price has blown through. Again, you will be taught the smart money trap and FFS a little bit later on. So just for now, keep it in your brain. Don't worry too much right now. You will be taught a little bit later on in week 2. So don't worry. And then what we have, of course, price smokestack gives this reaction. Everyone here is pretty sad. It's not sad, it's an X, but everyone's pretty sad at that point. Then you take the buys right here. Again, smoke through. What happens at this point? It doesn't mean it's complete or anything. You get again the characteristics of this nice reaction. It has to make sense though, so you can consider, okay, that's also a vector candle, but it's continuing to vector. We're still in the Asia range over here, so it's not necessarily valid, as well as having our equal high target over there. So what we then have, of course, okay, another reaction from that as expected. So essentially you're going to get these reactions like such over here, up and down movements, where people call this stuff higher highs, whatever, high lows and all that stuff. But we don't necessarily see it like that, as that's not necessarily the way to understand how the market moves. It's more so understanding that we're taking out structures over here. So it's not really like we're creating higher highs or higher lows. It's more so we've induced this structure point now. So have we induced enough liquidity to the left? If not, then okay, we're likely going to expect the same type of characteristic to continue and essentially take your buys from zones like such. So that being said, what will we get? Of course, we still have our range over here like such. Price, of course, what does it do? The retail traders are happy. Why is that? Not so good at drawing my straight lines, but I'm sure you can understand why. Essentially, let's clear my line and show you a better version. Is a triple top. So of course, if you're a resistance or support trader, you're going to see this as resistance and essentially take sells. And it does give you that reaction. And that's why essentially a lot of people take entries like such, because they see the rejection already over here with this reaction there. So essentially what they may do is they may even take it upon this little reaction up. And then, of course, price then makes essentially what they see as a major move at that point. So what happens? Of course, price smokes through them, unfortunately. So that maybe you are aware of this, especially if you traded this strategy where price essentially smokes through you. So what happens at this point? Now, even here, we can identify price has essentially broken out. So your breakout traders will, of course, take their entries like such here, as well as whatever you want to call it, your demand to supply type of thing. So essentially, that was your demand zone over here, or supply, sorry, to demand. Got that the wrong way around. So your supply, because essentially we expected price to go bearish. It failed right there. So when price returns, maybe it's of course now a demand zone, so it continues. So that's essentially where your breakout traders will get into the market, right in those areas like such. But what happens instead is we get our main inducement for the day. So when we have our main inducement for the day, it's not only the inducement of Asia high being the minor inducement, it also means that we induced medium or even major liquidity to the left. So of course, it's really important to look at your liquidity aspects to the left in the same format that we've of course covered. So we have our main inducement to the left. We also get these really nice reactions in these zones like such. Of course, these are your trap zones right there if they present, of course, imbalances or mitigation zones. Same thing, smart money traps essentially appear everywhere. This, of course, fails. What will happen here? Does that mean maybe if this one failed, this one will continue? Not always the case. And the reason being is we've had the main inducement, which is likely a medium or major liquidity being taken out. So at that point, we can likely expect price to take out all of these lows in this area like such. So let's see what would likely happen. First, we get a mitigation. So a nice mitigation here. Again, entry helper likely confirms this, and hence why you can take sells like such. Of course, smart money trap in this case. Why is that? Of course, we get a reaction. So what happens? Price now smokes through. Smart money traders are sad over here or at break even, if not at a loss, if they're not managing their positions correctly. What happens here now? Price reacts really nicely. What does that mean? Maybe another mitigation, of course. So you can take these consecutive entries like such. Again, same thing here. Is this an FFS? What is it? Smart money trap, FFS. Of course, we mark up as an FFS because it likely will blow through. Could also be a smart money trap, of course, but as we've had one here, it likely means this point over here will get smoked completely. So let's see what would happen. It would get smoked, take out all of these points. And remember, this point here where we had our minor inducement in the beginning of the day, remember, either Frankfurt or London. In this case, that is a minor inducement. Even though it does look significant, and it can be, it of course is minor purely because it's the same day's price action. It can never really be a medium inducement if it's the same day. So with that being said, of course, what happens then? It forms the continuation, and that's how you can trade your continuation trades. Now, of course, this is very, very brief of how I've explained it, and everything will become a lot clearer, especially next week in week 3. You'll be taught all the variations of the cycles as well as how to enter. So week 3 is a very, very juicy one, should I say. So with that being said, I will show a chart example as it's probably a little bit more relatable to look at a chart. But again, for orientation, do keep this in mind. So chart example, Euro GBP. So currently recording today, and of course this was the yesterday's price action. So today being the 29th, I'm looking at the 28th purely because I can see more price action in this case as it's played out, so you can understand. Now I'm looking at it in an overall hindsight, so you can see the picture essentially. So what we currently have, of course, is several liquidity points. So if we just start on the left and how we can understand the basic cycle. So we get your resistance traders right there. price reacts as expected from them. What does it also do? You also have somewhat trend line, equal lows, whatever you want to call it, your support. There can be more than one strategy essentially. And what we get, perfect vector candles right there, essentially inducement low. So this liquidity is taken out as we now induce high, also taken out over there. So everyone here is now induced. Again, this is the end of the day. Keep that in mind. So likely volatility will become a little bit dry. So what happens then? End of day, as well as Asia, we can mark up same thing, equal highs, trend line liquidity, perfect trend line. It hits so many times. What happens? Price induces high, takes out the resistance traders. What happens next? Perfect vector candles like such. Again, trend line is now taken out. Alongside that, price decides to create these nice equal lows in Asia. So we get equal lows in Asia, also get these fractal equal highs there and there. What happens? Price induces high here. Your sellers over here are pretty sad at this point, if you're trading Asia, that is. Then what happens? Again, we get these channel-like buildups over here. I apologize if my drawings are not so nice. I'm not very good at using the pen tool. So anyways, as I was saying, what happens? Frankfurt open. We can definitely understand that's Frankfurt open. Inducement low. Very minor inducement, takes out these sellers as well as the channel low. So it takes out two sets of minor inducements essentially. What do we have remaining? Of course, the channel trend line type of thing over there. Again, you can mark it up in so many ways. This is also your trend line. We still have our equal highs over here. So we've induced low, high, we've induced low. So now we can go higher. Why? Because we have quite a bit of liquidity left, as well as even the Asia high being equal highs. So we have quite a bit of liquidity. What happens? Price induces perfectly to the high. Again, minor inducement, taking out your trend line there, your trend line there, as well as your equal highs there and there. So like 4 sets of liquidity points. Now it's important to understand as well to the left what's happening. So what do we have? Remember this trend line we have to the left. The whole thing necessarily wasn't induced from this point over here. If we mark it up like such, price then in London Open induces low one last time, taking out that structure point to the left. So I'm just going to undo a bit of my drawings as it's a little bit messy. So what's happened perfectly to the minute, London Open induces, we get the perfect reaction high. What does it do? Create this really nice high there, taking out this structure point. So of course, it's important not to take sells there. Again, you will be taught later on how to, again, read that in a nicer way, because purely we likely have a liquidity to the left. So what moves like this essentially do is allow you to take hedge positions. So it likely took out a set of liquidity like this over here, induced it perfectly. However, we may have somewhat of a trend line still building that needs to be taken out with this reaction over here. So with these reactions here, it's important to, again, only take them with confirmation. Ideally, you hedge that and then take the buys from here. Again, it's confirmed with one of our other confluences, the MMM. Right there, you can see this gray line. They're essentially our other 2 timing confluences. You will be taught that again a little bit later on. But nevertheless, key to understand, they're almost to the minute over here. And at the same time, perfect mitigations. They're not just mitigations for us, they're entry helper confirmed. So we have, again, a few confluences that will help you take this clearly, where it's not a smart money concept essentially. So then what happens? Price now continues higher, takes out this first inducement high. First, it decides to make a smart money trap over here. This is more seen on the 1M. You can't see it right now on the 5M chart that I'm showing. However, it's a SMT on the 1M if you trade 1M mitigation zones. Price gives a reaction, gives this, I would say, horrible looking liquidity. At the same time, induces high, perfect vector candles here. Isn't complete, so it induces this last time with the perfect vector candles bullish, only to take out the liquidity to the left. Then what happens? We gear up for the sells. Liquidity building up like such. So we have at least a few targets over here remaining. So we have, of course, this point here, I can't draw properly, but we will have, of course, our minor inducement. Remember, it's the same day price action. And then, of course, liquidity points being like such over there. So now we can take sells, price induces all of the points mentioned as liquidity, like such, even your smart money trap over there. Remember, you can see that's a very clean smart money trap in terms of imbalance, and it gives a really nice reaction. You can see from the wick over there. So it reacts about that high, only to then continue. As it continues, of course, it creates this trend line type of thing, which of course doesn't last necessarily. Induces low one last time. Then what happens? Price now takes out this trend line type of liquidity formation over there, as well as these structure points like such. Now again, it's getting towards the end of the day, hence why it can look a little bit dry. Just going to clear. So towards the end of the day, we've induced high, at the same time also creating liquidity. Taking out the low like such, smart money trap, your valid mitigation zone, price continues higher, takes out this point here now. So of course, liquidity is taken out. Your little inducement is over there. Again, very clear liquidity over here in the form of a channel. Induces somewhat a little bit of that liquidity. Nevertheless, it's still equal highs at that point, as well as your equal lows. What happens? Price induces low again. Same time, still equal lows. So it's induced only essentially this part of the liquidity, as well as the SMT that was formed over there in this mitigation zone. What happens? Price reacts somewhat a little bit, gives you these little liquidity points like such, equal lows, equal highs everywhere. Now this is probably the most perfect vector candle that you would see. What happens? Induces the low, equal lows, as well as this structure point to the left. Induces low. What happens the next day, which is currently today for me? This is, of course, your Frankfurt Open inducement. Upon that, equal highs, price reacts in these nice zones over there. London Open, you can see a little bit. Price induces this liquidity point and ultimately will induce all of this points over here and take out Asia high liquidity, being also the equal highs over here. So again, I hope you understood that. It's the same cycle again and again and again. I would highly recommend you do the same thing, what I just showed you. Mark up these liquidity points, exactly how they appear to you. If you get it wrong, don't worry. Of course, that's what your group is there for, your week 2 group at this stage. Start sending in your charts and we will, of course, help you out on that. So I hope you understood and I hope you enjoyed this session on the liquidity aspect.
The liquidity inducement cycle, which is, of course, now we identified the liquidity. And now we need to identify where we are in the cycle. And that will be essential. That is so essential because you can literally do that exact cycle everywhere. And that alone leads to so many trades. It is crazy. And that goes build up, inducement, mitigation. Build up, inducement, mitigation. Build up, inducement, mitigation. It's always the same. And you will laugh so hard if you see how many times it happens. Again, the most common example is, let's say you have like liquidity in here, inducement, right? So that's first of all the build up, but guess what? Then you have like whatever, let's call it something like this. That's what they're doing in here. So cycle goes now. So you see something in here is getting built up. That's the buildup of creating these false support areas whatsoever, right? So that's the buildup in here, already building like some sort of short buy trend whatsoever. Then you're waiting for the inducement. This already is a point of interest in here, right? You can take from because this already took liquidity. But now after the buildup, we expect an inducement of this equal lows in here. What's the next thing that can happen? Inducement into mitigation. And out of a sudden, we're making three things aligning in the overall play. And guess what? This is the next thing that happens. And that will happen so many times. It's literally crazy. It happens every day, so many times. And we show you so many examples of that. Recent ones, old ones, like it doesn't matter. Just keep that cycle always in mind. It's build up, inducement, mitigation in that order. Okay, first you need a build up, then you will get an inducement. And then of course you're expecting a mitigation with the inducement. So first thing, what's the build up? On very easy explanation. So pretty much that's how it looks like, right? So the retailers at this stage, because again, they fighting for buyers, sellers, who's in control, whatever. They're making a little face off. What are we doing? We're like, okay, just dancing. We're just waiting it out. We're not interested in the build up at all because again, we don't want to be in their little exchange in here when they start shooting, right? We don't want to be that. So we're just waiting it out. We're just dancing a little bit. But by definition, if you ask our friend Google again, it's really interesting. If you type in the definition of build-up, pretty much says, if you look at the second one, a period of excitement and preparation before a significant event. Before a significant event. Does that already connect a few dots in here? So when they're building up, what is the significant event then? It's of course the inducement. And now if you look at the first definition of them, typically something negative that leads to a problem. Okay. That's kind of funny, isn't it? That Google gives that type of definition for a build-up. Something that leads to a problem before a significant event. It's also negative. Okay. Perfect. I mean, that perfectly fits our definition, what they're doing to the retailers. They build it up like a negative event that leads to a problem. Then a significant event happens, which is the inducement. And then, of course, they're out. Funny enough. So very easy to identify can be, of course, trend inducements, like whatever they're building a channel, they're building like these equal highs, equal lows. Again, the most easiest one to spot is on low time frames to just give whatever, something like this, equal lows, and they're inducing low, and go higher. That's the most easiest form of spotting it. But of course, it's mostly also these channels things. They love to build channels. They love to build channels the other direction and also these sideways actions. Okay, so how does it look on the charts? Of course, very easy. As you can see, building up the channel upside. You already noticed what that is. Does it connect the dots already? You already see the sideways action here. You already know what that is. And of course, it's doing the same thing in here without the Asia, but you obviously can connect the dots yourself in here, right? So what is going to happen? So we make a little quiz in here. So just prepare your chat because you need to write in something now. So if we have this picture of the overall day, where are our main build-ups for the day? Is it A? Is it B? Is it C? Is it D? Or is it E? Main build-ups, so can be 2, can be 3, can be 15, or can be 1. The answer is B and D. This in here is an Asia range, and it has no significant structure. It's not Asia low, it's nothing. It's just like a very momentum random switch inside Asia range. But as you know, we focus on the main build-ups with this false channel until what? Bracket of Asia. Or this sideways action building the wrong channel Sideways action, consolidation until what? It's a click. Right? This thing in Asia in here had no impact. The main build-up is this channel building until, guess what? London session opens. This time it's Frankfurt, building the wrong side, then going sideways, building up even more sideways. Guess what that is? And guess what the direction is? Main build-ups. Right? So, main build-up out of Asia. Guess what? Look at that. If you take this one in here, just flip it upside down as we did it here. Obviously, that's a different shot. It's literally always the same anyways. Just remember this picture in here. And again, isn't that exactly the same thing? They're just building this channel until they're breaking out. And then go even sideways, making this thing in here. And then, of course, going upwards. Build up, build up. Significant event after. Build up, significant event after. Build up, significant event after. Make sense? Next one, more advanced one. Where are our build-ups? That's one interesting one because we have like a lot of build-ups in here. Let's see how advanced you are. It's definitely not only one. And now really see the details. Really see the details and start connecting the overall picture. Think what they're doing with a build-up and what comes after, a significant event. So if you see a build-up, already know what should come next. So the answer is A, D, E, G, H, and K. So why is that? Of course, you have the first channel, wrong side, right? Then of course, sideways action. So whole A is a build-up. Then B, it's not a build-up. It's just, again, what is it? It's of course the inducement in London Open. C, not a build-up. It's just, again, huge vector candles to everyone in the wrong direction. It's a huge inducement. D, sideways action, channeling before significant event. E, channeling, building these equal lows before what? Significant event. G, sideways action below equal lows before what? F is not an, oh, of course, you know what F is now. H, sideways action before what? I is nothing. And now this is the controversial one. What does it do? Does it build up? Or does it actually induce? I know it goes a little bit sideways, but what's the main intention of this push? Inducing this structure low, and then obviously reverses. Then again, K, sideways action, inducement high, below. Make sense? Starting seeing it. And so how can you see how easily out of a sudden you can spot these areas when they're building it up, inducing low to go higher. Remember the example when we went over the whole weeks, inducement high to go lower, inducement low to go higher. They're doing it all over and over again. Building up liquidity, equal lows, inducing them low to go higher. Building it up here, induce low to go higher. Building it up here, induce high, go lower. All over again. Again, if this is the main inducement in here, what do they do before that? They want to induce even lower to go higher. They're building it up here, making the push inducement low to do what? Go higher. It just don't go straight away like this. No, they go like here, building up, inducing low, go higher, inducing low, higher. Always the same. Crazy. And guess what? Now if you look at the bigger picture, now we look at the detailed picture, but guess what? If you take a look at some hidden buildups, can you identify that already? That thing by itself is a buildup building the channel until what? Until the big guys jump in London and say thank you. This overall thing is of course an inducement, but also acts as a huge liquidity grab because everyone gets excited, break of average low, everyone's taking a breakout trade, everyone sees the huge momentum, getting excited, whatsoever. What do they do here? Building a huge channel upwards before what? Final inducement to do what? To go lower. So you see they're doing it on the really detailed pictures, and on the overall pictures. Starting makes sense. Starting how we can connect easily these type of straps, and again, including the bigger picture of what they're doing. Right, inducing high, mitigating what? Huh? Interesting. Does it make sense now? Does it start to make sense out of a sudden? Of course, it's always the 5 minute, as I told you. If you see this type of thing, and by the way, that is one whole day. That is how we break the whole day into one chart, and how we make so much sense out of the whole day, doesn't it? Out of a sudden. We know this is the break of structure. This is the inducement, should get mitigated. Does it start to make sense out of a sudden? Build up, inducement, to go higher into the mitigation. Interesting. This is the bigger picture inducement. London open makes an imbalance in here. Gets mitigated. Is that a trade or no? Maybe. Does it start to come together slowly but surely? And trust me, it will only get clearer and clearer and clearer. So hopefully you're seeing now at this point the intra or like the internal buildups, but also the bigger buildups. Again, as you can see, as we easily combine these two things together and let them melt together and still are able to build the overall picture in terms of like the timing, the Asia range being induced, London open, overall break of structure with the mitigations, with the little buildups, inducement, and now finally the bigger picture, mitigation, right? And of course, then we can take it lower. So hopefully slowly but surely, it will make sense and more sense and more sense and more sense. And of course, we will not stop there.
So in this module, you will, of course, be given more examples on the lit cycle. Again, it's more of an interactive one, so it's really nice in the sense, of course, you have to get your brains ready and think. Of course, I will be giving questions displayed on the screen, and of course, there'll be wrong ones too. So it's important to take note of that. Also, I suggest writing it down with a pen or whatever, tablet, whatever you use, because there is quite a lot of letters, as you can see in the first question in front of us. There's A all the way till P. So unless you've got a very good memory to remember your correct answers, I suggest write them down. So I guess if we get straight into it, we of course have the first question. You've probably read it already. It is, of course, what are the correct build-up areas? So of course there is wrong ones. That's important to understand as well. Remember this from last week's modules when it came to the trend line liquidity, your support, your resistance, your breakout liquidity. Essentially, I cover the main ones. Again, it's really important to acknowledge relevant liquidity as well. So I'll give you a few speckles to answer that. Also pause the video if you wish. 3, 2, 1. So essentially, our correct answers are everything but, of course, these ones over here. So that would be E over here is incorrect. And then, of course, we have N over here, and then also M. So E, N, and M are your incorrect liquidity areas. Now, the reason being, of course, they don't represent any liquidity. As you can see, here is more so your inducement. There's no liquidity. Your liquidity points are, of course, to the left. Same thing here. It's simply just a singular wick. Again, same thing here. So essentially, they're all just singular wicks. When it comes to your liquidity that's marked, we of course have trend line liquidity over here, A and B. C and D being your equal lows, again, trend line in fractal form. It's really important to just mark up relevant liquidity. You don't need to mark up these little bits over here like this. It's relevant, but on the bigger picture, let's see where that liquidity lies already. Then again, same here, from F to H, we have our trend line forming like such over here. A bit more of a trick one when it's internal liquidity. We of course have these lows in both areas. Same thing, trend line, your equal highs, trend line, same thing, trend line. It's pretty easy to understand at this point, I hope. So I hope you've done a lot of revision in that sense to have differentiated the wrong ones, essentially. So with that being said, of course, what that looks like overall, minus those parts, this is what you should be looking at from a main perspective of the day. So next question is, what are the correct inducements? Again, marked in the purple arrows, going up for an inducement high and low for an inducement low. Again, remember the characteristics of these stages. Quick tip, of course, you need to have a build-up first to then have your inducement. So I'll give you a few speckles to answer that one too. So the answers, of course, are everything but your answer A, as well as your answer F. So A over here, F over here, and then of course we have H over here, as well as J over here. So if you got everything else, well done. And of course, it's correct if you've got everything but these points. So I'm sure we can understand why they essentially were wrong. This, of course, is not an inducement of any sort. It's actually the build-up. So it's kind of a trick question. Should be pretty obvious that that was not an inducement. At the same time, when we go on to letter F over here, same thing, it's not an inducement. Letter E is an inducement. Why is that? Because we've induced liquidity over here, whereas letter F is actually a mitigation, as you can see. Now, we also have letter H down here. Again, same concept, it's actually a mitigation. It's not an inducement. It didn't induce liquidity, more so formed a continuation to, of course, trade bearish. Same thing with J. This is, of course, not an inducement. It's a mitigation. So essentially those points, of course, are completely wrong. Hope you can identify them pretty clear why they weren't essentially inducements. So if we look at that again from a clearer picture of what the actual inducements are, we have letter B over here, inducing high, taking out this liquidity down here. We of course then have price now reverse, inducing these sellers over here, taking out, not good drawing, taking out, of course, your Asia low, it again being a minor inducement of some sort of liquidity. Same time, what do we have? C, it completes the inducement low at the same time, also forming fractal liquidity. So it's induced these equal lows, perfect vector candles. What do we get then? Of course, price induces high now, so it reverses, takes out the trend line liquidity. Of course, we have our perfect vector candles here, inducing high. What happens now? We get our reversal. Upon our reversal, we create this trend line, as well as, of course, equal highs, as well as this trend line of some sort as well. What happens? DE, of course, induces high of this fractal liquidity over here. Price breaks lower. We get mitigation areas, and then price, of course, continues, taking out, of course, liquidity here. So although this is an inducement, C over here, it is also, of course, equal lows, as you can see. That doesn't mean it's not an inducement. It's likely, of course, a pullback trade, hence why price pulled back and then continued bearish. So usually those are trades where you need that extra confirmation. Again, you will be taught that in week 3 in more detail, again, for the entry helper confidences. So what we have, again, not finished, we have, of course, letter G. taking out, of course, as mentioned, these equal lows over here. Then we get another fractal buildup here in the form of your trend lines, both high and low. We get I. Now, this is an interesting one because letter I over here, let's just show you a little bit clearer, is like a partial inducement, and it is towards the end of the day. Remember, UTC +2, that's pretty late. It's not in any real timing session. So this is somewhat of a partial inducement, doesn't necessarily take out the entire trend line. Nevertheless, you get the rest of the characteristics. Your vector candles, price now continues higher. Again, volatility is a lot less at that point. So I hope that makes sense when it comes to the inducement. Just remember, you need a build up to then have your inducement being this point here. Essentially from that point is your inducement occurring, should I say. And then of course it ends at some point, then it continues bearish and takes out your buyers over there, also inducing low. So you're going to get, of course, inducements high and low. It's just important to understand where you are in the market and what you currently see, where it is most people buying or selling, to then know essentially where price needs to induce. So our next question is, what are the relevant breaks of structure? So this is an important one, and again, important not to get confused. So remember, our relevant breaks of structure occur after the inducement. So that is your tip. I will give you a few speckles to write down your correct answers. Time is up. If you didn't pause, I suggest you pause. So our correct answers, or should I say our incorrect answers, are letter A being over here, as well as letter D being over there. So why are these incorrect? Essentially, this point over here is not necessarily a relevant break of structure. In some strategies, everything here is a break of structure. However, for us, that's not a break of structure. Why is it also not a break of structure? It's in Asia. So we don't really consider anything there a break of structure. If anything, that's an inducement. We get the vector candles blowing straight through that. So that's not, of course, a relevant break of structure. Same with D over here. This point is not relevant in any way. Of course, it being a structure point, you can also say here, here, quite literally everywhere. So important not to get confused. This is just random, of course. So essentially, why are these other points your breaks of structures with B, E, F, and G? So essentially, we had an inducement high after taking out liquidity. Then we get our break of structure over here. You can see that's the point. Price breaks lower right there. Now, in this scenario, of course, it was probably very tricky to get an entry. Nevertheless, it presented a relevant break of structure. And if you always focus on relevant breaks of structure, you may not always get tagged into an entry. So that's important to understand. Your break of structure is there after we've had an inducement. Now, same over here, inducement low of this relevant liquidity down here. What do we get? Our break of structure essentially is here. It is a little bit tricky in this one, I will admit, but those were the last vector candles that essentially induced to the left, essentially from this point here. So it's not the nicest when you think about the fact that price has to break above, and essentially you want it to come to lower levels to touch those areas again. So essentially your break of structure being that. Again, it would be nice if it reverses, you take mitigation zones like such. So now we also have, again, inducement high of these relevant liquidity points of trend lines. Let's just clear things a bit. So your trend lines being broken, inducement high over there. And then what we have, these minor breaks of structures. It's very tricky to see. So you break these structure points over here. Then, of course, we get our push up. So what happens then? Price now, of course, induces liquidity again. So build up, inducement. Then we have a relevant break of structure right here. So taking out that point, price reverses, gives us the mitigation zones, only to then continue, of course. So again, relevant breaks of structures come after the inducement. Don't ever choose it first. We do not use structure first at all. If anything, we don't really use structure that much at all, purely because it doesn't always allow you to get into the trade if you wait for a break of structure. And you can, of course, see that here when it comes to this example, as well as letter B. And of course, these ones are somewhat better, should I say, when it comes to entry points like such. So apologies for my drawings there. That was very messy. Nevertheless, we have, of course, another question. So what are the correct mitigation zones? Now remember, mitigation zones come after, of course, the build-up, the inducement, relevant break of structure, and then comes your mitigation. Again, keep an eye out for smart money traps or FFSs. That is your little tip before you answer, and I will give you a few speckles. So if you haven't got your answers already, of course, pause the video and answer everything. So what we have, of course, is our incorrect answers are letter A over here, as well as, of course, letter E over here. Now, why are these incorrect? Now, it's important that we now actually understand the bigger picture. So we've had our inducement high, relevant break of structure over here. We get mitigations at London Open. So it's even nicer. We get it within our timing window. We may not always get it at the absolute high. That's completely fine. However, we get it over here. Then what does that mean? Now, remember your momentum mitigation aspect, as well as your smart money trap or FFS. This is a what? It's an FFS. It blows straight through the zone, does not give a reaction. So this is not even a valid mitigation in any sorts, unless, of course, we have, say, Frankfurt Open react over here before it induces high. Then it's a valid entry when it comes to somewhat of a pullback. It's a very short-term trade. Nevertheless, you will be taught that in more detail next week. So then what do we get, of course, is the next example, inducement low. Of course, you have your liquidity off the inducement, perfect mitigation. So this scenario, to wait for the break of structure wouldn't have done you any good. However, every other confluence presents the build-up, inducement mitigation. This area is completely perfect. So what we get then, of course, inducement high over here, relevant breaks of structure being right there. What does price do? Then it gives us these false mitigation zones, aka smart money traps, because it's now going against the area. We've had our inducement high. We are not interested in this. So what happens? Inducement high again of fractal liquidity over here. Price makes another break of structure over here, this point there. What do we get? Now we get a perfect mitigation zone right there. So what does this mean? It's very key to understand. If this becomes our valid mitigation, this is going to become our smart money trap. And the reason it is somewhat of a smart money trap, it did wick a little bit. So it is essentially did give a reaction, but if you call it an FS, that's fine too. So again, it's important to understand why this becomes invalidated completely as a no mitigation zone. Remember, inducement comes first. So what do we have next? The same thing, inducement low, again, the trickier inducement. What do we have? Mitigation. So build up, inducement, mitigation. Again, didn't give much of a crazy reaction as it's end of the day. So I hope that generally makes sense when it comes to the whole cycle. I would highly suggest marking up some more charts like this in order to go exactly in those orders. Again, only when it comes to structure, mark up relevant parts. If they don't appear, that's also fine. If it does appear, that's a nice additional confluence. However, we are not finished right there, and that is because let's just see what it looks like. Perfect. These are your correct zones. B, D, C, didn't go in order there, F. So again, really nice entries to sell, to buy, to sell, and then of course to buy. Probably not a nice one to buy when it comes to risk to reward over here. So our last finishing piece in this module would be what pieces everything nicely together is timing. So look how amazing this is when it comes to timing. We have Frankfurt Open over here which is, of course, where price induces perfectly high of this fractal liquidity. What happens? Price breaks structure over here. London gives us the perfect opportunity to take the sells right there. Again, we use more confidences while you take it and not just take a random mitigation. So essentially, London then gives us the entry to continue. What happens now? We have magic manipulation minutes. This one's not as easy to identify. You get your mitigation off this point where MMM1 allows the continuation. Again, it's really much nicer, should I say, if this was a clear inducement and then this mitigation. However, nevertheless, we are just looking at this from a timing perspective of what price did. To the minute, it gave the reaction, gave the liquidity, gave the mitigation, only to continue, again to induce and then reverse. So upon that, what do we also have? Magic manipulation minutes 2, giving the clearer entry than MM1, which is the perfect mitigation after the inducement low of this buildup over here. So perfect mitigation to take the pullback on MM2. Now what do we have? Of course, is New York open. Perfect mitigation after having the inducement. So essentially in this scenario, we didn't get an inducement of New York, but we got our mitigation of New York, as well as the same being for London. So sometimes if the inducement has already occurred, like over here, as well as here, essentially in our timing windows, we may expect to look for continuation as price has made the inducement. So we're essentially looking for mitigation zones. So I hope that made sense. Again, with the inclusion of timing, everything's a lot clearer, and how you can also segment your day. So I guess your tasks are to do the same thing. Find many examples. Again, you're not forced to do that. However, it would really, really benefit you if you did. So enjoy.
So the next point in our journey is, of course, again, the inducement. As we already covered it slightly, now we need to identify an internal play. And as you can see here, the retailers in this stage, I'm not sure if she's raging, but I think she is, right? Or like, obviously they're very sad because they're getting stopped out. So for one, it's being like, yeah, we're going. And for the others being like, oh shit, I got stopped out. Right? So it's always the same thing. For the ones, it's being an FOMO approach of that the market will go up forever. And for others, it will be actually a stop out, right? So the inducement is always have two things. Again, for us, it's more like this, because we should understand at this point what the inducement does and what's the true intentions of the inducement is. And obviously, we're just sitting there and like, fascinating, right? It doesn't really surprise me that much anymore. In short, though, again, inducement towards lit is a way for us to identify the intentions in the market and alert us that we may have a reaction in the market in our favor. Again, if you see something like on a bigger picture play like this, the easiest play of them all, and have an internal build up like here, we now expect, again, the inducement to grab this internal liquidity to do what? Complete the bigger picture and move further like this. Okay, so it's always first an alert that we obviously see and take as an advantage to know, okay, now things get interesting. So all we need to do is wait for the inducement to happen and look for mitigation after, right? That's the only thing you need to do. If you're really good at that, you will have a really fun time. Like the lion, we wait for our prey to be as most vulnerable and attack it when it's most beneficial for us. Again, if we jump in the whole herd of like 50 buffaloes, they will probably rip us apart. Because again, like one lion cannot take out 50 buffaloes, right? So guess what? We need to wait for a proper opportunity, wait until the limping buffalo is whatever, is slipping, and then we jump on him, right? So again, as we showed you the build-ups earlier, now the inducement is just the final, again, inducement of the wrong side, right? Again, for the trend build-up, it's in the long side, of course, because again, I want to get everyone on the wrong side of the market, doing it all in the process, and that this always leads to these vector candles, because that's usually these huge candles that led to the whole euphoria and FOMO and whatever. Oh my God, look at that momentum, right? Same with sideways action. If they go sideways, or of course, if they want to go higher, guess what? They don't go right away like this. No, they usually go lower, do slow, and then go higher, right? And same thing for the up channeling. They, of course, they induce with speed, the wrong side one more time, and then push price higher. So does it look? Of course, exactly like that. Look at it. Building up the channel, making the reaction with speed. Guess what the time is? You already see the box. So is it surprising anymore what they're doing in here? Same thing for channeling. Look at the speed, typical vector candle. Look at the speed of it. Insane. Right, so guess what happened next? And same thing for the channel. Guess what that is? Vector candle, huge candle to make the final execution push the wrong side. Inducement candle to push price higher later. So, question again. Where are our inducements for the day? Where's all our inducements? Doesn't matter if it's a medium, minor one, whatever. Where's the inducements we have? Okay, so that was a tricky one because the true answer is all of them. Again, this is the channel that leads to what? The inducement of Asia breakout. And of course, there's no vector candle, but still the whole thing by itself is of course an inducement. Again, it induced the whole channel out of Asia. Then of course we have the bigger picture build up. This of course is the major inducement for the day. And guess what? There's the channel. And that's this little inducement before, of course, they can push price completely higher. Yeah, that was a tricky one. But I hope everyone sees that now. Channel, building, inducing finally. I mean, that's hard to see, I see, but you have to see the bigger picture. Breakout Asia of low is already the inducement, right? It's a minor one, but in overall, it's an inducement. Then, of course, you have the bigger picture buildup. That's obviously easy to spot. And then the major inducement for the day that literally grabbed all the liquidity from people who are getting buy. Because again, think about it. If you bought in here, 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 where's your stop? Of course, it needs to go lower than here. The moment this thing grabs it, every buyer is out. Then they do it low key here, staying, and look how they're doing it. Look at how sneaky they are and how they're doing it. So they're building up here, but then they try to fake even one more time to give even sellers opportunities to even get in now because they're seeing the short channel. They're seeing now there's huge resistance. They're faking the reaction. But guess what? For the buy people, they're building the channel and inducing them wrong side again, stopping a few of them out already. And then, as you can see how well they did it, they grabbed all the liquidity here and finally here. And then they easily can smash to the upside as they want to do it. So they induce both sides. In this case, they only induced low here. First inducement, building up. Major inducement, also low. Building up the channel, inducing a low one more time. They induced 3 times low. And that's why you see this huge reaction because there was no buyers in the market at this point. That's why they easily can smash the market upside. Right? And that's why we say don't pick the end of the inducement because again, you think, oh yeah, look at the speed. I take the short here. No. I take the short here. No. Take the shot here. No. Again, that's why we said react. Again, if it makes break of structures here, imbalances here, yeah, then you can take a shot. Right? But again, it's all a system. Obviously, we give you the system. So now we see how we can combine things even more and making it more obvious. Because guess what? Remember this as we had it before, where we identified all the buildups. We had like the minor buildups. We have like the hidden buildups, like the bigger ones in black. And all these minor buildups during the whole process. So, easy question now. Where are our inducements? There's only one tricky one. The rest should be very obvious. There's one tricky one. The rest should have right. Or maybe there's two tricky ones. So I give you two buffers. The rest you should have. Okay, so let's bring some lights into the tunnel. I saw I did also a mistake myself. I don't know why, but definitely F is not an inducement. So it was, of course, first of all, the B one, right? Then we had this one with the C. Then, of course, this one was the F one, right? Sorry, the E one. Sorry, this one was the E one. Then this one was the G one, right? This one was the H one. This one was the I one. K is not an inducement. I saw that someone had that. That's obviously a buildup. K, this was the L. I'm not sure why I forgot to put the things in here. And of course, this also, we talked about it earlier. The N is an inducement, and also this one in here, because that leads to the mitigation. Induced, obviously high. Mitigated, that's the perfect side in here. Buildup, inducement into the mitigation, the push price lower, and that was the P. Yeah, if you got most right, that's good. For the obviously we're starting out, so we get you there. But if you got majority of them right, that's obviously good. Okay, so if you put it into clear pictures, we can look at it like this. So the difference between an inducement and a structure point. Alex will of course dig into that in his blog today as well, so it should be clear as well. I just give you an easy example, which Alex also touched upon at the beginning when he said like Asia range can have a very important role about that, and also timing. So use these tools already. You can easily include them to not be confused immediately. Again, if for example, if you see, why is this not a break of structure or inducement? If you see, this is Asia range in here. So of course, why would this be an insignificant inducement here? But out of a sudden, this is Asia low now being formed, right? And then of course, this is not a lower low anymore. As you see the cycle forming, minor inducement makes a new lower low just to tricks everyone in the short trend in here. But now you use timing, as you saw the cycle all over again all the time. London traps the final move, and now you're having a final or valid break of structure in here after the intraday cycle, making intraday break of structure, mitigating, and of course then you can trade in this direction afterwards because the intraday cycle in this case is done, right? So always use timing for your example for your advantage, but for now just know that London and Asia will definitely help you. Of course, you'll have way more confluences later on, but for the basics, just understand those two and how you can utilize that for your advantage. Then, of course, you have the next thing in our cycle, which is, of course, build-up, inducement, mitigation. So let's take a deeper look in the mitigation. So retailers at this stage are like, what should happen here? And we are literally like that. Because the mitigation obviously is before after the inducement, and that's literally our cheers to the market, because that gives us our limit order entry in the best case scenario. Okay, the mitigation for us will be a significant role because we literally will enter on these mitigation zones in order to know exactly where we should enter by the timing, by the structure, by the confluences, and also by the imbalance fields. Okay, so the mitigation, again, mitigations happen a lot. We just need to identify where we look for them and where we not look for them. Because as we showed you at the day one, if you just look for random mitigations all the time, you get completely destroyed. That's why we just need to know which ones we need to look at and which ones completely ignore and which ones will become smart money traps. But no worries, we guide you. Okay, so what the mitigation really is, of course, mitigation areas are where price was not fairly, in their quote unquote, like fairly delivered and left like this inefficiency in the market. Again, if price was not properly delivered because for speed or whatever reasons, then Enigma had not the chance to deliver it fairly and creates these inefficiencies when the wicks are not connected properly, and that creates these imbalances. So the Enigma then needs to return to the price or these inefficiencies and then mitigate their positions and then reverses price. So the price is then fairly delivered and everything is in balance. And then, of course, the Enigma can go on after that. So if the market moves in a hurry, again, if a lot of liquidity enters immediately, the Enigma cannot book a profit in the process and will then or need to come back to these mitigation areas and of course to reduce losses and stuff like that and continue in the true direction after. Okay, but just know that mitigations or imbalances are created by speed and liquidity. Okay, that's why they happen, and then they need to come back to these areas all the time to fairly deliver price. And also, if market moves in a hurry, not all orders are filled fully and thereby missing fulfillment and again these inefficiencies and created pretty much these imbalances. And to balance orders like that and fill each participant in these areas, again, they need to come back and fill these orders. So mitigation alone will not work. Pretty important. Again, if you just look at mitigation areas, you're doing the same shit than like all these smart money traders out there. It's crazy. You need so much more stuff in combination in order to make it really good. Again, if you trade like 10 mitigation zones, of course, like 2 will work, but what's the point? Right? That's not the point. The point is knowing what is going on. That's why we use it as a last stage, just for confirmations once more, and you will see how much stuff you will include into the whole scenario. And again, this is why also smart money areas and these imbalance areas become traps to build even more liquidity, because again, guess what? The Enigma knows that people understand that this area needs to get filled. Of course, they know it. So that's why they target and fake these zones on purpose to, of course, create liquidity even more. So they know, of course, that people know about that these imbalances need to get filled. That's why they attack them. That's why they show so false ones as well and show the smart money trap. Okay? And again, the best mitigations come from a break of structure area after an inducement. So if you have an inducement, internal break of structure, that creates an imbalance, then price comes back, mitigates that inducement area, perfect. That's the stuff you're looking for. But in overall, again, just look for these imbalances, areas in here, inducement of a structure, maybe smart money trap in here, and then of course, mitigation, and price can go lower and get to these mitigation zones, liquidity zones below in here. But first, again, you have a build-up, minor one, whatever, then an inducement area, mitigation. Okay? And of course, there's a false one. Sorry for that one. There we go. So again, if you have something like this, we have a build-up. See the imbalances in here. Inducement after the build-up mitigates the positions to go lower. or this one is a better one. For example, again, you have this break of structure, right? If it was something like this break of structure in here creates the imbalances. That's your building up in here. Also minor buildup in here. Inducement of that areas mitigates that imbalances. Guess what? Now you're having your valid, whatever, break of structures in here, depending on what's going on to the left. And of course, same thing all over again. Building up the false channel. Inducement with the vector candles into the proper mitigation area with the imbalance, and then continuous price action. So, question for you guys. Where are our mitigation areas? This one, yeah, that's a good question. Again, if it would be visible on the 5 minute, 100%. If you break that down on the 1 minute, there is probably an imbalance here, yeah, and that can mitigate it. So very good eyes already. Okay, that's exactly the same. Same thing here, as you can see. Whatever on the 1 minute, that obviously, that's actually a very funny one, because as you can see, just take a deep look in here, so sharpen your eyes. Starting from this point in here, look at the wicks, how they're always connecting each other. You see, there's never an imbalance anywhere. Until when? Here, guess what? Build up. Where does market go to? Fill this imbalance. Insane, isn't it? It's always the same thing. And if you do the same thing on the 1 minute in here, it's probably the same. So there's always some sort of an imbalance in here. Whatever. This is like this. On the 1 minute, you should have an imbalance in here. And the market comes back after build up inducement. Right? Same thing here. As you can see. But anyways, let's bring some light into the tunnel. Answer is B. I saw some confusion about this one. Again, yeah, technically, if you take this zone, yeah, but as the A is more like on this side, we meant this zone in here. So of course, that's not a mitigation zone. You should take a look at, right? But if you meant this zone in here, yeah, then yeah, of course, same thing as you see, build up, inducement into the mitigation area to push price higher. Then of course, after the main inducement of London, of course, you expect this zone to get completely smoked. Okay. So most people got it right. Love it. And there's only 1 or 2 or maybe even 3 questions you might ask. And like, so if that's all the mitigation, of course, like that's a very good one. Like again, we talked about this earlier. Again, same thing for this one. We have your break of structures, get into the mitigation area. Kind of missed it up by a little bit. Okay. But then of course, E, same exact thing, making low in here, comes back, mitigated, right? And notice, again, it's the same thing all over again. But anyways, what about C, pretty much A and F? Okay, so why not A and C? Why not A and C? Remember, we have something called the smart money trap. As we go on, you will learn how to identify these traps. Just focus on the lit cycle and all the concepts we talk about later on, and that will become very, very clean for you. So if you think about, for example, what about this one? Did that not technically mitigate in here and give like a reaction? It did, and that's literally the definition of a smart money trap. And that leads us to bring into, of course, smart money traps. That brings us into the smart money trap, and again we show you how to identify them properly. So first of all, we have two different types, and we digged into it briefly. We have something we call a smart money trap and an FFS. So what's the difference? Very important difference though. A smart money trap is an area which fakes these false mitigation areas and gives a reaction, but then obviously fails in order then to grab the liquidity higher and then properly mitigate. An FFS is literally when you have like these areas of imbalances, but price just shoots straight through that areas. Okay, so you might ask, like, why is it called FFS? We will dig into it like in a bit. But now I understand, like, the smart money trap gives a false reaction of the supply and demand zone or the imbalance zones whatsoever, depending on how you refine them, and then fails afterwards. So it gives a false reaction to build the false belief, whatever, the false understanding, and then fails afterwards. The FFS smashes through that supply and demand area without a reaction and fails immediately. Okay, so we have different variations. It can look also like this. When you have multiple, depending, of course, highly what is going on to left. If that is obviously Asia range, whatever, that obviously becomes more obvious. But obviously, that's just an illustration to make it a little bit clearer of how a smart money traps looks. Gives a reaction. Then you have an inducement, maybe also to the left. Maybe this is also Asia high, having your inducement. And guess what? After the inducement, this in here, of course, will become a trap. Right? Because again, smart money traders seeing the buy trend and trading obviously this imbalance area to wanting to take it even higher. Right? So this trap immediately should become invalid to you. Right? For the FFS, it's obviously more difficult to spot because they just smoke through them. So if you have this area, and smart money traders mark it up, just smashes through it, and then gives a small reaction, makes them even more mad, like, oh shit, I gotta stop out here, but then it moves my direction. Let me take this one in here. Then I get another stop out. Or this zone in here immediately smokes through, gets the inducement, and then it's the same thing all over again. So the question is then, it happens all the time. Yeah, that's happens really all the time. So which is more likely though? Scenario 1 or scenario 2? Like if you see that's a small white trap, gives a slight reaction, small white trap gives a reaction, or whatever, FFS goes straight through it, small white trap or can straight through it. So what's the difference? And the answer is, it doesn't really matter what scenario works out, because why? Each scenario will work out perfectly with our rules, since react, not predict. We used to predict, right? Obviously prediction, so we know the possibility or the possible ways to react, but never take trades based on these areas anyways. So the thing is, if you had to choose one of scenarios, 1 or 2, should be more likely you will obviously line up with timing if you really want to choose something. We have so many confluences to choose these areas, you should not randomly choose them anyways. And on top of that, we know that these areas become smart money traps anyways later on, and it doesn't matter if it's a trap or an FFS, because they should fail anyways. Smart money trap just gives a reaction, then fails. Reaction, then fails. The FFS just smashes through them. There's no difference. They both fail. You just need to understand they fail. Just this one gives a reaction, this one not. But both areas will fail. Okay? And of course, we can enter those both areas later on, and we also call it cup trades whatsoever. We will teach you that, of course. We will also have something that we call the EDM and LETs, and of course, that makes it easier. But again, dig into this example to understand it better. At this point in here, what do we have? Of course, we have the first channel downwards, but the overall main upwards trend. What do we have before Asia? Breakout, huge channel upwards, building this channel in here, perfect timing, inducement in here. So the cycle is completed of the stage. So what should happen next? Is this an area where you should take a buy from, and like this? Yes or no? Of course not. Of course not. So, but can we technically expect this? Yeah, we could. They could give a reaction in here because they're just mitigating this area, making a reaction, but then fail. But does it really matter? No, it does not matter. The only thing we know at this scenario is that this zone will fail. It will fail. But if it failed like this, or just like this, it doesn't matter. The zone will just fail. So we can label it immediately a smart money trap just based on what you learned so far. Okay? Again, then internal break of structures, mitigation, whatsoever, you know all that stuff. But this zone in here will fail just based on the daily structure or daily play what you learned in this scenario. Okay, so in this case, it did something like this. Choop. So guess what? You just relabel it for an FFS. Technically, you label it first as a smart money trap because you don't know if it gives a reaction, but you know it will fail. The only question, will give it a reaction or no? You're not interested in this zone anyways. You just label it up for your own understanding that this zone will be a smart money trap. But if it smokes through like that, obviously you label it an FFS. So again, even if you read it already, why is it called an FFS? Because the smart money traders that trade these zones, they place limit orders in here. So they place a limit order here and put their stop loss below here. So what happens to them? The limit order gets triggered and they get an immediate stop loss. And that's why they're like, for fuck's sakes, right? And that's why it's called an FFS instead. Because if it's a smart money trap, at least they're getting their pending orders triggered, and then they get a reaction, and then basically they're getting a break even. But if in an FFS scenario, they just smoke through them and just stop them out immediately. That's why it's an FFS. But you should know that this zone, anyways, by the daily play, will get broken anyways. Only difference is give a given reaction and then break or trade straight through it. Okay? And again, smart money traders at this stage are like, what? For fuck's sakes. Like, how did my smart money method just lose? Right? Anyway, so the FFS. FFX explains where there was previous inducements and trapping, right? Remember, see the pain in the market. If you have these very clean and balanced zones and they just get smoked, of course, like a lot of people get stopped out immediately because they're putting their zones of interest in these areas without a bigger concept of the whole thing, right? That's just areas that grab immediately liquidity, and obviously that will become areas of interest later on because that's also liquidity traps. But you should understand that an FFS is technically a smart money trap zone, which you can easily identify with the cycle and other components we will give you later on, and you expect them to be broken anyways. Okay, so note the FFS switcherow. The additional understanding for this happen is the losses from the smart money traders, pretty much creating the FFS, right? And that's why they usually with speed because they're immediately grabbing liquidity after and then usually gives a reaction after. Okay, but let's look at it again. So what is going on in here? We know that this is the extreme of the push. And of course, smart money traders, whatever, see the lower low in here. And they think this is the valid zone, right? So again, what? Of course, getting the reaction in here. So they think it's all good and done. Then they're getting in the retest in here. But we know, no. That's a smart money trap in here. Build up low side, inducement low to push price higher, stopping those smart money traders and go for the extreme mitigation area. They mitigate that one. Now we know the play is done. We can trade in line now, getting now this break of structure in here. So guess what happens? We take the mitigation zone in here. Right? So that's a possible zone we can re-enter, of course. There we go. Gets the mitigation here. And then again, creates imbalances in the process again. So we can take this trade in here also later on. This direction. And then the day is over. Makes sense. Yeah, for Fox, it happens to me. yeah. It happens to everyone of people who are taking these concepts. Because again, they don't understand the bigger concept of it. And again, you're placing a limit order here. And in best case, again, smart money trap, you're getting a reaction, you're getting all excited. And again, for FFS, they just smoke through it, right? Question. Which of those two will be a smart money trap? Is it A or B? Hint, follow the cycle, but above all else, where liquidity lies, right? Of course, the answer is B. B will be a smart money trap because again, we need to grab liquidity first. And that will have a huge role if you take a look to the left later on. Because what we did so far in these pictures, we isolated the day and cut it out here. Just showed you always like this to the left. But now we're starting to look to the left a little bit more to complete this overall cycle and see where price actually will stop. Because we showed you when it technically can stop, but now we show you also where it also can stop. Okay, so what can we expect in here? Again, always think in terms of liquidity. That's a really obvious zone. Again, smart money concepts getting very obvious and very well used. Everyone in here sees this huge imbalance. So that becomes a very obvious zone. All right, so guess what? Is it gonna be targeted? Most likely. So what are they doing here? Obviously, they're just ranging, never broke out of Asia, even faking the inducement low. To do what? Obviously, most likely to go higher. Now building the short channel in here. Right? Now we look at the timing aspect of it. Right? So again, timing is obviously London open, as you know so far. So what should happen next? What we can expect? So first of all, we see that timing for London open would be in here. Okay. So what we can expect easily now in our minds is something like this. Or something like this. As you can see here, this one will run a little bit short, as this is the timing, and then this cannot be a smart money trap. And the timing would line up. But also, this would be a possibility, as then timing would line up perfectly. But again, as in both scenarios you see, this area should be taken away. The only question is, will it become a smart money trap, gives a reaction and then pushes higher? Or does it smoke straight through it? Okay, so again, much more likely, it does not matter. It does not matter what should happen because again, we expect the break of the structure anyways. It does not matter. So in this case, as you can see, it just becomes, and for fuck's sakes, because the timing then lines up. It's already 9 o'clock, as you can see. And they obviously want to do it in London. So this becomes not a smart money trap, but then for fuck's sakes, grabs liquidity high, and then goes into the mitigation zone above that to complete the cycle. The cycle, as you learn it, is still the same. If you just look at the isolated day, again, same thing. Building a channel, inducing low to go higher, doing before what? Building the low channel here. Huge inducement vector candles. At this point, again, you should know that this is probably gonna be liquidated. The only question is it given a reaction or smokes it through. In this case, it just smokes through like nothing. All the smart money traders are getting an immediate stop loss. Their stop loss is above here. Worst case, maybe even here. But worst case, the stop loss is above here. They're getting immediately in stop loss. Now all the liquidity is grabbed. All the momentum shows to the upside. London open. Timing. Now the mitigation makes sense. Price can reverse. So this, of course, becomes a smart money trap area now, because, of course, we have our cycle completed for the upside. And guess what that is? Asia low with a quadruple bottom whatsoever. So guess what? Inducement high, completed the cycle, London open. So, of course, this zone will be broken. It can be a smart money trap, gives a false reaction, but should be broken anyways. See how that works. Right? It's always the same, guys. Again, this becomes a smart money trap for sure. The only question is, does it give a reaction or not? It did give a reaction, right? So now, of course, we can expect a valid mitigation here and then to go lower and grab this liquidity. And then, of course, the day will run to an end. So everyone understand this overall play. It's literally the same thing we did over and over again, just we including now stuff to the left with the understanding of getting liquidity grabbed first and then mitigation. It's always the same. Build up, inducement, immediately grabbing liquidity into the mitigation area, timing aspect, perfect play out of Asia range, building the buy channel, building the vector candles, timing, and of course after that, the play is done. So again, if you want to trade that stuff later, of course, something like that can be a possibility, or of course the mitigation of the inducement, or of course afterwards the mitigation of the point of structure, but obviously later about that more. So again, just very easy one. Again, just to sum it up again, to get it in your head. On the lower time frames, again, it should look like this. It's always the same. Build up, again, before the false inducement low, into, guess what? Mitigation area. On the lower time frame, of course, then inducing high. Then this is the inducement in here. This is the internal break of structure. This is the main break of structure. Where's the mitigation zone? It is here. Comes back, mitigates later. That's how you break it down later. Okay. And of course, if you dig into that a little bit more detail, it's the same thing all over again. Having the inducement highs, having the internal break of structure, almost. First, you have the build-up, of course, and then the break of structure here. And of course, this is the push that led to this internal break of structures, which also was the equal lows. Guess what? This is the inducement. That's the mitigation of the inducement. That's another mitigation. But again, the confirmed one is after this internal break of structures in here. That, of course, creates the liquidity, the imbalances in here. Should come back to mitigate it. Quite missed it a little bit. Then again, you're just trading the overall cycle after the main break of structure. This is your imbalance area now. Doing the same thing, getting a build up just before the mitigation area, faking the buy channel, breaking the structure, coming back, inducing this structure in here, just to do what? Mitigate these areas to complete the overall play. But again, just remember that this in here is something major you're looking for. Asia range, inducement, minor inducement first. This might be a smart money trap to the left, but more about that later. Okay. Then the major inducement for the day in London Open, internal break of structure, leaving imbalances in the process, comes back, break that down to the 1 minute. This plane here, this is the 1 minute now. This is again the 5 minute. 1 minute should see like build-ups after the break of structure, inducement of this internal play. This is the inducement, but what does the inducement do? Mitigate the overall play in the bigger picture, and then you can take the buy trade going longer or long. Awesome.
In this module, we will be covering a little bit more, as you have seen in the title, the smart money trap and the FFS zones. So again, it's really key for us to identify why they don't work, as opposed to just saying they don't work. We need to, of course, explain that. You have, of course, been explained it in the previous modules. Again, I am just showing you a few more examples and variations to understand it, essentially. So we've got a nice, easy example in front of us, which is already played out the smart money trap over here. Again, you should understand the characteristics by now, why it's a smart money trap. We get, of course, the valid, should I say in quotation marks, valid zone, and then the nice mitigation. Price gives us the perfect reaction. However, it then fails upon inducing over there with this little minor inducement. So what does that essentially mean? That is this zone invalid completely? Now, I would say it's not necessarily invalid. In lit, you can, now I would say can in very strong, bold remarks over here, that you can sometimes trade a smart money trap only if it provides strong confluences. Again, you taught more confluences next week, so don't worry. In week 3, you have a lot more confluences on hand on how to actually enter. However, for now, of course, it's important to generally veer clear from the smart money traps to avoid essentially being the smart money trader, or whatever you want to call it, that you expect price to hold. So in this case, it becomes a pullback. If it provided a valid entry, then yay. If not, then no, you don't take it. However, the more pro trend would be this mitigation, however. And again, we have confluences why this zone is far more valid than this zone here. Essentially, we can briefly speak about it. We've had our inducement low, perfect liquidity there, as well as here. Price vectors, perfect vector candles, induces low, finishes inducing whatever is to the left with significance. However, that provides us with an overall pullback. So this is an overall pullback. This is your fractal pullback if you take it, hence why it's not the nicest trade to take, as it's not the prime pullback. It's a fractal pullback within a pullback, if that makes sense. So essentially what happens is price now has done what? So this is where it's really key to understand. We've had an inducement high, perfect. So what happens? Likely we may mess around a little bit more as we approach the next timing session. So this may not be necessarily the absolute high. We have, of course, induced the liquidity here as well as here, and this high over here being, of course, a structural inducement as opposed to a liquid inducement over here. So we've induced high. Price could potentially start creating more liquidity as we head into the next session. So what happens is if we now induce high, whatever price chops around, maybe induces again, what that means is price likely has now induced enough liquidity high, and we have our liquid targets low. That's not a straight line. I'm not that good at drawing, as you can see. So what that means is we have liquidity targets low. So correct, we have a target. Now we also have a smart money target. Now this is the key one where you're probably questioning, is this a valid zone? Essentially, it's not, because we've now pro-trend induced high. Price can now induce lower. However, just depending on the characteristic, we may get a reaction like this, and then price smokes, or we may simply just smoke through it like that. So essentially, very key to understand, have we had an inducement in the opposite side, being the reason will we take the smart money trap, or should I say POI, essentially. So in this case, what happens? So we have, of course, our session. This is London. What happens is we get that slight inducement high again of this point there. Again, inducement of London open, taking out these structure points. What is it doing? Before it did that, essentially just builds this bigger trend line. So don't know why I halved that, but it's what it is. So we of course have a trend line target now. What do we get? Mitigation zones in here. In London open, perfect. We can of course now take the continuation. What is it? A FFS, because price did not even give a reaction. So this is really, really nice to understand. Of course, we've induced high first. Remember, we need a build up, whatever it be, equal highs. Of course, previous day highs, we've induced the build up. Price now reverses, in the pro trend direction as we have greater levels of liquidity that still aren't complete. So essentially, it's really key. You can take the inducements both high and low. It's just very important when to take them and when not to take them. So if we look at a little bit more of an advanced example, based on what you've been taught before, this is where it becomes key of essentially which is RPOI or POI or smart money trap or FFS. So of course I've marked them all up somewhat similarly. Now it's key to understand, okay, what actually is it? So if we briefly just mark up liquidity, of course, we know in Asia range, we have our perfect quadruple top equal highs type of thing. Same thing here. Not good at that. Let's do it again. Let's do it again. Okay, so somewhat of a support resistance thing. And again, you've got it fractal going on in between. You can also mark that up, but within Asia, it's not really important at all to mark up these little zones. For understanding purposes, it's of course nice to do that. So what we have essentially is two zones to the high side. So is it going to be this zone or is it going to be this zone that we can potentially react at? And now the next thing is why these zones? That's where it becomes key. Like, why could it be this zone? Or why could it be this zone? Or do we just guess like a lot of smart money traders do? So essentially, some say it's a whatever decisional thing, and then an extreme when that's like, that doesn't help you understand market intentions. That's just calling things for the sake of it. Like, yeah, not very helpful in that sense. So how we understand it, of course, is key to understand where is the smart money trap or FFS or POI zone. First, we have to ask ourselves that question. So essentially, what is the likely chance what will happen based on what you were taught? So we get, of course, London Open. So what happens as we approach London Open, price vectors out. Not only, of course, Asia range has been induced in Frankfurt down here, London is continuing to induce. That's very, very important to understand, that we may not always get a minor inducement of Asia high and then always continue. It's really important to understand, have we finished continuing? So we get inducements, reactions like such, and then another inducement, reactions like such, and then another inducement, etc. So these are essentially forming one big inducement, but these little zones are usually your tradable zones, how you can also take pullback trades only when presented. So currently we have that. Essentially, Frankfurt did induce high out of Asia. London pulls back into zones over here, like your mitigation zones, a little bit higher than that, but you see the point. So London induces with vectors, probably a little bit tricky to see, but you can tell over here it's a, of course, FFS zone, as you can see. So it's blown straight through it. This point is completely smoked through, as you can see. So what that likely means is we have a nice POI here. Now that is probably not enough to make you think, well, still, why did that happen? So it's of course important, why is this zone generally not a valid one? Well, we can see, firstly, if we try and draw a straight line, okay, it's as straight as it gets. Not very straight, but you can see already when it comes to the UTC, timing +2, this is already late in the day when that reaction occurred. And we get a very weak reaction over here until we head into Asia. So what that meant, of course, is we can likely expect yesterday's high, because of course this is yesterday's high, to be taken out. However, this area, on the other hand, is a very clean inducement to what happened to the left. Of course, you can't see it in this chart. However, it induced major liquidity to the left. So how can we also identify that? Well, we have perfect trend lines over here in both forms. We get the most cleanest vector candles ever, as you can see, and then we get the most perfect reaction bearish. So essentially what that means is we've had our first stage of the build-up over here, second stage of the inducement, and now we're missing our mitigation, which occurs probably the next day, as it of course occurred in New York Open, over here. Towards the end of the day, we get, of course, slow price action and more of a liquidity buildup. So is this a valid point? Essentially, yes, especially as we've approached timing. So this zone, essentially to the minute, almost to the minute. Is it to the minute? I can't see properly, but almost to the minute. It is, of course, the London Open. Not only an inducement, but also mitigation of a relevant POI. It's the last stage, it's the mitigation. So essentially what happens now, if we have our inducement high, we've completed all the stages, we maybe get mitigation zones here. What does that mean for this point over here? Is this a valid point? Now remember the momentum mitigation stages of the effectiveness of the pullback essentially. So what this means is, did we tap in here first to then continue to induce our original targets we had, such as Asia, as well as, of course, the smart money trap over here? Did we tap into that first? If we did, then this is clear to take, again, with additional confidences. But because we haven't, what that means is, as price reverses, we're not interested in taking this at all. Why is that? Again, like I mentioned, inducement high, we've completed the target high completely. Now we can start taking out lower levels of liquidity, including these equal lows type of thing, as well as down here like such. So let's see how that, of course, will play out. Well, in this case, it's a smart money trap. Again, we get a reaction, gives this little choppiness here. But what happens ultimately? Price induces. So smart money trap there, and then an FFS over here. Just important to differentiate the two. It shouldn't be so important in the sense when it comes to your confluences, but more so just for understanding purposes. So yeah, we've given a reaction. Smart money traders will get in here thinking it's amazing. And then, yeah, they may be at break even or even a loss if they're not very good at risk management. And then, of course, price reverses on them and takes out all of this liquidity to the left. Why is that? We've had the major inducement. This is why it's key to really, really understand your minor, your medium, and your major inducements to avoid taking unnecessary losses as well as making up bits of the cycle. So let's see another example. So a little bit more of a clearer chart. There's not much words on this. I wanted to go a little bit clean as you should have the orientation currently. So we're going to be reading this again in order. Again, very key, mark up the liquidity. I think it's pretty clear to see the liquidity when it comes to your overall liquidity. Of course, you get your lows here, not really relevant. Why? We've technically induced low in Asia. Again, it's a cycle within a cycle. And then, of course, your highs over there as well. So let's actually understand what happened. So what do we have as a zone of potential interest? Where is your POI that you could potentially think of? There's only one area here, really. So as we're, of course, going bullish, what is the target? So smart money traders essentially see this zone there being the only, you could say, real imbalance, and it's the somewhat extreme, you could say. So what happens? Of course, we will be approaching soon London Open. Currently, we are in Frankfurt with a really nice reaction. We get an inducement in London. Perfect vector candles, couldn't be more clear. Completely smokes the zone. What is it? An FFS, of course. Let's draw that with my beautiful handwriting. So we've got an FFS over there. What does that mean now? So again, we are identifying our potential zones. What zones are valid and what are not. Next zone. Is this zone valid? Essentially, no. Why? We've induced enough liquidity high, including yesterday's high over here, also being equal highs. A smart money trap, equal highs of Asia, this trend line type of formation, equal highs everywhere. So essentially enough liquidity has been induced. We've had our second stage, so build up and then inducement. So likely we should find a mitigation over here and then expect price to reverse and take out lower levels of liquidity like such. So let's see. Of course, it's a smart money trap. It's kind of a tricky one. You could say this is also a FFS. Oh, sorry, what am I saying? Essentially, it's somewhat of a smart money trap, but arguably it's kind of an FFS in my opinion, because it barely gave a reaction in this wick, but whatever you want to call it, it's of course a trap. So you get trapped, of course. What does that mean now? We've induced low. What can price likely do now? We have what? Remaining liquidity, not a very strong reaction. So price has got a target to the high side, potentially. Again, we need more confirmations for that. We may not have induced Asia low yet. So that's why you might realize that Asia low or Asia high some days may not get induced, either or. Usually one will get induced. And that's because price needs to build up, of course, liquidity for it to be taken out. So in these scenarios, you get these really nice internal plays of inducements high, internal inducements of this liquidity, take out smart money traders, as well as this trend line type of thing, remainder trend line / equal highs. What does that mean? Price induces low, get mitigations on the 1M over here. Then what? New York becomes the continuation essentially. Why would it become the continuation? Look where we are when New York opens, right there. Is that valid to take a sell? No. So this is why, of course, as you've been told, you're smarter than a clock. And of course, key to understand, the prime cycle comes before timing, essentially. Timing is just a guide. So you get another trap over here, essentially. So what does that mean? New York gives potential pullback trade only into these nice mitigation zones to continue. Again, what does it do? Take out this with, of course, perfect liquidity. Couldn't be more clean. Now, these, of course, are variations to the cycle. Again, you'll be taught that next week. More for intraday mastery, should I say, when it comes to that. But again, key, very key to understand, of course, the smart money trap zones and how to avoid them is to see the inducement first. Inducement high, makes across. Inducement low, of course, across. Just nicer in this reaction where you get pullback trade. Why? It's also New York, so timing does permit a pullback sometimes. So in this next example, this was only taken yesterday at the time of recording, so I don't have the full price section as it was, of course, occurring. Now, this is a very, very interesting one and one where smart money traders will probably have got really mad, and I'll tell you why. So what do we currently have to identify is, of course, your smart money zone or POI, whatever you want to call it, the mitigation. So we only have one mitigation area here, essentially, as there's no other real POI within this area over here. So what does that mean? Likely, okay, price may react. If it does react, of course, we must understand we want to, again, take additional confluences to see it as a valid entry. So let's see what happens. Perfect. Price gives us a reaction. Now what happens is, okay, it gives us this first reaction. However, the first reaction may not always be the right one. Maybe there's, of course, a 1 minute going on in here. And this is, of course, by the way, a 5-minute chart for reference. So generally a 1 minute may be here, and this may be your false reaction that you first get in. So additionally, we want to see, okay, what's going to happen? We want to see our inducements. We don't necessarily want to take it from a blind POI like such unless we get confirmations. So in this case, let's identify more zones. Now, this is where your smart money trader would get confused of the buy and sell aspect and claim they can trade intraday. What is this? Another zone. Do we take the buys? Let's think. Could potentially be a pullback. However, at this point, we're so early in the day already, so we haven't even approached London. So what might happen, almost approaching London down here, maybe we react a little bit like such, maybe we react. But what that means is we need to understand this could be a pullback. But does our pullback necessarily mean we mitigate this area? Or does it induce the zone as a whole? Now that's an interesting one because, of course, we likely want to expect to see an inducement, and this not being necessarily a valid zone where early traders get in, essentially. So what happens? Perfect. London does actually give us that nice reaction. However, we get this nice liquidity. It's just a very weak reaction, I would say. So what happens? We get, of course, our zone marked up like such. Now it's a question of, do we take the buys? Or do we take these sells? Or if you're already in these sells, do you hold these sells and take another sell, should I say? So, that's the question of, well, what's happening? We need a nice clear inducement, ideally with timing. So now our main session has opened, so being London or New York, so one of the two main ones. We've had, of course, a reaction, not the clearest reaction when you currently see the window over here. So we want to see some sort of inducement, ideally high to come low. Why is that? We have perfect liquidity here. We want to take out Asia low essentially. And then, of course, we also have are highs from the previous day. So we have a lot of liquidity targets, both high and low. We just want to see what does price want to do in that specific moment. Does it go lower or does it go higher first? So let's wait for an inducement. Perfect. We get an inducement of the smart money trader here. Probably a lot of mad people as it barely takes out their stop loss. And then what's going to happen? It's of course going to reverse on them. Perfect liquidity. Inducement high. Very fractal inducement, of course, over here. Price continues. Takes out this equal lows or quadruple bottom, whatever you want to call it. And then, of course, what does that mean? Can we gear up for a potential buy? I mean, why not is the question. You get perfect vectors, equal lows, liquidity. Again, mark this up about 3 times, but I hope you get the point. Of the liquidity being the 1, 1, 1, and then 2, inducement. Now, what does that mean? Can we take a buy? Potentially, but let's first see, where does the smart money trader also want to get in from? Well, they see their sells over here. You know, we've got the extreme now. But does that mean this is still valid? That's the question, right? So it's a lot of confusion, as you can probably tell. There's zones everywhere in this example. So what happens? You can probably guess the zone gets induced ever so slightly again. A lot of annoyed people, both there and here. Here, they maybe got a little bit excited, but maybe they were at break even. Same thing here. So again, these scenarios, you can see almost every single zone got smoked through. And this is why you should never just look at a mitigation zone purely just because it might look nice. Now, if you remember in the previous example, when we had this zone to the left, it was very clear because it was a major inducement, gave the characteristics of the, of course, vector candles going high, then the reaction. So hence why the zone over here was your smart money trap, and this was, of course, the prime zone. So only when, of course, to the left it was an inducement is it potentially valid. So in this case, we can see that's all liquidity. This is completely invalid for any sort of entry to take as such. So that is it from me. I hope you understood a little bit more about the smart money traps and how they occur again and again and again, never end essentially. So it's really key to see an inducement first, like such. Over here, inducement low, go high. Here it was inducement high, go low. Again, inducement high, likely will give us a reaction, probably a little bit brief as it will be appearing towards the end of the day over here. Could potentially take a target there, and then price chops around for Asia. So I hope that was clear enough for you to understand. Again, I would highly recommend that you start marking up zones and identifying your smart money traps where you maybe, if you were a smart money trader, would have taken, and watch how they react. Why are some valid and why aren't some valid, essentially? So I hope you took a lot from that and enjoy.
Take a more detailed look about these intraday scenarios and also including these smart money traps. For example, as you already know, the lit steps in action so far with the overall structure a little bit as well. Again, Asia range will play a huge role. For example, in here, we already see that Asia range is building on the downside in here. And of course, the first thing we do is identify the liquidity. Now, that's the first step for the lit steps we will do. And as we already can see and identify where it is, of course, we see these all these equal highs and also these equal lows in here being already grabbed by, of course, this time London Open, right? So the next thing we need to do is of course identify the higher time frame liquidity in here. And of course, as you can see in the equal highs in here, that is definitely a proper mitigation zone, meaning this will just become another smart money trap based on the intraday timing, as Alex explained pretty good, right? So let's look at it a little bit more. So what to do in the next thing, we identify we are in the cycle, or we're in the build-up cycle and the inducement cycle or mitigation cycle. Now we're just having a minor inducement out of Asia. But again, if we look to the bigger pictures back to the left, we have not done anything. We did not mitigate any demand or supply zone, or we did not grab any liquidity. So that's just a minor inducement on the intraday aspect of it. But of course, what we will do, we look for an inducement, and of course, we will get it after here. So now finally we grabbed on the bigger picture aspect of it, the liquidity on the upside, and now we can look for the mitigation zone in structure points as Alex described earlier. Okay, and then we finally done with the overall cycle, and also the intraday play can be done, and we can look for reversals in that areas. Okay, and of course we look for optimal entries covering next week and show you exactly how to enter this. But this is just in a nutshell of how we can utilize the overall structure with liquidity plus the daily cycles and the build-ups in a nutshell in here. But of course, let's take a look at this in depth now and combine it with what we have learned so far. Okay, so just minor structure, but more intraday as we need to complete the whole daily cycle. So first thing we will do, of course, as we see in here, we need to identify the liquidity on an internal point of view. So what we will do, we already see, okay, we definitely have Asia low liquidity here. We're already grabbing this minor liquidities in here, which is in the intraday aspect, a minor inducement out of Asia range, right? But if you look to the left again, what does this induce or do? Nothing, right? So we need at least a proper liquidity grab about here, right? So that's what we're doing. We cover the liquidity in here. Next step would be, where are we in the cycle? We cover where you're in the cycle. So of course we look for a better inducement. Now we're having only a minor inducement, right? So now we're seeing, okay, we're having Asia buildup, we're having a minor inducement at this point, right? So breakout, new higher high, of course, just the internal stuff as we showed like 10 million times at this point, right? Same stuff, so minor inducement. And now, of course, we look for a detailed inducement and traps to the left, right? So now we need to include the structure to the left a little bit more in order to actually find out the reversal point properly. So first thing we need to do, we need to grab liquidity, of course, for an internal play. And of course, we already can do something like this and mark this out as a smart money trap, as we have something above in here as well with the imbalances, right? Why does it work? There we go. It's a little bit of delay in here. Should be fine anyways. So with that being said, like again, it should be very obvious at this point what should happen next. So the question just is, so based on the cycle, what should come next? And again, a hint is we already had a build-up, we already had a minor inducement, and of course the only thing which is left is a medium inducement followed up by a mitigation to complete the cycle with the build-up, inducement, and mitigation also on an internal basis. So if you go back in here, so mitigation is next. Of course, it's not the smart money trap, that will be the inducement. So what we can do immediately, we mark up the next mitigation area after the internal inducement, and it can something look like that. We're having a smart money trap in here, faking the reaction, then getting an inducement, stay short of the mitigation, just makes a new push into now, final mitigation, completes the daily cycle, right? And of course mitigates the significant areas, and then we can look for more downside in here. Okay, so and we look at this in a little bit details of how it played actually out in this sense. That's exactly what happened in this sense. Okay, so we expect the smart money trap in order to grab liquidity, then building up this false channel again, and then looking for the final mitigation of this extreme push in here. Okay, step by step, slowly building it all together. Of course, what is else? Timing aspect. Of course, so this also confirms it, structure confirms it, plus the intraday whole play. So let's put some more advanced example in. And again, we're just staying on the internal point of view to get you that point first before we combining it all with the higher time runs, right? So guess what? What we will do? So that's a tricky one because again, some people might ask like, oh, why does the inducement not happen in London or whatsoever? That's why obviously the structure comes into place. Really, really important. For example, in here, there was a liquidity to the left, maybe a very significant structure. And as you can already see, this already has some sort of vector candle characteristics. Plus, before that, huge uptrend building. And the vector candle to finish it up properly. Right? So this already is an inducement. Okay, so the question is, where is the main inducement for the day? Even if we break the day, and obviously we start here. That's our starting point. But if you look at the bigger picture structure, we should understand that the inducement is where? No, not Asia highs. Right? That's why we have to think about, no. That's why we have to think about out the box. No, it is here. This already was the inducement. And again, just because it's on the day yesterday, if something like this takes significant structure, and of course, we don't need a London open inducement because we already had a main inducement to the left. Make sense? But then again, it's the same thing over again. Now this time it becomes a little bit more challenging because it's a little bit switched off. It's not the perfect scenario anymore, right? But guess what? If you just took the smaller cycles, it's the same thing all over again. So what's going on here? So first of all, knowing that, in which direction should we trade? Just looking at the bigger structure and where the main inducement is. There you go. Exactly. We're looking for shorts. And of course, by doing that or knowing that, what should they do if they want to go lower? Right? Of course, they want to do higher even once more. They don't need to induce this point in here though, because again, the inducement is in here. They just need to induce like a little bit. We don't know at this point how much. We have a very good understanding that they just want to build up the channel, but overall direction should be short. We technically don't need this London inducement in here anymore because we had this inducement already here. Okay, that's why we have to think about outside the box a little bit. And of course, that's why the whole thing can change a little bit. It can become a little bit confusing. Okay, but first knowing that, what do we have? Of course, we go induce high to go even lower, right? So now we have the Asia range being closed. Frankfurt kicks in, makes the last inducement high in here. We don't know how much it goes. Of course, we have a good understanding of the last mitigation in here. Of course, not something we wanted to trade at. But again, we're trading away from this inducement. Of course, we want to trade away from that. And we're just looking for short opportunities, right? So guess what? They're giving the reaction. But what is going on here? Yeah, and outside the box thinking is literally exactly what you need to do here, girl. So see, that's the box. You need to think outside the box. Ha ha ha, what a joke, right? Makes sense. So anyways, so what is what is going on here? What are they doing in here? Of course, they're faking a double bottom, right? So what is going to happen? Do we expect a reversal now? So should price pretty much go like this now? Oh, there you go. It just smokes through it. It fakes, of course, the double bottom before it does it. Not a surprise to us anymore because it needs to, retailers need to be induced. Or that's why the small reaction happens. Then it smokes through, right? So now advanced question, right? So can we expect a reversal now? We don't know at this point. If you just put it like this, okay, we got a minor inducement. That's our build-up. Minor inducement. And what's going on here? What is going on here? Right? So what we have in here now, we first of all, now think closely because you need to put the pieces together. This is the main inducement for the day. We want to trade away from that inducement because that grabbed liquidity. Okay, we need to trade away from that. What they're doing now on an internal basis though, they're faking the double bottom, giving you the minor inducement, and now they're mitigating that minor inducement. Okay, So what could happen right in this specific moment in here? First, they complete the minor play first, like this. This is the minor play, build up, minor inducement, minor break of structure, minor mitigation, and of course it gives the minor play. Make sense? So advanced question only again. What could happen here now and why? Again, just give you a few hints now. So hint, now we have London open. Another hint, look to the left. There's the next liquidity. We never grabbed liquidity at this point, did we? No, we did not. Right? Where's my pen? There we go. Why is it giving me the delays? There you go. Right, so we never grabbed liquidity to the low. We only had minor plays at this point. Another hint, internal break of structure. Choop. Right? So what is going on here now? Of course, we had the internal break of structure, the minor play, minor inducement, minor break of structure, minor mitigation. What's coming next? Mitigation of the rally area away from this, right? But guess what? What do we have now? And now things getting a little bit more challenging because now you need to really start thinking. Now, what is going on here? We have this inducement now after a minor play, but did we grab liquidity to the left yet? No, not yet. However, is that a valid play with an inducement here, inducing lower with London session confirmation? Yes, it is. So what can we expect if they want to go way lower? Inducing high and then go low. So that it becomes a little bit advanced in here. So now we know this is already a London trap open here. So we expect inducement high to do what? Grab liquidity to the left because we never did. Right? It becomes a little bit advanced. I know. So guess what? They're inducing high after the London trap, after minor cycling here. Right? So the question now, what should happen next? A, we will take out the main inducement for whatever reason. Or B, we trade away from the main inducement and understand that we trapped enough liquidity for the intraday play and go for the next liquidity, so which is obviously here. There you go. So hint, we never had an inducement here. Right, another hint, they induced high now. The internal structure being induced high now. And of course, we had our inducement in here. So guess what's going to happen? We finish, of course, the cycle like this. Right, and that's where thinking out the box, always looking to the left, will help you significantly as well. Because again, for my may think, oh, that's whatever, it should induce Asia high here. But again, the overall play again makes a lot of sense, but at this point it's more like being like this, and you already see you need to think a few steps ahead, because it's not always like they're doing one obvious thing and then immediately doing the next thing always. As you saw here, minor inducement of Asia range here after the build up, minor inducement, never took something from the left, but still the minor play you can trade. So you have a minor inducement in here, internal break of structure in here, having the imbalances, right? Getting the mitigation. Where is it next good to go? Until, of course, the next supply area in here, right? But this is only the minor play. Now you have to think again, oh shit, now it's London open. London open got the information again. Oh, they're taking the buy. Awesome. So let me induce them low first, making again the inducement low to grab the people buying or selling, right? And again, never had an inducement to the left. So they're faking again the buy trend to building up the liquidity buy side, giving these false higher highs internal. But again, the overall plays we're trading away from this inducement in here. And now we can look for the short, inducing high to go low again. Again, it will all be like a chess play, or like a chess game, and we need to start to putting these things together as a chess master or grandmaster, they don't play normal chess. The best chess masters, they can think like literally 20 steps ahead. I think the average of a grandmaster was 15 steps or something like that, right? And you need to develop that mindset. Again, don't see the obvious thing and then get confused when like, yeah, but I told us like whatever, inducement here, mitigation here, why did it fail? You need to put all the steps together. And of course, that's how we play this ping pong style. Again, if you look at my Insta, for example, guess what? That's the first buy, that's the first sell, that's another buy, that's another buy, that's another whatever exiting the buy is here. There's the first sell in here, and obviously that's how you play the normal play, and it all starts to make sense. The more repetition gets obviously into place. But for now, just again, start thinking like that. You don't need to be there, obviously. The only thing which is important at this stage, don't be like this, right? Be like confused and like, ah! Right? Because you cannot think those all steps above now. Again, it will develop over time. But as you can just saw, we need to develop those thinking in order to make the best out of it. It's not always that obvious. And as Alex said, focus on the Mona Lisa plays and don't try to play this whole ping pong style immediately, because it will be hard on the beginning. That's the obvious answer, right? So you need to develop this thinking step by step, what should come next, or what do they show us now? And again, always show what they show you now, not what you want. Again, in this again, build up, minor inducement. Of course, I want this thing now to go to the moon. But what do they show? They show the main inducement in here. Now they show me the perfect mitigation. After an internal break of structure, a minor one though. So this is good until the next area in here. Then a trick after the bigger picture break of structure in here. This is a valid thing now. Now I have the inducement in here. Awesome. Now I know this is London. Okay, London trap. Never grab the liquidity. Awesome. What do I do next? Need to aim liquidity again. Inducing high. Make the candles in order to fulfill the whole push, trading away from the inducement. And that's how you develop slowly but surely, again, this grandmaster thinking. Step after step, thinking a few steps ahead. For the internal play though, the ideal scenario again is build up in fake direction, then the minor inducement of Asia as a requirement, then of course a smart money trap after, then a final inducement with timing, and that final inducement with the timing should get into a mitigation area with an imbalance that gives a valid POI. Okay, that's the main steps you need to follow for an intraday approach. Of course, if you combine the whole overall picture like Alex did earlier, and what we will do later on, the whole puzzle gets together. But first, understand the intraday approach, understand the overall bigger approach, and then we slowly starting putting everything together. Okay, bigger play, smaller play. Bigger play, smaller play, and then a combination. So for an intraday play though, again, without taking too much, so I'm good with that slide. So build up in fake direction, minor inducement of Asia, smart money trap after, and then final inducement with timing, and then into a mitigation zone of an imbalance that gives a valid point of interest. Okay. So if you look at that in the charts now, again, what do we have in this example? It's the same thing all over again. You have Asia liquidity in here, building this quadruple bottom, false inducement low. To do what? Push price higher, building this false channel. Short side, what's the next thing we can expect? Smart money trap, inducement into valid mitigation areas. Right? There you go. Becomes a FFS. Look at the clock. Timing confirms the mitigation. And of course, gives the reaction. What do we do after the reaction? Internal break of structure. No, not really, sorry. Not an internal break of structure. Maybe under 1 minute. But guess what? We can make our markup the imbalance zones. Gets there, mitigates it. What do we do before that? Building up liquidity, inducement into the zones. What can we expect? Of course, or pretty much what we target at. Of course, low in here. And there you go. That's how you do, obviously, the overall play and the internal structure. Just looking at a little bit to the left. Of course, it will be clearer the moment you're putting more stuff into the whole place. And also it will help us even on the bigger time frames, like if there's no clear points of interest, for example, like this. like, of course, our point of interest for the 1 hour, this is the 1 hour, by the way. This is the 1 hour. We would usually pick this point of interest in here and never this one like randomly, right? So why did we pick this one now instead, you would ask. So again, it's the same thing all over again. What is going on here? Equal lows. Smart money trap already, right? Smart money trap. Failing. What do? Building this short channel. Now, this is obviously Asia range in here. And look what they're doing in here. Vector candle to induce these areas. And of course, our ideal scenario would be in here. But as we know that this is the 1 hour, this is still a lot of distance to cover. So what we will do instead then, we dig into the intraday play. This is the intraday play, and you see something like that. And out of a sudden, you should understand, oh shit, that this area we just marked up, just based on the timing and on the internal play, look at it, building the channel, false channel here, huge vector candles for the inducement, even more second push with, again, huge vector candles into this mitigation area to the left. But guess what? London Open almost to the minute. And again, this gives you a valid point of interest for an internal play, with even if the higher time frames are not clean. And that's how you combine the whole thing. If the 1 hour is not clear, maybe the intraday play is. If the intraday isn't clear, maybe the 1 hour is. And that's how we will jump from bigger structure to intraday structure, so on and so on and so forth. Right? And guess what? What will happen after that one? With everything you know so far, just looking at this bigger picture, what should happen next? Of course, the tube, right? And then we look for entry opportunities, obviously, after that. Okay? And again, the higher time frames support the lower time frames, and the lower time frames support the higher time frames. It's always the same. It's just a way of how we're combining things. Okay? For this week, though, again, as we have a whole week until the next week, and as we're combining everything, you need to get a feeling for the bigger picture, meaning intraday plays plus the overall structure, how Alex covered it. Okay, but first, focus on intraday and on the bigger picture, like separate it. Don't put everything together yet, because we will do that obviously in day 3 and 4. Just understand like the bigger aspect of it, with the demand and supply plays, with the decisionals, with the extremes, break of structures, and also the intraday plays. And then slowly but surely we combining it, because if you do that right away, you will confuse yourself, and that's what not we want. So that's why we separate a little bit now, in order to combine it everything properly when we have all the time for it. Okay? But again, another example to make the intraday even more clear. Again, we had it like a couple of times now. There you go, small money trap, inducing it, proper mitigation, timing, tube. Let's take a look at a few more examples to get literally a better feeling for that. Because again, it's very important to understand the internal play first, and then we combine obviously with the bigger aspect, as Alex did very good. And again, it just makes more and more sense. And first we introduce or complete the daily cycle, and then we combine everything. Same thing in here. What are we doing? Right, of course, we identify the liquidity. Now we're breaking out of Asia range to the low side. This case, we had a smart money already here in Asia. So the smart money trap is already completed with this false mitigation in here. Gives a false reaction. What does it do in the process? Of course, creates equal lows on also an Asia low. So the only thing next in line is the inducement of this point in here. What comes after? The mitigation, and this time in the lower time frames. In the 1 minute, there would be an imbalance in here. Then we just look at the clock again. Timing confirms the overall play. And there we go. Then obviously you can expect something like that on the intraday aspect of it. But you see how we're slowly combining it over and over and over again. It's literally the same stuff over and over again. So let's take a look at another one. Same thing in here. See, smart money trap, they did in Asia as well. We identify the liquidity, internal liquidity, this structure point in here. But where's the real liquidity? Of course, it's external of a different day, which is above these areas, right? So now we see this is the extreme of the push that led to the whole pullback. Now we're having our smart money trap. It's literally exactly the same as we had in the earlier example. First, what they're doing in here. Okay, they induce kind of Asia range on the top side. That's why the whole push to the downside happens first. But guess what? They never grab this liquidity areas in here, right? So of course the liquidity is still above these areas. Now finally we have an inducement to the left. We never had that in these areas and never induced anything to here, right? So now we're having an inducement to the left structure. Below that, of course, there's your real mitigation area with the imbalance in here. What do they do? Price comes, mitigates that. When do they do it? Perfect London. And of course, what can we expect after? Very easy at this point, isn't it? A chup in here. And that's of course like some sort of Mona Lisa trades. Of course, that don't happen every day as we wished it would be. But of course, we need to focus on those to get literally 1 to 10s on a daily basis. Because again, we of course will show you later, literally on every time or pretty much on every pair, something like that happens every day. And we just need to identify it properly, combine it with the structure properly, and put everything step after step together. Okay, look at another one. Right, same stuff all over and over again. This time Asia high, never been induced, inducing low with what? With the whole channel building. This time no smart money trap, but guess what? And for fuck's sakes, it's literally the same thing as we discovered earlier, right? And of course, this demands areas in here would be the next point of interest. Kind of see the hardware of the wick in here, right? But guess what? This now leads to the whole break of structure. We never had like an inducement to the left yet. So what was going to happen? They come back to these areas later, right? Of course, and then mitigate and then shoot out of them. Look at that, insane. But for more about this one, of course, exactly later, more about that. Just another one, because it's so rare that it happens, right? So what do they do in here? Even more obvious. Of course, seeing the whole channel of Asia trending downwards, giving this false channel builds up in here, even creating equal lows once more in here, giving the false break of structures in these areas. You're faking obviously the false support, whatever, right? What's the next thing in line we need? Smart money trap, or in this case, again, it becomes of a fuck's sake, just shoot straight through it. And again, then you look for the next mitigation area. In this sense, again, on the 1 minute. Then again, next thing you do, look at the clock. Didn't mark it up here, but you already can see it's in London area. Perfect timing again, over and over again, same stuff. And what do we expect? Of course, here's the chup. And again, what do they do here? Faking the Asia high mitigation. Smart money trap gives the false reaction. And of course, breaks later with that inducement in here. Repetition. Always the same intraday approaches. Okay. Another one, a little bit more advanced one. So what do you do here? Same thing. What do they do? Trading whole Asia range buy side liquidity. Before they move perfectly higher, they induce low first, right? Faking the break of structure in Asia, never broke out yet. There we have it. Our minor inducement never induced something to the left. There's no structure inducement to the left. So what do we need instead? Of course, we expect the first smart money trap. inducing these highs after, and then mitigating properly. When do they do it? Also, time can be a little bit off sometimes. Of course, it doesn't need to be always perfectly London Open. If something like that happens, not a problem. What have you learned so far? You use what you learned. There you go. There's your internal break of structure this time. Confirm with the final inducement of the smart money trap and the mitigation. Internal break of structure. You're finding your mitigation area with the imbalance. Gets the mitigation here, right? What is coming after? Of course, now this more main break of structures in here. Price comes back, mitigates this imbalance areas. This, by the way, is also an EDM trade later on for us. And what can we expect after? Of course, something like this. Slowly but surely combining all the little steps and putting it together. Same thing in here. Of course, this thing becomes a smart money trap, will never be in point of interest. Why is it smart money trap, not of FFS? If you look at this little candle in here, it first gives a huge reaction in this candle, and then of course then it shoots. So it's technically given a reaction first. Daily cycle components. We have a really good understanding now of Asia range, of how it should be induced into London, right? And then of course move in a different scenario. But of course there's way more for the overall daily cycle components to make even the intraday plays way more obvious, because of course there's way more than London. So let's dig into it. So we covered Asia range, we covered London Open. What we're obviously going to cover now will be New York Open. But again, for us, New York Open is not really New York Open. We have a New York Trap time as well, which is way more important than New York Open. Then we will have London Close. We have the really, really crazy magic manipulation minutes, and that's just the freaking cheat codes in here. And then, of course, we will show you how the overall day can look like in terms of timing confluences and the stuff you learned so far. So, and just mind me, we need to pick up the pace a little bit. So if I'm going too crazy or too fast, just hold me up here, okay? So we will start with the New York Trap though. It's pretty much like London, but different. The intentions are literally the same. So what they will do in New York Trap, again, it's the same plane over again. So the New York guys come into play, right? And they say, okay, we want to take over now as well. And of course, London is still into play. So sometimes there's always like these little issues with them both. So that's why they're not happening into London Open, New York Open. That's why we will use New York Trap time, which is 1 hour after New York. But you need to understand that there will be traps at London Open, because obviously they're opening their session, and there will be, of course, their manipulation in place when they jump in. But then again, London is still into place, and that's why they're still arguing a little bit. No, we want to push price higher. No, now we jump in, we want to price for lower. So that's why the first hour is always like a little back and forth. And then usually at 3 p.m., which is 1 hour after New York Open, is when the real New York Trap move happens. That is very important. So you need to understand New York Open, which is 2 p.m. UTC plus 2, will be sometimes some sort of traps. But then 3 p.m. UTC plus 2, no, for UK times it will be 1 p.m. New York Open and 2 p.m. New York Trap. Okay. Again, and then 1 hour after New York Open is when the real trap happens, and that is then 3 p.m. Okay, for UTC plus 2. So how does it look like in the charts though? Again, what do you have in here? Very familiar, doesn't it? So we have equal highs like crazy, false channel in here, faking first this low trend. Guess what happens? Inducement of Asia highs plus this major structure in here, just by a little bit. When does it happen? You already can recognize this box. Happens perfectly in London Open. Of course, they're grabbing the liquidity in here, making the huge push after liquidity grab. Continue, continue, continue. After here, consolidation. Before they're pushing, they push price higher to even go lower. This is where New York opens in here. But guess what? This box simulates the New York trap time. And guess what they do? New York Open getting induced by the trap time, and then price can continue higher. Another example, look at this one, Asia range. What do? Building up the channel. Guess what? Last channel in London Open. Awesome. What do? Of course, grabbed all the liquidity, smokes price through Asia like nothing, giving the false pullback, right? Then again, guess what? This is the fake New York Open in here. You see this little wick where they have like this argument, like, oh, I want to push price higher, no, lower, And finally, this is the final inducement in New York trap time, right? As you can see on the clock. Again, this line is 25, so this is literally 5 to the clock, at 3 to the clock, New York trap time, and then they're pushing price higher for the next liquidity zones in here. So New York Open usually makes a trap, like in the wrong side direction, and New York trap time literally makes the trap, then the final inducement, and then price can push higher. As you can see here, New York traps, and then the final push, the final inducement usually is in New York trap time, which is 3 o'clock. Okay, so how does this look then into chart examples? So we have an overall hour cycle as usually in the daily aspect of it. Of course, it's the same thing over again. Smart money trap. This area is an interest in here. When there's a tap into London Open, perfect inducement cycle done. Obviously, there's smoke price lower after the final inducement in London Open. Guess what? Faking the thing in here after this inducements in here, of course, giving the false pullback, right? So now, there we go. False flag, pushing price lower. Now, of course, like it's coming into New York trap time. Again, the ideal trap time is 3 o'clock. Now we're on 2:40, so close enough. And then again, out of a sudden, they're starting to reverse price and making these inducements in here. It happens when New York trap time. Okay, so then again, another example on a different direction here. Again, we have this inducement to the left side, right? So you don't need to induce higher in here, right? So that's why they're starting to induce lower here. Never grab liquidity to the left in here, right? We only had this. Guess what this will be? With the timing though, timing like in the middle of Frankfurt Open and also New York Open. So we have a pretty good understanding that this is what? Smart money trap gives a reaction. Awesome, right? So what can we expect afterwards? Of course, ranging, right? So what do they do here? Ranging, inducing low, creating what? Equal lows in the process, equal highs in the process, right? So they're inducing high. When does this happen? New York Open. They press price higher to induce now high. So what can we expect just in terms of cycle? Should this be the final inducement? No, we wait for what? New York trap time, right? So inducing high first to do what? To price lower. So how do we know if this is a smart money trap now or mitigation? Right? How do we know? We can know out of multiple interests, but again, we use timing now for the daily cycle. A hint, right? So what does the timing say here? Right? It's not New York trap time now. So guess what? It becomes a smart money trap. Now we're moving into New York trap time. Now we're having this demand area in here, right? Gets mitigated with the New York trap time. We're just utilizing time and of course these trends. That's why again you see Why is this not a zone? Why is this not a zone? Why is this not a zone? Like, of course, it all makes sense if you just look at the clock a little bit more, and you will notice how crazy it will become. And again, after the trap time is done, then they reverse price. It's literally clockwork for them. They do it literally. It maybe sounds like maybe that's 1 or 2 examples for you. We will show you hundreds. Anyway, so what is going on here? Build-ups like crazy all over the place, right? All the channeling upwards. When is price done? Inducing high though. Again, making this final last inducement low to push price higher. When is it done? New York trap time. Getting now, 3 o'clock, pushing price lower, right? You need to definitely get a clock. It's so important later on, right? And again, also, what is this? Like this dinosaur pattern. This other guys would be very proud of us. Again, very clean example here. What is going on here? Same thing. Asia low, Asia high. This 100% becomes, guess what? Smart money trap. Very easy at this point, isn't it? Right? That's obviously the reaction of the false one. There's your inducement, right? Minor one. And now, of course, you're having, again, you see how we don't need a smart money trap to the left now because the smart money trap is literally in here, right? Smart money trap, inducement into mitigation areas. When should it happen? New London Open in this scenario, right? Missed it, unfortunately, right? So stayed short of it like a little bit. So sometimes what do? They come back at it, right? They come back. More about this later. That will be a crazy one. You will love that one. And then, of course, they mitigate it properly. So obviously, it doesn't need to be always perfectly London Open in here. Now they mitigate it, fulfilling the whole play, right? So what is going on next? Of course, tube them. Now we have London Open. What do? Reversing price. New York, false New York move though. Again, faking the break of structure in here with New York Open. And guess what? Pushing price lower. Now we have New York trap time. Look at the clock in here. 3 o'clock, almost to the minute. Guess what? Done inducing now. Can push price higher. See how they do it all the time. It's clockwork, literally. It's clockwork. New York opens, makes a false move, induces high first, push price lower, stopping out everyone. New York trap time, it successfully trapped everyone. Again, push price higher. Like clockwork. Time is money, exactly. Right? And like a not clean one, like for example, here you had like masses, whatever. And this is a really rare arrations where like this holds in here for whatever reason, right? It holds. Okay, happens sometimes. But guess what? We have New York trap time now. And of course, you push price higher then. So let's look at a very detailed cycle to make things a little bit easier. So guess what? So again, this is literally from Friday. Again, we don't show you like whatever yearly old shit whatsoever. That's literally Friday. Okay, so what is going on here? And now please, everyone, be very patient about this one because this stuff is essential to understand for the intraday play. Again, because if you combine it later with, I don't even know what it is. Maybe it is EU, GU, I don't know. Could be Chiche, I don't have no idea. It's literally every pair. It doesn't really matter. All right. But guess what? If we want to combine it later on, as Alex did it on the higher time frames and for the overall plays, again, first we need to start somewhere. And that's always the intraday plays. You see, we don't look at the left yet. We just look at timing to understand the daily cycle and the session's intentions. Okay, so we don't need anything to the left yet. Of course, later we highly need something to the left, but just to understand the pure daily cycle, we don't need to look to the left yet. Okay, we're just looking at timing aspects. It's TJ. Awesome. Thank you, Queen. There we go. So what do we have? Same thing all over again. Building that buy trend, building this false channel. Again, now channeling up out of Asia range. Minor inducement, right? There you go. This is the inducement. Now, when does it happen? London Open, almost to the minute, right? So guess what happens next? What is this? After the inducement, after the cycle is done, right? So this is the internal break of structure. So what we're looking for next, again, we're looking for mitigation. We're marking out this zone with the imbalances, huge imbalances here. That is the inducement from London Open, right? Awesome. Also the extreme of the push, right? So what do we expect next after the internal breakout structure? Of course, price comes back, does what? Mitigates the zone. Awesome. Is that surprising? I don't know. Right, so what's going on after? Making now this main breakout structure out of Asia, obviously only an internal breakout view now, right? So what is going on? This point in here is the decisional, right? After this internal breakout structure in here. Guess what? This is decisional, that's the extreme. That extreme already is mitigated, as you can see closely in here, right? So the decisional play inside here gets mitigated like clockwork. Guess what? Now you're trading the order flow, right? Look at it. Mitigates the order flow, makes new lower lows, order flow, making the imbalance, order flow, making equal lows now, inducement with the vector candle, channeling downwards until when? And now look at that shit. When does it stop? Like, are you kidding me? Like, what in the hell? 15 o'clock to the minute, New York trap time. What is that shit? False New York trap move, right? To the minute, New York trap time. When does it reverse? What in the hell? Are you kidding me? That's just by looking at the clock. What in the hell? What the fuck? And again, guess what? If you combine the structure now, if you combine mitigations, if you try the lower time frames, if you try all the others, we have so much stuff in between in here. We have EDMs, we have LEDs, we have even EDMs here, we have a LED in here. It's just crazy. And that's how you see us pretty much playing this sell in here, making the buy in here, making the sell in here again, whatever. Like it all makes sense to you so much at the ending, right? So again, that's just timing. Just think about that. How crazy is that? Right? We have 15 other stuffs we combine into that. So for this day, just understand this little thing in here. And again, it looks so simple, but again, this is the shit. This is literally it. Of course, it will not look like this perfectly all the time, but understand. Asia range, minor inducement. Maybe this is the small money trap to the left, right? Getting the false reaction. High inducement with vector candles, speed. London Open, what does it best case do? Of course, mitigate something or can induce something. Internal breakup structure, mitigating in here. Obviously goes lower. Small money trap in here maybe. Building equal lows. New York Open makes the false push. Goes lower, inducing lower. New York trap, mitigates something maybe. Internal breakup structure, maybe here. Mitigates. Off to races. It's like clockwork. But again, it becomes even, that's nothing yet. That's the obvious stuff. That is the obvious stuff. That's not even like crazy yet.
So we will be looking at a few more examples on the New York Open reversal characteristic. So now it's important to understand the previous aspect of the day. So London Open, for example, did it induce enough liquidity that we can then actually have a reversal in New York? Now, sometimes we get a continuation in New York, say if London has induced major liquidity, so the major inducement essentially. So if we look at, of course, the illustrations in front of us, well, examples that you've been taught, you can already see we have this liquidity in Asia high. London Open induces Asia high. Then we get our continuation bearish, breaking out Asia low. And then, of course, there's fractal liquidity here in the form of this equal lows type of trendline stuff. And then, of course, we have a mitigation here to the left. Now, we're not always going to have a mitigation to the left. Sometimes what will happen is if we don't have a mitigation, we simply have our inducement of this relevant liquidity over here. And we have, of course, the perfect vector candles that then help us understand the inducement characteristics where price can then continue bullish. Now, we do have other confluences, of course, how you can enter trades like here. Of course, we will be taught that in week 3. But for now, it's just important to understand the reaction. So we have our New York open box, you can see in gray over there, which allows for the reversal. So sometimes we get a reaction of the reversal, and then maybe London close gives us the continuation. Again, it's important to cement the daily cycle variations. Again, you will be taught that in a lot more detail, so don't worry, we are teaching you in step by step so you can just get familiar with it and start to implement it as well. Okay, so below, same thing. What do we have? Perfect equal highs over here of Asia high. Even this trend line build up. So trend line traders at this point are pretty excited because price is actually going in their direction. We even have the breakout traders here taking it from Asia high. And then of course, what happens? London open inducement. Now, of course, you could say the candles or the velocity of the movement here as compared to here where it's very minor depends on what's to the left. We may have more significant liquidity in the form of equal highs, whatever it be, where price then does something like this. And then price induces that, hence why our inducement now ends over here. Again, London open inducement, perfect reaction as you can see, also takes out the low as well as the trend line over here. Again, same characteristics. We get this fractal trend line type of liquidity, these highs, price then vectors. You can see the vector candles over here into these areas to the left. Again, we may have these mitigation areas. Now, this is where the smart money trap comes into place of why this, you could say POI, imbalance, whatever you want to call it, is then invalidated, and how we actually expect price to then induce this zone as we get a perfect inducement in New York. And then, of course, the reversal in the continuation aspect, taking out these highs to the left. So this is really important to understand how you get variations, but for now we'll be showing you the simple reactions of New York open. So first example, we have gold, as you can see, and then we have it on the 26th of April over here to the bottom. So again, if we look at the liquidity aspect, we can already see, okay, Asia. So let's mark up Asia liquidity. We have perfect equal highs, equal lows even. We even have these even more perfect equal lows at, of course, Asia low. So again, everything's fractal. So you're having 2 sets of equal lows, this trend line type of stuff over here. Again, we can continuously mark it where it's very fractal, but it's important to mark relevant liquidity. We also have smart money trap over here. Again, you will be told that in more detail. But yes, of course, going forwards, what happens? We, of course, get our London and open inducement low over here. And then, of course, we get, of course, equal lows here being induced. And then price, of course, now has a relevant inducement of liquidity to the left. London open gives us the perfect reaction to then go bullish and start taking out, of course, these structurals, the highs, you could say, or whatever you want to call it. This is why we don't use structure in that sense, because yeah, they could say this is a break of structure of this point, etc. Then we should continue and take whatever these IFCs, and essentially that should hold when it's actually a trap. Okay, so what happens? Again, we create these new reactions. Now, it's important to understand that we may get this inducement of structure to the left. It does not mean it's entirely finished. So what that means is we may have a relevant area, relevant medium or major inducement to the left, and these are just our pullback, essentially, reactions. So what happens here is, of course, price takes out these trend lines. New York open gives us that continuation to then take out relevant liquidity. So it allows us to take the buys. Again, we take buys in there. And then, of course, what we expect is, of course, the continuation bearish now. So again, it's like our reversal. So London open over here. Then New York, we've induced enough liquidity to the left. Price can now continue bearish, taking out all these minor levels of liquidity. And why is it minor? Because it's, of course, within the same day. It's important to understand that. So Next example, again, it's gold again, of course. Again, you can see these liquidity buildups pretty easy at this point. Remember, Asia is our guideline for that. You have these trend line type of stuff over here, these lows down there. Remember the low and the high as well. Then of course these lows here. Now fractally speaking, you could say that's of course our Asia inducement, and then that's why price allows it to push like such, but we don't use that as a reliable point for price to continue higher unless this point has induced major liquidity to the left. That's where we can get our continuation where Asia high or low is not induced. So one will be induced, just depends which one, if we're going bullish or bearish. So what happens? Price induces high. Again, this is more so in Frankfurt. London Open then allows us to take the continuation. So whether we get our inducement in Frankfurt Open or London Open, then of course depends that London Open will be a continuation and not necessarily the inducement in itself. And as we get this reaction, it's so perfect because we get this liquidity. Price induces high one last time before these confused sellers over here. Of course, buyers also trying to get in. They get induced from these perfect candles over here. Then we start taking out all of this liquidity to the left, including the low, the trend lines over here as well. Of course, we get traps too. Again, these are key. A lot of you may get familiar with this as the smart money concepts are like a more new trend as opposed to maybe trend lines, and how you can avoid taking losses with zones like such or random POIs over here. That's a really nice smart money trap because it actually gives a nice reaction. Of course, in our eyes, it's liquidity essentially. So what happens? Price now vectors really clean over here. However, again, doesn't always complete. So this is where we get the vectors. Price also creates this really nice buildup. And then we get our last vector over here, which is relevant to what's happened to the left. Then we can take our mitigations essentially in New York, of course. However, again, it's important to understand the reversal and continuation aspect. So in the beginning of New York Open, we get the reversal, taking out this relevant area of liquidity now. So we've taken out quite a bit of liquidity here. Price can now, of course, then continue bearish. As you can see, relevant liquidity is taken. Take that mitigation there. So these are really nice trades where you can hedge, but we hedge with the confluences as an addition, of course. So next example, we have, of course, Euro JPY. Now here it's pretty evident the liquidity buildup. You can see in the form of this trend line. Not the straightest trend line that I drew. I'm not good at drawing. Of course, equal lows even there, below here. Again, same fractal idea, liquidity, vector candles to induce, and hence why we get this slow choppy reaction. It's important to understand, of course, Asia is our guideline. We're just seeing the same cycle play again and again and again. Again, we have equal lows over there. What happens? Price doesn't quite induce Asia high. Now, it might be tricky to see, so I will, of course, remove that. So it doesn't quite induce Asia high. However, it does induce all of these areas of liquidity to the left in London Open, hence why we get this pullback over here. However, again, when we look to the left, we have more relevant areas of liquidity, hence why price then continues bearish, makes these reactions like such. And then what happens? It induces low to a relevant area to the left, could be a smart money trap, and it could be, of course, typical liquidity as we see. Price then shoots bullish. What does that do? Takes out Asia high as well as being equal highs, as well as the seller's liquidity that I think price will then continue bearish like forever, you could say. And then what happens? We've induced enough liquidity to the left. Remember, minor inducement to the left. However, it's going to be a medium or major inducement. So we've had our medium inducement to the left over here in New York. Again, we get these perfect fractal buildups like such over here. What happens? Price continues bearish, takes out these sellers. Of course, the buyers were taken out from the inducement itself. We take these relevant areas again with confluences we have, and then price takes out the medium inducement as it's in current day price action. And that's important to understand because we will teach you again how to avoid traps like such, where you may see this zone as a POI to then take because, you know, this is our break off structure to the left, essentially speaking. So this is why it's important we don't trade structure in the way people see it. However, we use relevant market structure as you were taught in the basic master map on week 1. So then we have GJ, and as you can see, again, liquidity is the same process again and again. So get yourself familiar with marking up these liquidity levels, trend lines, equal lows, equal highs, breakout traders even. Okay, so what we can see, we mark up the relevant areas of liquidity essentially. We're not going to mark up so far back, like these areas are not relevant in the sense we've had our reaction over here, the vectors, etc. However, it being Asia, it doesn't sustain essentially. So what happens? We induce low. You can see the perfect vector candles over here, taking out these equal lows, the trend line. So enough liquidity has been induced as well as Asia low over here. And again, when does it happen? Perfectly in London Open. We take our trade over here. Of course, we know then that price allows us to take the continuation trade. Now, why does it continuation? Because it means we have a more liquidity to the left that's relevant and it's in line and it's essentially close to where price is trading before we can continue. So what this means, we have these areas like such over here, missing out all of this area. Price instead makes these equal lows over here. Perfect vector candle over here. Price now induces high. Why does it induce high? Because of course we've got to take out relevant areas like such here, as well as the equal highs up in Asia. So New York Open, of course, we will get our inducement. Then what happens? Perfect continuation reaction. Look how clean that continuation is. So we induce high perfectly. Minor inducement, of course, your false smart money trap zones over here. Again, these are all just liquidity buildups. Sometimes look rather odd. Again, same thing here. People are channeling here, thinking it's still continuing, but that's when price is slowing down. Again, let's look at more examples. So we have, of course, GBP CHF. Now, this is a pair maybe you're not familiar with. We use it in lit because it's very clean in the lit cycle. So yeah, you may be thinking, why this pair? But honestly, you will see how clean this is, generally speaking, and how we have a lot of examples of this. Even in my beauty of the days, I cover this pair a lot as well. Again, it's for orientation to understand too. So we, of course, have our build-ups here, the highs, of course, these trend lines over here. What happens? Frankfurt Open makes this inducement perfectly. Get the perfect vector candles over here, perfect fractal highs over here, again inducing liquidity to the left. What does that mean? London Open mitigation essentially over here. We come lower, again take the consecutive mitigations over here. What does this mean? Of course, we have our inducement low off the trend line liquidity here. So price has essentially induced enough liquidity at this point. Again, for our continuation aspect, price then continues bearish. However, we get, again, more build-up. So this gears us up to understand that actually price could be ready for sells. We see already perfect vector candles, and we even see at least a fractal target that's within risk to reward reliable, you could say, in that sense, that it's a very decent risk to reward if we take, say, something over here, and of course, at minimum close around here. Again, we know that this is our trap. You don't take that. So the order of things is very, very key. So once we've had that, what do we get? Our reversal in New York. Of course, inducing smart money traders over here, taking out liquidity as well. So that's it from me on the New York Open reversal characteristics. So I would say get familiar with seeing these reactions, backtest them, identify the reactions. You, of course, will get the indicator to see it easier when you're backtesting. For now, just mark it up or look at it, identify these liquidity points and the reversal characteristics. If it's not a reversal and it's a continuation, understand why. Remember, understanding the inducement aspect, which type of inducement it was, as well as the liquidity aspect of targets essentially, will help you understand why New York can be a reversal or it could simply be a continuation when there's, of course, liquidity to the left that needs to be taken out. Of course, I would recommend saving these, take screenshots, of course, on your own charts, so you have a good backlog of trades to look at. So thank you very much, and I hope you enjoyed that.
Then we have London close. London close, pretty much as you can see this, guys, that's literally almost like me now, right? Getting a little bit out of power here. So obviously London close, these guys want to go home at some point. So what does London close usually do? Again, London session guys, they're having their position in the market all the time. At some point they want to go home. And what do they need to do in order to go home? They need to close their positions. So they need to mitigate their positions, right? So that's when they have the imbalances whatsoever. They're not efficient price, deliver price in this point. They want to go home. They need to clean up their shit. They need to mitigate and then close their shares and say, thank you, we go home. So that's why London close usually mitigates something. Okay, what does that mean in other words? Right? So as you can see here, as our normal plays, you have the same thing all over again. Isn't it funny? Right, again, internal break of structures, whatever later. Proper mitigation here. Then this, of course, right, this valid break of structure and a false pullback, like clockwork, like New York trap term, gives the reversal. Inducement, perfect. And then the mitigation, as you can see here, imbalance, London close to the minute, to the apps. Oh, sorry. No, London close, by the way, is a 5 p.m. UTC plus 2, right? So literally you can calculate yourself, like the moment London opens, right? And obviously it's 8 hours after that. And then of course, this is London close. To the minute they mitigate whatever the imbalances and then price continues lower, right? So it's like literally, see, it seems unbelievable. That is real life though. Look at it like this. What is going on here? False push to the downside, right? This time in a little bit middle. London, Frankfurt Open and London Open, doesn't matter. So what is going on here? Building up these equal lows in here, giving like a slight reaction. This builds the demand area with the imbalances. London guys want to go home. Look at this, by the way, New York trap time, right? Almost to the minute. And again, London wants to close the session, wants to go home 15 minutes before they go home. What do? They mitigate the positions out of there. Price can reverse. Crazy. They make it sometimes so obvious. It's literally insane. UTC plus 2. Again, we give you these indicators later. So you have all these indicators. You don't need to draw it yourself anyways. You get the Asia range drawn automatically. You get these boxes drawn automatically. So you don't need to bother too much about it. Now again, for you, there will be a box in here then, right? And again, there will be a box in here and there will be a purple line in here. Like literally, sounds crazy, but that's literally what it is. So anyways, okay. So again, guess what we have in here? Same thing all over again, building up, right? Again, one is the high in here, right? A little bit later than London, doesn't matter. It's the same shit all over again. What do we have? Again, now breaking price lower, lower, lower. Until when? When are they done inducing? New York trap time. 50 minutes short of it. Okay, what do they do afterwards? Pushing price higher. What is going on? London wants to close. Small money trap, and this time FFS. FFS in here, perfect. This imbalances after the inducement. Always the same stuff. Gets mitigated by London close to the minute, almost 50 minutes before they're closing their session. They say, yeah, we need to get our positions out of there. Mitigating, can push price lower. Crazy. All right, another one, same thing all over again. What is going on here? Is it even surprising anymore? Frankfurt Open this time to the minute, same shit all over again, right? Inducing Asia highs, building the channel in the process, internal break of structures, mitigation of that inducement. Awesome, pushing price lower like craziness. Until when? This time London Open and New York Open, sorry, if you can look at the time in here. This time it's New York Open, it's totally fine, right? But guess what? Channeling upwards, this is the inducement, gets mitigated after the internal break of structure. It's always the same, guys. Do you see that? Again, this is the inducement in New York Open this time. Internal break of structures, this creates an imbalance, gets filled to the pip. Okay, when does this happen, by the way? New York trap time. Interesting enough, just look at the clock and you will get that perfect entry like to the minute and to the pip. Okay, what's the next target? The demand areas. Until when? London session closes. 5 minutes before they're closing the session, they're mitigating this demand areas. Okay, push price lower. Just insane. So London close also can become a late New York reversal low. It doesn't need to be always a mitigation. It also can be an inducement or reversal. Okay, so when this happens, it usually acts as an inducement, not a mitigation. So London close can also have something different. So can be look like this. As you can see here, what a surprise. It's always the same stuff, building the channel, inducement in London Open. It's really always the same, right? So then building the equal lows in here, faking the pullback, making the inducement here after this equal lows, inducement, mitigation of the inducement. Guess what? There's the reaction. There's your proper mitigation here. Again, fails after with this one in here. Doesn't matter. They want to induce high to push price where? Lower until, again, at least this area is in here. But of course, they go for the next valid structure point. This was here one. And when do they do it? 10 minutes before they're closing their session. So they say, thank you, you want to get out of there. The moment they're doing that, price will reverse. So this is how it acts as an inducement. So it can act like this. Again, if this is Asia range in here, it's always the same. We saw that like 15 quadrillion times so far. London Open will make a false reaction. New York trap time can make obviously this trap in here. Then London close also can be the inducement in here. And then of course price can go higher afterwards. Of course, everything will make more sense the moment we're looking to the left, a little bit more intense. And sometimes you will get an inducement and a mitigation. So we can also have something like this. And again, the inducement happens in here. We look at the clock. It's not even London close yet, right? So what can happen? Of course, this gives us a pullback. And then again, now it is London close. It's 17 o'clock to the minute. So what do? They mitigate their inducement area. It's always the same, like clockwork, right? We mark out the mitigation zone. London closes. They want to go home, mitigate the inducement, right? And then obviously they can reverse after that. It's literally like clockwork and helps you so much to identify that just on an intraday aspect of it, right? It's again, same thing all over again. And this, for example, will be a very good one later, and you will freak out about this example later. The magic manipulation minutes, okay? Because sometimes timing won't work as we want it does. Like, of course, it cannot be every single day that they have like a London inducement, New York reversal, whatever, New York trap time, London close mitigation. Of course, they need to switch things up because they think we kind of retarded, right? And they think like, oh yeah, but if we do it on different times, then it's a whole different thing, right? So guess what? It's possible that they didn't grab enough liquidity the first time with their perfect ideal time zones. And in this case, they will come back with their initial inducement to induce the inducement. And you're like this, like, huh? What? Induce the inducement? What's going on? Don't worry, it will make sense in just a minute. So yeah, if you don't call me crazy already, then again, this is where the stuff will just get ridiculous. It will go so crazy and you will think that's impossible that it can be like that. But as you will see, like in a very short time, it's just insane. And they make it sometimes so obvious that you actually be like that guy, like, what? What? Are you serious? And you will not believe that it's actually possible. But anyway, so what is the magic manipulation minutes? Magic manipulation happens after the London Open inducement, okay? Or they can create the inducement itself. This can be at 12:30, all again UTC plus 2, and 12:30, also UTC plus 2. Okay, and remember, again, you're better than a clock. If it doesn't happen to the exact minute, it's of course about the intentions, and that's just orientations for you to help you to see the complete insanity later. Okay, so always use that as a confluence and to know exactly what you look for. And always analyze the behavior and identify whenever or not they want to come back towards that areas or not. But again, just by this magic manipulation minutes, you will freak out. Okay, so just notice it's 10:30 and 12:30, because again they think people are kind of retarded and they will not figure that stuff out. But yeah, we just call it the magic manipulation minutes because that's when they're literally manipulating price on purpose, because they UTC plus 2, UTC plus 2. Yeah, so 9:30 and 11:30 UK exactly. Right? Because again, they need to manipulate sometimes if they haven't achieved their initial goal, which is inducing everyone on the wrong side. So that's why they literally have minutes when they do that, and they do it at 12:30 and 12:30. Sorry, 10:30 and 12:30. Right? So how does it look like? So what's going on in here? Right? So we have like obviously our London inducement. Right? Obviously we have a mitigation of the inducement, but now there we go. The interesting thing is now usually it should go higher, 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 but for some reason it did not. Right? It will be hard to be tracked at the beginning, but obviously not important right now. We will dig into it later. Right? And also this is like an anti-confluence later. So what they're going to do is inducing these lows in order to even get everyone on the wrong side, an inducement of the inducement. But where does this final manipulation stop? It stops at 12:25. So 5 minutes before the magic manipulation minutes. So what's going on? They mitigate that areas later and push price higher. So this is when the London Open inducement fails. For some reason, they're failing to create the initial liquidity grabs. So they're faking even more, and stopping at magic manipulation minutes. Okay, anyway, so here we go. So London Open makes a trap. Awesome, we like that. Awesome sounds obvious. But guess what? What are they doing in here already? For some reason, they're forming these equal highs above here. And that's where you should be like, okay, there went something wrong. There did went something wrong. So what's going on? They're faking the pullback. Right? So what's going to happen? They're inducing the inducement. And when do they do it? What in the hell? 10:30 to the absolute minute. And what's going to happen? It's the same thing all over again. They chup everyone. So what is going on in here when you see this one? What is this? Everyone should know that by now. What is this? Smart money trap. Exactly. What's the difference here? What's literally the difference then if this is London Open, but now it becomes equal highs, and that's just the inducement, and it just happens again to the minute. Like, what? This happened to the minute, but then failed after because it becomes equal lows. Equal highs. Now it's the same thing all over again. Equal highs being induced at the perfect timing again. Like, what in the hell? What? Then again, we have the smart money trap. Again, what is that? Quadruple bottom, whatever. Right? Craziness. So what do we expect? What do we expect just by the understanding of that? A tube in here. What is going on? We're having this equal lows being grabbed. Also this one. So you see we're having two liquidity grabs inside one. Then equal lows, inducement, equal lows, inducement into one. When does it happen? What? New York Open this time? Oh, that was a zone as well. But what should that be? A trap move? Okay. So what are they going to do? Inducing that inducing that thing in here. Right? Or again, mitigating the inducement. Right? So trap move, lower. Becomes the inducement, double inducement. Equal lows in here. Inducement. Equal lows in here. Inducement. Lower build-up. Inducement. When does this happen? The mitigation now of the inducement of the inducement? What? To the minute? Are you kidding me? What? It can't be that obvious, can it? Like what? Like what in the hell? What is even going on here? We're just combining freaking time. It happens to the minute. Like look at that. They need to be freaking us out. To the absolute minute. To the absolute minute. To the absolute minute. And to the absolute minute. Like what in the hell? And it all makes even sense with our original place. What in the hell? So in other words, it's just like magic. Can't be real, right? It needs to be a coincidence. Anyway, so let's take in more examples. What's going on here? So the magic minute as a guide, use it at a timing with your understanding again of the overall things we give you. Just don't use it at the timing by itself. Use it as confluences, right? So what's going on here? Magic manipulation minutes, right? So what do we have to the left on the higher time frames, whatever? Maybe we have a minor inducement at this. Again, minor inducement because it's an inducement of Asia range, right? But then again, major inducement to the left, maybe. Of course, we need to dig into it more. And Alex, and obviously we cover the higher time frame stuff and combining everything with the bigger picture later. But for now, again, remember the intraday play of what is going on. Magic manipulation minutes to the downside, chooping everything after the whole cycle has been done. And then again, what is going on here? Internal break of structures. That's the mitigation in here, of course, and it just choops everyone. Becomes small money trap in here, becomes small money trap in here. Just obviously, that's the first vector candle to induce everyone, and momentum build after that. Okay? So again, what is going on here? London open to the minute, create the channel. Now failed because this thing in here failed to grab the liquidity to the left, whatever. So what do? Then they take the magic manipulation minutes to induce the inducement. 5 minutes short of it. Okay. So what happens next? Chooping everyone. What's going on here? Mitigation of the inducement. And then you're trading the order flow. Okay. Is it that hard? And you're aiming for Asia range. It's like clockwork. So what is going on in here? London open makes obviously what? The trap move to the false side. So what is going on after next? So what should happen here? What should happen here next? With the vector candles out of Asia breakout, with the timing, what should happen next? Anyway, so what's going on here? Inducement of Frankfurt open this time. What does the inducement get mitigated? After what? Minor inducement. This is obviously the mitigation of it. That's the internal break of structure. Mitigates this inducement in here. Obviously breaks out of Asia as clockwork. That's now the other trap move of the other directional after building the whole uptrend. When does it happen? London open. So guess what? They choop it until when? Until when do they choop it? Until magic manipulation minutes to the minute. Okay. What the hell? And then they're reversing it, creating imbalances in the process and mitigate it later. Like what in the hell? What? And then again, what is that? London close. Of course, it reverses. It's like literally like clockwork. It's so obvious. It's sometimes really crazy. Again, minor inducement creates the imbalances at Frankfurt open this time, gets mitigated. Asia range being induced, becoming a minor inducement. You expect Asia range being closed upwards. London opens, makes the other push obviously after the whole information gets passed over them. Everyone is buying. They're inducing low now, ending at the magic manipulation minutes, creating an imbalance. Clockwork. Clockwork. Right? So what's going on here? London close, forms mitigation. They want to go home. When do they do it? 5 o'clock, mitigating their position out of the inducement. Guess what price is going to do? What in the hell? What? It's literally like magic again. Like, how can this even be true? How can they be so stupid? Okay, so anyway, what is going on here? All right, so again, what are you going to do? First of all, London Open did nothing, did not induce anything. So guess what? We're still in the Asia range. You have not an inducement anywhere. So when are they going to induce? Magic manipulation minutes. Okay. Right. So when do they make the whole push? Huh? Okay. Until when? New York trap time to the minute. Right. Or not really. 50-minute short. Okay. Pardon. Right. And what is the next thing they do? London people want to go home. Smart money trap or becomes the FFS. This is the added zone in here. The imbalances, they mitigate their positions and go home. Price can reverse. What in the hell? Another one. What are you going to do here? Again, building the huge uptrend, inducing these minor areas in here, staying short of this mitigation area. Right? So what is going on? Staying short of it. When do they mitigate it? Magic manipulation minutes and then push lower. Or again, maybe it only happens like 15 years ago. So let's look at another example of literally Friday. Okay. So what is going on here? London inducement high, building the channel, building this flag in here, whatever, building this channel, inducing Asia highs. When do they do it? London Open. So I don't know. It can be again Chi or maybe something like that. Right? Or maybe Chi. I don't know. It's literally just look at Friday, a few pairs, one of those. Okay. Then again, what should happen here? Please, everyone. There you go. So what's the next thing after the tube? Internal break of structure. What are you going to do? You mark out your imbalance from the inducement. They mitigate it. Interesting. Then they tube it. Then should be some sort of reversal thing. Magic manipulation minutes. Okay, then you train the order flow. Right. When is this going to happen? Whatever. M1, train the order flow. Order flow. Again, when is the next management movement happens? 12:30. Makes another manipulation move to mitigate the messed up orders in here. Creating these imbalances, right? Again, there we go. They manipulate the price upwards to make, again, price fairly delivered. They're using the magic manipulations for that to mitigating their positions. Guess what? Creating the equal lows. So what do we expect after? False inducement high. When is this the case? New York Open makes a false push, building the channel. Until when? Again, to the minute. So what's going on? Making the tube, making the pullback, and then again, London closes. That purple line is literally London close. When do that? What do you need to do? Mitigating the positions. They don't mitigate all the way down there. Sometimes they mitigate the 50%. It's literally exactly here. So they're mitigating 50% of it. And obviously they go home, and this happens after. There's your inducement. Price is going. Obviously the day comes to an end. They made the inducement to do what? Go lower and end the day like this. How they manage the trades? Of course, we will show you how to manage those trades. But it's obviously the most insane stuff. They literally do it on the time, to the minutes. It's just following their intentions and then looking at your clock to utilize everything together. So anyway, so let's look at a really fucked up day to see if this even makes sense just looking at a clock. We look at this little shit in here, and if you think now whatever, anything will help you, like any retail stuff or even structure whatsoever, let's see if you can make a sense out of there. Probably not. But what can help us will be timing. So we just include the Asia range. Makes things prettier. And now, because we need to look to the left a little bit, we saw a mitigation zone to the left. Again, we show that stuff to you on day 3 of how to do it properly. But for now, just know this is a mitigation zone that kind of missed by a little bit. But when does this happen? London Open. Okay, so what does London Open do after the breakout of Asia range, creating this whole channel? Of course, giving a reaction. Right now, this can be a valid zone in here as we never mitigated here, but again, more to that on day 3. More is about timing right now. So they're giving the false reaction again until what? They can now finally, the wick closes in here. Finally, we're tapping in this demand area in here, right? When do they do that? Magic manipulation minutes. Okay. So what's the next push they do? They're going in here, right? Again, mitigating their inducement. When do they do it? To the minute. Again, on magic manipulation minutes. Again. So we have perfect London open trap. Perfect magic manipulation minute 1. Perfect manipulation minute 2. Okay. So what's going to happen next? There you go. London and New York open. Right. So what should they do? Obviously, they're making their trap move lower, opening up the position, trading away from the proper mitigation. Right. And of course, wanted to push price higher now. So what should they usually do? They're taking out these zones. No, they did not. Look at that. They're creating equal highs. Look at the time. Should be New York trap time. Is that a trap? Of course, they're building up equal highs. To do what later? Give the false reaction, moving downwards. So guess what should happen? Inducement of this equal highs just by a pip though. Inducement is inducement though. Then they push price lower. Then London closes, mitigates these positions in here, and then price can reverse. The day is over. So out of a sudden, we made off the most insane mess of all just by utilizing the time. Literally every timing aspect in here had perfect sense, didn't it? First London open trap, then finally the perfect mitigation when magic manipulation minutes, then in mitigating this inducement with another magic manipulation minutes, New York open made their false trap move to the downside, pushing price higher. New York trap time creates a trap to the minute, inducement after, pushing price lower, creating these structures in here. London closes, mitigates in here, and pushes the price higher. Crazy. Like magic. Anyways, so now more examples, because again, we want to give some even more because it's so rare does it happen, right? Again, what do we have? Build up of London, false side. London opens in here, messes around a little bit. So of course, after the inducement in here, what should happen? Price push higher, making these smart money traps in here of FFSs. When does it do it? Magic manipulation minutes. That's expected, is it? Because again, it's a manipulation. So the next magic manipulation minutes, what will they do here? Of course, they're mitigating the mess they created inside here to push price even lower, making now this inducement of the inducement. When do they do it? New York open, price pushes higher, now finally taking out Asia highs, making the push in here. What is going on here? Now New York trap time. What should they do after the inducement? Mitigating it, push price lower. London closes. They say, thank you for that day. They want to go home, exit their position, so price can move higher. Clockwork. It's literally clockwork. All right, another one. What's going on here? Making obviously higher highs in here. We're not interested in any areas of there. Until when? Until we hit the significant spot to the left. Of course, more about that in the next 3 days. But guess when they mitigate these zones? Magic manipulation minutes. Making now internal break of structures. So we're finding our mitigation zone after the inducement, after the magic manipulation minutes. Getting the mitigation. Obviously getting the reaction out of it. Now we're having break of structures in here also. So guess what? We're taking the mitigation again, trading the order flow type of thing after the inducement of the timing confirmed magic manipulation minutes. There we go. Another magic manipulation minutes where they do the mitigation. When do they do it? I mean, you can't see it, but you can see here's the 12, here's the 13:30. So obviously that's 12:30 in here to the minute, right? Guess what? Get the mitigation, pushes price lower. Of course, takes out Asia low. Are we done yet? I don't know. So what is going on here? We're looking at our clock. literally to the minute almost, right? Making these mitigations in here at New York trap time. What is going on now? There you go. We now finally can mitigating the inducement in here to push price higher like clockwork. It's insane. It's the moment you see it, it's just crazy. So the daily cycle and overall, that gives you the daily overall intentions of the sessions and what it should look like. Always start with Asia range, identify your minor inducement low, push price higher, when should it stop perfectly, London open, and then again, what do you have after? Mitigation of this manipulation minutes here, literally to the minute after break of structures, maybe in here, right? And then again, you have another mitigation literally in here, also mitigation, a magic manipulation minutes. And again, making this little inducement in here, pushing price higher. New York open makes the false trap move upwards. We have a New York trap time to the minute, maybe a medium inducement to the left, push price higher, and finally mitigating with London close in here. Right? But get this to your head. Get this to your head. And the moment we're actually combining it with all this stuff, because guess what? We have freaking tools that you know exactly this is confirmed. This also, maybe this is a let, maybe this is a cup trade, maybe this is an EDM. We have the exact minutes when it should happen. And again, the whole structure makes sense anyways in the place. Then you look at the overall structures Alex showed you earlier. It's just insane. Like there's not much more you can ever get anywhere. It's impossible. And we're in day 2. We're in day 2. Just think about that. It's freaking day 2. Anyways, so what we have in here, building up here, Asia high, Asia low, never got induced until when? Channels downwards, inducement, when does it happen? What is the price? London open, price pushes higher. We expect, of course, grabbing liquidity to left now this side. So what is going on? We expect a smart money trap. Stays short of the smart money trap though, right? Again, what does it do? Builds this false smart money, whatever, equal lows into mitigation, whatever. No, because why? There we go. Now goes into it, gives a reaction. How do we know it's not done yet? We look at timing. Look at it when it happens. Like, are you kidding me? What in the hell? Gives the inducement of these areas in here. After what? Smart money trap, false reactions. To the minute. Are you even kidding me? Reverses after it. What should happen? Imbalances. Obviously, that's way too big zone to ever trade it. But again, it's all about the intentions. There you go. Mitigates these areas of the inducement. Right? So guess what happens next? Pullback. Guess what happens next? London close. Mitigates out of there. Now they're done. They can continue. And obviously, after this inducement, you're expecting even more downwards, but the day's over. Okay? Easy stuff, like clockwork. Another one, right? Easy stuff. I think we also had that one. Maybe I put that double. Easy stuff. Again, what do we have? Yeah, I think we had that one. Magic manipulation minutes of the high, makes an inducement, internal break of structures, mitigating the inducement. Now final internal break of structures in here. Order flow. And again, what does then happen? 12:30, magic manipulation minutes. Right, it's always the same stuff. Until when? New York open, New York trap time, sorry. And again, mitigation of the inducement all over again. And then obviously makes this push in here. And of course, then you can expect after that, but the day is over. Okay. And another one, like look at this. And now closely take this one. Let that sink in. Now remember why I put that one in. So look at this closely. Just visually see the Asia box. See the trap here at obviously London Open or Magic Manipulation minutes. And then the trap side here in New York trap time. And then see the reaction. Just visually see that in the day. So look at another one. And look at that one. So, wait, isn't that the same exact example? Like, look at that one. And look at that one. What? They're doing the same shit all over again. Are you kidding me? So that is from May, whatever. Just a random one. This is from April. And guess what? This is from this week. Look at that shit. Like, it's the same shit all over again. Are you even kidding me? They think we're stupid. How the hell? Look at that. It's always the same shit. That's all different examples. It's always the same shit. Like, what in the hell? The only difference that changes are the timing expect. The timing is the only thing that will change. Maybe it's not like perfectly New York Open, whatever, London Open here. Maybe not perfectly New York trap time in here, but guess what? Close enough. Close enough. London Open this time, New York Open this time. But the overall picture, look at it. It's always the same. It doesn't matter what month. It doesn't matter what currency pair. It doesn't matter if it's fucking crypto or stock. It's always the same. Like, look at that shit. It's literally always virtually identical. Look at that shit. What in the hell? And the moment you're starting to realize that internal play, you should wake out of that stuff and shit. Oh shit. Like, what happens if you combine all the stuff we learned so far and also combining everything even more and adding more additional confidences to that? You will be literally like that. And again, now hopefully at this point, you should understand that that should be shown our Insta. That becomes very real, like very soon. Obviously, we can make that shit up. How can we make that up? It's crazy, right? So guess what? It's the same shit all over again. Again, what do we have? And look at the bigger picture in here. Asia range, creating this external structure in here, making first what? Smart money trap in here. False reaction, inducing with speed, vectors until when. London Open, mitigate something to the left later on. Can play the intraday play. Upwards, upwards, upwards. The whole world is upwards, upwards, upwards. Smart money trap of this decisional, like clockwork, always smart money trap. Inducement, right? And guess what? There's your final mitigation. When does this happen? New York trap time, and then can go lower. Always the same shit. All just looks a little bit different. Same thing in here. Asia low. Guess what? This becomes, of course, the FFS. Just induces it, so no smart money trap on an FFS. So inducement mitigates this area, right? Then of course makes break of structures here, creates imbalances in the meantime, comes back. When does it come back? New York Open this time, and shoops everyone. Guess what that is? Freaking head and shoulders, putting everything and inducing the wrong side direction, giving the momentum speed, right? But the real attention is mitigation of the inducement at timing. Like, what in the hell? What in the hell? Right? It's the same thing. Look at it. Equal lows, inducement into mitigation with timing. What in the hell? So, very important to understand. Timing is an amazing, amazing confluence, but never just trade by timing aspect alone. That's why we're, of course, combining everything together in day 3 and 4, and it's completely game over in 5 and 6. Okay, but just understand now the basics of timing and what's the intentions behind these timings. Because again, they literally give you the understanding, oh shit, now it's Magic Manipulation minutes. Let me look at the chart right now. There should happen something. And then if price action aligns and the structure aligns, the inducement, the cycles, everything aligns, then you trade. Don't like randomly look at the clock and say, oh, Rim said like 10:30, let me take a buy now. No, obviously line up everything and use timing as a confluence. Okay? Again, never, again, based over a thing. even if it looks obvious to you right now, you should not be like, oh yeah, London open, I take a sell. Oh yeah, magic manipulation minutes, I take a buy. London close, I take a sell here. No. Look at the price action, then combine it if it makes sense with the timing, and then use it as a confluence. Okay, but again, we put everything together, day 3 and 4, of course, right? So you should think, why are they moving so fast in this direction, especially after inducing so much to the left? And of course, to answer that question, we need to look at the higher time frames and liquidity, obviously the cycles as well, and obviously the bigger moves, right? So of course, at some point, we all putting it together, and combining it slowly and surely, all will make sense, obviously, after. So of course, we're expecting like something like this, medium inducement, and of course, in that sense, major inducement down here to overall make the cycle completed. And then of course, grabbing this liquidity in this mitigation areas down there. And then of course, should look like this on the lower time frames. Again, it's the same stuff on over again. And then of course, you're looking just at the clock, putting it all together. But again, just a brief overlook, it will make so much sense the moment we actually putting it all together. Okay. And again, you utilize the timing of the intentions, putting it all together. Again, perfect meditation minutes here. Therefore, we're still waiting for another cycle to continue. And of course, it will seem the best time is now. And then of course, now you're making sense into the whole picture, finding your areas of interest. You should understand now this is the mitigation area in here. This otherwise becomes like the smart money trap, as we covered earlier. What is this? Trap time should take into the mitigation areas. And of course, that's what's going to happen. And then obviously the cycle is completed. Could be, for example, let's say, sometimes I make it even very obvious. Let's say you have London open facial range in here, you have London open here, makes the trap, but now you have the mitigation area in here. And for whatever reason, they stay short of it. And again, sometimes they show it even to you and they come back and failed their attempt, and this creates these equal highs or whatsoever. Then make the false break of structure, and then your brain should start and kick in and say like, oh, wait a second. That's like more like a build-up inducement to push price higher into the mitigation area. And then again, this might be then, of course, like whatever, 1030 or something like that. And that's how you're starting to put everything together. Again, you're starting with the daily cycle. Again, timing, Asian range, minor inducement. But then you also utilize the other cycles like build up, inducement into mitigation, timing again, higher time frame mitigation areas with LX structure, right? Whatever, decisional maybe in here. Maybe there's a smart money trap in here. Now all of a sudden it makes a lot of sense, right? Because this may be the smart money trap. This becomes London, this becomes the inducement and the build up. Now the final inducement into the mitigation with timing confirmed, whatsoever. Then you have internal break of structures maybe in here. This becomes another entry point here, and then it utilizes lower. We're just starting to put everything together and together and together. So again, if some concept right now will not completely make sense to you isolated, again, it will become easier the moment we're combining everything. For example, the smart money traps, as we covered earlier, they should be a little bit more obvious now to you. For example, again, if you have like this plane here, and then a very clean, whatever imbalance area in here, of course, we expect if the normal price action played out perfectly, that this area will be in. So again, that's the 2 times you definitely should note time. Because again, they use these times for whatever reason. I'm not whatever making these times up. It's literally times they're using all over the place with the Enigma to either make a manipulation move, like inducing something, or mitigating the messed up delivery with imbalances. Okay, so let's say whatever they made the move, London Open, for whatever reason, didn't grab enough liquidity, so they failed the attempt to push price lower because not enough people jumped in the buy side already. They used the manipulation minutes to either make the inducement to push price higher, to manipulate price higher, or because then they're pushing price lower, making it too quick and messing up the system, creating these imbalances in between, and then using the second manipulation minutes to push price higher again, to mitigate and fairly deliver price, and then they push lower. So magic manipulation 1, magic manipulation 2. So that's why we have 2:30 and 12:30. It's German time. So that's 9:30 for you then, UK time, and 11:30. You're better than a clock. It doesn't need to be to the minute, as we always say. But of course, you have a very good understanding. Oh shit, now it's manipulation minutes. They're starting to do something in here. They don't need to necessarily do something. If they did everything in order, of course, there can be nothing there. But if you see a clear mess up in the system, like imbalances or pure manipulation in terms of an inducement, you should understand, oh shit, they're using those minutes for doing so. It's because it's just the system. As you can see, the cycles are always the same. That's why they're using the London Open all the time. They switch it up to Frankfurt Open, or like, what a surprise. Again, but they just do it to confuse people a little bit more. But again, it's the same thing over and over again. The timing, as we said, is just a confluence, right? Again, it makes more sense if you see, oh shit, this push in here now gets mitigated, and you look at the clock and say, oh shit, it's literally 10:30 right now. So now it makes even more sense. It's not that, oh, now it's 10:30, I take a random side because Ryan told me. No, it's another additional confluence. If the whole structure makes sense, the whole daily cycle makes sense, and of course the intraday cycle makes sense, and then the timing also makes sense. See how that works? Of course, you need to look at price action and see if it actually makes sense there, right? That's why you say don't never use timing by itself. Use it as a confluence. It doesn't matter if it's like 5 minutes before. That's why you're smarter than a clock. And again, if they mitigate 10:15, you should be smart enough to see, oh, now they mitigated. I don't need to wait 50 more minutes because they mitigated now, right? That's why, no, whatever. Of course, you need to be smarter than a clock. That's why we only give you these times for obviously orientation. It should not be 10 because that's a little bit too far out. You have like a little bit buffer, as we have like a 1 hour buffer for, half an hour buffer for London Open. Again, you have a little bit of buffer, but it should not be like more than half an hour. Like this one, for example, here is the imbalance, right? But overall, whatever, we took this structure in here. But this imbalance starts from this point in here. And if you draw this line, you see the purple is a little bit thicker. They just stayed short of this little imbalance in here. So what do? Technically, this was London Open. Awesome. Faking the reversal. Never had an internal break of structure. So what do? They induce the inducement to now perfectly mitigate these imbalances in here. And when do they do it? Again, as to answer the question, not 10:30, but 10:40 this time. Okay, so 10 minutes short. Obviously, it's all about the same thing, creating the whole buy channel until, of course, they induce the inducement and now finally gets to the mitigation zone with timing. So intraday traps, what is meant by that? Again, of course, you should be aware that on an intraday aspect of it, let me put that on full screen here, there will be a few traps you need to figure out, of course, in the process. And of course, we will give you a very good understanding of how to utilize, obviously, our cycles in depth on day 3 and 4, right? But for now, we're going over the basics once again. So pretty much what we will do, of course, inducements, of course, help you, and timing with the inducement helps you to lock them in, and then you just break out structures later, right? Because combining the knowledge is literally what gives you the power. Just only these isolated concepts, they're obviously amazing, but at some point, as you saw literally how Alex said it earlier, to utilize the bigger picture play for even lock it in more in, that will be, of course, important. So it will be the entry helper and the other stuff we will show you afterwards. Right? So there will be a lot of stuff you need to combine to get the whole part of that. So right off now, we just showed you the isolated concepts, but later, of course, putting everything together. But to make it a little bit more easy, just again for the intraday play of it, again, we have the little steps in here, starting out with the defined liquidity. So where's the liquidity here? So where are most likely induced here? Should be very obvious, right? So pretty much what are the most closest to? Which area should be induced at like for sure? Of course, it is this areas inside here, right? Because again, what we're doing in here, already we're building up this false buy trend. We have huge equal lows in here, Asia range as well, right? So guess what? We will definitely should know that we're taking out these areas in here, right? So guess what? Asia range, and of course, this structures to the left will be induced, because again, this alone will not be enough, right? So what can we expect? Again, based on timing, how far from London open are we? So now we're putting stuff together and look at the clock, right? And see, okay, this is 7:50. So technically 1 hour and 10 minutes before our ideal time window of London open trap time. So the question is then, how far will we go up? Or pretty much what should we cover before that? So what we do, first of all, we cover the build up inducement mitigation, right? So guess what? Now we're having our build up, right? So where are we on the cycle? We're on the build up. So guess what? We're expecting the inducement, right? So what in the lit cycle we should expect next? Of course, inducement with timing, right? So inducement, and then after the inducement, a mitigation. So now we need to find out what mitigation it is. So we have an inducement area. So where can be a possible mitigation area be? Right, so we have 2 points here. We have, first of all, this area, the extreme, and this area. So right just now we understand, okay, we're having inducement areas. Awesome. But now we also include timing, and now only having 2 points of interest in here. Okay. Right, so right off now, we already have a good understanding of price should either go here or for some whatever goes here, right? But again, there's nothing in between. We know that it should induce in London is only again here and here. So now the question is how we can use timing again for our advantage in this scenario, because we're not sure. Like, how will you know? Like, I'm not a magician, I don't know. So I can use confluence events though and see what's going on. So we take the London Open time window and make it like this. And out of a sudden, it should become a little bit clearer if this is an ideal plane here for an intraday play. So what's going on here? Mitigation area here, timing. So what can happen? Okay, now think in your head though. Again, this is normal candle sizes, right? You see the normal day, right? So can this happen in here? It looks very weird, doesn't it? Like, out of a sudden, like, what? Okay. Like, whatever, 50 pip candle just in here. It's kind of strange, isn't it? I mean, technically it could happen, but it's most likely not likely going to happen. So that's like, that's not all neutral, right? So again, that's correct. That's most likely not going to happen. So let's look at this scenario. Does this look more like it though? If you just look at the candle sizes, the duration, like whatever, the timing, would it make sense like this? And that obviously makes out of a sudden more sense just by the timing aspect. Of course, like this in here would be just crazy. Like, why would the market out of nowhere just make this huge push and then go lower? Possible, but again, what's the chance of doing that? Not so much, right? It may be news, but again, you can look at the news. If there's no news event, probably not, right? So guess what? So that looks better out of a sudden. So now we can obviously take this one, but obviously worst case scenario, we take this one instead. But just based on timing and the overall play, this will definitely make a lot more sense. We have our build-up, inducement of these areas into mitigation area lined up with timing. So question, what do you think? Are you in the blue corner or in the red corner? Ready? So which corner you pick? Right? So is it the blue corner or is it the, for some reason, magical candle orange corner? Right? So guess what? We let the guys fight, and as you can see, instant crazy punch, instant knockout, you see? So guess what? Flawless victory, and of course, it's more likely this. And as you already see, this already was kind of late. So there's no chance, like, or no point that all of a sudden price pushes like this in here, right? So again, that's how you can use timing as always. Like, again, if the price action here, make the timing sense of it, and then, oh, there you go. Makes a little bit more sense, does it? And then, of course, there's your tube. Okay? So sometimes, of course, you won't get your mitigation, but only the inducement timing. So we will teach you how to use that. Of course, there's a lot of different examples about that. We will not dig into that too much now. We'll skip that now because we don't have too much time. But of course, we will cover that in depth later. For example, if this is a significant point in here, right? Again, what is going on here? Of course, there's no really a mitigation point in here and here and here and here whatsoever. Again, the only point that can be induced is this area. Of course, you want to grab liquidity, right? There's not a clean mitigation in here. There's nothing. There's just wicks, 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 wicks. Right? So guess what? They want to induce higher to go lower, building the channel before that, right? Again, inducing all these minor areas in here. But again, sometimes they go for the main liquidity, which goes in completely higher. And that happens, as Alex said, the Asia range will be a significant role because as you see, Asia range closes here. So of course, they have so much time left to, of course, induce that high in London Open, whatever, and then make the push. Right? So that makes sense out of a sudden, just utilize Asia range again. Right? That's how, of course, we take all the stuff together and build sense into it. Right? So guess what? Do we have an inducement yet? No. Do we have a build-up yet? Yeah. Do we have a mitigation? No. So what do? Timing. Right? We started to use timing again. All of a sudden, could this make sense? 100% it could make sense. Awesome. So what do we get? Something like this can be the case. Right? So they need to induce as much as they can. Right? They obviously do. And then, of course, you look at this point. Afterwards, you see in here, guess what happened? Perfect London Open. Make the inducement now. After what? Channel building with speed, inducing these highs, completing the same cycle all over again. It's the same thing. It's just inducing structure to the left now. Right? So, again, how do we trade it though? Yeah, exactly. Breakouts, whatever. And now, of course, look at that. Huge overall trend, makes a new higher high whatsoever. And of course, which speed? But guess what? This is the inducement along an open. So what do? We wait for the internal break of structure in here, maybe in 1 minute. We're marking out our imbalance zones of the inducement. Wait for the mitigation. And off we go. Perfecto. That's how we easily can trade inducement trades as well. Right? So guess what? Another one. Same thing. So what happens afterwards? Of course, now we're making this huge channeling thing. Right? So guess what? Just by timing, US Open, remember, right? We need to repeat the steps all over again. So we identify liquidity. We're on the cycle, mitigation, right? So guess what? identify liquidity, minor inducement. There we go. That's kind of a medium one already, right? So there we go. What should happen next? We're in a cycle in the minor inducement area, but what else? What we need next? Of course, we need like not only minor inducements. No, that's not enough. Right? We need at least a medium one and a build-up afterwards. So guess what? Question mark, question mark, question mark. We don't really care about this minor inducement because we're not even in the medium yet. So we're not even interested in any sorts of reversals yet, right? Not even structure confirmed anything. We only know that this is kind of mitigated already. So this falls away anyways because it's already mitigated. So the only place could be here and here, right? So guess what? We can already expect something like this, like minor medium inducement in here, right? Maybe a build-up in here, inducement into the mitigation area, and then goes higher. We can expect it already, right? So what can we do? This projection does look a bit crazy right now, but again, it will make sense in a bit. So what we will do, as you see, they're getting the medium inducement with speed into this weird areas in here, right? So we're having an inducement. We can check the inducement. But do we have a build-up yet? No. Do we have a mitigation? No. We're just having this smash through this medium inducement. It's not enough for reversal anytime close, right? So guess what we do? We take a look at if there's a build-up, because look where we are. We're right above this mitigation areas after an inducement. So what should happen next? Build up, inducement into the mitigation. So guess what? We're having this sort of price action here in the lower time frames, creating this false channel up, creating sideways action. So what should happen? We look at the timing. Trap time is literally in here. So we're marking up the lower time frames. Okay, build up, awesome. So what should happen to the build up? That's the inducement that stayed short of the mitigation down here to the left. And timing lines literally perfectly aligned, just waiting for us. So we already have a really good understanding what should happen next. And guess what? The mitigation of our interest area is right below that. Right? So you see, it's right here. And that's the build-up area that's created right now. And the timing would align perfectly. So guess what's going to happen? Lower time frame build-up, as we discovered. Timing would be perfect in here, which would match also the mitigation area to the left, plus would finish off the daily cycle reversal. Make sense? So guess what happens? Chup. Perfecto, again. Right, but there's even more, of course, right? Again, now we're having this huge pullback area. But again, just by the understanding of the whole thing, remember low non-close. Again, remember close is when low non-traders exit. Liquidity meaning withdrawing the daily positions. So price can start stagnating here or reverse. Just keep in mind always this timing aspect so that the exit in the market to the minute, and price will stagnate from there, and it's just sitting there and does nothing to end the day. It's literally perfection. So what we will do today is combining what we know so far, again, intraday traps. So again, intraday traps, combining the knowledge of what we know so far to give us an advantage over pretty much 99% of traders out there. We have to keep in mind that of what inducements are and how they constantly trap other traders, not only on an intraday basis, but also on the bigger aspect of it. Again, it's not only intraday trading, it's also looking at the higher time frames and combining the overall plays and then figuring out what versions you have. Do you expect like a daily reversal, like a perfect daily cycle with a reversal in New York? Do you expect a retail heaven where they induce low and then, or sorry, induce high and then go even higher? Or do you expect like inducement low and a knockout and then they continue in the other direction to stop everyone out? That's possible too. So inducement trade identification, inducement of timing, and of course, always trade away from those traps. So a very easy example. Again, first thing what we do, identify liquidity for this specific day, but plus we look to the left, at least a little bit intraday, right? So what do? We first doing, we identify where our liquidity is. And of course, in this scenario, it's very, very easy because where's the liquidity? It's right above in here, right? So they're already starting to building up this channel, easy stuff. So you already know what they're trying to do here. You know their intentions, you know what's closest to them is now this upside liquidity right in here, of course. So what do you expect, right? So based on timing, now you're combining the understanding of liquidity with starting the cycle. So you look at the clock, right? So it's 7:15, so 10 minutes before even Frankfurt Open. So what do you do? Of course, you include the timing windows, right? So first of all, we're talking about cycle. So build up, what should come next? Inducement with timing and then mitigate something for completing the internal cycle, the intraday cycle. So what do we have? We combine now, first of all, our mitigation areas to know where it should stop and also when it should stop. Again, we have our two mitigations. So in here, decisional plus this extreme in here, right? Because this is already mitigated. So this becomes your extreme and your decisional in here. So where's it more likely to go? We had this example before, just to make it a little bit clearer, right? So again, these two areas, timing window is here. Just by logical understanding, would it make like whoop? Or would it make like right? Obviously, a little bit logic in here. So we have two scenarios we can expect for this internal place in here already. Can look like this, craziness. Or again, could look like this. Of course, what's most likely going to happen? Again, we did this discussion before. So which side do you pick? Very easy stuff already, right? So of course, the blue corner wins easily in here. And it look like something like this, confirmed with timing and the perfect cycle. Easy stuff on an internal basis. So sometimes you won't get your mitigation, but also the inducement. Again, that's very important to understand the bigger picture as well. That sometimes it doesn't need to be a mitigation of London. It can be a bigger picture inducement, like here. You don't really have anything you should mitigate in here. So what's the next logical thing? Asia range closes in here. So where should they mitigate? They will not mitigate like this and then go lower. That's not going to happen. What do? London comes in. They, of course, will look for liquidity and then go lower. So you identify your liquidity zones like this, right? Now you see, okay, they're channeling upwards. So you're in a build up right now. Awesome. So you understand where liquidity should be taken, your zones, right? So you look for detailed inducement and traps. So is there inducement yet? No. Is there build up? Yes. Is there mitigation? No. Right. So what do? You combine it with timing. Right. So now we're at the 50-minute. Okay. So we talk about timing aspect. So we can expect something like this. Because again, we want to induce something high to go lower if they're already building up liquidity all day long to the high side. They want to give the final inducement high to give breakout traders all the final reason to getting induced now. Then the daily cycle is completed until London. Then they can reverse the whole market on them. So it will look like this, right? So look at this point. That's the inducement trade in here. They need to induce as much as they can with the timing. So we look at this point in here and then do what? So now we're having our inducement perfect to the minute. So what do? We wait for what? Internal break of structures in here and then mitigation the inducement to complete the cycle and then do what do you expect? Easy stuff, easy question to wake everyone up. What should we expect after this one in here? There you go. That's your perfect tube, right? Easy stuff. And just drink it quick. There you go. That's your tube. Easy stuff. And again, you trade it with the mitigation after the inducement, after the internal break of structure. Okay, after the daily cycle is played out, after you had your build up inducement, and then you're trading this mitigation. See, it's always the same. This inducement doesn't need to mitigate something to the left if it's already an inducement. And you're trading the mitigation of the inducement after break of structure, after timing is confirmed, after daily cycle is confirmed, after build-up, and everything lines up. Perfect. In other words, like how Will Smith would say it, right? But there's more, of course, like what's the next things in here. Then you expect that you see this whole thing in here. You know, okay, huge tube happened, of course, sellers being very happy. So what needs to happen? They make them even more happy, right? So you identify your liquidity zones again. Next put would be here, right? And of course, here and here. To induce even more people the wrong side. So what are you going on? So now you're in a minor inducement, but it's clearly not enough to reverse the market on them. So what do we need? Ignore that one because it's minor ones, right? Looking for a medium one, right? And then of course you're looking for build-up, inducement, mitigation. So do you have an inducement here, only minor one, but not enough to reverse the market on them? So we don't have an inducement, we don't have a build-up, we don't have a mitigation for New York. And we know our timing window will be here. Okay. So what do? We just wait and expect something like this. This could happen. If this happens, we have a minor inducement, right? This is already filled. So this is not a mitigation zone anymore. It's already mitigated in here, right? So we need an inducement and then a possible mitigation in here after a build-up. So what do? We expect something like this, right? So when we look it up even more. So now what we have this smart money trap being induced to the low side. New York opens, tapping into this weird zone in here, building like this weird equal lows in here, right? But our mitigation zone with the imbalance is all the way down here. And what does it do? It lines up with timing perfectly. So what do? You wait, jump into the lower time frame, then you see channeling upwards, going sideways now. Timing is right around the corner. So of course you expect something like inducement, break of structure, mitigation. It's always the same, in line with the perfect timing, right? So what did happen, right? So of course you expect the inducement here, mitigation, like this on the 5 minute now. And of course, this is what happened. And again, the overall play will be so perfect for you. And again, it just makes sense. And then of course, there's even more. Just by timing aspect, now you're building up this buy side. People need to get mitigating their positions, right? So what will happen? Of course, remember London close is when London traders exit their positions, get liquidity out of there. So that's why to the minute, liquidity starts to fall, ranging, and then they start reversing because liquidity is entering. But that's a perfect daily cycle of an inducement, perfect cycle to the upside, perfect cycle to the downside, build up before it, inducement into the mitigation with timing. You wait for the break of structure, enter it here, and you get out London close to end of the daily cycle like perfect.
So we will be covering a few more examples on the timing-based reactions. Now, first things first, it is key to understand what are our timings and how we can all, of course, compromise them in a list, which I have done in front of you. As you can see, of course, we have around 6 timings. So the first timing we have is, of course, Frankfurt Open. Now, this depends on your UTC. So please do ensure that you either convert the UTC based on your time zone or use the UTC we provide essentially, which will be between UTC +2 and +1, depending on where we are as well ourselves. So you can, of course, use that as we will be always using these timings, and maybe you become more familiar with these timings in themselves. So that would be, of course, 8 a.m. as you can see, Frankfurt Open, UTC +2. that is, of course, your first timing-based reaction of the day. Now, we're not including Asia in that sense. Asia is a timing session, but our timing-based reactions on the lit way of doing things, Frankfurt Open is essentially our first ideal trade opportunity if presented. So next things next is we have, of course, London Open. London Open is 9 a.m. UTC plus 2. Again, convert if you prefer to convert in your own time zone. If not, you use UTC plus 2. So that will be, of course, 9 a.m., 1 hour after Frankfurt Open. And that is comprised, of course, of a 1 hour window. So that will be 9 a.m. till 10 a.m. UTC plus 2, essentially the window of London Open the lit way. And then, of course, the third reaction of the timing-based possibilities is, of course, magic manipulation minutes 1, and that is at 10:30 a.m. UTC plus 2. Again, this is around we would say around a 10-minute window either side where the reaction can occur. So that could be 10:20 a.m. or 10:40 a.m. So between that, so it could be around a half an hour gap. So we give it a few minutes. It doesn't have to be to the minute, but it can, of course. It's more ideal when it's to the minute or a few minutes off, as opposed to nearing the 10 minutes away from, of course, magic manipulation minutes. Then we have, of course, magic manipulation minutes 2, again, MM2 for short, and that will be, of course, 12:30 p.m. UTC plus 2, and that is 2 hours, of course, after MM1. Again, same concept of the 10-minute window either side, so that will be 12:20 or 12:40. So between that as the maximum window outside of the 12:30 to the minute window. And then, of course, we have, of course, our fifth main session timing, which is New York Open, as you can see, and that is 3 p.m. UTC plus 2. Again, this is one of our main trading windows, as well as London Open, where the prime sessions, as well as most of our students trade. And this is the key one. So we actually use 1 hour after the main New York Open, quote unquote, in the New York Stock Exchange. So we use the hour after that and let the price action develop based on our strategy. So that will be a very key window, and we will be showing you some examples on that one. So yeah. Next, we have, of course, London Close. Our London Close is our last timing-based session of the day, and we choose, of course, 5 p.m., which is the actual time of London Close, and that's 5 p.m. UTC plus 2. So, of course, the London Close reaction is usually less volatile, as it's, of course, when the markets essentially become weaker, people stop trading for the day, etc. So your reactions then are likely not to be so amazing. However, you do get the amazing reactions too. But the key sessions are, of course, on New York Open, London Open, and Frankfurt Open as the session timings. And then, of course, you have the key magic manipulation minutes windows, and London Close being the last, of course, session of the day. So it's key you keep these sessions in your head, revise them, remember them, because it may get a little bit overwhelming in the sense of trying to apply the build-up, inducement, mitigation alongside timing. So you're going to have a lot to remember, but it will click within a finger once you do get it. So don't worry about that. So now we will be moving on to our first example. As you can see on the chart in front of us, we have already got Asia session drawn in the pink box, or purple box, should I say. And of course, we will be going step by step of what is happening. So what we have, Frankfurt Open at 8:35 in this case. Again, it can be 8 till essentially London Open, which is 9, so that 1 hour window. So in this case, we get our inducement here. It's a bit hard to see, but the reaction ended exactly over here. So Frankfurt Open inducement low of Asia low, and of course these liquidity build up. So this reaction from here to here, drawing's not so great at this point, are the vector candles that of course allow for the inducement. So now we've had our inducement low of Frankfurt Open. That means London Open, sorry, did I say New York? I meant Frankfurt Open, allows then for London Open to allow for a continuation. So that's key to understand that if we have a Frankfurt Open inducement of the main areas, we can likely expect London to continue that inducement or possibly even mitigate areas over here on the 1 minute, which likely would have happened. Okay, so then what we have, of course, price in London Open induces these liquidity points over here. And of course, outside of these areas, Asia high as well. Now, before it induces high, it does, of course, tease us a little bit. Smart money traders, look in the 1 minute in this zone right here. Take these sells, assume it's a break of structure at this point over here when it's an inducement, and expect price to continue. However, of course, that doesn't happen because we get our reaction up top. So now if we go in the next slide, our timing-based reaction here is perfect. And this is to the minute on, of course, magic manipulation minutes 1. As you can see, 10:30. Again, UTC plus 2 timings are the ones I'm using. So we have our inducement now outside of Asia high. And of course, that allows for them price to completely vector, continue bearish, and take out these lows now that led to price taking out Asia high. So we have, of course, magic manipulation minutes, allowing for the continuation, get your mitigation areas in here. And then, of course, what we have is our New York Open reaction. So now price has induced enough liquidity, we start getting channels like such, right? And then price induces low one last time over here, even gets a fractal buildup of liquidity here, which are your support buyers. So people are buying at this point. You get these perfect vector candles over here. Price induces low. Now we get a reaction higher. So what that could possibly mean is that price can now take out, of course, these areas of liquidity and then continue higher, essentially, from areas like such on the 1 minute. So as you can see, price comes lower. Remember, our low is at this point here. Reacts pretty low in there, so likely the 1 minute, of course. It reacts in there, and then what we can get is our continuation then bullish, taking out all of this liquidity here. This being your smart money trap, of course, and then, of course, a continuation higher, and you get your consecutive mitigations. So that's key to understand. Of course, the cycle plays, the targets, of course, liquidity to the left, as well as the trend line we had over here, price vectors lower. So, of course, the characteristics, identifying the right type of price action relevant to, of course, timings, of course, your London close reaction essentially helped us catalyze also. It's a little bit slow again, not the craziest volatility. Nevertheless, of course, price will eventually slow down towards the end of the trading day. So if we go on our next example, again, Asia session is already preset over here. What we have, of course, is Frankfurt Open, right? Frankfurt Open, we can have one of our trades, not going to mention it yet, but we have a potential trade in this area. You will be taught this in the upcoming modules, possibly next week, and how you can trade the fast and furious trade, which is a cycle variation. So what we have, potential mitigation area, and how we can trade into the inducement. And what that means is we can take a trade which will take us either to the low or the high to break out of the Asia range. And what that means is, of course, you likely will then get a reversal in the opposite way. So if we induce high, we must close our trade and then, of course, aim to take the sells. So, of course, you will be taught that later on, but nevertheless, of course, we get our reaction, as mentioned, Frankfurt Open, again 25 minutes after. It's not a to the minute type of reaction. Nevertheless, we get, of course, our London Open continuation. Again, these are 5-minute charts, so you can see the 1 minute mitigations in here. We also have multiple confluences that can allow us to take these trades as well. So what we get is our continuation of London Open, a bit like the previous example, and likely we will expect price to take out the Asia high over here. Currently, what it's doing actually perfectly is creating the illusion of equal highs or support resistance sorry. And then of course, people prematurely selling in this candle over here. So if we see what happens next, perfect, we get the perfect inducement high right here in the London open window. What that means is price can now continue bearish. It takes out all of these levels of liquidity, the trend line buildups over here, and then of course Asia low, as you can see down here. Again, through that buildup, we have the same characteristic of this trend line. Vector candles bearish, so it essentially breaks that trend line anyways. You even get these perfect equal lows over here. Understanding, of course, the New York open reaction for a continuation, because we have to look to the left. So the likely chances are there is more price action to the left, again, in the form of trend lines, liquidity, buildups, whatever it be, where then price now can mitigate this area, taking out these levels of liquidity here. So this becomes our inducement of this liquidity over here that we can now get a continuation. Again, we get our mitigation in New York open, kind of to the minute, I would say, probably 5 minutes off as it's a 5-minute chart. And then of course we can get our continuation, right? So let's see how that plays out. Perfect, we get the continuation lower. We start breaking these lows over here. So this inducement is important to understand that when we have a continuation and a greater target to the left, such as a medium or major inducement, it's important that price likely will veer towards those areas as opposed to this inducement we have here of the lows. Now that's a perfect reaction for a pullback, but remember we have a mitigation and this was a really nice entry helper reaction too. Again, you will be taught that later. And then of course you can see the purple line of here, that's our London close at 5 p.m. UTC +2. It just enables our continuation. It probably will be a very slow for the rest of it anyways. Again, we have another example. Again, you can see the liquidity here is pretty clear. So you can see these sellers over here, stretch that line for everyone that wants to sell. And then of course we get these crazy liquidity buildups here too. Again, it's very fractal. You're going to see it everywhere. Price will likely come higher to continue lower. So we can see the support over here. Price does give us these really nice vectors. So what that likely could mean is that this point in Frankfurt open, or maybe a little bit before, whatever it be, a few minutes off, this could allow us to trade into the inducement, taking out our support or resistance bias, apologies. So let's see how that plays out. We can see perfect, not to the minute, unfortunately. It is 10 minutes outside of Frankfurt open. Nevertheless, it completes purpose. Remember, timings are orientation. Sometimes it will be a little bit off by a few minutes. Then what we get, of course, the Frankfurt open, giving us really nice vector candles. So this in itself will be a very nice trade. You see a mitigation on the 1M there too. You trade into the inducement. So the likelihood is in London open, we will get, of course, our reaction to then take the sells. So we're going to wait and see for our ideal reaction. We, of course, do have a reaction here that gives us this reaction. However, that's not enough for us to just take a sell just because it induces Asia high. We also have, of course, multiple confluences that will enable us to understand if price is ready to then reverse. So as you can see, price didn't give us, of course, this as the sustained inducement, but instead, of course, this reaction over here. Nevertheless, of course, what happens, we get mitigation areas in here on the 1 minute that enables price to then continue bearish. So what's important to understand as well is we have, of course, entry helper confluences that help us understand and how valid a trade is as well. That's the key thing, or when not to take a trade. So that's another key area we also must understand. So what we have upcoming now is, of course, the magic manipulation minutes 2. We have a perfect reaction of MM2 to the minute, as you can see. Again, this is a mitigation of the 1 minute over here. Again, we get a pullback after breaking these internal structures here to the left. We break the structures, react at a smart money trap. Trap, of course, doesn't sustain. Then we get our continuation breaking out, of course, Asia low, which actually is all the way down here. So Again, now what we have? We have, of course, New York Open. So let's see what New York Open presents. Of course, a continuation. Again, the continuation here is really, really nice because what we get actually is a mitigation in this area. Again, 1 minute, and it's the entry helper confluences. Again, you will be taught this again with the entry helper as well, and how you can, of course, build up the entries. So let's see how that, of course, then looks. It's perfect vector candles, perfect reaction, taking out these premature sellers. The sellers also had buyers in this support area over here. They get, of course, these vectors, inducing them. We get our inducement low to continue higher. Now, in areas like such where we get this inducement, we may not have the right confluences to take that pullback to then take this sell over here. Nevertheless, you don't take this trade then. You just take the sell, which is a pro trend, of course. So let's see another example of more timing-based reactions. So in this case, of course, we have London Open and, of course, Frankfurt Open. It's trading very close together. This was a very slow day for whatever reason. It looks like end of month, as it's 31st of May. That makes a lot of sense. And likely June, of course, will give us a really nice reaction in that sense. So we're going to wait. So that's why it's important that just because we've had a London Open appear, we haven't even broken out of Asia high or low. Likelihood, of course, Asia high being the first target. So it's important we don't just take any trade for the sake of it. But what we can see is this really nice channel build up over here, even in London Open. So this will be invalidated, right? So it's important we wait. And maybe magic manipulation minutes can provide us the inducement of this London Open reaction over here. So it takes out the low after inducing high of Asia, right? So let's see what happens. Perfect, we get our inducement high. It's ever so slight, but that's where it becomes really nice because these ever so slight ones usually give the really strong reactions. It's usually enough to tell us, well, smart money traders likely would have got in anyways. Well, that was horrible. Let's draw that again. I'm not good at drawing straight lines, but try. So your smart money traders would have likely got in around here. They get induced by a pip or two, and then of course price reverses on them, as you can see. This is perfect magic manipulation minutes. Not to the minute, it's again the absolute maximum time window outside of magic manipulation minutes, which is of course 10 minutes prior. But nevertheless, we get a perfect reaction, lines up perfectly with the inducement of Asia high. Price can then of course continue bearish, take out Asia low, which it of course just did over here. Now, of course, our next reaction is of course New York Open. What do we get? Okay, price is now continuing after inducing Asia low. We can also get hesitation, usually allows for a pullback in here, get a mitigation, takes out this liquidity. Now the chances are, of course, price may induce one last time or mitigate, whatever it be. Again, with the confluences, you'll be able to understand exactly what that would be. So perfect, we induce the high as mentioned in New York Open, then price, of course, continues bearish forever. Well, not forever, but you get the point, I guess. So it's really key to understand that, of course, the timing-based reactions. Now, here's a good one as well. The purple line, remember, this is my London close. You can change colors if you prefer. But in this scenario, it doesn't really provide much. It does actually give us a nice reaction bearish. So that's where the whole cycle play is more important. You get the mitigation. This is your trade. However, timing-wise, it's a little bit late in the day. The cycle will always repeat itself. Timing is an orientation that allows us to, of course, section our trading style, the day, and of course, for us to plan better. Nevertheless, a trade like this is perfect. That's perfect. It breaks out, of course, this low as well. So that's a perfect trade. It's just a little bit out of timing. Doesn't mean you can't take it. Just important to understand that all of these timing-based reactions and how they keep appearing again and again and again, you're bound to get at least 2 or 3 perfect ones on one pair in a day. So I would highly recommend you backtest this and of course apply this understanding. Just draw a line. You can use this tool on TradingView. It's just a horizontal array, I think. And then of course line it up on the timing based reactions, backtest that as well, and just see how the price reacted in those areas. Again, do be accepting that it could be a few minutes off. That there's nothing wrong with that. So yeah, I hope you guys enjoyed that. And again, practice, practice, practice.
Alright, so let's get into some daily cycle stuff. So this is from EuroGBP on the 9th of May 2022. So yeah, let's just get right into it. So coming out of this, what is the first thing that we notice? Well, the first thing that we want to do is obviously mark up our liquidity zones. So we've got this, and this. So these are our liquidity zones coming out of Asia. So another thing that we notice is that Asia is building the long channel. Okay, so we need to keep that in mind as well. But we're not going to do anything yet. We're not within any specific timings. But as we had the simplicity approach earlier, I also think it's good to just for an understanding. You obviously don't trade this, but let's break this down a little bit more. Where would our build up be? Well, we had build up here as well into inducement, trade away. You guys see it's the same stuff over and over and over again. All right, so let's jump into the next bit. So coming into this, we're obviously going to use our lit cycle. So it's London Open. What have we seen pre-London Open? We've seen this little channel here, but not just the little channel. We've also seen the large build up throughout Asia, right? We've taken this liquidity zone here, Asia high, not Asia high, previous day. Liquidity zone from the previous day. We've had build up, inducement plus vector. So if we were to just think about it at this point right here, when they see this, at one point this will just be a fully bullish candle, right? And this is going to induce a lot of FOMO and also possibly be a confluence for certain people to buy. So this right here is a very nice inducement plus vector candle combo, and it's a London Open. I think I'll show the timing in a little bit. So this is very nice. What would be nicer is if we had a clear mitigation on the left, but we don't. So, you know, you don't pull anything out of your ass or anything like that. In cases like this, you'd probably just like play it quite safe. You maybe wouldn't, especially starting off, you maybe wouldn't take a straight inducement entry right here. Maybe you wait for your breaker structure into your pullback mitigation to continue lower. Perfect, sorry. So now we're looking at this. This is our London Open. So we need to think about a couple things. We need to think about the possibilities of our cycles. I appreciate that we've only gone over one cycle at the moment, and that is the daily, lit starter kit, like the ideal cycle. So let's just put that in our minds. So ideally, what would happen? Well, this would be our inducement. We trade away from this. When do we trade away from this until when? Preferably New York trap time. And then in New York trap, we mitigate this and we give a pullback to, sort of the middle of the day for our end of day consolidation. So let's see what happens. So where should we look to take the sells to? Well, at least here, this would be considered like your intraday target, but this right here would be like your overall target. You could do this one as well, but to differentiate between picking this one versus picking this one, we'll use our timing confluence and our other confluences. Like, for example, if we have a build up inducement into this mitigation and it happens within New York chap time, then it probably makes more sense to take it out here than it would to take it out down here. So let's keep going. Exactly. So this is, like I said, your overall target, and this would be your intraday target. Okay, so now we need to look at zones where we could expect possible pullbacks, because price is not just going to continue in one direction all the time. It's going to, you know, push, pull, right? So we could expect pullbacks here or also here. Now, would we expect this to be a potential mitigation or a smart money trap? Well, I'll just give you a second to think about that. Well, this lies on what? Asia low. So it lies on a liquidity zone. So there are one or two things that that can happen. This is likely going to be an SMT or a FFS, and an FFS is just where it, you know, runs right through it. It doesn't give the reaction. And that's because this is an area where, right, so think about it like this. We've broken out of Asia high. So where are people's stop losses going to be? Well, they're going to be here, right? So we're going to want to take them out. And that's why it's very unlikely that this is going to give us a potential mitigation. So let's just keep going. There you go. You can see we got, if you remember, we said, oh yeah, this will give us a potential pullback. Then look, we pulled back, induced something to the high side. So we induced high to go low. Yeah, potentially mitigated something on the M1 and then continued. We gave our smart money trap reaction, but we know that we still have, this is just an intraday target. But if you're not confident, let's say you take this trade or you're in like here, you can obviously take it off at this point here. There's nothing wrong with that. That's still going to be your 1 to 10 or whatever. So don't think, oh, I've got to catch the entirety of the move. It's absolutely fine to take it off where you think makes sense, and you can build up your confidence to taking it down here. Or, you know, there's multiple things you could do. You could maybe partial here and close the rest here. You know, lots of different things you can do. All right, so we understand why this is a smart money trap. Perfect. So let's go next. Like we said, it lies on Asia low. We've just completed a cycle to the top side, and also look how we've had a bullish change of character. So, you know, this would be possible like M5 break of structure. So low, high. So you're also going to have people setting their limits on this, seeing that as the extreme. So you've not just got like SLs here due to breakout traders. You've also got Asia breakout traders. You've also got SLs here due to smart money. So like we said, we're also getting close to New York open timing. Obviously, it would be ideal if it was New York trap, but we have to make do with what we have. Also, look at this. What do we have here? Big channel. So we're getting close to our timing. So what can we expect? Well, we can expect inducement. What did we induce with? Vectors. Perfect. Right into mitigation zone, all within our timing. If you're not confident with this, you can wait for your internal break of structure into mitigation within here, and you take that higher. Obviously, you do have to be careful, because at the end of the day, the liquidity is going to run out, and we're going to need to likely build liquidity for the next day. So that was Euro GBP on the 27th of May, I think. Let's get another one. All right, so this is Euro JPY on the 6th of May. So first off, where is our liquidity? Well, we've obviously got liquidity at Asia high, liquidity at these equal lows, and also liquidity at this previous day low. Coming into Asia, what are we seeing? Well, we're seeing a build up as well. So ideally, where do we always start? We identify our build ups, of course. What is the next step in the process? So we've identified where our liquidity is. We've identified our build up. So what do we want? What do we want to happen first? Well, ideally, we're going to wait for our inducement. So we want to identify our inducement. We can see we're coming down. Perfect. But combined with our inducement, we don't want to guess where the inducement's going to end. So what else do we need to use? The power of timing. So in this case, it's London Open, and you can see we have absolutely crashed down. So we've absolutely crashed down. So what are these? Well, these are our vector candles. So how many people do you think, seeing this momentum, huge momentum to the downside, we broke this, you know, the breakout traders getting all excited. How many people do you think are getting excited about this and are going to be looking for sells? Pretty much everyone, right? So let's continue. Are we really all that surprised? No. So the moment we entice everyone into the sells is the moment that we immediately reverse, take out all of these people. Maybe this would have been a bit of a tricky one to enter, probably would have had to get in straight off the inducement, but that's fine. As long as we understand what's going on, the entries can always come at a later point. We don't have to, it's about understanding first and then entering second. So you never want to enter without understanding where price is going to go. You want to understand where price is going to go first, and then you look for your entry. All right, so we've taken intraday liquidity to the top side, but it's only a minor inducement. Let's zoom out to see if we have any medium inducement zones for New York trap. So obviously this is only minor because it's Asia high, whereas this would be medium because it's liquidity from the previous day as well as the previous day low. All right, so now we can see, now we can see on M15, and on M15, this makes a lot of sense because look at this. What is that? Well, that's the false reaction, building liquidity. So now we understand why when this move came down, everyone was getting excited because you've had your double top. I'll just put equal highs. You've had your equal highs, and then you've had your breakout as well. So people are starting to really, really get excited. So let's continue to look. What's our next timing? Well, it's going to be MM2. So we can see again, build up, inducement, smaller vector candles, and then we've got another liquidity build up to the downside. They're faking the equal lows. Your entry here would be quite advanced. It would have to be a mitigation of the inducement. So now we know that they're faking these equal lows. So what do we expect? Well, obviously we expect these equal lows to be taken. Okay, price continues to build. You know, if you're in here, you maybe get a bit of shaky hands, a bit scary, but that's fine. Okay, so We induced the build-up low because this was our build-up. Again, you can see we induced it with vector candles. Here, look at this momentum again, right here, sorry. So we've induced that low, very nice. And now we've gone higher and we've come out and we've taken this. But we also need to know that we have induced something significant on the left. That doesn't necessarily mean that we're going to reverse straight away. But when you see, if I just go back a few pages, bear with me. So here we see that they've faked the equal highs, given a reaction. Here we see that they've faked the equal highs, given a reaction, right? So they're clearly bringing people into sells. And now the entire world is seeing it as buys. So we can start to think, okay, you know, now sells might be a good time. Not necessarily right now, but what's our next timing? Our next timing is, there you go, you can see they're even faking the equal highs holding one more time. Our next timing, New York trap. So let's see exactly what happens. Well, New York trap, we come up, we induce, come back, boom. Obviously, bit of a bigger stop, so you maybe refine this to here. Your target, or this is London close, so you're not expecting a huge move, but you can see that we've still built up liquidity. So where are we expecting it to come to? Well, this would be a perfect target, you know, quick little 1 to 4, 1 to 5 for the end of the day. No one complains about that, I'm sure. But as you can see, it's just the same thing over and over and over again, right? So we have liquidity buildup. Even just if you were to just look on M5, you've got liquidity buildup, momentum inducement to the downside, timing, mitigation of the inducement, continue, and we target our next liquidity buildup. This is without even looking at like M15, and so ignore all of these, right? Then again, we push higher, we're waiting for timing. This would be MM1. So if we ignore, you know, what we know, this would be what we know about to the left. This would be MM1. You possibly take a break even on this one, or a loss if you're taking this mitigation here. Then we have MM2, and coming into MM2, we have our build up, inducement, mitigation, and then we also build up to the low side. So we can take this off once we see these vectors. And then our next timing is New York trap. As you see, New York open just sort of builds, but New York trap. So New York open builds these equal highs, fakes the reaction. New York trap comes up, takes it out, and then we're trading away. But there's no clean entries here. So what are we waiting for? Well, we're likely waiting for this mitigation. This mitigation comes. It's a bit of a big stop, which would be fine if we were targeting lower, but we're not. This is our target, right? Because we know it's end of day, London close. We're not expecting a huge move. So then we've got possible re-entries here, you know, refine it a bit. And now we can look to target here for our 1 to 5. End of day consolidation, so we're not expecting anything huge, and that's just using the M5. But when we combine in everything else and we look to the left and we go, wait a second, this has actually created equal highs on the M15. Let's go to it. This has actually created equal highs on the M15. This is likely going to be a false reaction. Then we can be like, okay, I'm putting this together. This is going to be false. Then it's fair to assume like, okay, maybe MM2 gives the real move, right? But then you see at MM2 it's just building, and you see this inducement to the downside with momentum, likely something on the entry helper too. But so you see that and then you think, okay, it's probably best that I at least partial here, because if you don't partial, you're getting a break even. It should definitely be a break even. There is no way that something like this should turn into a loss because you've grabbed liquidity to the downside. So you have to be very wary of an entry that you've taken, or taking another entry. Should definitely not be taking another entry. Okay, perfect. And then you see we get our final inducement after the creation of the equal highs. Vector up, lovely jubbly. Mitigation at MM1, get in on the re-entry, take that down. So that was Euro JPY on the 27th, I think. Oh no, that's this one. I'm not sure that was. I think it was Euro JPY on the 6th of May. I'm pretty sure. All right, again, same process every time. Where is our liquidity for the day? So these are all the possible liquidity zones that we can see. We've obviously got some type of equal highs here with Asia and the previous day high. Obviously this one, equal lows relative, the previous New York trap low, and then obviously the previous day low. So these are all of our liquidity zones for the day, and like Asia high, Asia low. Okay, so next up, what phase are we in? Well, we're in our build-up phase. So what should we expect every time? What a surprise! We get an inducement. Look at how, and this is quite important, look at how this inducement, again, builds liquidity to the downside. I wonder what could happen from here. When was the inducement? The inducement was in London Open. It's important to consider what we induced, when we induced it, and how we induced it. So we induced the previous day high and Asia high. So Asia high would just be a minor. This would be a medium. How did we induce it? With really strong vector candles, right? How many people do you think are getting in on this breakout thinking that this is going to go to the moon, right? Hold. Of course not. So we're within London timing. We've also, they've sort of given it away a little bit. For it to be liquidity, they have to show it for a period of time. I'd say this is a pretty good way of showing it, creating the equal lows, giving them the breakout so that they buy where their stop's going to be, here, possibly Asia low, maybe even here. So, we're putting it all together, we're understanding. What's next? So now, obviously, they continue down. What do? They fake. They get the pins. Oh yeah, this is going to hold. Lots of wicks. Oh, it's holding. Maybe they're taking re-entries here. Maybe this is the first time that they're entering buys. But what do we expect from here? Of course, we expect an inducement, and we expect it to get completely smashed. Now, let's look on this. What do we have here? We've been channeling down, and now we've taken a key liquidity point. But let's be patient, and let's wait for our next significant timing, which is New York Open. So New York Open mitigates something within this. So now, what can we expect? Well, we can expect price to continue up, give a bit of a pullback. But why is it a pullback and not a reversal? Well, we have to think about, obviously you also take into your higher time frame, like where your higher time frame inducements are and stuff like this. But also look at just within the day. So Asia built the channel sideways. It also built equal highs. This inducement vectored up, took out the previous day high. So this is our medium inducement. Likely our inducement that we're going to be trading away from for the day. This will likely be high of the day. This, whilst it's still a medium inducement, compare the significance of this versus this, right? This is obviously more significant. So when you're taking these buys, at least on an intraday basis, because we don't know what the higher time frame says, maybe this is like a super significant inducement. An overall higher time frame, we're going to go like this. But on the day, don't aim intraday for this, because this is likely going to be high of the day. So what you want to do is you want to let it play out. There you go, because it's very likely high of the day / main inducement for the day. And then you can see that we got our, sorry, no, not that. You can see that we got channel for consolidation at the end of the day. So likely, where would you get out here? Well, once you see these vectors in New York, induce something to the left, this would probably be a pretty good point to get out.
So let's take a closer look at the timing overview, right? So very important, write that stuff down. That will be essential to have for you as a compass and overall intraday guideline, so you know exactly where to look for, what's the intentions of the timing, is there a trap, is there build-up being happening, is the inducement also backed up with timing confluences, and use it chronologically all the time. So as we know already, you start with Asia range, right? And the first thing you should look for is, of course, Frankfurt open timing. And that can be sometimes trading into the inducement out of the breakout of Asia range. Or again, if we have already an Asia range and already broke out, this also can be the inducement of the day. But that's more rarely, and you should be careful about this one, because again, our ideal inducement out of Asia range happens in London Open. And sometimes, of course, this also can be a minor inducement. The medium inducement happens in London Open, and then you're ready for completing the cycle to the downside and taking out Asia low in here. But the first timing confluence is Frankfurt, either trading into the inducement or is the inducement already, for additional confluences. Then our main one is London Open, and again, all times are UTC +2. So easiest to find that is just to adjust your trading view timing to UTC +2, and you also will get the timing indicator template, where we want to call it, on trading view. So don't worry about that. At the end of the end of week 2, you will get access to the timing template on trading view. So these timing zones, they will show automatically, not Frankfurt Open though. So you have to see Frankfurt Open yourself. London Open will be a box. So you have like a box for Asia range that will be drawn automatically for you as well. Then Frankfurt, you just have to use your Rolex to check the timing, right? But London Open trap has a box to it, so you have like always a little bit of buffer. It's not always all the way to the minute, right? Then for magic manipulation minute 1, there will be a gray line. You also can disable it, but again, we will show you how to use this time template, so don't worry about that too much. So there will be gray lines in here, so you can see what's going on and when the timings of magic manipulation minute happens. So the first one though, 10:30 UTC +2. Second one, 12:30, and they love to literally trap and manipulate price during that times. Then we have New York Open. That is, oh, sorry, that should say fourth, like we missed a one in here. So that is New York Trap. So before New York Trap, we have New York Open. So I missed one, sorry for that one. So New York Open is the next one. That is 2 p.m. UTC +2. I hope you see my drawing here. So New York Open is the first one with 2 p.m. or like 14, whatever you call it, like probably 2 p.m. right? 2 p.m. UTC plus 2, that is New York Open, but our major trap is New York Trap, not the O, the trap, right? New York Trap, and that is 3 p.m., right? 3 p.m. UTC plus 2. That is our major trap for New York. That is 1 hour after New York Open. So 3 p.m. is New York Trap, and 2 p.m. UTC plus 2 is New York Open. Okay, so but we will focus on New York Trap. That is where the true trap move happens, and we don't trade New York Open. Okay, so New York Open sometimes can be the trap. Same thing as Frankfurt and London variate sometimes. Again, the major trap can happen New York Open as well, same as the major trap can happen in Frankfurt Open, but we again focus on London Open and New York Trap, not Open. Okay, and the last time confluence we have is London Close. So maybe just first make my picture here, maybe New York Open fakes the double bottom, New York Trap comes in, traps high, something like this, and then continues lower, and then London Close happens in this, and then just ends the day off like here. Okay, but we already digged into the first cycle variation. We will have a few different cycle variations where also London and New York, and in between they can be continuation trades, but now we just give you the first picture to understand the first cycle of how it can work also. So that's the overall time table you need. Just again add your New York Open and replace that with New York Trap, and then you're good to go. That's all the times you need. So let's take a look at some charts, right? So as always, we have our Asia session. That's how our intraday starts, and we already can see, okay, we had the build up, equal lows in here, double bottom, right? Again, also faking it here a little bit, giving us the equal highs for later, right? And the lows here and the double bottom here as well, right? So boom, induces it to the downside with what? Speed, vector candles to the downside. When is the push happening? Frankfurt Open to the absolute minute. So what do we expect if we see something like that? Choop, right? But of course we don't start here. Now we see huge choopings to the upside, right? Of course, now vector candles to the upside, same scenario. So what can we expect? Pullback area onto this, where you always learn what this is in week 3. So additional confluences. So again, we know what's going on. We had our vector candles to the high side. At some point, price has to pull back, of course, right? Fills the imbalances. As you can see, there's no imbalances anywhere. That's the last imbalances we had from here to here. That is also, I give you a quick hint already. That's the Asia range, right? This whole purple box. That's the 50% of Asia range. So the Asia mid line, that's backed up also with the last imbalance zone, getting mitigated, taps the liquidity zone of Asia midline. So guess what? What can we expect? Price to choop higher. And of course it does that. Then the next major time confluence. And again, also if you check the timing, when does this happen to the downside? What a surprise. Only magic manipulation minutes, right? And then also if you check this time in here, when does this push happen? Only magic manipulation minutes 1. So what a surprise. As you can see, the whole day is literally mapped out like crazy, right? So this is almost to the minute. This is almost to the minute. This is again 12:30, should be something in here, right? Almost to the minute. And guess what? Now we have high trap. When does it happen? New York Trap only to the absolute minute. So what can we expect? Choop. And again, what does London Close do? Faking a double bottom in here, comes back to mitigate. That's London Close task to do. Traders want to go home. At least the institutions, banks, and architects want to mitigate out of their positions. The price can go lower. Boom. Easy. Done. See, timing as a compass is insanely powerful, okay? Another example, 7th of April, we had this before. So guess what? Same thing, huge channel buildup, right? Last impulse with speed, and look at this. This candle was solid black at this point, right? Or solid gray. Again, the wick is here, hard to see, it ends here. right? But then guess what? The timing, what's the timing? Frankfurt Open, a little bit off, right? So guess what? You should see that in the cycle that this is definitely done here with this huge vector candle. So what can we expect? The tube, right? So then again, huge momentum down run. If you see the timing, unfortunately we can't to the bottom, but magic manipulation minutes 1 looks like it, right? And guess what? After this huge momentum downwards, of course, they cannot move in this direction all the time if they use the speed and everything. So guess what? They have to pull back. Boom, tube, right? So that moves more like magic manipulation 1, right? So guess what? Next timing trap taking out this high in here. New York trap takes it out. So what can we expect after that? Reversal. And that's how you can use timing again for your compass. And again, the architect will be like, oh shit, you can't induce that guy with timing anymore, right? So timing is used when the liquidity enters in order to trap even more liquidity into the wrong direction. You should understand by now, oh shit, okay. They use it actually for your benefit as well, because you can use it as a compass and guideline. Another example, right? So we have a lot of examples, like all that's recent ones, right? So for me, it's a little bit covered, but I think the first one was April, whatever. The second was also April. This is like, looks like May to me, whatever, 24th of May, something like that, right? So guess what? Same picture as always. London Open in here after this huge momentum upswitch, right? So guess what? First the channeling downwards, building Asia low, channeling upwards, finally breaks out of Asia with vector candles. Timing is to the minute. I think if I can see that should be 9:10, so 10 minutes off a little bit. You also can see the box. That's perfect timing for London Open. So what can we see or what can we expect? The tube, and even 10 times nicer, now building double bottoms, right, of Asia low, even comes back a third time, fakes the reversal, again, fakes a double top here, builds liquidity again. Then, what a surprise! New York trap time to the minute takes out the equal lows and Asia low. So what can we expect? Tube! Right, then again, London close being the inducement in this time. We also had this for London close being a potential characteristic. London close, again, this candle was solid. Great at some point. This wick ends here. So this also was solid. A candle in here happens right to the minute with London close. You can also see it with this purple line. You will also see on your time indicator. So guess what? Tube, pull back, day over, done. Insane. Okay, so a very recent example. That's the 30th of June, right? So technically a few days ago, whatever, depending on when you see this video, but when I record this video, it's literally yesterday, right? Anyways, so what do we see? Build up, inducement. And again, this is the thing. It doesn't matter when it is. It's like a year ago, 5 months ago, 3 years ago, yesterday, tomorrow. It's the same shit all over again. Just get these concepts into your head because they're timeless. Evergreen concepts, that's how the market really works. And of course, they use timing. And always will, because that's how it works. Okay? So, equal highs with Asia high. Guess what? And do slow one more time. Boom. Troops. The liquidity. Asia breakout to the high side. When does it happen? Oh, Frankfurt Open. Okay. Interesting. Gives you the break of structure. Leaves the huge imbalances. Right? Comes back with news even. News event. Fills it. First even takes out Asia low. So obviously can push price higher into the mitigation area in here. Okay, perfect. What a surprise. Then guess what? Channel build up before the news into the extreme mitigation. What a surprise. Induce the channel to the high side to do what? Push price lower, building a new channel in the process, inducing price low with what? Vector candles. What's the timing? New York Open, what a surprise, gives you the break of structure to confirm that the cycle is done completed, right? Leaves the imbalances, comes back, fills the mitigations, builds a new channel in the process. Vector candle never took out Asia high, the liquidity to the left, right? So stays inside, fakes a smart money trap to the downside, with London close. Again, if London close is the extreme, it should induce something, builds a channel, boom, there you go, done for the day, and a little pullback after that, right? And again, guess what? We took this trade, we even took this trade, we even took this trade, and this one, right? And then of course the day was just over, so there's just a few pullback trades in here. But that's all stuff you will trade later on, so that's insane. And we have an abundance of examples. So guess what? Let's see what's going on here. So first things first, again, we're starting with this day even. Guess what? Asia range never was induced. What does Frankfurt do? Induces high to do what? Pushes price lower. And then again, you probably have to look to the left what's going on. So this is just inducement out of Asia low. That's why you also always consider inducements out of Asia low just by itself minor inducements, right? And then just gives a fake pullback, builds up this channel, right? When is the channel induced? Whoops! With speed and momentum, right? Before that, you had this order flow entries here and here into the inducement with vector candles. When does it happen? You also see this box. You will also see it soon on your trading view to the absolute minute in trap time. Perfect. And then is ready to chup to the upside when the cycle is completed, takes out Asia high, and then can reverse from there on. The next day then, what does it do? First of all, building some liquidity very late in the day, takes it out. Again, faking the smart money continuation here. That's your smart money trap. Again, also faking the baby koch, whatever you want to call it, right? Then guess what? Channel inducing minor out of Asia low. Again, that's very early though, but guess what? Pushes price higher. And then again, that's where the understanding to the left becomes very important. All right, so this is just minor, never induce something here. Again, if anything, builds up the quadruple top bottom in here, fakes again the breaker structure. And guess what? Even here, builds like the equal lows, right? And then guess what? Where's the imbalances? All the way in here, like from here to here again. And that's what? Magic manipulation minutes, fill some sort of imbalances, right? That's your time window where you can see now finally, okay, this is the whole channel buildup. They're making one a bigger picture, right? Gets induced to the low side. Again, obviously you have to draw it a little bit more accurate than me with my fancy hand drawings in here, right? But guess what? That's like the major channel buildup for the downside, getting induced by speed and vector candles with magic manipulation minutes 2 in these scenarios, filling the higher time frame imbalances. So if you break that down to the 1 hour, that's probably the 1 hour imbalance, something in here, taps that, fills that, right? And then is ready to obviously chup to new highs. Then the moment obviously everything is induced to the high side with speed and momentum, next timing confluence, London close, induce something to the left, perfect. And guess what? Can pull back down. Okay, so get slowly, surely used to these timing confluences, because you will notice also if there's a major move happen, it's very likely that it happens during these timings. So again, use it as a compass, but use the build-up cycle before that, use the lit cycle before that, and then confirm it with the timing to give an overall even better understanding of what's going on. Next one, 14th of April, right? Again, doesn't really matter what we take. It's always the same stuff. So guess what? We had this, first of all, we had this huge quadruple bottom on Asia low. That's like just screaming in your face, take me out later. But before they take it out, guess what? They building up channels, inducing to the high side. And again, at this stage, you would be, induced to the high side, fair enough. So you can be ready for a pullback, but guess what? Showing the equal highs, also faking the pullback. Then again, you have to be very careful then to see what they're building up with the liquidity, faking the double top, pull back down. So it gives resistance traders all interested into it, right? And then guess what? Final inducement to the high side. When does it happen? Only to the absolute minute with magic manipulation minutes 1. Okay, we talked about that, when sometimes they love to induce high, then build more liquidity and then take it out of magic manipulation minutes 1. Perfect. And only absolute to the minute And again, at this point, we showed you examples all over the place. Like again, a year ago, half a year ago, 2 months ago, 3 months ago, very recent. It's always the same. You just have to identify what play they're going, right? Then guess what? After they induced everyone to the high side, what's the next liquidity target? Juicy Asia low. What do they do before that? Faking the smart money trap, giving a false reaction, giving the quad million bottom. And then, of course, giving one more time the low side. And then, choop! Just take it out by just a speckle. Just a speckle off on wick. Take it out. When does it happen? What a surprise. Only New York Open to the absolute minute. And then fill the imbalance when a New York trap to the absolute minute. What a surprise. And then, of course, they can choop upwards because they took out the liquidity first. But you see, everything here is literally backed with timing and to the absolute minute at some point. Again, this trap first happened or only to the absolute minute in London Open. Interesting. Again, then it's just building equal highs. That's why you have to be a little bit careful and then see this is a fake push downwards to take it out in one. Magic manipulation to the absolute minute. Takes out liquidity of equal low or what million bottom only to the minute. Fills the imbalance extreme of the M1 later on to the absolute minute. Insane. Right, another one. 18th of May, again, it doesn't matter. It doesn't matter. What month for the year, it doesn't freaking matter. That's May of 2022, whatever. Right, so guess what? It's a little bit tricky one. So you have this huge build-up, right, again. Always helpful if you're not having struggle to find the build-up properly, use the clean build-ups where you can see from 50 miles away, like where they're touching all these trend lines, right? And then just mirror it up, right? So you can see the bigger picture channel also. Then again, you see these huge vector candles, another one. So this time they gave 2 impulses to the high side. Again, that's why sometimes the break of structure can be very helpful. So you don't messing up like, I have to take this reversal trade in here. Poof, and they're getting smoked. That's why we never pick like a high if you don't have another confluence to the left. If it's like a higher time for mitigation or like some sort of inducement, then of course this is a valid sell, but probably we didn't have that in here. Right, so we have to look in higher time frames. Probably looks like something was like in here or something, right? Something like this maybe. And then giving the equal highs in here one more time. Takes it out, again faking the equal highs, quadruple bottom, triple top in there, faking the break of structure for the reversal traders, again inducing low of the structure to go what? Go high one more time, and then the cycle should be very, very clean in this scenario. Channel build up, double top in here, and then this time it just takes it out in Asia. It's completely fine, right? But then you have to understand, oh shit, that's my medium inducement in Asia. So I want to trade away from that, right? And guess what? In the process, building up equal highs, right? Frankfurt pushes price lower into the inducement of London, right? Okay. Never took out something to your left, right? In this stage, only builds up small money traps. Perfect. Then takes it, again, fills some sort of imbalances in here. But where's the next liquidity? That's the medium inducement. That's where you start to think about combining things. That's your medium inducement. That's your liquidity buildup, right? That's your inducement that fills imbalances. But again, you still want to trade away from the medium inducement. But of course, price has to push back. When does this happen? To the absolute minute in magic manipulation minutes. 1. Again, pulls back. Gives you the value breaker structure after the inducement. Filling into mitigation. Right? So that's your potential mitigation area. To trade when? Into the next liquidity area. Boom. Grabs the liquidity. What is this box? What's the timing of this box? New York trap time to the absolute minute. And then, of course, boom, wants to go lower. Easy. Trading away from the medium inducement and away from all these crazy buy trends they build up. You see how it works? All right, another one. 5th of April, right? So guess what? Building the channel. Upwards. Again, even minor baby plays before that. Right, you can see what they do. Building the channel, sideways action, inducing low. Right, perfect, into this one. boom, inducing low to go higher, channel buildup, induce the channel low to go higher, boom, into the inducement. Again, this is the most common scenario where you have a minor inducement first, and this acting most likely as a medium inducement, and this happens in London Open. So again, always expect the first push out of it, pull back. Also, we will learn this trade in here. That's one of my favorite trades, getting into the London inducement again, and then London happens to the minute, induces the final liquidity, and then is ready to move lower and aim for what? Right? So guess what? First taking out this liquidity point. When does it happen? Magic manipulation minutes 1. Okay, so we can expect a pullback. Comes back to the extreme. Right? So taking out the first liquidity target. Comes back to extreme, gives a pullback. Now guess what? It's a whole different scenario because you're having a free whatever, even a quadruple top in here. So that's how you have to understand what they're doing in terms of the liquidity. So this should not aim lower anymore for the day, at least. Again, at some point, obviously, we'll take out these equal lows. Again, that's the concept of liquidity. They have to show the liquidity. They don't have to take it out immediately all the time. But in this scenario, okay, we fake now the inducement to the low side. We give this quadruple top with 4 touches to the high side. And again, this is then technically trading away from this inducement. And then you want to trade into the liquidity that just built up here, and then they grab it. Okay, like this. Boom. Okay, so you see, what do they do before that? Building up the channel, inducing the channel in what direction? To the low side, taking out the structure point, and then chup it. Now they grabbed all the liquidity, right? And guess what? Now you will be, oh, what about Asia low? Blah, blah, blah. Guess what? First, they're taking out this liquidity. They're showing you even how they did it. Again, look at it. 1, 2, 3, 4, 5 touches to this point. Inducing low, taking out the structure point. Like here. Inducing low, also the channel buildup, getting induced low. Boom. Snack all this $1 top in here. When do they do it? New York trap time. What a surprise. Now they grabbed all the liquidity high, whacked the candles to the high side, still left with the equal lows of Asia low. So guess what's going to happen? Boom! What? It's magical, but still surreal. You just have to understand, again, the build-up cycles. When does the inducement happen? Draw in the liquidity, show in what direction the inducement induces, use timing as a compass, and it will be magical, but still so real. Again, we have more. There's so much more. Guess what? 14th of June, very recent, right? So guess what? Same stuff. Nothing changes. But guess what? First build up, in which direction it gets induced. Boom, to the low side. When does it happen? Frankfurt. Interesting. Induces high. With channel. When does it happen? London Open, and guess what? Induces 1 time higher with magic manipulation minutes. So guess what? It's ready to go lower. To do what? Technically aim for Asia low, but guess what? In hindsight, we already can see it didn't get taken out, but that will be even juicier for later on. But for now, obviously, we want to trade it away from this one. Okay, so here's your potential area. What do they do here? Build up, inducement with speed, vector candle to the high side, mitigates an extreme point. Perfect. Traded lower. Channel. Inducement high with what? Vector candle into what? Order flow aiming for these liquidity areas. Then the day is just over. It's just getting too late and they don't want to take out Asia low too late because guess what? They use it for build up. For what? The next day. But guess what? Build up. Inducing high. Build up. Inducing low. Structure point getting induced here. To go what? Induced low. To go what? Higher. Vector candles. Yes, if you're just looking into the picture, this would be like a valid vector. But then again, look to the left. You want to take out the next liquidity point. Medium inducement. Right, so that's your medium inducement right here. Fakes the break of structure to low side. Again, that's what magic manipulation minute comes in. Inducing, again, this equal highs that just built also. So again, just for understanding purposes, yes, this one very well to downside. If they come back all the way again and show you equal highs, we had this example before, be aware that they're probably going to snack it. Right? Snack it, take it out, and then you're ready to trade this away from the medium inducement. Right? Again, this was the medium inducement, yes, but then builds equal highs. So this one becomes your minor inducement into a medium inducement. To see how you're combining stuff. So medium inducement, perfect, but intraday builds up liquidity high side, induces us intraday. So you have a minor inducement of a medium inducement, very fucking juicy, and you aim for what? Next liquidity area, boom. And guess what they do before? Building triple bottom, faking the reaction. That's where you also can enter it. And this time, again, New York trap becomes a continuation trade because you can never grab liquidity. The world sees a triple bottom. The world sees a strong support. Oh, but guess what you see? Liquidity. Snack it. All right, then guess what? Build up, inducing high first to go up, lower, pushes price down with news. What a surprise. Oh, the news are so random. Guess what? The news are definitely always completing a cycle. And you can see there. Build up, inducing high to go lower. Now this whole thing is done. Induce the triple bottom. Right, done. Snack the liquidity, use the use and induce both sides, but obviously this one is the major one on this scenario, the medium inducement. Guess what? Pushes price back. Next day, you understand, okay, they left huge imbalances of this medium inducement. So guess what they gotta do? Build up, pull back, still in the build up, inducing the build up to a low side into mitigation. Here's your vertical structure. Here's your mitigation. Boom. Snack it all. And then when they're just out of it. They're just out of it. Okay. Insane, isn't it? And then again, this one again will technically be medium, but you should be very careful about not like, it took out this high, so I need to take a short. Oh, it took out this high, so I need to take the short. Oh, it took out this, I need to. No. As you can clearly see, that's not the way we do it, is it? It couldn't be more from the opposite, right? We back it up with all the cycles. And again, if you see something like this, triple bottom, gets snacked, medium inducement, left imbalances, that's a proper overall higher time frame cycle. Medium inducement getting mitigated, cycle before that, inducement into mitigation, gives a break of structure into mitigation, and then it's off. Of course, price have to run in some direction when a proper cycle is fulfilled. Okay, so get that into your head. Another one. All right, easy one. What's going on here? Channel, induced to the high side, to go up, push price lower, out of Asia low, boom, getting snacked. When does it happen? What is the price? Frankfurt, okay, interesting, but again, just a baby inducement, so left equal lows. Now, equal highs being formed in here, getting snacked. And as before, build up, inducing low to push price higher into the inducement. When does it happen? Only magic manipulation minutes to the absolute minute. So choop it down. Next channel, getting induced to the downside. In here, right? So maybe you argue, oh, there's still is in the channel. Perfect. Even better if you realize that. That's exactly how you need to do it. That's why they're not done yet. Right? Okay. And then the day is just over. It's too late. Right? London close happens in here. So you just expect like a little pullback, and that's it for the day. And then because of liquidity left, leaves the market. And then obviously this becomes very juicy later on. Leaving in again, it's always step ahead before the next day. So last one. Let's see what we have in here. Right. Build up. Right. Not induced to the high side yet. It's still in it. If anything, induces to the low side this channel. Right. So guess what? Baby channel in there. Vector candles into it. Into what? You already know what that is. I spoiled a little bit. Right. So guess what we can do in this scenario? You got it. Right. Frankfurt happens. So right. If Frankfurt wants to trade into the inducement, even nicer. Boom. There you go. Builds the equal highs. Pull back, fakes it. takes it out finally. When does it happen? London open. So guess what? We had this huge channel buildup. We had it induced to low side, mitigates these areas. We wanted to trade it into the inducement, gives another buildup to the high side, pull back, boom, grabs now all the liquidity. Now this channel is induced, also the daily cycle is completed. So what direction can we head for? To the downside. Chap. Insane. Okay, and of course taking out Asia low. What do they do before that? Faking the quadruple bottom, faking the break of structure, faking reversal traders in just to snack them out. And that's it. So use the timing confluences as an intraday compass, as I showed you now a couple of times. It's not again, oh, look at the clock and it's Frankfurt open to the minute, I have to open a buy. That's not how it works. Again, you have to combine it with all the other stuff you learned so far. The most important thing is the understanding of liquidity, and slowly but surely also the combination of multiple time frames, or at least looking to the left, what's going on. Use the cycles and then use timing as additional confluences, and it will become magical. Okay, there's still so much more to go. Week 2, isn't that crazy? And you already know almost everything, right? So insane. So get that into your head again. Make a lot of tasks now. Get again this marked up. See the build up. See the inducements. See the mitigations. You also dig into the simplicity approach. You also have a very good understanding of how to use it properly and get used to it. Okay, practice, practice, practice. That's where the moment is starting, where you have to see some really crazy moments, because at this point you're slowly getting into the solidification stage where this has just to become fluid. Again, we have a lot of time left, but do it. Keep up, because then at this point you have a lot of knowledge already. Everything builds upon each other. So again, slowly but surely have to combine it. Okay, so use it properly and make a lot of markups. Okay, have fun. We catch up in the next video. So let's focus on the true market intentions and combine everything you learned so far with a pretty good example. Okay, so let's see if we can detect the market intentions, and I'm pretty sure you can. So let's dig into it. So what we have is we have to focus on the bigger picture so long until you can't see it anymore. And as we said already, you have to see it so long again until you just can't see it anymore. It's the fact. And once you see it, you can't unsee it anymore. It will become an automated process in your trading analysis that you just can't see unsee this stuff anymore. And again, if you look at all the mentors you know so far, right, we all trading the same way. We don't really spending too much time marking up charts, because it's just your eyes getting so trained that you just see it without needing to mark it up. But of course, you're not in the stage yet, like it's week 2, so you have a shitload of time left. So of course, you have to mark up everything you see in order to train your eyes about it. Okay, so let's see what we have on the 13th of May 2022. So what are they doing right here in this day? As you can see, the day starts here. Asia range is done, or Asia session is done. What can we detect of what they do? And really try to play it now in your mind as well, to see what they do for this day. Again, we don't really too much care about this day in here. Again, we focus on what they do on an internal basis. Okay, so let's see if we can detect it. First things is, we see, okay, we already had a breakout of Asia range. Okay, we see as well building a buy channel before Frankfurt and London open. Okay, so if you look at the timing, Frankfurt is technically here. London is about here. Okay, perfect. And maybe that is even Frankfurt already. Very hard to see in the timing, right? But could be around Frankfurt time already. Perfect. So they see, oh, they're building up this bigger channel and also these smaller channels, right? And if you also noticed, obviously, a channel in here also, right? If again, momentum to the upside, perfect, another channel, and slowly inducing Asia high as well. So they're all building up liquidity to the high side already. So what's the things we have to ask ourselves? What is the rest of the world doing in this specific moment right here? All right, so they see this huge pullback, like coming from here. They see all these channels being built up, all this trend being built up, momentum, speed, channel, another one, breakout of Asia range, right? Of course, they're all preparing already or in buys, right? And obviously the sessions start now, so the liquidity now is about to enter, right? So perfect. So liquidity start building up to the high side. But guess what? If you look to the left, is there anything medium going on now? Or is there any imbalances left or whatever? Or is this just another build up and we have to see what's going on, right? But already we can understand that they're building up liquidity like crazy to the buy side. Okay, perfect. So of course, everyone is buying right now. No one has a real reason to sell at this moment, is it? Right? So ask yourself the question: where are the stop losses of those people, and what are the major tasks for Enigma? Okay, so if everyone is buying right now, right? So starting from whatever, like this channel build up, extreme stops obviously were below here, right? So some of them already getting a little bit faked out, and you can see the mini build-ups going on, inducing to low side to go higher. You see this channel build up, you see this inducement, you see this equal lows going on, inducement into speed, into this mitigation of the inducement. So you can see already mini cycles going on. Another push high, building up liquidity. Where are those stop loss of all these people who are taking the buys in here? Of course, down there, or obviously down here. So Asia low or here, right? Where are the stop losses of all those people jumping in here, and also the breakout traders, right? The stop losses obviously down here. So what is the purpose of Enigma though? First of all, create liquidity. They're already doing it. Perfect, right? But also, if you look to your left, mitigation, fairly deliver price, right? And you already can see, okay, we had like imbalances from here to here, here to here, right? So that's again where just imbalances alone will not help you too much, because we have to understand the cycle, identify the right zones, and we had imbalances all the way from here to here, right? So we have these 1, 2, 3 zones. And again, we don't randomly pick these zones. We see what makes sense in terms of the cycle. And we already can see, okay, huge buildup. Everyone is probably buying. So do we need another inducement to the left? Not really. If all of them are already buying and it's already being built up like crazy, right? We can slowly prepare for, obviously, mitigations in here to fairly deliver price and filling these imbalances. Again, at least some of them, it doesn't necessarily need to fill all the ones at the same exact time, right? So we need the next zone, which will align with our cycle, right? When it makes sense. Obviously, we'll dig into that. So again, ask all these questions before you even thinking about doing anything. But this stage, because we will not do anything, right? Because we, of course, just understand now we had this minor inducement out of Asia high, and we already had a channel buildup. So of course, if we want to go even higher in here, Enigma doesn't want to give them all these people who bought in here like their money, is it? So maybe we can expect an inducement low of the channel and getting into a proper mitigation, and then maybe look for something like this. That's all stuff we can already project out in our heads and prepare for what's going on. Again, we will not predict. we will react. But that stuff we have to understand are possibilities. Okay, so let's see what they actually did. Boom. Okay, stopping out some of the buyers and giving reversal traders a break of structure, or like this koch, change of character, whatever they want to see, whatever, like all these reversal confluences and confirmations. So, and also they do it with what? Speed to add sellers now. Right, of course, they obviously have to play in both directions all the time. So again, we have this overall bias, and these buyers already getting a bad time because they're already getting stopped out. Let's say buyers getting in here, boom, they're getting a reaction, stop losses below here, getting stopped out. Breakout traders of Asia range, stop losses if they have here, they're getting stopped out. If they have it at Asia midline, boom, getting stopped out. If they're having it to the Asia low, of course, they're still not in. They're still in, right? Of course, they're not stopped out yet, right? But what is the other side of things? Of course, other people see, change of character, it has to be a reversal because it's an overall sell trend, right? Of course, it was just a pullback. Here's my reversal, whatever, my change of character. So whatever, they take these cells in here, right? So what we have to do in these scenarios, right? So what are we missing in the overall picture? And that's why we have to understand the bigger picture and also the tasks of Enigma, right? So guess what? Mitigation to the left is missing. Of course, we're inducing buyers, we're inducing sellers now, but of course, you have to also look on a bigger picture. What does make sense to the left? And we never had anything of mitigation, just still in the middle of nowhere, right? Next logical thing would be a mitigation to fill at least all these imbalances from here to here, right? And we're just in the middle of it right now. So at least proper mitigations to give market a quote-unquote fairly level price, right? So guess what? We can mark up the mitigation zone, right? Of course, we take the next one, where also is liquidity with London close liquidity, left the market in here, right? You already know that. Perfect. Okay, so guess what? We look for the next cycle, right? So we just wait and we understand, okay, that's a fake break of structure. Obviously, everyone's getting excited for the reversal. We never had a proper target to the high side. So for us, later on, again, you will obviously learn that this would be a juicy buy trade, and we even have a fancy name for that one, into the inducement. And again, I'm not sure if I said it already, but this has technically my beginning trades. This was my most favorite trades, like having a fake inducement to the high side, inducing channel to downside, never had a proper target to the high side yet, and trading into the inducement and then prepare for sell trades in here, and then obviously look for proper reactions from there, right? But this buy trade, again, not for now, but for later on, will be a very juicy trade setup. And again, why? Build up, inducement of the channel to the low side, momentum, speed, mitigations. You will learn again of why this zone. Of course, later on, again, also had this supply or demand, whatever you want to call it, doesn't really matter. It's and then it just some sort of supply demand candles with imbalances a little bit into it, right? But again, of course, this could be something we will look for later on. For now, just understand bigger picture cycle. Smaller cycles, inducement of the cycle to go higher, building equal lows in here, induce it with what? Vector candles into mitigation, building a new high, new channel high, right? Inducing the channel to a low side a little bit to go higher, building a new channel in the process, inducing this channel to a low side into mitigation, right? And preparing for completing the cycle into the mitigation of the previous day. Lovely shit, right? So guess what? Chup out of it, right? So guess what? Here's the trade. Of course, London Open gets even one step lower, whatever, induce even one more time until they actually go into this demand areas, right? It is what it is. or even supply areas, whatever. I always switch that shit around. It doesn't really matter. Again, if you think it does, okay, then get used to it. Write the namings, but whatever, supply, demand, always the same shit. Doesn't really matter. You have to understand the market intentions, not if it's a supply and demand, whatever. It's just supply, demand, both of it. Okay, anyways. So at this scenario, we understand the cycle overall now is completed. We have, guess what? Bigger picture. Build up, smaller build ups, inducement, another channels, vector candles, equal highs into the mitigation. Guess what? Timing. Okay, you already can see what the timing is in terms of this box, right? And also if you look to the bottom. Timing. Okay, interesting. Makes perfect sense. But what is the next goal? Of course, now they achieved the full cycle completion to the high side. But we obviously don't stop there. So if we took the buy in here, or maybe obviously in here, right? So depending on how you took it here to the high side, whatever comes back gives a nice juicy inducement to the low side again, potential entry in here, whatever you dig all into it, into the mitigation. So this cycle is completed. So what is the next goal? And we have to project all these things out slowly but surely later after each other. Okay, so inducement low to get all the buyers out and induce sellers, right? So guess what? Now literally everyone is trying to buy because again, they again seeing the huge build up, the huge channel, the momentum to the high side, everything's going on. London liquidity enters the market, only speed to the high side. Everyone is wanting to buy this thing, right? But of course, Enigma now achieved the goal with inducing everyone to the buy side and mitigating something to the left at timing purposes. Perfect. Okay, so of course now we want to stop out all these buyers. Bonus question again, when should they complete the cycle? We already digged into it. London, of course, or at key time windows. Technically, doesn't need to be London all the time. Can be magic manipulation minutes. Can be Frankfurt, so on and so forth. Same thing in here. This probably was a Frankfurt move. Again, Frankfurt liquidity getting induced to a low side just to push price higher. Okay, it's always the same stuff to use these time windows to use the liquidity that enters to obviously build it up even nicer. Okay, so guess what? If the cycle is completed to the high side now, what is the first target? And let's just assume you are already a little bit more advanced and you can enter this in here. What should be the next target? You should understand already. Again, you saw this cycle probably at this point like 500 times. So what is the next target you should aim for? And if you said Asia low, very good. All right, so first target reached, Asia low. And what a surprise! What a surprise. And now we have to already understand the next picture. Where is the most effective liquidity zone though? Of course, we had our intraday target of Asia low, but what is our most efficient liquidity looking to the left? Again, we had all these buyers, channel, buyers. Where are the extreme stop losses? I'm pretty sure you figured out. Boom. Right there. All the buyers, obviously, extreme cases have the stop loss down there. Okay, so guess what? Well, how can we achieve to stop all of them out? Very easy, right? Just going down there. But will price action just from here go all the way down here? Plop. That's not how the market works, is it? Right, so guess what? Now we reached our first liquidity area inducing Asia low. Right, so now the next questions have to come in our head of what's going on. Right, so what will they do if they reached a first liquidity target or zone? Right, this was our first target. Liquidity is being grabbed. Asia low is getting induced. So what is the logical thing? And I already spoiled the answer already, right? So of course, a pullback to fulfill the tasks with the mitigation and complete the cycle after. Right, so guess what? Inducing low. What is this already? What is the Enigma's tasks? Right, so see slowly how it starts to click, right? Okay, we're finding our POI for pullback and target the next liquidity zone. Right? And guess what? What else do we detect, or what else do we detect? Again, I already drew it in a little bit. Do you see what's going on? Build up, inducing to the low side, minor inducement, Asia low. What's the bigger picture? Channel, maybe inducing this channel into mitigation, deliver price fairly, filling the imbalances, going to the next liquidity area, grab the liquidity, and then maybe what? We will find it out, but everything step after step. So now, of course, we can detect this build-up, a new channel is forming, and we have this breakout of Asia low. Perfect, right? Sellers getting in now like crazy. Again, they're seeing this channel, they're seeing the breakout, they think, oh, crazy change of character now, it has to go down. Of course, right? But guess what? Mini cycle is obviously about to complete. So what's the next logical reaction at this stage? Boom, chup, right? So of course pullback, and we will dig also into that. And obviously we can trade this buy in here until these areas. And again, as you already can see, slowly but surely we can trade everything, right? So we talked about this buy in here. Obviously this is something where rarely happens anyways, but even if this gets your break even in this, no problem. You can still get into here again until the next mitigation area. That's your potential sell in here. Guess what? Until all the way down here. And here's your potential new buy until here. That's your new potential sell. Until when? You see how slowly but surely all makes sense. Everything starts to connect. Isn't that crazy? Right? Alright, okay, perfect. So let's see what's going on. Inducing the channel, feeling imbalances, fake reversal again. I think everyone's reversing it now, whatever, right? Again, oh, it has to continue because it's a bigger cycle, the bigger channel, oh my god, it has to continue. Faking the break of structures, the internal break of structures, right? Stuff like that, or even here. Faking the Koch, of course, we can trade it for minor plays, but you have to understand we have to get out here, right? Perfect. What else? Stopping out sellers of the channel, of course. This channel, selling, 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 boom. They're getting obviously all stopped out because of this huge move. They're all getting in drawdown. They're probably closing their positions. All right, perfect. Okay, so remember though, what was our next liquidity target? Very interesting. Did we achieve the mitigation? Did we fill the imbalance to the absolute tick? Interesting. So of course we have our next liquidity target lower. So guess what's about to happen? Chup! But not quite. Stayed short of it. Stayed short of it. Interesting. Look at it. Didn't take it out. Reacts. Not a wick reaction. Pulls back. So the major question, will this strong double bottom hold? Or does only retailers see now a double bottom? So strong support. Or have to take the buy. Another hint. Notice the timing also. What's the timing? New York trap. What's the purpose of New York trap? Trap people. So guess what's about to happen? Chup. With a wick. But guess what? This candle was at some point solid black. What is it? Vector candles. So guess what? Notice something else. What else? We just skipped a little bit. But train your eye. Train your eye. Another cycle. What? Channel. Inducement with speed into medium inducement. Okay. Cycle completed. Notice again the vector candles. Everyone is to the short side. Guess what? Now we have the overall cycle completed with a mini cycle into it. Crazy. Again, we had this overall cycle. Extreme stop losses down there. Mini cycle, boom, induce to low side to go higher. cycle, induced to the high side, into mitigation to go lower, cycle, induced high side, into mitigation to go lower, cycle, induced to the low side now, into medium inducement, timing to the absolute minute, New York trap. So what's going to happen? What's going to happen? Choop! Just like that. Start to click already. And again, that's the reason when you don't get into, oh, another sell in here, another sell in here. That's all smart money traps. Of course, they will all get smoked. Because now the sellers always left and they get smoked. They all will get smoked. And as you can see, this purple one, London close, right? So guess what they will do for the next day? Look what they're doing here. Again, the liquidity starts to get lower. The day is over. Of course, what's the intention? To build up what? Exactly. You got it right. Day comes to an end. How will they end the day? Building up liquidity for the next day. How do they do it? With, of course, quadruple tops to the high side, faking whatever. Look at this crazy reaction out of this strong whatever supply demand area shit nonsense resistance type of thing, of course. And if they don't take it out the next day, they take it out the other day or whatever, it doesn't need to take it all immediately, but they're of course building up liquidity for the next day or the next week or whatever, but they have to build up the process all over and over and over and over and over again. That's how the cycles are always the same. Doesn't matter when, what pair, what. Again, we talked about it, like cryptos, currencies, whatever, indices, like freaking stuff. It's everywhere the same stuff, always. These are the universal laws of how the market works and always works, because it has to be delivered, and that's how they do it. Build up, inducement, into mitigation, and of course, we will add a few more steps, so much more steps. Notice the timing concepts, everything lines align, okay? And guess what? You should be sitting there and like, oh my God, you're watching this and realize how this market really works in week 2 already. What? Yeah, so a lot of realization moments, but still a lot of stuff we will put into that. Can you believe that? So enjoy the next topics, but guess what? Get used to it, put in the work, and you'll have some fun times there. Okay, let's combine some basics we learned so far and combine it with a little timings. So let's see how that will go. What we will take, we take the 4th of April, okay, and we will combine now what you should understand by now and how we can use it for our advantage. Okay, so as we covered like a lot of times already, you should identify this build up in here, and you already can see, okay, these 2 points are in the build up if you draw it up correctly, right? As you can see, you have to take this clean build up line, right, and then just mirror it upwards. So it's like a nice parallel channel, and then it should be perfectly in there. That also helps you to identify if the buildup is induced. And note, the general rule is, if you have to, whatever, really hard to try to think of the channel as being induced, it's probably not being induced. Okay, but now obviously you can clearly see poof, this inducement, and again with this huge vector candle induced the channel to the high side. Also, again, we're already out of Asia range high. And what a surprise, it is only London open, just 10 minutes off. So almost to the minute. So perfect. And again, our ideal scenario is anyways, if they induce low first to go even higher. Again, breakout reversal traders, again, see these things and they see like it's a change of character or whatever. It's not. Right, so it's just in the build-up, and we wait for obviously our compass with timing also to confirm the whole cycle. Perfect. Okay, So anything good here? So what's the next thing you should wait for? Now you have it. Okay, so again, if you clearly see now the cycle is being induced, or the channel is being induced, you have a breakout of Asia. We have our timing confluence. Perfect. So we have our inducement with vector candles. Awesome. We wait for now valid breakout structure. So this is the push from here to here that led into the inducement. Okay. So if this push is getting broken, which it did here, perfect. Right. Then we can mock up again a build up, check. Right. Then an inducement and out of Asia range, and obviously even the channel being induced, right? So check. Then we have our timing, check. Now we have our breakout structure, check. What's the next thing we have to do? Mitigation zone, check. Okay, boom, mitigation zone. So what do we wait for? Oh, here's the imbalance getting filled. Imbalance fill, whatever, imbalance fill, check. That's already a potential juicy area. Right, guess what's next? Obviously the main breakout structure again is the bigger picture. This push all the way leads in here. So again, you have your internal breakout structures that led in here. If you want to make it more whatever later, that's also fine. But then again, it's just order flow entry. So mock up the next order flow, imbalance zone, also apply the mount candles, right? Getting tapped in, check. Okay, order flow entry going on further down, awesome. Right, so guess what? New imbalance zone, order flow, we already checked it, right? Next imbalance zone, boom, getting filled. What a surprise. And then move slower. What's your next target? Liquidity target. Check. Asia low being hit. Right, okay, interesting. And then guess what? Again, don't worry about trading it for now. You will dig into how to trade it. So just understand the bigger picture, right? Then guess what? We use timing again. Liquidity target, timing, check. What is the timing? Magic manipulation minutes 2. Before that one even, again, we have in here also timing, check in here again. So you see how many check marks you make. It's insane, right? The next timing, induced out of it, of course, right? So guess what? We can't even refine it now to a lower time. Now I have to remove all my check marks. So we now know this is the inducement. We have our vector candles, we have our timing, we have our overcycle being induced, liquidity target equal lows being induced. Perfect. Boom. Okay. So guess what? If this is the inducement, again, this is in here. This is just the M5. Now we refine it to the M1. What do we see? Again, the same thing we technically could have done this in here as well, but now we just do it down there, right? So what do we see in here? If this is the M1 inducement, where's the mitigation or where's the imbalances? From here to here. That's the imbalances. So that is your inducement POI. Right? So guess what they do? Building equal lows right above it. Boom. Tapping it into it, inducing the equal lows, filling the imbalances. When do they do it? Timing to the absolute minute New York Open. Okay. So what can we do? Boom. Imbalance, mitigation. Supply demand, candle. Liquidity also drawn up. So guess what? This is the zone we refined on the 1 minute. That's how you use multiple time frames to refine it later on. It's the same stuff though. The build up, imbalance, into mitigation, into timing. And this is already the inducement of Asia low, which also was a timing confirmed trade. Right, with magic manipulations too. Right, perfect. So guess what? Choop. Tapped into the extreme mitigation, choops out of it. What's the other thing we do? 5 minute. Again, this is the push that led to the new low of the inducement. That's getting broken now. So what's that? Technically, your valid break of structure. What's this? Imbalances. Okay. That's your supply demand candle. After breaker structure, after an inducement, after timing confirmed. This one with New York open. What's our next timing window? New York trap. Okay. So guess what? Do the same thing again. So we refined this zone on the M1 already. Again, this is this one. We did that. Perfect. Now we do the same thing. Again, you see how big the M5 zone is. All right. So guess what? We refine this zone, this huge candle in here. We refine it on the M1 to make it look like this. All right. So we used this candle, like the supply demand candles, the extreme one, but still we have to take the lowest wick to be on the safe side. All right. So guess what's the next timing window? New York trap. Showed with this box. So guess what they do? Showing the channel to the downside after break of structure, after an inducement, after building up liquidity here, after this has been confirmed with timing, after this is confirmed with timing, build up into inducement, into mitigation, backed up by timing into our refined entry zone to the absolute speckle, fills it, right? So guess what? Choop! What? Right, so of course you aim for an next liquidity area with this 1, 2, 3 tops to the high side, right? And guess what? Grabs liquidity. What's the next timing? Inducement, break of structure. Where's your imbalances? What's the timing? London close, induced something in here and should mitigate something in here now. Boom, taps into the mitigation, and off it is. Timing confirmed, everything buildup is confirmed, and that's how you use it. Lit basics in combination with timing, already insane. And you already probably can figure out of how you will trade that later. And guess what? There's even more confluences we can use, but already this is absolutely insane. If just think about how you were 3 weeks ago, and that is week 2. And you literally understand everything in terms of what's going on inside these pushes, how they're building up liquidity, how they take it out, how they mitigate, how they use timing, and how they overall complete the cycles in freaking insane. And that's just one of the cycle variations. Of course, there's multiple stuff we have to add in on top of that. But if you have the basic normal starter kit cycle, that's exactly how you can later on trade it in freaking insane. And here we go, back with the liquidity inducement cycle. But now, of course, we shift one gear higher, as obviously slowly but surely we're progressing. And this will be one of the most important videos about this whole series. It's technically the introduction video to the most important video. And this will be your ultimate guide overall. Okay, so be very, very aware of what's to come. Make a lot of notes and don't underestimate what is about to come, because you will absolutely love it and that will change your trading once and for all forever. Okay, so we already digged into the liquidity inducement cycle and obviously identified slowly but surely what is on build-up, what is the inducement, what is the mitigation, right? So you should be very familiar with those 3 steps already. And now we can add one more step to make it way more reliable and way, way easier for you to not make a mistake. Okay, and what is that step? It is the only time we will use market structure, and to be fair, we call it relevant market structure, right? Because we made a little bit of fun out of market structure in week 1, as you can remember, but now this is the only time we actually use it, and that's the most efficient way you can use it, period. Okay, so overall, of course, this step is optional. So like the build-up, inducement, mitigation cycle, that's a universal law, right? Like an evergreen concept, that's always the case. But if you add the relevant market structure or the BOS into it, you will see how insanely powerful it can be on top of it. Okay, so first things first, as always, and from now on, be aware that when we show you like a chart, it is 90% of the times it is a 5-minute chart. As we covered earlier, the M5 time frame is our new home. Okay, that's where the magic happens. That's where the whole clean intraday picture presents itself, and that's where everything is analyzed on a perfect visual picture. Okay, so always be aware, M5 will be your new home. Okay, of course, you will get some templates very soon as well, so you see the whole picture perfectly fine. Okay, so also for the lit cycles and the extended lit cycles and overall intraday analysis, M5 is the way to go. Okay, so as we started off with the lit cycle, even the extended lit cycle, it of course all starts with the buildup. The buildup is always your first thing you have to identify. Okay, that's why we spend so much time in week 1 to identify liquidity and understand liquidity, because if you can't identify liquidity, you know the saying, you will be the liquidity. So that's the first step always. Okay, so build up. Always identify the buildup properly. Again, we had it before. Retail is in the stage. They're obviously buying and selling. It's a mix of both, supply, demand, blah, blah, blah. Retail concepts building up. It doesn't matter what retail concept it is, they're just building up. Some buying, some selling, doesn't matter. They're just getting their reasons to enter the markets, right? Of course, in our stage, we're just waiting, dancing, grooving along with it, right? For us, it's not something we want to be involved. That's where we be, retailers, they getting induced, obviously, right? So of course we stay away from that scenarios. Okay, so if you just look at a chart right here from April, right, whatever, just random chart, it doesn't really matter. You will see if you backtest this later on, you can't just use any random day, whatever, and we will show you a lot of examples anyways. But this one, whatever, 4th of April. Okay, so where are the buildups in this scenario? Okay, so focus on the bigger picture and also the details already. Okay, so some are very easy to spot, some are a little bit tricky to spot. So I give you like a few seconds. You can note it down, but it should be very clean. There's just 2 tricky ones in there, and I show you where the tricky ones are in there. But for now, just see if you can figure it out yourself. Right? Okay, so the tricky ones would have been here and in here. So sometimes they are a little bit hidden. Okay, but let's reveal it. Okay, so oops, I put in some German here. That's of course answers and so yeah. Anyway, so you see the very clean buildup with the channel of B, right? Huge buildup, right? And of course we have some ranging going on in here with D. Then we have a little bit of a hidden one, like where it builds the equal highs, builds the equal lows. With the F1, G should be very obvious, the channel build up downwards, right? And then of course the little hidden one with H. Okay, that's your buildups right here. Based on the buildups, you guessed it, what's now the stage where retailers, first of all, they're raging or be like, oh yeah, it's going, and obviously they jump on, or the other ones being already stopped out, like this guy in here, and be like, oh no, right? Of course, we already spoke about retail inducements, but now what does it mean to lit? We of course covered it earlier, but of course for us, that's where we get into the stage of, oh, fascinating, very unexpected what happened there, right? So based on the buildups now, we can, of course, identify our inducement. So if you just look at the picture of the buildups, it's just very easy. Of course, now you're looking at it in hindsight, it's even 10 times more easy, but even on the edge, obviously, you will see later on of how perfectly fine or easily you can identify the inducements based on that. Okay, so of course, little question, where are the inducements? Is it A? So A, you already know what that is, right? A is high, so I'm not sure about A if that's an inducement. B, by B we mean this wick with speed, and you should already know this timing aspect to it, right? So, okay, could make sense. Breaking out of the channel with speed and timing. Okay, we know what that is. Then C, what's going on here? I'm not sure. That's an inducement. D, that means obviously out of Asia low with speed, right? Okay, could be something, right? Then E, this means like we have this one in here. Where did they get induced? To low side to do what? Okay, so E, okay. Then we have G, that's a little bit a tricky one, right? Because technically, again, it's a little bit hard to see, but the channel, it's getting then with speed induced to the low side. Timing, you should know this by now as well. New York trap time, okay, with speed, again, downwards. Think about it. Again, now it's a wick on hindsight, but even these candles, solid black at one point. And obviously, if retailers see that, they get very excited about that, okay? And then, obviously, H. Okay, I'm not sure about that. But then, obviously, we have I. Boom. With speed, inducing the channel. Okay, oops. Perfect straight line, you get it? All right, so let's bring some light into the tunnel. Of course, we had the B1 out of London Open, inducing a channel. Again, this candle was solid like this. At some point, of course, retail's getting completely excited about that, right? Jumping in like crazy, right? And obviously this one is the buildup, right? Then we had D out of Asia low. Of course, look at the speed at it. Of course, picture perfect inducement down there, right? All right, after this huge buildups, even here and here, right? And of course, speed induces it to the downside. To do what? Prepare for, of course, to go higher. Before they do that, of course, they build up one more time, induce one more time low. And obviously, you should know what this is. We will reveal it in the next steps, right? But you should know already what happened in here. Same thing for Chi. You should already know what happened in here, right? But again, that's the build-up, channeling downwards, inducement with speed, timing to it, and obviously then it does something else. We will dig in the next step. And of course, this build-up gets induced to the high side. All right, so we trade obviously away from that then there. Okay, very clean. So a little bonus question for the stuff you should already know by now as well is, when did the inducements happen, or does the inducements happen, right? Because we already digged a little bit into it, but it should be very clean for you. And that's where you're connecting the pieces, and you can see it's not only the inducement, the buildups, the mitigations, and obviously you'll add another step to it and multiple other steps, but you already can see another step is the timing that makes it way more reliable, of course, and way more structured, because you literally know exactly when to look at it as well, right? And of course, we covered the timing aspects already for a very good compass, so you have orientation to what's going on. So the answers, of course, is the first one. You said it a couple of times now. London Open, almost to the minute, right? And of course, we had another one. This one out of this build-up in here, perfectly. New York Open to the minute. Right? We didn't have too much going on in magic manipulation minutes, only this one in here, right? But that's technically just the mitigation for later on, right? But we obviously will cover that in a speckle, right? And of course, we had this inducement when it happened. What a coincidence. New York trap time. And then, of course, this one happens in London close. What a surprise. What a surprise, isn't it? Right? That everything literally aligns up perfectly. Like, okay. So now we add in a new step, obviously, to make it so much more reliable for you, okay? And that will be, of course, the relevant market structure break, or the relevant BOS, right? So retailers in that stage, like, they're seeing breaker structures everywhere, right? So for them, they're doing the calculations in their head and like, oh my God, new breaker structure here, breaker structure here, breaker structure here. What do we do though? We literally say, thanks, brain, because you did all the steps before. You need a build-up before, you need an inducement of this buildup, and only then you say thank you, brain, for doing the work before, and then only then you look for a relevant market structure. How does it look now? So where are the relevant break-off structures in this scenario? So we had obviously these huge buildups, finally an inducement to the high side with timing confirmed it to the minute, right? Okay, so then we obviously have this buildups in here. Next inducement is to the low side of Asia low. Perfect, we got that, right? Okay, interesting. So where would be the break-off structure in this scenario? Then we had this one, right? So where would be the break-off structure in this scenario? Then we had this inducement. Where would be the break-off structure in this scenario? And then we had this inducement. And where is the break-off structure in these scenarios? Okay, if you get confused a little bit, no worries. Let's reveal it. All right, so the answer, okay, this is the inducement high side of long open confirmed. This is the push that made the inducement, okay, or led to the inducement. So this is your relevant structure break. Okay, or if you saw this push all the way leading up there, you can use this one too. That's also fine, but this one for intraday purposes is way better in here. Okay, then of course we had this inducement. What's the push that led to this inducement? Right here. That's the push that led to it. Right, so again, they're faking the double bottom with this one, fake pullback, and that's the push now. Whoop. That tubed Asia low, and of course this pushed the structure point in here is our relevant breaker structure. Okay, then this one in here, okay, it's a little bit tricky one, right? Because of course in here we have the build up. That's the inducement. Technically, this build up push in here, or like this one, depending on how you want to see it, either this one or this one. But again, just for the bigger picture, this is the push in here. You also could mark up this one for the internal break of structure, right? But this just locks in this zone once again even better, right? But then technically you have the break of structure of this inducement inside this. So this all in here is like inside this push anyways. So you can mark it up double if you prefer that. And you just take this break of structure point in here as well based on this inducement. Okay. And of course, in here, you don't have a break of structure because this is just one big ass build up in here. And then of course we have another build up that leads to this inducement in here. So this is not a break of structure. This is the build up that leads to another inducement. So again, in this one, we don't have a break of structure. So this one gets invalidated. Easy as that. Okay. And of course we have this build up, inducement high side. This technically is the push, right? That led to the high. Or again, if this one you don't like, same thing scenarios in here, right? This one should be your markup for leading to the high side. If you don't see that for whatever reason, then use the more clear one in here. Same thing here. So again, if you miss that push for whatever reason, then the clear push would be here. But the better one is in here. Okay, so this one push, again, this push, pull back, new high. So this is the push that is the relevant break of structure in here. Or if you want to make really sure, then make this one instead. Okay, but those are the break of structures in here. And now to put the cherry on top, it should become very clean. What's the next things? And again, that's prevents you from making shit up, because you literally have to follow these other steps before what now? The mitigation. Again, retailers in this stage, they have mitigation areas everywhere. They have break of structures everywhere. You base it on the cycles and filter out everything else. Okay, so you're not being confused. You will be literally cheers to it, because now you're getting interested. How does it look like? Where are the mitigations now? So remember, first you need the build up, then you need the inducement, only then you need the relevant break of structure, and only then, again, if it's confirmed with timing, even nicer, and only then you look for mitigations. Build-ups, inducements, break of structures, mitigation. Right, so same thing. Build-up, inducement, break of structure, or like this one, comes back into, interesting. And then what? Build-up, inducement, Breakout structure. Oh, breakout structure. Okay, into. Does it click already? Okay, does it click already? So there you go. That's your answers right here. From the top, obviously, where's your imbalance zone? Was right here after the internal breakout structures, right? So if you take this one, there's no imbalances in here. So you take the order flow entry after it like this. Taps in here. Magic manipulation minutes in here, right? Perfect. But it's all based on the cycle before. Build up, inducement, breakout structure, and only then into the mitigation. Same thing here. Induce low out of Asia low. Perfect. Here's this breakout structure in here. Mini buildup inside of it. Induce the mini buildup. Have your relevant market structure break in here or the bigger one in here. Comes back, build up, inducement into now this mitigation. Right, perfect. And timing confirms it. Lovely stuff. And of course, we have this build up, inducement high, relevant breakout structure here and here. Where's your mitigation area? Where's your imbalance areas? Right in here. Boom. Do you see how simple it is? Do you see how clean it is? And do you see how literally, where's a mistake here? Where could you make a mistake? Like where? It's crazy. Like that's the cheats, like literally. And that's like literally only the lit cycles simplified. So simplicity is key. You see, it can be so freaking easy. Okay. And it's so clean also. And it's so effective. You have no idea. Okay. So backtest the shit out of that because that will change the way you view charts forever. Forever. Okay. So, and it comes even better than that. Even better than that, of course, now we have the lit cycles. You have the extended lit cycles, but guess what? The extended lit cycle will open the gates for something completely beautiful you will absolutely love. And that will be the overall lit simplicity approach. Okay? And you're in for a treat. That's like absolutely the cheat formulas. And that's already in week 2. Think about that. So we will cover the first steps of the beautiful lit simplicity approach. And as you can see in this beautiful animation here, or not animation, but illustration, right? It's a factory approach. It's always the same steps. You're not skipping whatever from here to here, whatever. No, it's a step-by-step formula. And let's dig into it. And there we go. The extended lit cycle, again, will open the gates for something beautiful you absolutely will love. And that, as we covered before, or hinted before, is the beautiful lit simplicity approach. I showed you earlier this illustration, factory approach, and that will make, give you overall, like we will do the first part in week 2, and in week 3, we will show you the absolute beautiful factory at its finest. So, and as you can see, it's built in like a factory. And what's the power behind that? Right. So first we had the pirate map. We were a little bit, oh my God, like very primitive, like pirate age, nada, right? But guess what? Now we wrap it up, like a new age begins, and that's the factory approach, like where the automation begins, like everything is structured and makes sense, like clear step-by-step ways of doing things. And as you can see, we always start with the first approach here. We don't start here, like the package doesn't come out here. No, it starts here. Next stage, boom, is this thing, whatever that is. Then the next thing is this thing. Next thing is this thing. Next thing is this. It doesn't randomly boop, skip this one. No, it always goes along in here. It always follows these step-by-step formulas. It's always the same, and that will make it absolutely bulletproof for you to follow the step-by-step formulas, and you will see how insanely it is, right? So we covered earlier like the normal, like the extended lit cycle, But now, of course, we will put it into the simplicity approach to show you what we mean by that. So guess what? The first thing, as we covered, will always be the buildup. Okay, so again, always your first step to identify liquidity. And again, that's something now you have to write down, put on your wall, put over your bed, put on your bathroom mirror, whatever, because now the true source is getting revealed to you. Okay, so guess what? If you can't even find the buildups, stay away. Easy as that. If you don't see the buildup, just stay away. That is the first step, so you don't make shit up. Easy as that. If you can't see a clean buildup, there's no need for you to jump in the markets randomly. Okay, as you saw earlier, we will have so many step-by-step formulas, and it starts off with the first one, which is the buildup. Okay, so as you can see, this machine in here, if you go to the next slide, is right here. The first step of the machinery, the factory, is the buildup. And if you can't find the buildup, stay away. It's easy as that. There will be no package coming out of there. Okay, you don't skip this part ever. Okay, then, of course, sets your focus on clean setup. Eliminates making shit up completely. Okay, as you can see, the buildup can be easy like this, like whatever, sideways action, equal highs, equal lows. And of course, also can be these channels. And a quick hint already, and that's something you also have to write down. These channel buildups are probably the most efficient and effective ways to identify liquidity. These are so powerful, and you can see them everywhere, and it gives you hawk eyes into the chart. You will see through the matrix, and let's dig into the chart to find it. Okay, so again, just any chart. I think, yeah, think about it. I think we had the 4th of April before. Now we're just taking the literally next day because it doesn't really matter. So 5th of April. Okay, so where are the buildups? And now we just again getting used to a factory approach. So what do I mean by that? Boom. First factory or first stage of the factory buildup. Where are the buildups? Okay, so easy stuff. We have the first sideways action going on. Boom. Okay, getting induced. Then that leads to new channel buildup. Okay, it's going on here. New channel buildup. Okay, building the equal highs later on. New channel buildup. Okay, what happened here? Okay, then a new channel, and then whoop, chooped it. Okay, and then what happened after? Okay, so buildups, buildups, buildups. Focus on the buildups first, and you could already figure out, I'm pretty sure you can, to see what they did after the buildups. And of course, it is the next step coming out of this beautiful factory, or is the inducement. So this right here is the second stage. And as you can see, coming out of the buildup, you just wait until it's getting past the inducement, and push, this thing obviously smacks into it like it does to retailers. It induces them like crazy. So we have, of course, a few variations of inducement, and be aware, again, don't get caught in the inducement always has to be lead to a reversal. The inducement also can lead to a continuation. That would look like this. Okay, so if you have like a channel build up like high, right, like this, and then induces low, it will continue higher. Okay, so it just has to induce low to go higher, right? So again, if it induces high like this, then obviously you can expect a reversal. Okay, but be aware that inducements, of course, can be continuation trades and reversal trades. So don't get caught in this bad habit of always looking for reversal trades. You can definitely 100% take continuation trades, and sometimes they're even nicer. Okay, so first of all, the inducement, of course, it is the last impulse to stop our retailers or to get them in. All right, of course, last impulse to make retailers open positions. So it's either hitting their stops or it tags them in. Breakout traders, momentum traders, they're all getting tagged in, right? Stop orders, they're all getting snacked. And of course, very, very important, write that down. Usually a rapid price movement. We call these things vector candles. Vector candles, all these candles which are huge, huge, huge candles. You have like all these baby candles, baby candles, baby candles. Look at this perfect drawing. And then shoopa, right? It such smacks out like these huge candles, and we call them vector candles. And that's speed. momentum, right? And of course, retailers love that shit because they just getting excited and they think, oh my God, I don't want to miss out. The FOMO triggers, back the candles. Okay. So how does it look like in the charts? Okay. So of course, where are the inducement? We had our build-ups marked in, and based on the build-ups, only then we adding the next step to it. And of course, factory approach, boom. Next step, inducements. Okay, so of course, build up, inducement. Build up, induce the channel. And again, that's where we have to draw it in because you can see, okay, this channel build up, where does it get induced to? To the low side. To the low side, okay, not to the high side. Again, you see this thing, again, a very helpful trick in here. You mark up where it's very clean in terms of the channel, like or the channel and whatever you want to call it, and then you just mirror it so it's actual parallel. Okay, that gives you a very good understanding of if it's induced to the high side or not. The moment if you have to think, oh, did it induce the channel or no, then it's a no. If you have to literally think if the channel is getting induced, then it's not induced. As you can see, for example, this channel, boom, clearly induced. Okay, this channel, boom, clearly induced. This channel, right, boom, clearly induced. And look at it. This candle obviously was solid freaking black until this stage. Think about it. And of course, people see that and think, oh my God, breaker structure, blah, 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 momentum to the downside, oh my God. Of course, that's not what it is. It's the build-up, inducement. Of course, it will break the structure to make everyone excited and trick them in the wrong way. Of course, that's what it is for. That's why structure doesn't work. That's why it only is the inducement and after the build-up. And then we look for, as you learned before, drill and market structure, right? But now obviously see the build-ups and of course see of how they stack it also with these triple tops or double tops becomes triple tops in here, right? Guess what? Building a channel before it, inducing low once again to do what? Smack the triple tops first of all, building a channel in the process with speed, whack the candles, boom, timing, of course, to finish the cycle off. Triple tops being induced, this channel being induced, boom, can smack lower. What's the next target? You already know. Asia low, boom, easy, okay? What's the next thing? Relevant break of structure. Okay, and that's your only time where you look at market structure from now on, okay? And that confirms the directional shift. It just makes it more easy for you to not making shit up, okay? Because build-up inducement is obviously freaking amazing, but of course, lock it in to get a very good feeling for it. I'm being honest with you, of course, if you're getting advanced, you can, again, remove the optional step of the relevant break of structure, but then, of course, you need experience with it. Because of course, sometimes it will not give you relevant market structure break and it's just chooping away. Okay, but then you just miss the move. It's completely fine also in the beginning, but just get used to the concepts and get your solid, like consistent, structure plays going and just include it for the first things. Okay, but at the moment, obviously, you're getting very experienced, very familiar with it, very confident with it. Then that's the only time where you could think maybe you can remove it, okay? But for now, 100% don't remove it. Keep it in. Even if you will miss a few setup, it doesn't matter. It just gives you the confidence and makes the whole thing so much more reliable, okay? So it gives you more confluences and of course confidence. And again, as we said, it's optional as sometimes it happens too late and the move is just off and it will not come back to the mitigation. Okay, but for now, as you can see, as we had our build up in here, obviously choops the build up with the inducement. That's the push that led to it. Boom, that becomes your relevant break of structure. Same thing here, induced to the high side, choop with speed. That's the push that led to it. That becomes relevant break of structure. Same thing for the sideways action, right? Boom, induced to a low side, right? Boom, okay, goes higher, but then obviously induces to the high side. Okay, that's where you have to look to the left, what's going on, right? And of course, if the cycle is done, then of course, this push led to all this inducement in here. Boom, getting broken in here. And of course, same thing in here, right? So again, don't get confused about these ones, right? So this is like the internal inducement to low side. And yes, of course, if it goes like low in here, you can trade it as well to the upside. But then, of course, be aware of your next target, and then it gets invalidated. We will dig into that later, and that's the smart money traps. So just for argument's sake, yes, if you have an inducement low in here, this gets broken. If it comes, it stays inside in here, right, and comes lower, boom, yes, that's your trigger to the buy side until it takes out the next liquidity zone. If it takes out the next liquidity zone, this becomes your inducement. That's the push that led to it. That's your new breaker structure, and obviously you expect this and then lower. Okay, perfect. Same thing for this example, right? Again, that's where you just have to backtest it to get a proper feeling for it, and then it should become very, very obvious for you as well. Okay, so same thing here. If this gets broken here, let's say this push, as you can see, builds the quadruple top, and if it comes lower in these areas, yes, it's good to go trade into the inducement in here, and then of course, breaker structure now after this inducement. Okay, this is the push that led to it. Boom. Good for this one. Okay. But again, I will show you in charts, and you will even see in charts it's even more obvious than in illustrations. Okay, so let's dig into it. So where are the relevant market structure breaks or breaker structures? Okay, and again, as you can see, we have our factory going on, and we're just adding the next step. Boom. Okay, so as you can see, everything stays the same. We're just adding one more step. Build up, inducement. That's your breaker structure. And again, as you can see, as we had it before, yes, if this push comes all the way back in here, that's something you would be interested in, but it did not. So it's fine, best to just mark it up anyways. Okay, so next, build up, inducement. That's the little baby push, led to it, perfect. And guess what? If price action would come low in here, that's your trade. But guess what? As we had the illustration before, if it takes out the next liquidity area, then of course you would have to be very aware that this becomes a smart money trap. Okay, and that's also very easy ways to identify smart money traps later on. We will dig into it also. Okay, so guess what? Then of course we have this inducement low, induced high once more time. Now we have the proper inducement, London open to the absolute minute. What a surprise. What's the push that led to it? Pullback, push. That's the internal breaker structure. Should be very, very clean on the 1 minute, right? Again, always remember, that's always 5-minute charts. On a 1 minute, that's like the picture perfect breaker structure, right? And of course, you know what this is and then what it should do, right? Perfect. Next thing, build up. Of course, it will induce the next structure point. Where's your breaker structure? Right here. Or if you make it like more aggressive, right here. Okay. So gets broken. So you know what this zone will most likely become. Okay. Then, of course, building up the triple top. Perfect. Build up. Inducement. Induce the structure point. Faking the breaker structure for the retailers is our inducement. Perfect. Breaker structure. After the inducement. In here, always it's a little bit tricky because we're not really having any pullback zones, or if you want to take this one, but that's very aggressive. Again, in scenarios like this, obviously in the 1 minute, there will be something in here and you trade it right off these areas. But as you're only looking at the 5-minute chart in here, that would be all the way down there, your breaker structure. And of course, it's very unlikely that it comes all the way back in here. And of course, you know what the London close is. And then you also learned about the supply turn into demand areas, right? But that's at least relevant market structures we have, right? Of course, it always comes off the build up, inducement, and then breaker structures. Next thing then is the mitigations. Okay, so fills, price inefficiencies, all these imbalances. Always be aware and take a look at these imbalance zones after and only after the cycle is completed. Again, there's imbalances there everywhere. But guess what? The build up, inducement, breaker structure, that's not everywhere. And only if you follow these steps, then look at imbalances and then look for your proper zones of mitigation where it makes sense. Okay, bring a structure into it, like clean step-by-step formulas. And of course, comes back to supply and demand areas, right? So always, that's why we dig also a little bit into supply and demand areas. If it's backed up with imbalances, even nicer. And that will provide you with these point of interests, these POIs, right? And again, as you can see, sometimes if it's like tricky in this scenario, like we're having a build-up, inducement, break of structure is very high in here, that gives you like 2 POIs, and that's why we have multiple confluences later on when we dig into the entry helper, if this sum would be valid or if you should wait for the extreme down there. Don't worry about that too much for now. Everything will be covered, of course. All right, and scenarios like this, of course, inducement, here's a break of structure, should come back in here. Again, if the extreme is already mitigated, there's no imbalance left, of course, easy stuff. Okay, same thing in here. If this is already mitigated, of course, after the break of structure should come back in here as illustrated in here. Like obviously these scenarios are the nicest ones, right? Of course, when you have like this clean break of structure, you only have 1 POI in here. Perfect, but of course everything will be rules based if we dig into entries or when we dig into entries. Okay, so does it look on charts? Of course, even cleaner. And take a look. So we had our build-ups, inducements, break of structures, and now we look for mitigations. Okay, so boom, we add one more factory part into the whole system, and we can already see, okay, as we had before, build up, inducement, break of structure makes this zone valid until when? Next liquidity grab, and then it gets invalidated. Okay, so if it doesn't grab the next liquidity yet, so let's say it stays inside here as it did, okay, and then of course comes back in here building the equal highs, perfect, you can trade it until it takes it out. All right, but as you can see, it took it out in here, so that's why this zone gets invalidated the moment it takes out this liquidity area. Okay, perfect. Same thing in this scenario. You have your channel build up, induce the channel to low side. You already can see what the inducement of this channel did, right? Tapped into the imbalances, tapped into the demand areas in here. Perfect. That's where the inducement taps into the mitigation of the build up. That's of course a 100% buy, right? And if you want to take this one after the inducement of the thing, you don't like the extreme, you have to wait for this internal break of structures right in here. On a 1 minute, it should be definitely way more cleaner, right? But same thing then. This is valid until it comes here. If the moment it grabs the next liquidity zone, invalid. Okay, same thing as here. Okay, that just keeps you away from taking these zones when it's too late. Okay, as you can see, this even turns into the smart money trap, gives a false reaction. But guess what? We have to identify the next build-up area, which is the channel in here. Speed, vector candle, huge momentum candle to the downside, induces now obviously the structure point, gives all the retailers the confirmation that it's reversal, whatever, like they seeing this break of structure, you see the inducement out of this build-up, you wait for what? This break of structure, you see the next imbalance area, you know you trade away from this inducement, you still have these huge build-up areas in front, like this double top in here, you have your imbalance area, you have your break of structure, you had your build-up, you had your inducement, another build-up in here, boom, speed, timing, vector candle into imbalance area. That's your potential trade in here. And look at the timing. What a surprise. Magic manipulation minutes to the absolute speckle. All right, to the absolute minute. Same thing here. Channel upwards, building the quadruple top in here. Induced structure to your left. You wait for break of structure, comes back, boom. Where's your imbalance from here all the way? Obviously, you had it if this candle was not there yet. You had imbalances from here to here. Gets filled, boom. That's your entry after an inducement, after a build-up, after this huge build-up. So you're trading into it, boom. And you see what a juicy trade that would have been. Oh my God. And I'm pretty sure like majority of our students smack this trade. Easy. Okay. And of course, this cycle now is completed to the high side. Build up, huge build up with the triple top. Boom. Inducement with speed, vector candles, and then POI on the higher time frames, right? That's when you obviously look at multiple time frames to find out what's going on. You see huge build-ups in here. Look at this. Double tops left and right all the way. And then, of course, you look for the extreme mitigation. You see this wick There was imbalances like crazy. And of course, if the cycle is done, you look only then you look for mitigation. Then you look for the higher time frames and see, oh yes, oh wow, there is my huge imbalance areas, which gives you my PY. Timing perfect. Cycle done. Wow, okay, and let me look for this one now. Okay, and then you break it down to the 1 minute, and then always look for confirmations in here. Right, but just looking for the 5-minute chart, we have to break a structure all the way down here. That's your supply, demand area, whatever that led to it. And of course, sometimes demand turns into supply or the other way around. And of course, you wait for a bigger structure in here, boom, gets into it, and then obviously is gone. Okay, so overall, as you can see, the whole thing is just clean as hell. It's actually crazy of how clean it can be. And of course, we have a few more examples. And there we are back with the 6th of April. So we had the 4th of April, the 5th of April. Now we're taking the 6th of April just to show you consecutive days in a row. So you see it's not like random cherry-picked examples. No, it's like back to back to back to back every day, right? Of course, that was the same. So as we learned and as we should know by now, again, this is the day where it starts. So this is one full day from technically Asia Open all the way to the day ends, right? So again, if you're choosing the 5-minute chart, this whole picture right here on the M5, right? This is one full day in the M5 chart. So that's how we analyze the intraday perspective every single day in one picture, just right there. So we have our Asia range, right? We have our timing, as you already can see, Frankfurt Open. Did you know this picture already? When Frankfurt Open induces to the absolute minute, Asia low, and then of course takes out Asia high. Do you know this picture already? You should definitely know it by now, right? And of course, now we're going into more details and to break it even more down as we did earlier with the simplicity approach. So the first question we have to ask ourselves to analyze the intraday basis, again, now we're just doing it in hindsight to get you a good feeling for it, is where are the build-ups? Okay, so if you just take a look at it, I will give you a few speckles so you can test it out yourself. You should already see a few though, and that's very important to get used to, then to train your eye about seeing the build-ups right away, because those will be the most important aspect to identify all the other steps. So start always with the build-ups, channel build-ups, trend build-ups, whatever else, like the sideways build-ups, equal highs, equal lows, all that stuff. That's all you need. Like that's the best ones there is, right? So let's bring some light into the tunnel. Where are the build-ups? Boom, right here. And as we know, first factory approach, first simplicity approach, boom, right there. We always start with the same stuff. So build-ups. Okay, so the day opens right here. So we have this nice crazy ass channel build-up. Why is this blue? Because it's considered a bigger channel, right? And of course, as you can see, this bigger channel getting induced when? Boom, right here. So if you extend this right here, it's getting induced to the high side, right? Of course, that's why they can go lower. And that is the inducement for the day. That's our perfect Mona Lisa inducement of Frankfurt Open to the minute, 8 AM UTC +2, right? Again, you should have changed your MetaTrader if you cannot really change that, but your trading view settings to UTC +2 time, right on the bottom right corner. You should see like your time. Just change that to Berlin, whatever, or whatever UTC +2 city you want to choose. But always I'm in Germany, so I choose Berlin, my time anyways, and that's why you based our timing on it as well, right? Perfect. Okay, so anyways, we can see that they induce the channel high side. Okay, perfect. We see the next channel like on this sideways channel building up here, equal highs and equal lows. Okay, perfect. Obviously, we see induced on both directions. Okay, but we see the bigger picture first. Induced high this channel, so we have a good understanding. It should go lower, and then obviously huge. What is these candles name? Vector candles, exactly. Very important to understand. Then the next channel build up. So, and again, a very good trick at the beginning here. Choose if it's like not clean from the lower side. Choose the clean one to the high side in here, where you're just connecting obviously the wicks in here, and then just mirror this trend line to the downside to see where the channel actually would make sense, right? And how you do it, you just put this line on your trading view, just press Control and take it and drag it, boom, and then it just mirrors perfectly downwards. Okay, that helps you to make these channels a lot more accurate. And you will also notice that these channels are most of the time very parallel. So what a funny coincidence that is, right? So then as you already can see, okay, we have this channel in here, mirrored this to the downside, boom, got induced to low side. So where do we head for? Higher away from this inducement, right? Okay, perfect. Always that's our Mona Lisa inducement in here. And then of course, we aim for a jaha in here. And what do they do in the process? Giving us the next channel, and look what they end the channel with. Again, you see now here a wick on hindsight, but guess what? On the edge, this was a solid candle like this. So think about that. What is it called? Of course, vector candle, right? Perfect. Then we have the next build-ups in here. Tricky one to see a little bit, right? Perfect still. And of course, next build-up in here. Again, as you can see, we don't pull something out of ours here. No, we don't do that, right? Okay, so only if it's clean, we're having a clean build-up. Sideways action, right? And of course, we see the equal lows here, even triple bottoms in here, right? And of course, this is a news event, whatever it was. Maybe don't remember what day it was, but could be no NFP. Shouldn't be NFP because it's a little bit way too late, because we can see this is London close or whatever. What news event that might have been, right? Okay, perfect. But that's a clear news event, and of course, it induces this bigger picture channel. They build up like crazy, and of course, induces this channel as well. Perfect stuff. Okay, so what is the next thing that should follow? If you look at our factory, and the only thing that should follow after that is, of course, we have to get used to the inducements. Perfect. So where are the inducements? Again, if you identify your buildups, you will have a very easy time to get used to the inducements and how they should look like. Okay, a few of them are a little bit more hidden, but let's bring some light into it. Boom. Okay, so next approach, as you can see, is our inducement factory. Perfect. So guess what? The inducements induce, of course, the buildups. So, and then again, a very helpful thing to also do sometimes, use these little structure points in here and here, whatever, in here, to get also a good feeling about the inducement should induce structure. That's why we know structure traders, we're obviously cycle traders, and only after that we take a look at structure specific points. Obviously, we digged into it already with a few examples to get a way better feeling for the market and a way more confirmed picture, right? But as you can see, the structure points getting induced all the time, right? So we have this bigger channel, right? Extended all the way until here, induced it, just baby structure induced in here, but obviously could induce this channel clearer, right? Then the next one, equal highs, equal lows, next structure point, boom, getting induced. then of course induces this equal highs to the high side, right? But we have to understand now the combination of those two, right? This was the inducement of the bigger picture channel, right? Of course, now we have, of course, having an inducement low, but now we're having this build up in here, inducing it to the high side one more time and staying inside, of course, in this bigger picture inducement. And of course, our direction would be short until the next inducement happens, Asia low to the absolute minute Frankfurt open, right? 5 minutes off. So not to the minute. Oh my God, 5 minutes off. What a surprise. Then we have the next channel, induced to a low side, structure point getting induced, of course, to go higher, right? Then, of course, next channel build up, vector candle inducing it to the high side. We have to look to the left also what's going on in there. If a mitigation would have made sense there or an inducement. So let's say just having equal highs in here, right? Of course, that should be induced. If we have something like whatever, like some sort of liquidity buildup in here, that's an inducement in here, and that left some imbalances. Of course, that could make perfect sense for mitigation in here. Then we can even run limit orders later on as well. We will dig into it. But of course, in these extreme entries, like or whatever, these external inducements, of course, you have to check the left also, but which as we're just focusing on intraday trading right now, that's for now not that important, okay? But of course, be aware that if you have like a 4-hour zone, a POY in here, and that taps into here, of course, you should understand the cycle being completed as the build-up, inducement, then into mitigation, right? Then you still can wait for confirmations, right? Let's say internal breakout structures on a 1 minute, and then of course enter it somewhere in here. That's all possibilities, but we will obviously dig into that when we dig into how to trading that stuff, okay? But for now, train your eye about seeing these buildups and the inducements. Next buildup, obviously 1, 2, 3 touches. You just mirror it down again to see the nice channel. Of course, getting induced into what? You should already know what that is. Perfect stuff. Away from what? Perfect, right? So again, you're trading away from the inducement, having a build up inducement into what, right? You should know already what's going on here. And then of course, bigger picture breakout structures after the inducement and this one. Okay, so this also would be a valid zone to take. And of course, news happen in here. So yeah, if you took this trade, for example, or this one, that will end up in break even. Of course, that's why news can be a little bit more dangerous, but guess what? Is it still perfectly aligning with our cycles? Yes, if we have the bigger buildup, right? Of course, that induces the bigger buildup in here to the downside, of course, like this huge channel. Of course, just mirror it down. And what a surprise, the news induced this bigger channel to do what? Of course, go lower and induce the next structure point, and then goes for the extreme mitigation in here. All right, happens very, very late. So you're not too interested in that anyways, okay? So as we now know where the inducements are, again, what's the only thing you should focus on actually, all right? So what's the only thing you should do? Very good. Relevant break of structure. So we add a new factory in here soon, right? Again, that's the only thing we do. We wait for the inducements and then wait for the relevant break of structure. And let's do that. So where are the relevant break of structures? Again, that can be a little bit tricky to identify, but let's dig into it. Boom. Okay. So right here. So of course, we have this overall little buildup inside this bigger inducement, right? So this is the final inducement high. And of course, we understand this is the inducement of this channel. We want to go lower. So this is the final inducement. That is the candle that led to the new inducement high. Right, so even on the 5 minute, of course, on the 1 minute would be way more clearer, but on the 5 minute, even again, this push has to be broken. It did, perfect, and then leads to the inducement low side. Again, this one, this is the whole push that led to it. So again, depending on how you see it, maybe on the 1 minute, you could say yes, on the 1 minute, this is your push, your pullback that led to the inducement, perfect, and you can also use this on the 1 minute if you want to do so, but just for staying at 5 minute, again, this whole push right here. So you could take it from here on. Okay, that's also good to go, but that's just a very high approach, right? And of course, next one, this is the inducement, was led to the inducement right here. Right, so you can take this one as well. right? So that's the next inducement break of structure point in here. Obviously validates this zone. If that would have tapped in here, perfect entry, but I just didn't mock it up in here because it clearly missed, right? And of course we have this whole channel builder with the inducement. So again, technically this is the push that led to the inducement high, and the moment it breaks here, that's your break of structures, relevant break of structures, and that reactivates or activates this zone for later on, right? Perfect stuff. Or again, depending on how you see it, this is definitely the better one right here, or you can wait for all the way the extreme one, but of course that's just the pessimistic example like we did in here, but just to show you like very clean examples again. But the better ones, of course, this one and this one right here as well, okay? To reactivate or activate this zone, missed it here, activate this zone, right? Perfect. Okay, but of course you can choose the extreme break of structures as well, just to get a feeling for it, and that would be here and here. Then we have the next inducement right here. That's the push that led to the inducement getting broken right here. So of course this gives us the relevant break of structure in here, or again, as we did it earlier, you can choose this one as well. So just to give you a few variations, but of course you have to stick to something at some point. So you either can wait for the extremes all the time, like we did here and here, or you can choose the more optimistic approach and choose this one and this one, right? But that's obviously something we'll have to do further on all the time, because that gives you the entries on the edge. Okay, perfect. So of course, after we had this inducement high, break of structure, boom, relevant break of structure, and that activates, of course, this zone. Always in hindsight now, easy stuff. But on the edge, obviously, this solid candle breaks. This candle in here wasn't here, so there was imbalance from here to here. Fills immediately, boom. Stop loss goes above here later on, and then shoot it down. Perfect. Okay. Oh, anyways, the next build-up, of course, is in here. Induces low, and then of course this is not a, this technically would have been a break of structure, right here. And then as you can see, before the news events, it even taps into this activated zone with this wick and then tubes into your news. But as it's news, you should stay away from it. That's why you should have your news open to see when it's going to happen. And then this one is definitely a very obvious inducement, and that would be break of structure of that one right here, right? So this is the push that led to all this inducement, or you can use this one also, getting broken in here. Perfect. But before that even, we have this inducement now low side, perfect, based on this equal lows, getting induced the structure in here, right? So if you look closely, and that's where the details come into place, if you're just having this push to this push, there's no possible break of structure. But guess what? It gives a push high, and this push made a new low. So now, again, we can take this point as this made a new low. Again, if this push would have stayed short of it like this, then we can't take this, right? But as this push in here made a new low, that is the push that led to the new low. So this is the break of structure point. And then this zone gets activated for imbalances right here. Okay, makes sense? Lovely. So let's see next factory approach, which is, of course, the mitigations. So where are the mitigations? It should be very, very clean to you right now. Okay, so we're adding the next factory approach. Boom. And we can see now these clean mitigations, right? So this inducement, of course, we're not interested in this in London. In Asia, of course, right? And inducement low. Technically, yes, break of structure high, right? But obviously inducement. So technically, if we have this one, this zone in here, after it induces to the high side, becomes a small money trap later on, right? But would be valid. For example, if you see this push break of structure, getting break of structure here, right? Perfect. If it gives a reaction in here, then you can take it until it takes out these points. Okay, that's what we covered with the momentum mitigation, right? So always be aware when these zones get invalidated. Same thing in here. right? So let's say you missed that on the M5 and didn't see this as a break of structure. And here again, in 1 minute should be very clean, right? And then of course, you maybe saw this one as a break of structure. Of course, this zone gets invalidated as an SMT after this huge inducement down there. But same scenario, if it breaks this zone, didn't take out Asia low, but whatever even creates double bottoms in here, then comes back. Of course, now you can trade this into the inducement, and that's one of my favorite trades. But as this example, we already took out Asia low, this gets invalidated in here as we had an inducement now, and then it comes back, maybe fakes a smart money trap. As you see in here, it gives the fake reaction. Of course, that's what smart money traps do. But guess what is the reaction is for? To induce this channel to the low side. Inducement, boom, gives the break of structure, right? So if you marked it up like this in here, again, this push led to the inducement, gets broken, and then again, you can activate this zone for buy trades. But as you can see here, it just got missed in here. That's why I didn't mark it up, right? But of course, this is definitely valid to take. Next build up, inducement high. Again, we talked about it, where technically you want to have your break of structures. This one is definitely the more effective one, or you take the extreme one in here. But let's say you took this one. After it gets broken, this immediately activates this zone because we have clear imbalances, right? Perfect. Then we have this break of structure low, but obviously an inducement low also, so we can trade it into it. So that's where the hedging or the intraday mastery comes in place, as we understand, okay, this is technically the bigger picture break of structure, but also an inducement of this channel, right? Of course, perfect to low side, boom, gives imbalances after break of structure, so we can take it to the buy side as well, but obviously we dig into that at some point, as you already can see maybe what this is also, right? So we will have some more confluences in here, what that is, but just to give you a quick hint, we have an Asia range, we have an Asia range midline, right? So that's definitely always good for these very juicy pullback trades into the next cycle build up. Again, we had this zone activated based on this break of structure, or even this one, depending on what you want to use one. Of course, you should stick to this one. All right, imbalance zones, build up, inducement. When does it happen? Only to the absolute minute in New York trap time. What a surprise, right? And of course, build up's getting induced. We wait for this one now. Break of structure activates this zone. That's your next possible entry. Boom. He makes order flow entries, low lows, activates this zone. Perfect. Taps into that as well. Then of course we have the news plays in here, right? Before the news, we had this mini cycle build up, inducement of the structure point. Then this break of structure in here, right? And then guess what? Never had inducement high until it actually tapped into here. See this wick, look closely. Before the news, 1 minute before the news or 5 minutes before the news, fills this zone after we had this, perfect. Tubes it, news event, and then of course that acts as your inducement for the bigger channel. And boom, smashing downwards, going for the next inducement zone, equal lows in here. Again, was an inducement to low sudden here, bigger picture, now it becomes equal lows. Getting induced, what's the extreme mitigation? Right here, huge speed, vector candles into it. Again, taps in 2 times even, first, second. Right now you have your internal break of structures in here. Perfect, activates this zone as we have this little imbalances after break of structure, and boom, taps into it, good to go. And that's, you can see, the cycles all over repeat itself, cycle into cycle into cycle. So the next time you will speak to your neighbor, you will look like this, as like all around a cycle. That is how they keep the cycle and this wheel spinning all over and over again, on how to induce these retailers over and over again. It's all about these cycles, keep them spinning, spinning, spinning. But guess what? We have unlimited more examples because it's every single day. It is the same stuff. It's just sometimes more hard to spot. Sometimes it's very easy to spot. So let's take a look at another one. And we will keep going where we have ended. So the last day was the 6th of April. So we had the 4th, 5th, 6th. Now we will not cherry pick a different day to make it all Mona Lisa day and blah, blah, blah. No, see, we just not even cherry picking anything. We just using these days consecutive as they come. So 4th, 5th, 6th. Now we're on to the 7th. So where are the build-ups in this scenario in hindsight? You should see that right away. Boom, easy to see. Okay, so we have our bigger intraday build-up. Again, this is the build-up that gets induced for the whole day with what? Vector candles to the absolute minute. Again, what a surprise. Only like 5 consecutive days in a row. Of course, the cycle variations are looking a little bit different. But guess what? We had an inducement low the day earlier. And of course, to the minute in Frankfurt Open. Now we're having inducement high to the absolute minute in London Open. To do what? Taking out Asia low. Does it click already? Of course, not every day will look exactly like that, but that's where we dig into week 3, into cycle variations also, because there's a few cycle variations you have to keep in mind, and then you will be ready for equipped to everything. Okay, so be aware now, but of course, in this scenario, in this example, we have just a Mona Lisa London cycle in here. So we see our bigger channel buildup. We see our buildups inside here with the equal highs, equal lows, right? We see our vector candles. We see our next channel buildup. Then what else? We see our equal highs, equal lows. We see the buildup in here, the channel in here, and this channel in here. Okay, so as you already can see, what type of liquidity do we need? We need channels, equal highs, equal lows, and that's about it. You see, you don't need to understand retailers to an extent where you think like, oh my God, I don't understand what retailers do. You don't need to. It's good that you don't understand. You just need to understand what a channel and equal lows is and equal highs. And then you will see that's all we need. We have channels, equal highs, equal lows, channels, equal highs, equal lows, channels, channels. That's the most efficient ways to do it, okay? Channel buildups are the most efficient way of identifying liquidity, okay? So as we're having our buildups, what's the next approach? The next factory approach. Where are the inducements? Based on the buildups, you always get the inducements, okay? So let's add it, boom, next factory in here, right? Or next machine. So guess what? This buildup hasn't been induced. Yes or no? If you say yes, that's partially correct. It induced it to the high side, okay, but what is this inducement? Is it an inducement or is it a buildup? As you can see, this is more like a buildup, building up channel, right? And of course, yes, could be a Frankfurt plane here, but guess what? See the buildup to not get confused. Buildup, where does the buildup getting induced? To a low side. Yes, to a low side, and then guess what? Tubes into London Open to the absolute minute. Huge vector candles. That's the stuff you look for. Like not like, oh, is that an inducement? No, it's a build-up. Induced to low side now into the tube. And again, if you're more getting experienced, that's the trade you literally take and the buys in here, right? Boom. Tubes into it, and then you close it somewhere in here. Again, depending on what's going on to the left. If you have some sort of liquidity targets, or if you have some sort of whatever, a 1 hour, whatever, 15 minutes mitigation area of imbalances, both works depending on what's going on to left, right? But then, of course, these are the juicy trades you're looking for. Then, as you can see here, equal highs, equal lows. Has the equal highs being induced? No, they don't have been induced. Has the equal lows being induced in here? Yes. What's also so juicy about that? Have you taken out Asia low with this triple bottom in here? No. So what is so juicy about that? Build up, inducement of this channel build up. Yes, and now the thing's coming to place where a few people might get confused because what about this equal highs? The triple top, shouldn't that get taken out as well? Yes, but we had a build up before that, so it takes out this build up first, gets for next liquidity cycle, takes out Asia low, Next build-up induces this one, okay, to the high side now, so we can expect some pullback here. The day is over anyways, then we can expect whatever next day and then take out this equalize. It's all about a build-up, bigger picture plays. So look for the next cycle that is confirming right now. Yes, we had equal highs in here, triple tops, whatever. Perfect. But guess what? Now they're showing us the channel build-up and this channel build-up being induced. Build-up, inducement, into what? And then you wait for what? It's all stuff you should know. Okay, perfect. Right, so guess what? Next machine approach. Where are the relevant breaker structures to make the picture even clearer? Boom. Next machine's getting in place. So guess what? We have this build-up inducement, so we're not looking for any relevant breaker structures, right? But now we have this inducement low. Okay, leads to the huge tube. That induces, first of all, this huge channel build-up to the high side. And then the only break of structure on the 5-minute is here. Again, this is the push that led to the high. Of course, maybe on the 1 minute, you will find something in here. You will have multiple confluences later to take these trades in these areas as well. But that's like 1 minute stuff. We will not dig into this for now. I just want you to understand the bigger picture plays all over and over and over again. For now, this is our relevant break of structure in here. And again, we don't have anything inside these buildups until what? This push led to an inducement. This is the push that led to the inducement. Gets broken here. So that reactivates this zone. Right? The only thing is you have to be really careful about that because again, now this push, of course, is the major inducement or major inducement for the day. Of course, it's just a medium inducement overall, or even could be a minor inducement depending if this is the only thing that induces. But again, if it's something induced to the left also, it can turn into a medium one. But just looking at this day, in hindsight, obviously, this is the major inducement for the low side. This is the major inducement for the high side. But of course, on the bigger pictures, there's both are minor inducements depending on what's going on to the left and the previous days, right? But for this bigger picture, yes, this is your significant inducement and also this one, right? Perfect, right? So the moment, obviously, this makes the inducement to the high side, you would be very, very, very interested into this sell. Of course, if it takes out this low after that, that's not so much more juicy, but just for argument's sake, if it pulls back in here and then gives you this zone, oh my God, you have to jump straight head first into this trade and taking out the inducement, right? Perfect, right? And then after that, we just have this channel build up getting induced to the high side now. So we can look for a little bit more shorts and then of course into some buys later on, right? But of course, always depending on what's going on the next day. So after the break of structures, where are the mitigations? And now, as you can see, we don't cherry pick any days. So you can see, okay, this mitigation zone got missed. Oh, okay, it's fine, got missed. What about big deal about it? This mitigation zone, yes, got tapped in, but after the inducement, so not ideal, definitely tradable, but not ideal. Then we had this inducement after, of course, this is the inducement of the day, leaves the imbalances, gives some sort of internal break of structures depending on how you see it on the 1 minute, blah, blah, blah. Comes back, taps it into it. But of course, as we had this inducement on high first, right? So we want for the build up, wait for the build up, gets into the build up. Where does the build up getting induced? To the high side. So now we can look for something like this, right? But of course, this is all stuff which is way too late for the day anyways. And the only trade you should be interested in is before London close, this line in here, which you also will get the template to you not have to draw anything of this. You will get this box, of course, this box, this one, like this one, this one. You will all get these timing indicators, of course, and much more later on. So you don't need to worry about the timing aspects. It will all be visible for you. Very simple. But as you can just look at this day, then keep one thing in mind. Even if the build-ups and inducements are clearly visible, sometimes you just don't get the clean mitigation on the M5. That's why we use multiple time frame approaches, and we will enter it always on the 1 minute, right? So just again, if you take a look at this day, it's a very clean day in terms of the build-up inducement mitigation things. But the only thing which is not so clean is the mitigation cycle, right? So again, we didn't really have nice entry in here, maybe in 1 minute, of course. Didn't have the nicest entry here on the 1 minute, of course. Then, of course, this is just a build-up sideways action. And then this one wasn't that. And also, we only could look for something here in the 1 minute, of course. But then the rest of the day is just a little bit messy and doesn't give you the cleanest place on the M5, and the day is over anyways. Okay, so keep that in mind, that your first task is just to see the bigger picture. And even if it's not that clean, maybe for the mitigation side on the M5, it's completely fine. It's very important for you to see the bigger picture cycles, and then you can dig down into the lower time frames and can use higher time frames and combine both of them, of all three of them, the M5, the M1, and higher time frames. And that's where the true power comes from, right? So the most important takeaway for now, see the overall cycles, identify the buildups properly. Again, that's the first and only challenge actually, to identify the buildups, because with the buildups, it will follow the inducements. With the inducements, it will follow the break of structures. With the break of structures, it activates your mitigation zones. And you will have a very clean orientation for the overall daily plays. Okay, it will be very, very easy for you to identify what's going on. So that alone will keep you away from forcing any setup once and for all, and from stopping you, and will stop you from making shit up, because you always will follow the same approach, always starting with the build up. You look for inducement, after inducement, look for break of structure, and only then you look for mitigation. If you just follow these steps, it would be very hard for you to make shit up. The only challenge is to identify the build up properly. So that's why you have to practice. And you will see also a few days will not be that clean. That's where the only challenge comes from, identifying the build up. So let's see another day where we have, again, we don't cherry pick any new day. We keep our streak going. We had the 4th, 5th, 6th, 7th. Now we taking the 8th. Okay. And as you already can see, oh, the cycle looks a little bit different now. Obviously, we'll dig into what the cycle variation is, but maybe be like, oh, what the hell is going on here now? So could we actually even trade that? The answer is 100%. We just easily can use the simplicity approach. So let's bring some light into the tunnel. Where are the buildups? Boom. Okay, walk it in you with your mind now. See the buildups. Again, don't make like crazy buildups in here and stuff like that, right? You could definitely, but that's like more for the later purpose, right? So see now the clean buildups. And yes, 100%, you could make this one as well. And guess what it did? It induced it to the high side. What a surprise to go lower. What a surprise, right? So just for argument's sake, I just left this one out for now, because this obviously isn't the nicest one, right? So, but all the rest should be very clean to you, right? Very clean. We had this huge channel downwards, equal highs with equal lows, little a channel in here, right? This channel getting tubed to a low side, building up the new channel, equal highs, equal lows, new channel, new channel. Again, the only channel which is important to see but not clean to mark up is this one in here, right? So you have to see this channel with your eyes, getting induced to the high side to go, of course, lower. That's where the understanding of these channel inducements come into place. And you can have a channel like this, getting induced high to go lower, or you can have a channel like this, getting induced low to go higher, right? Guess what we have? Channel getting induced high to go what? Lower. Channel get induced high to go what? Lower. You see? Channel getting induced in what direction? High to go lower. Channel getting induced what? Low to go higher. You see? Channel getting induced in which direction? Low to do what? Higher. Channel getting induced high to go what? Lower. But the day is over, right? So technically, yeah, that's the day over. and we will not be interested in that late. Again, the last timing window you'll be interested is like London close, these areas, and then this, we just leave that because this is where liquidity leaves the market. That's where, yeah, we're not too interested. Enigma needs a break. Of course, no break, but just narrows it down a little bit. And the cleaner pictures, you can see the moves all happen inside these Frankfurt and until London close window. Okay, that's where the key windows we're focusing on. So based on the build-ups, I already spoiled a little bit. Where are the inducements? And guess what? We're having our factory getting extended. Boom! From the build-up into the inducement. All right, we already covered it. Channel being induced. There's the next structure point. Getting induced here. Perfect. Channel getting induced high. There's the new structure point. Getting induced. Perfect. This channel, of course, we didn't draw it, but of course, getting induced. There's the next structure point here. Perfect. Getting induced also. Next equal highs, equal lows. Channel. There's the new structure point in here. Getting induced to the high side. Next channel. Induces with speed, and this black line just represents that there was something to the left, probably like something like this, whatever, and this just getting smoked, right? And then this is then the medium inducement, right? So this line just represents there was something to the left. Medium inducement, we want to trade away from that now, right? Gives us the next channel, gives us the equal highs, equal lows, induced into it. That's the structure point that get induced to low side. What is this? What is a price? Induce the channel, right? Also this channel. Here's the next channel build up to the high side, little vector candle to the high side, induces the structure, obviously. Next build up induces the structure. Lovely. See, everything, literally everything here, completely rule based. What's the next point? Relevant break of structure. We extend our factory once again. Boom. Look how far we are already. That's just 3 points. We will have so much more. All right. So, and we already can see, again, now the little bonus question. When does this shit happen? All right. Before we even dig into the relevant break of structures, just a bonus question on the sides. Frankfurt open to the minute, 5 minute short. Should be 8 a.m. It's 7:55. Oh, right. Not to the minute. Doesn't work. London open just gives a fake pullback, right? Perfectly fine. But we can understand at least that this is a build-up that should get induced at some point, right? The experienced traders of us, of course, we take the buys in here, right? Then we look for the next structure point. That's induced also the channel. Inducement high to go what? Lower. Perfect. Build up, equal highs, little channel in here. Gets induced to the high side. Stays inside here, of course. When does it happen? Oh, only magic manipulation minutes 2 to the minute, right? Then next build up, boom. When does it get induced? Only New York trap time to the minute, right? And then next build up in here. Obviously, that's very late, so no timings in here again. Okay, perfectly fine. So, where are the relevant break of structures? We already had it, right? So, inducement high of this channel. That's the push that led to it. Breaks here. Perfect. Okay. Next build up. Where's the structure point? Even gives equal highs, faking it, getting induced. That's the push that led to the inducement. Here's a break of structure. That's the push that led to the inducement of speed. That's your break of structure. Again, right? Just for the inducement break of structure, right? Not for you taking a random buy in here. I think that's why you have to look to the left for liquidity as well at some point. Plus, you have to understand, okay, bigger picture channel getting induced to the high side. We have a liquidity target down there. Induce the channel to the high side. I wait for a next build up. The moment the next build up gets induced, we wait for what? Break of structure activates this zone. Unfortunately for us, got missed here, and then it would choop down. It is what it is, but at least you can clearly understand what's going on. Next channel, getting induced with speed. Now finally here's the liquidity target. Vector candles to downside. Now again, this is what we had in here for the inducement high to go lower. Now acts as a proper break of structure point because we had our medium inducement. That's the push that led to it. Gets break of structure, activates the zone. Unfortunately, missed the 5-minute one. Definitely sure there was something on a 1 minute in here, which we could have get into here as well. We will have a lot more confluences, obviously, later on. Then what we had, build up, inducement. That's the push that led to the inducement. Here's your break of structure, activates the zone, right? Then build up, inducement of this point using channel. That's your push, and of course you could take something like this, but that's the day was over, so that's not your ideal trade to take. You should stay out of that because the day is just over and you don't want to mess with low liquidity and stuff like that. Okay, but just for understanding purposes, that's definitely possible. So to finish our first simplicity as example at this stage is where are the mitigations? Boom. And as you already can see here in this beautiful factory, it's not over yet. It's not over yet. It's definitely not over yet. Okay, we will extend this factory much more, right? So, but for now, where are the mitigations? What is the price? After the break of structure, activates our proper mitigation zone, gets tapped in. Lovely trade, right? After this inducement, break of structure, activates the zone, missed. Okay, we'll not cry about it. There would be absolutely a Mona Lisa trade in here if it takes you downside, but just missed by a little bit on the 5 minute. Okay. The next one, this reconstruction here was valid until it obviously builds up liquidity, gives the next inducement, gets smart money trap after that. Just for argument's sake, again, it takes out this one, comes back immediately. You can take it to the high side, at least for pullback trades, but that's something you should be very careful anyways. If this one didn't grab any liquidity and you have liquidity targets lower, but we obviously will dig into that if you look at multiple time frame approaches as well, right? For now, just see this build up as well into inducement, break of structure, activates the zone, missed unfortunately 5 minute. Okay, nothing to cry about. Definitely some other opportunities when we dig into a lower time frame and actually look at entries as well. But for the bigger picture understanding, that's the Mona Lisa zone, that's the Mona Lisa zone. Both got missed on the 5 minute, nothing to cry about. Same thing as this one. Extreme mitigation here on the 5 minute just got missed. Completely fine. That's why we look at the 1 minute and we'll definitely find some entries in here as well after break of structure. Then we have this minor plays in here, equal lows, inducement. First of all, into this mitigation. Again, this is juicy because we have this channel. That's the inducement of this bigger channel and this smaller equal low. So that's a double build-up, double trouble in here, perfectly stuff right into the mitigation. Left imbalances also here and here. That's your point of interest, taps into it. That's your first trade. If you want to wait for more confirmations, that's your break of structure, imbalances, that's your POI, boom. Take it from here on, order flow from here. Until what? Vector candle. Again, why is it a vector candle? Because it's relatively very large in comparison to all the other candles in here. Into the inducement, and guess what? Into another mitigation point. Next build up, inducement, and that technically would be your point, but that's too late, so stay away from that. Okay, easy stuff and so clean. You should be sitting here like, oh, you should realize how clean and structured trading can actually be. Just think about it. Where you came from and how you already can see the markets. Isn't that freaking crazy? You already can see literally every push they do. And you at least understand what's going on. Of course, there's a few zones that get missed. Oh, okay. But guess what? The whole day, you can understand what they did. Isn't that freaking crazy? Okay, and guess what? It's week 2. It is week 2. Oh my God. Insane. Right? So there's so much more to come. So we will do one more example. Let's make a new video about that because we're already like 45 minutes in. So get some break, refresh what we did so far, and we will cover a few more examples to literally get it into your brain. But for now, just whatever, let it sink in, mark up a few charts, and then go to the next examples for even more confirmations. Okay? Have fun back testing the stuff. Absolutely beautiful. Get used to it because you will see that will change everything. Okay, so do your tasks, do some back testing, go to charts, mark it up, find your build-ups, inducement mitigations, mark it up, mark it up, mark it up, get used to it, and then we will have some more examples to even solidify everything else. And of course, we have some more recent examples. We don't need to, whatever, cherry pick anything, but just to give you like a little bit more recent one. We did like, what was it, 5 days in a row in April, whatever. Now it's more a little bit of a recent example, but anyways, you can take any day of any month, of any year, whatever you want. Obviously, you will see that the moment you do the task, it's always the same stuff, okay? Let's just choose this one from the 22nd of June 2022, right? Of course, always the same stuff as we do. We know the day begins here and obviously ended somewhere in here. London close, right? You should already know that. Time windows, time windows, time windows, and in between, right? Perfect. Okay, so what do we do? Of course, and the first step is always, you should know it as your inner step of your pocket, or whatever you say that in English, right? Of course, we show the build-ups and notice already, what a coincidence that it only happened to the absolute minute in London Open. What a surprise, right? So where are the build-ups? Train your eye properly for it, okay? And boom, okay? So we have this lovely, lovely channel build-up, sideways action, equal highs, equal lows, another big time channel inside this channel. Okay, so you should know what this is. And of course, this one is not the nicest build-up, so we don't need to mark it up for argument's sake, but you should see that still in your eyes. All right, and then we have this lovely, lovely build-up, sideways action, another channel build-up, and another channel build-up here. So you already can see these channel build-ups are most likely the most important ones you should focus on, right? Because they will also have a huge role for your ongoing journey right away. Okay, so next, of course, after the build-ups, we have to train our eye for seeing the inducements. So where are the inducements? Boom, we're adding a new factory to it or a new machine to it, right? And we already can see channel build-up getting induced to the high side. That's the structure point that gets induced. This build up in here getting induced to the low side, but also creates this new channel and is also a shallow. And of course, this one stays inside the channel, fakes the break of structure to the high side, right? All the Koch traders, change of characteristics, they're getting excited about it. But of course, we see this is the inducement of what? Of this channel right here, right? Then of course, we have our main inducement for the day, but of course it's just a minor one if you don't look to the left, if anything is getting induced here, right? Also can be mitigation, but we will dig into that very soon. Then we have this channel build-up, sideways action getting induced, both the sideways action and this channel getting induced with this one. So this is a very juicy one, right? Next channel, what is this? Vector candles. And we had some juicy target to the left also. Of course, we don't see it here, but just trust me in that one. And this becomes a medium one. And of course, gets ended off with the vector candles, right? And the timing, of course, is also very, very juicy. But we will, of course, dig into that also. Then next build up, inducement to the high side. That's the structure point gets induced. And of course, it can go lower. Perfect stuff. So next things, relevant break of structures after the inducement. Next machine appearing, the relevant market structure breaks, inducement high, getting broken here very late though, right? But just technically just in here, right? Or depending of, sometimes again, this is also a very good rule. Sometimes if it doesn't break properly but creates this equal lows, that sometimes is even nicer because of course it builds up liquidity. support traders, they want to see that going on from there on, right? And of course, this one acts then as our proper target. So sometimes these equal lows can be nicer than structure breaks, okay? So just a quick hint right away. This inducement, of course, this is the push, led to inducement, but then, yes, it becomes valid until here, until when? Until it induces this channel with our main inducement for the day at London Open to the absolute minute, 5 minutes off, right? And of course, this zone becomes a smart money trap later on, right? Because the cycle is completed, the main cycle is completed for the day, and we're of course looking for upsides. But yes, if it breaks the structure here, didn't take out this one, comes back here, this gets valid, but obviously later on, no. Okay, then we have this push in here that led to the main inducement for the day. And of course, everything in between here would be juicy entry opportunities, and then we can trade the order flow later on, right? But this also builds up the next channel. So we have to be aware that it will get induced at some point. Sideways action getting induced. Then again, on the 1 minute, it was very clean. On the 5, it more creates like equal highs. And then of course, taps into this zone. We should know already what this is. And then tubes away, builds the next channel, vector candle, next channel, getting induced to the high side. Here's the next structure break. Activates what? The zone. All right, perfect. So with that being said, what's the next step? Mitigation, boom, and we have them all, right? So we had this proper mitigation zone after the break of, technically after the equal lows being formed, right? So very nice trade actually into the inducement low, right? Then we had this zone which got invalidated later, obviously, from smart money trap. Then, okay, technically how you see this, if you understand this inducement, right here of the channel into a mitigation zone, that's also a possible trade you can take, but obviously we'll dig into that way later, right? Then we had our main inducement, break of structure, so unfortunately no clean mitigation zone on the 5, obviously something on the 1 minute going on in here and here and here, all right, perfect. And then we had this Mona trade in here, Mona Lisa shit, inducing the channel, inducing the equal lows, equal highs, right? Perfect, into this mitigation zone, also the inducement of the channel, perfect. And then if you don't like this one, you wait for the internal break of structures into the mitigation, boom, out of it. Then of course, for the more advanced traders later on, this is something we take all the time, right? When you have this extreme, after the vector candle, the whole cycle is confirmed, just screaming it's done, right? Then of course, you look for the lower time frames and it taps back into the extreme and you trade away from the medium inducement as always. And then this minor cycle play, build up, inducement, break of structure, and unfortunately never tapped in here. That would be also proper scaling, but it's very late anyway, so probably staying away from that. So that's the basic simplicity approach for now. So let's give me a quick summary so you understand it properly. So we had the extended liquidity inducement cycle. We always have to start with the build-up, creates liquidity and gives retail traders reasons to open their position. So everyone should be at the stage of understanding, these retail strategies, they're getting built up on purpose, right? And obviously reasons being created for these retailers to taking positions and obviously to place the stop losses at some points. And then of course they're getting what? Induced. So the last impulse to either stop retailers out of their positions already took with the build-up, or is the last impulse to take a trade and open positions. Like if it's with speed, momentum, like momentum traders, trend traders, breakout traders, they're all getting induced into the positions of the inducement. But of course, these people are getting tagged into, they already opened the positions, they're getting stopped out. So the inducement obviously has two needs for them, getting people out of it and getting people in of it, right? Then, of course, the relevant market structure break, that always be optional. Again, it's not necessary. That's why we had the first build-up, inducement, mitigation stages, right? Because sometimes you just don't get a relevant break of market structure, or it will be very late and you don't get a proper zone. So that will always be optional. But for the simplicity approach, you should look for it because it gives you that proper step-by-step guidance to follow something without making anything up. And then last but not least, for this extended lit cycle is of course the mitigation, and that always fills the imbalance, sometimes just a normal supply and demand areas. So imbalance is of course not always the case, but on the lower time frame should be definitely there. But the moment you get really used to it, you also can see the supply and demand zones without the proper imbalance zone. But the imbalances is of course better because they have to fill these imbalance zones anyways, and not only go back to supply and demand areas. And then of course the cycle repeats, and it's all over and over and over again. It's like this infinity loop, this flywheel that speeds itself up and is ongoing literally everywhere, like on a 1 minute and 5 minute, 15 minute. But of course we focus mainly on it on the 5 minute, because as you did see early on, we can see the perfect full day on the M5 from start to end. So that's why the M5 is the absolute Mona Lisa time frame to make our analysis. And then of course later on we can add higher time frames as well. But for the simplicity cycle, for the extended lit cycle, always stick to the M5. So the simplicity approach checklist though, right? So you can write that down or whatever, make a screenshot if you can, because it should be blacked out somehow. But best is anyways to take notes. Handwritten notes are the most efficient ways to learn stuff, because you write stuff down and not only seeing it and hearing it, but you actually use your hands and write stuff. That's the most efficient way anyways. And as you already can see, we only are at stage 4 for the overall simplicity approach checklist. So already seems pretty damn good, but we still have another 4 steps to go. And you will realize it's only the first part of it. How crazy is that, right? So we write here part 1 of our beautiful factory approach. And guess what? We will complete the whole factory very soon in part 2 in week 3. And of course, we'll show you all the other steps to simplicity approach, and you will absolutely be blown away. But already you can see of how crazy clean it can be, of how structured trading can become, and how clearly you can see it. Isn't that freaking crazy? Think about it, it's week 2 and you already see how the market works. Isn't that insane? So week 3 we will finish, of course, most of the simplicity approach, and then we will finish it off in week 4. And yeah, it is a hell of a journey ahead. For now, get really used to it. Like, get the build-up done properly, see the inducements, get used to these relevant breakout structures, and see of how to tap into mitigation, or sometimes even stay away from the mitigation. But at least you have the eyes for it, the visual eyes for it, to see what's going on there, and then we can build up on that. So do a lot of practice on the build-up, because again, everything starts with the build-up. The whole machine starts with the build-up, right? And that has to be your focus. You have to identify the build-up and see it from 50 miles away. That's why we give you so many examples of it, so you really get used to it. Because you get the build-ups wrong, the chances are that you get the inducements also wrong. Okay, so train your eyes and make a shitload of tasks of identifying the build-up, and you will have a solid foundation moving on. So now do your tasks about finding the build-up, inducement, breakout structures, and mitigations. Have fun, learn a lot, and we will catch up in the next topic.
Alright, so now that we've gone over the simplicity approach and introduced you guys to it, we may as well hop right into some examples. So, obviously, when we're looking at this day here, this is EG on the 10th of June. You know, it can look a little bit daunting just looking at the day as a whole. So, what do we have to sort of help ourselves? Well, we've got the simplicity approach. So let's start with the first step. So what is the first step in our simplicity approach? It is our build-ups, right? So what do we want to do? Well, we want to identify the build-ups. If you can't identify your build-up, then just stay away until you can. So let's look at this. Obviously, within Asia, we're going to have our build-ups. There are some that I have not included, so I'll just draw them on as well. But obviously, we have our little build-up here, induce to the downside so that we can continue higher. And then from here, we also have little build-up. Again, these aren't really things that you trade, but we'll just show them. And then look, over all of this, we've got this larger build-up, yeah? Prices moving between this channel right here. And then coming down, we see, okay, we see this. So we break out of this build-up. What does this mean? Well, this is a build-up like this. So when we break out to the downside, where people are going to be looking to take this short, the retail traders are going to be looking to take this short. So, you know, that's already a little hint for what's to come. This has other confluences to it, but I don't want to like give you too much right now. We're going to give you bits and pieces of the simplicity approach, and then when we teach you a bit more, we'll give you the full simplicity approach, and you'll see how good it is when it all comes together. Right, again, we have build up into inducement high, and then again we have this build up into inducement low, also inducing Asia low over here, and then again channel build up into what? Inducement low, and then again channel into inducement high and channel into inducement low. So we've identified all of our main build-ups, and like I said earlier, if you can't identify the build-up, then just stay away from it. Don't panic, just wait until the build-up becomes clear, and then you can start to like realign yourself. So after we've had our build-up, what do we have next? Well, we need to identify the inducement. What does the inducement do? It either stops retailers out or it makes them open a position. Sometimes it does both, and that's the best, but normally it has to be doing one of those two things. Also, you'll see me bang on about it a lot, but it's very good if you see an inducement with, like, in this case, rapid movement or like rapid momentum, like lots of speed, because what that does is, imagine you're a retailer, right? And you've got your, let's draw it out. So you've got this right here, and let's say you're a breakout trader. So when these highs get broken, you're looking to take the buy, right? And then what is going to entice you into the buy better? This kind of price action where it's slow, or this kind of price action where we've got boom, right? Just imagine that's just like one big candle or something like that. This is going to cause what? It's going to cause FOMO, but not just like FOMO. Let's say that everyone's got their emotions under control. This will also be an additional confluence for the buy, because this shows them, momentum is on my side. Yeah. So even if they're not trading with emotions, this gives them another reason to take the buy. So this is what we like to see, because then we can look to take it in the other direction. Okay, so let's show our inducements, and let's look at our inducements. So, right, let's look at this. So our first inducement is inducing high, right? And although it's not like the best vector candles, you can still sort of make it out. But let's ignore that, and let's say, that's in Asia. We're not going to trade Asia. Fine. Okay. So now we have build up into inducement to the downside. Suddenly, if you look at the build up, so from this point, it's doing its thing, and then we have these two vectors bring the momentum in, and now people are getting interested. And if you want to be really advanced, notice how this inducement here leaves what? What is this? Well, this is liquidity. So this is also a hint as to what we could possibly expect later on. So now we induce Asia high. That's just a minor inducement. I believe we also induce something on the left over here, but even if we don't, that's fine, because look, we have our build up into inducement. What are these? Vector candles. Perfect. So now, if people were not enticed into buys here, they were enticed here. And let's just think a little bit about where their stop losses are likely going to be. Well, if they enter here off the breakout of Asia high, then their stop losses are either going to be at the equal lows or Asia low. So now we have an idea about where we should be trading towards. So again, look here, we're giving what? A false reaction. This is nothing to worry about. And this is actually further enticing people in, because look, if you turn it off here, so let's ignore all of this. Oh, sorry, let's ignore from this candle onwards. So we're just looking at this first grey candle. Look at this, right? At one point, this would have been just a fully bullish candle like that. And that would have been a likely confluence for any support and resistance traders, you know, the double bottom traders, or triple bottom in this case. That would have been a confluence for them to buy. So they're getting enticed in here. We know that this is just resting on liquidity, so we've got nothing to worry about. And then look, we build up here. Then what are these? We have a series of vector candles inducing to the downside. We induce Asia low, we induce the double bottom, triple bottom, and now we can look to trade away from this. But where should we be trading towards? Well, we've induced low to go high. So what are they going to do? Well, they're going to engineer liquidity, which is what this is. Again, we come up, we induce a little bit high, but overall we know that our target's up here. So then we give build up into inducement to the downside of this channel. You see this channel here, we're inducing that to the downside. And what are we doing? Mitigating our inducement. That's for a bit later on, and that's a later step, but still, then we see it all over again. We're giving our build up inducement and then push down, and then again we build, we create our equal highs before taking them out with what? Vector candles. So this is our inducement to trade away from. But after we have this inducement, we go straight into a build up, and now we have inducement to the downside. Yeah. So that is the second step, which is obviously inducement into mitigation. So what is our next step? Well, our next step is, this is obviously optional. You don't have to use structure, but if you are going to use structure, you want to apply it after you've, not before, but after you've had your build up into your inducement. You never really want to be using structure before you've had either of those things, because it does provide, and what you'll see is a lot of members in the lit community trade directly against structure. So if you are going to use structure, you have to apply it in the correct way. And you need to be very careful if you've had a BOS, but it's actually an inducement of liquidity and now it's coming against you. So I will show you some examples of that as well. But right, so the BOSs are the purple ones. So let's go over this. So we have, right, so why would we not look at this as a BOS? Well, we've had an inducement to the high side. So we need to be very careful. Firstly, we need to be careful of taking mitigation from here anyway. Why? Because this is just liquidity. But even more so now that we've induced to the high side, they're going to want to come down and induce to the low side. So we need to be very careful with considering this BOS right here. So again, we have this BOS. Where would our potential mitigation zones be? Here. Obviously, this is another reason why waiting for BOS can be not so good at times, is the BOS often comes late, right? So in this case, it's come late and it's not given us the entry. The only entry on M5 would be this right here. Now, that doesn't mean to say that every time you see something like this, boom, 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 that's an entry. There will be lots of confluences for you to take this. You don't just take it because you see, oh, build up, inducement, and then here's my mitigation. That's not what we want to do. We want to stack confluences in our favor. Right, so now that we've induced to the low side significant liquidity, this is liquidity that was built up throughout the day, right? These are our equal lows, and this is Asia low. So this is a lot of liquidity. So now, yes, this is an inducement, which does cause a pullback, but we have reasons to understand, okay, maybe this break of structure here is valid, and maybe this becomes a valid mitigation. Same with here. So now we've mitigated the inducement. This is your internal break of structure, and maybe you wait for price to come back here, or maybe you have some confluences to get into it up here, right? And then you see we have no break of structure here, and then our break of structure here would be this. All right, perfect. So we've discussed build up, inducement, break of structure. So what's next? Well, what's next is our mitigations. So next up, we have mitigations. So I'll just read this very quickly. Price fills inefficiencies, imbalances, comes back to a supply or demand area and provides you with a point of interest. You know, maybe something that you're either going to monitor and then look at lower time frame confluences, or just take a straight limit off. So this is what it looks like with our mitigations. So again, here we have our inducement high, potential mitigation. Again, bit tricky because this would technically be our BOS if you were trading that, but we know, okay, this is our inducement. So we need to be careful because this is just Asia high. This is not something that we expect to hold. It obviously can, but we don't expect it to hold, right? And then we have this inducement to the downside. This would maybe be a potential mitigation if you got something like this, where, you know, it comes back to it pretty much like immediately. You don't want to take this after we induce Asia high. Why not? Because look, this is resting on liquidity. So this is going to become a trap that we don't want to take any trades from, right? Next up, you've got this potential mitigation, but you also have this one after your BOS. And this is something that you do need to be careful of, because once we've induced to the downside, yes, you can still take this mitigation, especially if you have your inducement high into, you know, vector candles, into timing. You can take this mitigation, but you should not expect this mitigation to come past here in this case. And why is that? Well, where is our most significant inducement? That's going to be this one, right? This is all of the liquidity that has been taken, and here we've induced it all. Whereas this is just an inducement of Asia high. So obviously we can't see high time frame. We'd have to take that into account as well. But from what we're seeing here, we can understand, okay, this is going to be the more significant inducement that's going to take us higher, right? So if we are taking this inducement, we have to understand this mitigation. We have to understand that we are actually trading a likely smart money trap, because if smart money take this trade, where are they going to TP? Down here, right? Or possibly even lower. So we know, okay, this is not reasonable, and this mitigation here, especially when we have build up and also build up here into inducement, into mitigation, all within timing. Again, we'll get into that a bit later on. Don't want to overwhelm you, but it's important that we understand why this is unlikely to go and create a new low. So yeah, we need to understand why that's unlikely to go and create a new low. Also, one thing that you do need to consider is if we could see higher time frame, maybe the higher time frame does dictate the, okay, we've had like a higher time frame inducement and we can go lower, but in this case it didn't. So that's why when we look on the M5, we can see like, okay, this is our most significant inducement. We should be trading away from this one. But all of these mitigations should make sense. Again, here you can take this. In all honesty, if you do take this, this would likely be a possible loss. Also, this is very late in the day and it's not really a time that you want to be trading. This is going to be around 4 p.m, around 4:30 UK time. So that is just something to consider. All right, perfect. So next, that was that example, but obviously we've got so many more. So let's jump into some more. Why stop there, right? Right, Euro GBP on 24th of May. Now this can look a little bit confusing if we just look at this as a whole. What am I looking at? What is this? So what do we need to do? What is the first step? The first step is to always look for our build-ups. So if we can't, like it says, if you can't identify your build-ups, stay away. It's as simple as that. We don't want to be getting into things due to FOMO or anything like this. We want to make sure that we're taking the best trades and we're not just letting our emotions get a hold of ourselves. So we always want to identify our build-up first. So let's do that. And let's go over them. So Asia, to start off Asia, we had this little sideways build-up. We induced to the downside again with momentum, and then we came up and we induced to the high side. Right, from this point on, we built this channel right here, and then this is the end of Asia. So coming out of Asia, we build some nice little equal lows, and then once we get into our first timing, I don't want to go too much into it, but this will be Frankfurt open. You can see that we have what? We have vector candles into an inducement low. Perfect. We then trade away from that, and then we go into another little channel higher, and we induce this channel to the downside. So now that we've induced this channel to the downside, what are people going to be doing? Well, they're going to be selling with their stop losses at this high. So what happens? We smoke right through it. Simple. Again, I don't want to get into it too much, but this is another timing. This will be called magic minutes. One, the first of them. Right. So now we have induced to the high side and we begin again. What's this? Well, this is our build up phase, right? And look at how we come out of the build up phase. Inducement to the downside. Again, I can't tell you exactly, but I'm pretty sure this is another timing. This will be MM2. If you want to go and look at the day and just clarify for me, I think it will be around 11:30 UK time. So we now have inducement to the downside, but look, there's even more, right? We channel, build up, very similar to this over here. We even get the creation of equal lows. We get a wick, perfect, wick down, get all of the people into premature sells, and then we continue in the intended direction. And look here, right? Again, what are we doing here? Faking the reaction, faking the equal highs. Oh my God, all of the resistance traders are getting in. Look at that. Look at look at this. That's going to entice them in. Now they've got, oh yeah, candle confirmation as well. But we know better. What happens? Boom. Induced. Okay. And then again, we wait for our build up. So where's our build up? Okay, perfect. We've identified our build up, inducement, and then rinse and repeat. Build up, inducement. Okay. So obviously, what is our next step? We've shown all of the build-ups, apart from like this one here, but we understand, okay, this is build-up of equal highs, this is an inducement of these equal highs, we understand why we trade away. Okay, so what do we have now? Well, now we have a inducement. So our inducement, again, this is the last impulse to stop out retailers, or it's the last impulse to make retailers open their positions. Obviously, if it does both, so for example, let's say we've got something like this, that's our double top, so people are already in sells, but then you've got breakout traders who are going to enter buys when this gets taken out. So as this comes up, boom, let's say their stop losses are here for the sellers. So the sellers have been stopped out. The breakout traders have now entered with SLs down here. So what is the ideal situation from this? Boom, and we take out. So this move brings in breakout traders and stops out the like support and resistance traders. So this would be like an ideal inducement. Okay, so let's jump into this and see any examples. All right, perfect. So here, what do we have? Well, we've already identified the inducement high. We trade away from that until we get an inducement low. This was our first build up. So we have build up inducement, but this is just Asia high and it's not within any timing. So we need to be patient. We then see, okay, price is building up again. We get our Frankfurt open inducement. Again, you can go and check that. And now we begin to trade away, right? Now it looks good. Okay, so we're trading away. Again, we do induce Asia high, but we likely have something on the higher time frame or some liquidity, or even we know that this is our main inducement for the day and we should be trading higher. So we've had our build up. Again, inducement high, they induce high to induce low to go higher. And then again, vector candles, lovely, induce high. We get our pullback until we have this channel. We break out of the channel, induce to the downside. So now we need to be careful about entering sells because we know, okay, we're likely going to come up and take this high. Again, build up. So if you didn't get in here, you've got your build up, your inducement low, and perfect equal highs into mitigation. You take that up to here. Obviously, lower time frame refinements, and this is not the best RR. So it'd be like a 1 to 2.5, but there's something in here as well on the M1. I'm sure you've probably got like an entry helper confluence. Okay, but I don't want to dive too deep into that. I want to allow us to get through all of this. So again, build up, with the equal highs. Give the reaction away, because for it to be liquidity, they have to show it. People have to be able to see, okay, these are my equal highs. This is my candlestick confluence. So now I'm going to be entering sells. And then what happens? It comes up, takes them out before going in the intended direction. Okay, so this is our inducement high that we're now trading away from. Perfect. And then again, build up into inducement low, and now we're trading away, and then again build up into inducement low, and now again we're maybe trading away, maybe not, because from like this point onwards it's very late in the day and they could just be building liquidity for the next day. So at this point you're best off just waiting for Asia. Okay, I think that covers all of these inducements. Obviously we would have possible entries here, definitely an entry here. This would be a very nice trade, but I don't want to go too much into entries. All right, so next we have our break of structure. Again, it's optional, but let's see where the breaks of structure are in this example. So this is what I mean. In this example, it would have been quite nice. So we obviously have our inducement high into our channel, into our inducement low, with again re-inducing low after our build up and our vector candles. Okay, also timing, like I said. So now we have what? A internal break of structure after our inducement. So now things are getting a little bit juicy. So we can set our limit right here. Boom, boom. Mitigation instantly gone. Okay, so this would be a very nice trade. You'd be very happy getting in this trade. And then again, we have build up into inducement low for it to continue higher. And now we've got build up, inducement, and then this would be the point where you'd have your internal break of structure again. So we potentially want to see some kind of mitigation within here, but nothing is too nice, to be honest. There's nothing too nice for mitigation because the majority of this is filled. Maybe you could find something on M1 that's quite nice, but in all honesty, I don't want to go into that too much. I want to be pretty, just want to stick with what we're doing right now. So perfect, right? Then we've got inducement high. This is the push that led to this high. So this would be our break of structure. Now, potentially there is something nice in here. And maybe this is confirmed by the entry helper, but we're not going to go into that. We're just wanting to show you the simplicity approach up to mitigation. So you get a bit of a feel for it. You can go away, play around with it and see how you find it. So again, build up into inducement. What does the inducement have? Good speed, good momentum, tricking people into, okay, sells. Now, what do we have? Inducement high, potential mitigation, break of structure, potential mitigation again, except like we said, this is end of the day, so likely all of this is just going to be liquidity for the next day. Okay, perfect. Next up, we have our mitigations. So let's go over them. Obviously, the breaks of structure are not required, so let's have a little look. So here you can see we have our inducement, our mini break of structure, little internal break of structure into boom, mitigation. But again, this is Asia, so you're probably not going to be trading that. But again, this would be the Mona Lisa of the day. Build up, inducement, to the downside, breaker structure high into mitigation on the M5, and look at the push that you get from that. Beautiful. This is likely some higher time frame liquidity, so you know that you can be targeting right there. Again, this would not really be worth taking, but just for understanding's sake, you can take this. There was likely something on M1 as well, but getting in like this is quite advanced, so it's much better for you to wait for your confirmations and get more familiar with the process before you jump into taking all these crazy like inducement and mitigation of the inducement entries, right? Again, here we come out, we induce, breaker structure high, but there's nothing really too nice for us to take in terms of mitigations. Okay, next up we have this would have been very nice if the RR was a bit nicer, because we have a clear target of this high right here. We even fake this out, so you've got equal highs right here. And yeah, this is just a beautiful buy into a sell. Unfortunately, we don't get that nice mitigation that we would have liked to have gotten. Okay, again, here we have build up, inducement low, potential mitigation. But what do we know? We know, okay, we've had a pretty significant inducement high, and then we've had an inducement high again. So we need to be quite careful about this mitigation here. Even if it was early in the day and you were still within good timings, you'd want to be quite careful of this mitigation here, because you'd actually be going against this inducement, and you just want to, this would not be like, this is not, definitely not a straight limit. And also what you have over here, potential equal lows. So this is resting on liquidity as well. So you need to be very careful about that. So that is our second example of the simplicity approach up to mitigations. So I think we do one more of a bit more advanced example, because yeah, obviously we have build-ups, but you can have build-ups within build-ups, and that when you begin to identify your build-ups within build-ups, that's how you get into like the real intraday ping pong of like understanding each move and stuff like that. But let's not get too far ahead of ourselves, so let's just jump in. I'll give you a moment to just look at it. Where do you think the build-ups are? Where do you think are, where would the biggest build-up of the day be? If you can identify that and then identify the smaller build-ups within that, that's a very good step. So let's not delay, let's just get right into it, right? So coming out of Asia, what do we have? Well, first off, we have channel to the downside, presenting equal lows, vectoring down, okay? Possibly even inducing something from the left. And then straight away, we have channel into inducement high, potential mitigation over here, but we're still trading away from this inducement. And then we go into a bullish channel, induced to the low side within timing. Again, I don't want to jump into that too much, but maybe just something to get a little bit excited about. You can see that this is MM1, potential mitigation here as well. You can just sort of see that from the M5. But again, we're still within this channel overall, right? Same thing again. We induce Asia high, but this is just like a little minor inducement to the high side. And then we build a channel. Perfect. A little sideways one. And then vectoring out. Reaction from middle of nowhere. What is this doing? Building liquidity. Any people who have bought Asia high breakout, where are their stops? Likely here or Asia low. So we know where we should be coming to. So build up, channel high into again timing, London close, we'll go into that in a little bit, into bang, inducement low. And then of course we're getting late in the day, so we expect price to just consolidate a bit, maybe build liquidity for the next session, next day, sorry. So perfect, we understand all of that. If you got this build up correct, perfect, because you can see how this allows us to identify those really nice inducements where we can trade away from for a pretty long time and give us some nice direction. Obviously, these ones can be a little bit tricky to catch, especially if you're waiting for your break of structure, because where would it be? Probably down here, right? And by the time that's happened, you've already induced low. So this mitigation up here is like, you can maybe still take it, but you just have to be a little bit wary of it and a little bit cautious. You don't just want to blindly take it, right? Okay, so that is that. So let's jump into the next step. So we've had our build-ups. Now we want to identify our inducements. Okay, perfect. So let's see. Our inducements would be, first off, we obviously got these equal lows. So we induce this to the downside. And then we've got here, we build equal highs. We build this channel, we induce to the high side and also induce to the downside. So obviously this one can be a little bit confusing, but we see like, okay, this is a pretty significant inducement. We've built a lot of liquidity, we've taken a lot, we've possibly had a mitigation, possibly also a higher time frame inducement, right? So, you know, you build up these like the strengths of the inducement, and you can understand why this one just gives a pullback versus this one giving entire reversal. So yeah, and then again we had, so inducement to the downside, we induce this channel to the downside. What do we induce it with? Momentum for this inducement as well. Perfect. Especially look at this candle right here. This would be basically one solid candle, so they'd be loving this, you know, getting into their sells up here, where their stop loss is likely up here, right? So then we come up, we induce high, we take people out of these sell positions, but also we get people into these buy positions, you know, the breakout of Asia. Where are their stop losses? Down here. So that's just something to consider, something to think about. We go straight into a build up, okay, no trade, and then look at this momentum, inducing all of it to the high side before having a little micro, like, you know, you're building like your M1 equal highs. So this would be like a little mini cycle, M1 equal highs into inducement high, all within timing. And then, so all within timing, you've induced all of this build up, you've induced this little minor build up, and you've induced this little mini build up too. Now we know that the people who have in their breakout buys are absolutely loving it, because they're in all of this profit and they're like, wow. So they can do one of two things. Either they go break even, or they leave their stop loss open. So we know that now that we've excited them, there are people who are also going to get in on the break and retest. So we're going to have entries here as well. And because we've had an inducement high, we know that this is likely going to get taken. So what happens? Price crashes down. We fake a reaction here. Faking what? Equal highs. Maybe equal lows, sorry. Maybe they're like, oh, you know, I'm in drawdown, but it's fine. I just re-enter because this is giving me the confluence to re-enter. Again, look, we pull all the way back, London close, likely mitigate something. Where are we going to go to? Asia low. So we have our build up, inducement to the downside before giving our reversal, by. Now, there would be possible entries here. You can just sort of see it from the M5. But again, these aren't entries that we want you to focus on. It's much better to have to get those clean entries before you try and do anything too crazy with these inducement trades, because the last thing you would want is to be caught in something like this where you're trying to guess where the inducement is done and you're taking L's throughout here. You need to have a good understanding of this. It takes a lot of time and a lot of practice, so we don't want you to just jump in trying to take these, because you will get burnt quite a bit. All right, little tangent there, sorry about that. So we've identified the inducements, we've identified the build-ups, we've identified the inducements. What's next? Breaks of structure. Again, this is optional, and it can appear late, so we want you to put a little asterisk by these, but obviously these can be good as well. So first off, very nice inducement low, and then this is the push that creates the new low. So this is our break of structure. So now you can be trading away from this. Maybe you take this mitigation. Maybe you have some mitigations in here that you can take, but now you sort of had it confirmed. We haven't had any inducement high yet, or nothing significant, so you shouldn't worry about whether this break structure is valid, because we haven't induced anything high. So you can relax and take this. And then obviously after we have this one, we have this push down. This would be the break of structure point. Obviously now we'd be a little bit concerned. We possibly think these were smart money traps, which we'll also get to in a little bit, because we've had a significant inducement to the downside. For price to sort of validate these, you'd want a build up into, maybe the next day comes, you get a build up, you have timing, boom, maybe then this becomes a valid mitigation to go lower. And then here we also need to be a bit careful, because this is an inducement, so you'd also class it as a break of structure. I'm sure now you can see why using break of structure is optional, but if you feel comfortable, you feel more comfortable with using it, then go for it. And then obviously here, after this inducement high, we have this break of structure low. So yep. Next up is obviously our mitigation. So let's jump right into that one. So after we have this break of structure, we can take this mitigation. Maybe there's something on the M1 within here as well, and here. But again, you need to be careful. You need to align your confluences. You don't want to be taking random M1 mitigations. So obviously we also have this mitigation, but by the time that we have induced high up here, we want to be very careful of these mitigations right here, because we know, okay, there are stops down here, so we want to be careful about taking them. And then here we obviously have inducement. You maybe take this mitigation. As you can see, not much point in it, because you're not really, even if you take this, you understand that this is a false reaction, and you're not going to be looking to take this to create a new high. But on the other hand, taking this mitigation here would be very nice, because you could take this up to here. Obviously you could also refine down to M1, but these would be more advanced ones as well. So, if you're on the M1 right here, you would be basically taking the mitigation of the inducement, which can be a little bit scary and not advised if you're just starting out. You want to just pick a style and go with that style. So again, we have inducement high, break of structure. So if it was an end of the day, this would be a nice little mitigation, but also if you can just imagine the M1 for a second, specifically right here, you'll see that what price did. So I'll start off drawing it from this point here. So we came down, boom, pushed higher like that, would have broken structure here. So maybe there was something nice in M1 for this, because this was our inducement on the left, right? But again, just showing M5. Okay, and let's get another example in. So, like we've been doing, this is a more recent example, 21st of June, and there are a couple nice things about this. So just to give a little bit of an explanation, obviously you guys aren't at this point, but when you get introduced to the Discord and you have full access, I have a series called The Edge, and this is where I basically take trades live. I take trades live. I show the execution, show where I'm going to go break even, show where I'm partial, where I TP, and all of this sort of stuff. And there are actually some AU trades on this day that are in the Edge. So after you finish the boot camp, you can actually come back to. You can actually go and watch the Edge and see where I took these trades. So anyway, let's get into the simplicity approach. Let me just get up my annotation. Okay, perfect. So obviously, first step, as always, I'm sure you're used to it now, is the build up. So where are our build ups? Well, obviously we have our equal highs here. You can even show your build up of like your channel here with, oh, that is very bad. Let me do that again. So obviously equal highs, the channel here, inducement high, again, channel low, induce this low. So that's an inducement low, but what is it also? Creation of liquidity. And then again, we love our vectors. Again, channel, induce high, induce the equal highs that we created in Asia. And again, what is it? Vectors. We like to see that. This one's a bit more tricky, but I actually did take this trade. I was waiting for this mitigation, but after I saw this get induced, I did get in. And then again, we've got so where are we going to be targeting? Here. Equal lows. They obviously get induced with vectors, and you do get your pullback into another inducement. We will understand why this one didn't work at a later point. And then again, to end the day, we have channel build up into inducement here. And obviously we trade away from that. And then obviously we have our end of day consolidation. So you should know what is next in our steps. We've done the build up. What is next? Inducement, of course. So just to cover this quickly, last impulse to stop out retailers. We all know this stuff, or it's the last impulse to make retailers open their position. I've spoken a lot about vectors. So obviously you want to see the strong momentum, because that gives the FOMO that gives either the FOMO or, like in some cases, the confluence for them to actually enter the trade, because they're seeing, oh yeah, I've got momentum on my side, so I'll hop in. So yeah, obviously it's perfect if it stops retailers out and also causes them to open their positions. Okay, so let's go over the inducements. Obviously, first off, we have this inducement low, but we also see that this does create liquidity. So this is already giving us a sign of what we could possibly look at. Maybe when we get an inducement high, we can look to take it down to here. So again, we induce this double top, nice momentum. You'll know what this box is very soon, but this is basically a timing confluence as well. We like to see inducements within this time. Obviously we have inducement high. And then again, this one's a bit more tricky, but we have little mini build up into ever so slight inducement high. and then obviously we vector down, come out, take these equal lows, inducement low, give a bit of a pullback into another inducement low. This time it's within timing, and then push off. Okay, we've induced low. What do we expect to induce high? Boom. So we induce high, we have our channel build up, we then create equal highs. What's this? Nice little vector upwards, wick it all out, take out any people who were selling from, you know, the equal highs or whatever, and then we crash down, obviously giving our end of day consolidation. So we're not going to trade after London close, right? What is the next step? You guys should know this off the back of your hand by now. Next step is obviously optional. It's our break of structure. Sometimes it obviously does come a little bit late. Personally, I don't use break of structure, but I know that it's a nice confluence, and while you guys are still figuring stuff out, and maybe you're still using structure, or maybe you still want to use structure, we'll obviously show you how to tie that in. You don't just want to be applying it wherever. It's always after these inducements and stuff like this that you really want to be applying structure. All right, perfect. So our breaks of structure are right. So why is, for example, this not a valid break of structure? Well, this is obviously equal highs. This is going to be an inducement, so it wouldn't make sense for us to buy from here, especially considering it lies on equal lows, right? So obviously we've got our break of structure here, and then here we also have our break of structure that you can trade away from. And again, after our inducement high, break of structure low. So that's very nice. Now, for this one, I think I'll maybe touch upon entries a little bit, because, you know, maybe give something for you guys to get a little bit excited over. So mitigation, this is obviously the points that we want to possibly be setting limits or looking for our lower time frame confirmations. So let's just go over the potential mitigations. So obviously we have our inducement low, mitigation. Yep, inducement high, mitigation, or after our break of structure, we could have this mitigation. And if you go onto the edge, it will be 21st of June. Maybe make a note of it to do it after this, after you've got access. You'll see that I actually had my limit here. I put my M5 limit around here. So after we'd gone into like the build up, but once I saw that the build up had been induced right here, I entered here and there was an M1 mitigation right here. Didn't get filled, but I just put my stop loss above here, and I actually targeted, there was a low to the left right here. So that was one of the trades that I took on AU. Yeah, and this was the other trade that I took, again, to down here. This was obviously with a tighter stop. I think this was like 1 to 9. But yeah, these are some very, very nice trades. Now, obviously, this would likely be a break even or even a potential loss. This mitigation didn't give anything, and neither did this mitigation. But obviously, we can see how it all plays. What you want to do, just getting a little bit ahead of ourselves, but I'm sure you guys won't mind. One of the things that you actually want to do is you want to understand like where you're going to be taking price. So before you don't want to be like entering without knowing roughly where you want to take price. So that's just a little tip for you guys. Obviously, we have one more, and then that will conclude my bit of the simplicity approach. So let's go over the last one. This was AD USD on the 16th of June. Again, I had some trades within this. So we will, and they were not on the edge actually. They were not on the edge, but yeah, I'll go over what I took and why I took it. But let's obviously bring some clarity to the chart to start off with. So we're going to go over our build-ups. Right, we've got the first build-up of obviously Asia here, induced to the low side, induced to the high side. Then we begin to channel, bit of a larger channel with an inducement to the downside. And then again, channeling down, we actually induce this low, but still creates liquidity. We come up, we induce high, and then again, channel low whilst we're in this overall bigger channel. You can see we induce that with lots of momentum, vector candles, and then we just trade away to Asia high. Absolutely beautiful. Sure, that makes a lot of sense. Nice and simple. So what is next? Well, next up, we obviously have our inducement step. So let's identify the inducements. We obviously have an inducement low of this channel and then an inducement high of this channel. Again, lovely vectors either side. We then have our build up into inducement low within timing. Again, nice momentum, nice speed. Continuing on, like I said, we've channel downwards, induce low, but also create liquidity before coming up with what? Vector candles, inducing high to go low and induce the overall channel, right? Then we do this with what? Vector candles before continuing higher for the main move of the day. All right, so next up we obviously have break of structure. So where are our breaks of structure? Well, it's going to be here and here, obviously away from our significant inducements. Again, you can see it happens quite late, so you can sort of begin to understand why we don't use break of structure, or why we don't, why personally I don't use it at all, really. But obviously, if you want to use it, there's no harm. Just make sure that you're not randomly applying it, and always applying it after inducements, significant inducements as well. You've also got to consider if we've induced to the downside, but then we induce to the upside, maybe this is not a break of structure and you should not take a limit from here. All right, next we have mitigation. So this is where we can actually get into some of the trades that I took. So yeah, this will make sense. Even this would be, obviously you're not going to trade this within Asia, but just for the understanding sake, we've got our, instant fill right there. Again, mitigation here after the inducement, mitigation here, mitigation here, mitigation here. So where were the trades that I personally took? Well, I took this right here straight off the inducement, and then I got in again off the mitigation. Where did I take that to? Right here. And then I took this sell. I think I took it like this and down to here. When you get access to the Discord, if you want a bit of a deeper explanation, don't hesitate to just ask, because I'm always willing to explain any of my trades, because the main thing is everyone here at Lit is just very passionate about trading itself. I just enjoy it, obviously. That's going to be my bit of the simplicity approach up to mitigation. Don't worry, guys, we've got so much more coming. This is still just, believe it or not, this is still just the tip of the iceberg. But yeah, I'll pass it on.
As you've been taught in the previous modules, the basis of the simplicity approach, I will be showing you a few more examples, again, building the foundation so you can really grasp the concepts of it. It's really key that you start getting this picture in your head because this is primarily the foundation of lit, essentially. So in front of us, we have, of course, got a plain chart. Well, it's not necessarily completely plain. We do, of course, have our timing box here, which was, of course, Asia session, and then London session here, as well as New York. Now, for now, we are going to ignore that again. We're not going to focus too much on the timings. We want to focus on the basic simplicity approach aspect. And then in the upcoming weeks, we will be building upon that. So you can start taking in the information step by step, where it's not overwhelming and it's not too much at once. So on the chart in front of us, firstly, we will be identifying our build-up points. Now, if you remember, that is your equal highs, also known as your support, which is, resistance, which is this area right there. And then, of course, the opposite being your support over here. So your resistance being there where you're selling, and then your support being in these areas where you are buying. So that's one set of liquidity we have there. Again, you were taught this. This is just a basic recap. Then, of course, you have your trend line. Here you are channeling. Of course, you can have trend lines just on one way where it's, say, just sellers tapping against the line, but let's just say in this scenario we also have buyers, so you can see channels more often than not. And then at the same time, your breakout traders, which is where price breaks above a point, let's just say to the left over there, and then of course you get buyers around this equilibrium area to then buy and expect price to continue higher. And then at the same time, we also have the most common one in this recent area in the trading world, should I say, which is of course the smart money trap, and that is essentially your mitigation point of a price action leg, you could say. Again, if you're not so familiar with the smart money trap, you were taught it a little bit briefly in week 1. Don't worry, in the upcoming modules you will be taught it in much more depth, so don't worry if you're struggling to understand. It is a little bit hard probably to unlearn all of these liquidity concepts, because again, it's very much a retail strategy, and if you're already traded this, it's probably going to be a little bit hard to, I guess, veer away from it. But nevertheless, keep repeating, of course, see what you're seeing, and then identify the inducement, and it will be a lot clearer. So again, the build-ups on this chart right here, as you can see, are in the black thick lines. So what we have to the left in Asia is, of course, our buyers of this trend line. Then on this trend line right here, again, more buyers. It's very fractal, so you're going to see it all over the place in various areas. Like people are buying on this line, people are buying on this line. It's not really making sense. Then, of course, we have our trend line, which is the channels over here. As you can see, sellers. Then we have buyers all around this area. Now, of course, this line right here is your resistance. Again, equal highs, whatever you want to call it. I guess in the liquidity term, it is equal highs, which is, of course, price tapping into this line. And then, of course, sellers. Again, same thing here. We have the support. So it's the opposite. People buying, getting that confusion. Exactly the same thing. It becomes so repetitive. Buyers, then, of course, sellers down here. Again, they get trapped, hence why these reactions are very short-lived. Again, same thing, resistance. So we have sellers, then we of course have our buyers. So it's going to be pretty much the same everywhere. In this example, it's pretty much your trend lines, your equal highs, equal lows, or support, resistance, etc. Of course, you also have your breakout traders, which is in areas like this. You could say, you can see the reactions of these wicks. Again, you're going to find this everywhere, but it's not going to sustain. Here and there it does, and that's the illusion, of course, in the retail world of how price sometimes works, sometimes it doesn't, based on your strategy, and hence why it keeps you in the game. So moving on from this, our next stage, after we've identified our liquidity points, also known as the build up over here, is going to, of course, be our inducement. So with our inducement, we are going to first have to identify a liquidity and then the inducement hand in hand. We need to know what price is inducing. So if you remember, of course, to the left over here, we have our trend line. What does that mean? That means people are buying prematurely, essentially. So all of these people here are buying continuously over here. So what price does with the vector candles, you can see how strong this vector candle is. It induces the entire trend line. So essentially this point right here becomes our inducement, right? So we have our inducement low. What does that mean? Price can now continue higher. Again, on a fractal level, whilst price is channeling higher, we're also getting trend lines being built left and right. So also equal highs as well over here. Buyers, sellers everywhere. So you're going to get so much confusion in these areas, buyers and sellers, but this is building the leg. So as price breaks out of the resistance area over here, meaning now these are all induced, it also takes out, of course, the trend line as well as relevant liquidity areas like such. Again, the characteristic that's quite important that can help us identify inducement characteristics is going to be, of course, these vector candles that you can see right here. So it's candles with this momentum. So you have a bit there, and then of course you get your last push up there. So essentially, again, this is your inducement right there, and then price reverses. Now, as price reverses, what does it do? It now takes out the remainder liquidity of these buyers that probably got very excited at this point here, thinking price is going to continue now. Of course, we had our inducement, so it's only going to reverse and of course take out this trend line of buyers. Again, same process. Now we have our buyers over here prematurely, and then of course we have our inducement low. So essentially this support leg doesn't sustain very long, and then of course our inducement low then means price continues higher. It takes out all of these points of structure to the left as they are now irrelevant because we've had a complete cycle of liquidity being induced. Price continues higher, makes this new high. As it makes this pullback, it also creates these buyers of a support line. Again, even here you have these sellers. Again, it's very confusing in the sense when you look at liquidity like such, you're going to see it like this, and that's a lot of the time where retailers get into the market assuming it's a very strong area of resistance or support, whatever you want to call it. Now, at the same time, as price induces this exact line, we have the most perfect vector candles where price shoots straight through it, all down here. Then, of course, we get our inducement low, price continues higher, right? So this is very, very key to understand the basic process of the inducement of liquidity points. So it's important to understand the liquidity. So now price has continued higher. What has it done? It takes out these sellers, of course, being your resistance. We have our inducement high, so all of this liquidity is now taken out. And then, of course, price makes this reaction down here. So all of that, nice, strong reaction. Then, of course, you will be taught this in a later module, how this can be a mitigation, but it's also a smart money trap in that sense. It can be tradable. That's very important to understand. A smart money trap can be tradable, but it's really, really key to understand the targets, and they're usually very short-lived. So it's a very strong target, you could say. So once price reacts from this zone, of course, we get this liquidity buildup being here. Of course, it's a horrible drawing. Let's do that again. So of course, price reacts, makes a liquidity like this, inducement high, takes out these premature sellers. Then price continues bearish, taking out now these buyers, as well as your smart money traders that expect price to continue much higher. They likely will be either at a loss or break even if they were smart. Okay, nevertheless, price continues even further, takes out these points of structure to the left. Now, it's important to understand structure can also be liquidity. Again, you'll be taught that in the advanced modules, more or less near week 7, 8, of how structure points like such can also be liquidity in the sense. So you get, for example, an inducement of this right there, then price continues higher. It's not always going to be a clear liquidity buildup. Sometimes it will be structure within itself. Again, that will be taught much more clearly in the future topics. So if we move forward, what is our next step? Our next step, of course, is the break of structure. Again, we only use relevant breaks of structure in line with the inducement. We must have our inducement first, only for then the break of structure to make sense. That's key, and it's important to never do it the other way around. Don't wait for this so-called break of structure only for then price to then induce you, because that's essentially what most people likely do on Instagram with these fake gurus. But nevertheless, of course, our break of structure is in these pink lines, as you can see. So what happens? We induce high, price then breaks these structure points. Now there is more than one structure point in this case, like for example here, but that is a trap if you traded that expecting price to go higher. So we have got several structure points. The reason I chose this one, because this was the area where price then of course vectored to make the inducement. So I would classify this relevant break of structure to then allow for a mitigation. Of course, in this case, not necessarily a clear mitigation. Nevertheless, it doesn't change the entire process. If we have a break of structure, we may not always get a mitigation. That's just what it is. And that's where inducement trading comes in handy. Again, it becomes quite advanced, so you will get there eventually. Just don't expect to trade inducements like such. So we have our break of structure. Again, we break these relevant structure points. At this point, it is a little bit much, I would say, to break this low right here for them, whatever, pull back into a mitigation. Nevertheless, it's still a break of structure. Again, if we look at this scenario over here, price induces low, it breaks this structure point, which was the last push down. Then of course we get our mitigation over here essentially. So we break structure, we make this new high, and then price continues. Same scenario over here, we induce low, price breaks this structure point, which was those last vector candles, and then of course essentially get a mitigation. Again, inducement high, what just happens? We of course get a break of structure of this area with this reaction. So this is our break of structure, essentially the reaction after the inducement. So we have our inducement high, price continues bearish, we break structure to the left, which essentially is compromised of these vector candles, as you can see. Same process, of course, we induce high, price essentially does break these structure points too. Again, it will be a bit far stretched, but nevertheless take a mitigation. It's the same process again and again. You're going to see variations of it, as you can see in these illustrations to the left. That's exactly what I've been showing you. So essentially you get this one is more or less a, I guess, a harsher reaction like such. So if you had a break of structure only of that point for then price to continue higher, as I drew. Again, these examples are way nicer because they break internal structures like these areas as well. And that's the likelier chance that you will get into the trade. So if we now move forward, our next stage, as you probably heard me say, is of course the mitigation. Now again, mitigation is of course highlighted in these purple boxes. Again, after the break of structure, we then, of course, identify the mitigation. So we, of course, have our inducement high. Essentially, this will be a mitigation. What it looks like in this scenario with this wick is that price mitigated that on the 1 minute. Now, these are 5-minute charts, just for orientation and understanding. The likelihood is, again, if it's already mitigated, it probably won't mitigate again, of course. But again, of course, it's important to understand that that would be your mitigation zone. And that will be a more risky trade on the 1 minute. But nevertheless, we have got other confidences taught later on in the simplicity approach where you can get into those trades. So if we look now on this lower example over here, what we have after the break of structure over here, our only real imbalance is this zone here. That's your mitigation. And then, of course, you continue. Same thing here. Of course, we have our break of structure here to the left. Now, this scenario is a bit more different, I would say, because this is where a smart money trap process would come in of how you can trade it. But of course, it doesn't sustain. It's important to understand your next target and how essentially sells are your pro trend in this case. So you had your break of structure, but you also have your inducement. So the likelihood is, of course, price now will continue and of course break this point. That's what we want. But before price broke this point, now if you remember the momentum mitigation, this is where it comes in handy. What we have, of course, is price mitigate this zone. So essentially it does mitigate after the break of structure here to the left, but we also had an inducement. If we didn't have our inducement first, that is a very valid trade. But because we had our inducement, of course, this is, of course, a smart money trap. Now, the only thing that makes it valid is we also have our mitigation points here. That's, of course, on the 1 minute, hence why it doesn't look very clean. But nevertheless, it's essentially taking a pullback trade into the mitigation. So essentially, this is where your trade ends. Now, of course, it's not usually justifiable if you have poor risk to reward on that. Don't take it, just watch it, of course, and take the sells for sure. Now, even in that process of price building this leg, we get, of course, a liquidity buildup and an inducement into the mitigation, only for price to then continue bearish. So of course, essentially the buys were overall a pullback where you could take around 2 opportunities, being these points here, to take the buys, and then of course sells being pro trend. And as you can see, the sells are far more nicer in the sense there's a lot more velocity in the candles, of course, which is of course important. So that is key to understand. Let's just clear all of these drawings. So I will be showing you another example, again, trying to cement it into your head. It's very, very key. So again, plain chart, what we have over here. So again, ignore the sessions, try to ignore the colors for now, but we're going to identify our buildup. Again, buildup in this case. So if we just start all the way to the left, again, your support, you have everyone buying in those areas. Again, if we look here now, we have, of course, sellers of this trend line. You can see it tapped around 4 times, as you can see. So it's a very strong trend line. Then, of course, buyers, again, another trend line over here, as well as there. Again, your support. Sometimes it looks extremely crazy. It's very obvious that that will be taken out. So again, sellers of this trend line, so it taps up. People are trying to sell, and again equal highs over here where we get this reaction, right? So again, same thing, fractal lows, fractal areas of liquidity. I mean, it's pretty obvious to see this at this point, the equal lows, equal highs, and it's literally everywhere. This couldn't be more obvious right here, all of these equal lows, and how you can literally stack entries to take those sells. But nevertheless, we've marked up our liquidity points. Now it's important that we understand inducements. So liquidity has been marked. Now we have our inducement. Again, purple arrows is our inducement. So what does price do? Perfect vector candles over here, takes out this liquidity. These sellers are now, of course, sad. Again, of course, we continue higher. We essentially make an overall bigger channel over here with buyers in this area and then sellers in this area. So essentially the buyers are pretty happy, sellers probably not. Of course, your support is also probably happy as price now skyrockets down there. Well, they consider it skyrockets, but of course it doesn't. Your sellers here are also sad of this trend line right here, so that's already cancelled. Now technically your trend line, you can extend it literally forever, but it doesn't even reach or anything, so that's of course, yeah, not valid. Marked up my cross. But nevertheless, again, early resistance buyers, whatever you want to call it, then of course they get their reaction. At the same time, you get this, you know, fractal support. As you can see, I'm just going to clear that as my drawings are not so pretty, but you can see everyone's trying to buy as well as sell. You get that confusion at this point in the market. Then we get, as you can see, the perfect candles of the vectors inducing literally everyone is now sad at this point that tried to sell prematurely. Now we've had our inducement. Of course, what does that mean? Price now, of course, continues bearish. We take out these sellers, buyers of the support. They're sad too, so they're out of the market. Again, this is where your breakout traders also come into place, right? Just clear that right here. So price has, of course, from this leg to this leg, it breaks out of this whatever, demand, whatever you want to call it, supply, sorry, to demand. So again, it takes in all kinds of liquidity. People buy off this point, they think it's amazing, continues, but it of course really doesn't continue. But again, that's the breakout trader idea. Maybe you probably know it better because we don't, of course, trade that, but we're understanding where these breakout traders, retail traders get into the market. Again, it's also a smart money trap around this point here, right? So then, of course, we get our reaction bearish. What does this do? We have our fractal inducement low. That's where your breakout traders, of course, get in, continues higher, only to continue lower. Continuing lower. Now, of course, your support buyers are sad. They're out of the market. Again, look at the vector candles. They're so clean. The way price breaks out of this liquidity point. It doesn't even give you a second chance. Well, it gave you probably a few there. But when price comes back, it's over for these people. Then what happens? Of course, we get, of course, this liquidity of sellers and buyers. First, price induces low. Look at those vector candles. Induces low over here, continues higher, takes out, of course, these sellers. Again, look at the vector candles. As price continues lower, it just wants to make another support. So, of course, allows for buyers at this point, only for these two beautiful vector candles, as you can see, to take these guys out too. Then, of course, price continues lower. At the same time, kind of creating a fractal low. So it's also inducement. Don't get it wrong. It just probably means price will, of course, give the illusion of support to continue higher, only for our mitigations to then continue lower, taking out these guys. Of course, this is where one of our cycle plays will come real handy. Of course, I won't mention it now. You'll be taught in week 3, one of the cycle variations of how to trade continuation trades like such, and the continuation of inducements where they literally stack on top of each other. It's just build up, inducement, mitigation. Now, of course, continuing again, you get your perfect lows, perfect vector candles, inducement low, right? So if you just take a moment to take that in, it's pretty clean. Now, of course, that alone is like, wow. So, of course, we're going to stack on top of that with the breaks of structure. So, again, your breaks of structure. Of course, to the left, we're not, again, so keen on Asia session, but it happens everywhere. But, of course, just for argument's sake, Asia session, essentially, that would be a break of structure after the inducement. Your vector candles, of course, price breaks above, whatever, doesn't really mitigate, but nevertheless, it should. Hence why Asia sessions not really are key, of course, at all. It's more for an orientation. Same thing over here. We have, of course, inducement high, only for price to then, of course, break these structure points. Now, this is where it gets a little bit messy. So, of course, your structure points essentially, I mean, I did mark it up there, but that's because it's also support essentially, but ideally from around this point, because that's where price then, of course, continued with the vector candles. It breaks past that, also induces low, right? So this is where you're stacking on the fractal element of build-up inducement mitigation. So essentially, we've had our main inducement here, right? So that's key to understand. We want to trade away from it. So this inducement here doesn't mean we want to buy. It just means if, of course, our multiple confluences allow and the risk to reward prediction is justifiable, then you can take it as a hedge trade or a pullback trade, whatever you want to call it. So that's where it's key to understand that these inducements we have low are forming a continuation. They're not complete inducements. They're just fractal, of course, taking out liquidity points to the left as such. So again, as I was saying, we had our break of structure low of this point there. As you can see with this area, price, of course, continues higher. Essentially, mitigations would be here, but it already mitigated, as you can see. So same thing, price breaks lower. Again, you can call these areas also your breaks of structure to the left from this area, right? But again, it's also an inducement, so I wouldn't really classify as a break of structure expecting price to come in these higher levels. It's important to combine the confluences of your inducement. So that's your inducement. It's better we now wait for a build-up, a proper build-up. So we've had, of course, a build-up over here, inducement over here. Of course, inducement high, which is our prime inducement. So in our prime pro trend, we induced high. Now we break structure, right? Now we can take, of course, a sell, right? So we break the structure. We're getting all these fractal buildups getting induced on the way, but we are interested in sells. So we break structure, of course, price pulls back, then you can take another sell. Same thing here. We've, of course, now mitigated or whatever. We've pulled back from the break of structure. Price can now continue lower. What does it do? It breaks these structure points over here. Again, you would take, of course, mitigations and entries, selling along these lines all around here. So that's key to understand. Of course, your continuations of inducement, again, don't worry, because that's a key one. That's really important to understand. Why does price trend all the time, bullish or bearish, whatever it be, and how you can trade those. Because essentially your retail strategies literally don't work out in any way whatsoever, whether it's your smart money traps, smart money concepts. What am I saying? If you're whatever, Wyckoff trader, I don't know what's new out there at this point, and how they literally don't work and understand the continuations when they occur and when they don't occur, and when intraday is literally the key to everything. So nevertheless, I will stop ranting about that. After our break of structure, we have, of course, the mitigation. So again, mitigation being in the purple boxes. As you can see, the mitigations I have marked up are all pro trend. They're all selling along this line over here. So again, after the break of structure, we have these mitigation points. This is, of course, on 1 minute, hence why they look not so nice on the 5 minute, but nevertheless, of course, 1 minute executions after the break of structure, after the inducement. It's important to understand. So again, here, break of structure, already had our inducement though, of this liquidity. This is pro trend though, so that's very key. A 1 minute mitigation. Same thing, breaks structure now, of course, comes back to mitigate this area here. You can see that's clear on the 5M. Again, we have more confluences that confirm why this was a really nice trade to take like such, and how you don't need to over refine it, right? So then, of course, we get a continuation, and on the way, we get multiple consecutive mitigations. Now, these consecutive mitigations are, of course, confirmed not just by a random mitigation because we feel like it. Same thing here. It breaks structure from this point. Price now pulls back only to mitigate, right? Again, it's the same story again and again. And that alone is 6 trades of selling, right? 6 trades. That's pretty crazy. Again, we have our sessions. We have a few more confluences. Again, be patient. Week 3 will be the one for that. Of course, building on top of the simplicity approach. But it's really key to understand how you can literally take these cells just by understanding the build-up, inducement, mitigation, as well as your targets as well. Again, it's pretty clear to see, right? So I would highly recommend you, of course, re-watch the simplicity approach if you already find it, wow, that's a lot. Whether if you find it amazing, whatever you want to call it, I mean, you should find it pretty freaking amazing. But either way, of course, practice this and learn to see it. Just these 3 stages. You don't always need a break of structure. That's also important to understand. It is an additional confluence, however, if you like break of structures. Now, it's key only when it's relevant, after an inducement. I would highly recommend writing that down. But yeah, nevertheless, I hope you enjoyed my examples of the simplicity approach and how, of course, easy it is when you just work in steps. Anyways, enjoy the simplicity approach, and I will catch you up later.
Okay, and here we are with the summary of week 2. And what a week it has been. Should be very, very brought in a light into the tunnel, and a lot of things should have clicked already. Of course, I got with me our 2 bunnies, Sakbo and Cam. If you just want to say hi.
Hello.
So yeah, we give you a quick summary of what happened and what you should know at this point. And of course, a little questions going on, and yes, you have to put a lot of tasks in. So let's take a look first what we covered so far. So you already should understand, and of course that's not only week 2, that's also the understanding of week 1 already. And just take a look at one speckle of a second. 900 slides, huh? What's going on there already? And that's like just week 2, I think. So I think we're over 1,000 slides, whatever, at this point, and we're in week 2.
Crazy.
So just realize of how much craziness and effort we're putting in for you guys, huh? How crazy is that? So anyways, what we covered so far and what you should understand already. So first things, you should understand like the basics of what's going on with this market in the real world, of how it's like controlled. Again, not conspiracy theories throwing around, but you should understand of how it's being controlled and delivered by Enigma, of how they're using money against you technically, of how they're in control of the money, of how they're using retail strategies to build up, again, this liquidity, and how they build up these strategies on purpose to keep the wheel spinning. Again, sometimes, of course, a triple top will lead to a good trade. Of course, so be a trend line, so be smart money concepts. Everything will lead to a good trade at some point, but not on the long run. Of course, they have to make these concepts work from time to time. Otherwise, no one would ever trade them. Right? So, of course, if you see a double top, it doesn't mean necessarily it will fail immediately. No, sometimes it can give you a reaction, it has to. Otherwise, these concepts would not exist in the first place. And of course, they want to keep the wheel spinning. You should understand also the basics of the basic master map and how it will help us in the overall process. Not of how, again, we will trade these basics. No, of how we can use the understanding of these basics and then implement it in the bigger picture. Again, we digged a little bit, or like in week 2 now, we already showed you the build-up, inducement, mitigation cycle. So you should already understand what is an imbalance, what is a mitigation. We always dig into the build-up and inducement things as well. But you already can see slowly of how these basics can also help us if we use them in the right understanding and the right approach. Then obviously the power shows itself. Then you should understand the difference between minor, medium, and major inducements using the Asia range for your guide. Also understand if it's internal liquidity or external liquidity, of the meaning a different day, like day to the left, or if it's a major inducement taking out a major structure point, and even like medium ones, if it's just a little pullback push to the left. Is it medium immediately? Of course not. You also should understand like what does medium inducement actually mean. Just because it's a little baby push to the left in the middle of a range doesn't make it medium immediately. Technically, yes, it induced something to the left on the previous day, but that doesn't necessarily mean it's immediately medium. So get your eyes and your brain schooled about it to understand when is it actually medium and understand the significance of the structure plays. Then we of course dig into Asia range and how to use it as an intraday guide. And at this point, never ever again, you should not use it in this scenario. Like you should have, let me say like this, you should use Asia range on a daily basis to start the day, and then should also for ending the day with London close and stuff like that. A little bit after that, of course, you can trade a little bit after that as well. But Asia range always sets a new date. That resets everything, and that's where your overall intraday analysis starts from 0. Okay, so get used to that concept of every day you can see in one picture on the M5 from start to end in one picture. And you also should understand of how we now utilize timings overall. Like week 1, we covered London Open and Frankfurt, And now we dig into a lot of more timings, right? So again, what have we covered in week 2? Cam, if you want to take over.
Of course. So obviously the first thing that we covered in week 2 is the lit cycle, where we covered build up, inducement, mitigation, and we also included the option of relevant market structure. And then we went on and we covered the difference between an SMT and an FFS. Obviously your SMT will give a reaction and your FFS will not give you a reaction and will make you say FFS, hence the name. The transition to focusing on intraday trading. Also, we added new timings. So I believe we added the magic manipulation minutes timings, New York trap time, and London close. We showed you one of the daily cycles, which was the lit starter kit. And then we also brought a bit of the simplicity approach. We brought you build up, inducement, break of structure, which is again optional, and mitigation. There's obviously a lot more to that, and we will be getting into that in the later weeks.
Yeah, so very important again. The key learnings, as Cam said, are definitely the daily cycle variation, or the first daily cycle variation, which is the starter kit, in combination with the understanding of how they're using timing and the advantage, and again, for most people's disadvantage, and how they're using also the session opening times with Frankfurt, London Open, where the liquidity enters the market, and then of how they're building up these traps above that. So that's our overall compass, the timings, and then we have the lit cycles to give us even a clearer picture. And slowly but surely, as Cam said also, we started to combine everything with the simplicity approach. And as you also saw, it only was part one of it. So in week 3, of course, that's the true madness also begins and continues. And then, of course, we build upon the. So hope that is very clean of what we covered so far. If not, then just revise everything. You have the recordings. So for obvious reasons, so use advantage of that as well. Okay, let's test your knowledge. Queen Sakba, you have the pleasure.
Hello again. So our first question that you will need to answer is, what is the time frame you will focus on from now until eternity? So remember, it's of course one number, and I'll give you a few moments, of course, to answer it, and you of course must get it correct. Okay, 1, 2, 3. So, of course, the answer is the lovely M5 timeframe. Of course, this is essentially what you will be looking at regarding the daily price action, the overview essentially, and then, of course, we will delve into the M1 timeframe when it comes to entries. However, the M5 timeframe, of course, is the key timeframe. So, question number 2 is, what steps of the simplicity approach have we covered so far? A little hint is it's 4 steps, of course. So that means you need 4 separate answers in order, of course. And I will give you a few speckles to answer that one too. A 1, a 2, a 3, 4, 5. Maybe it might give you a little bit more to think about. So now the answer is build up, inducement, break of structure. Of course, it's relevant break of structure, not random. And then, of course, your mitigation. So that's the key cycle, essentially, that you need when it comes to the lit overall strategy, should I say. And then our next question is, what is the difference between smart money trap and FFS? Now, this one's a key one. So just remember what you've been taught and understanding the difference of each one, essentially. Again, I will give you a few moments to answer that. So the answer is a smart money trap provides a reaction. So essentially a mitigation zone where it provides the reaction, but of course it doesn't sustain, hence it's a smart money trap. Then we have the FFS, which is where it gets blown straight through. So it does not give you any sort of opportunity to enter off. And hence you say FFS. What is that, guys? You're meant to talk.
I just give the proper illustration of how it looks like. So
FFS.
So if it gives like the small money trap, you should expect a little pull back out of it, a reaction, right? And for fuck's sake, it's just blowing straight through it, and again makes you say for fuck's sake, and then obviously
Say it again.
you shout at us because you feel like, oh, that doesn't work. But guess what? You should not trade small money traps anyways, and you should stay away from them. And you should know when they are happening. And of course, you have a lot of rules already to identify them also. It should become also very clearer in the ongoing curriculum. But next question.
Lovely jubbly. So our last remaining question is, what are the main time confluences we focus on UTC +2? So again, it's important to understand that you have the right time based on UTC +2 and convert it essentially if you're using your own UTC. And this, of course, I'll give you a little hint. It is
a lot of times.
Yeah.
So just use the chronological order of how the day actually proceeds and then walk it through your head of what's the first time window. Again, as a quick hint, Asia range is not a time confluence. It's just our intraday guide. So what's the first time window we would be interested to trade in? And then just go on your head. Okay, after this, what comes next? We actually have a bunch of time confluences.
Okay.
It's very, very important. Our compass.
So they need a few moments of no noise so they can think.
Or you can pause the video or both.
Yes, pause the video.
Right, so pause the video. You have to write everything down. That's important. Important
No
question. No. Immediately getting banned. Cheat. Okay, anyway, that should be enough time. I'm assuming everyone paused it and wrote it down. So, Sakura, what's the answers?
So the answers are, our first timing confluence is Frankfurt Open. So that is 8 a.m. UTC +2. The second confluence is 1 hour after, which is the London Open inducement essentially at 9 a.m. Then we have the Magic Manipulation Minutes 1, which is at 10:30 a.m. MM2, which is, of course, 12:30, 2 hours after MM1. Then we have, of course, New York Open, which is our 2 p.m. window, UTC +2, of course. And then, of course, New York Trap Time, which is 3 p.m. Essentially, this is our timing window that we use as lit traders. Of course, it's a 1 hour window. And then, of course, we have London Close, which is at 5 p.m. UTC +2. Now, it's important that the last timing window is usually where volatility runs dry. So entries may not be very nice, or should I say the movement, essentially. So yes, I hope you got them all correct.
No, and it's getting very important also that you get used of how to using these timing confluences, right, for your compass reason. Of course, every day will be different in terms of, okay, sometimes an inducement happens in Frankfurt, sometimes an inducement happens in London Open, sometimes in Magic Manipulation Minutes 1, sometimes it's a complete different cycle variation. But again, not every day can be one-to-one similar. That's why we have so many time windows we have to monitor, and then the cycle and the overall daily cycles, they confirm the rest, right? But so that's why it's the overall compass you have to get used to. And not every day can be the same, of course not. But again, give it a little bit of buffers and you will find the same exact day, which happened yesterday in terms of the cycle variation. It happened like 1 month ago as well, exactly the same. And we showed you multiple examples where it's like virtually identical and you cannot get more similar and closer to that. We will dig also into the cycle variations. Again, for now, you only know the starter kit of one cycle variation, where you have your Asia range, right? Then best scenario, I have Frankfurt, it'll trap something in here, let's say equal lows in here, whatever. Frankfurt traps it, makes an inducement high. That's in your London open window. Magic Manipulation Minutes 1 gives you an entry. 2 in here. Whatever messes around, builds a double bottom. Then New York Open traps the move high. New York traps take it out. And then whatever, you continue like this. And then London close. And you get something in here. And then it ends the day off like this. That's the basic cycle kit. Self-explanatory that this happens not every single day. It can't, obviously. If it would, then it would not work anymore. So that's why they have to switch it up with multiple cycle variations. And also sometimes, again, the high inducement is maybe London Open. Sometimes it's magic manipulation means 1, sometimes in between, whatever. You smarter than a clock and smarter than a box, also with Asia range and stuff like that, right? So we give you a few buffer boxes. You will also get the indicators or the templates technically to show these time windows for you. Okay, you will get the tasks you have to do on the next slide. And before you can do the tasks, you have to write us in Discord. We have like a little channel in there as well. And it should say week 2 usernames or something like that. You have to write us your TradingView username. Just write that in, just send it in, nothing else. We will give you access to the template. We will also make a video where you can find that after this video. But for now, you will get some tasks. And again, the next video then explains of what you should do to get access to the template, where all the fancy timings will show to you. You don't need to draw Asia boxes again. You don't need to worry about match manipulation minutes. We show you exactly how to use it, how to get access to it. So that will be in the next video. For now, write down these tasks. The tasks will also be attached in the next channel and the week 2 channel and Discord. You will also see them here again. So, but for now, just get used to the tasks. So Cam, what tasks do we have?
So the first task is to mark up 10 charts with relevant retail liquidity. Try not to go too crazy with it. Try to, do the sensible ones, what you think makes sense. You don't want to have a very messy chart when you're trading. The next one is obviously the timing based inducement. So that's Frankfurt Open, London Open, MM1, MM2, New York Open, New York Trap, and London Close. You can use the indicator that we'll give you, so you don't have to go and draw up the lines for when they are and all of that sort of stuff. Next up, obviously this one's going to take a little bit longer, so you don't have to do as many, but we'd like you to do at least 5 examples of the simplicity approach up to mitigation. Obviously you haven't learned the other steps yet, so you can only do it up to mitigation. That's 5 full days. And then we want you to do some examples of SMTs and FFSs. That one should not take you too long. And then this last one is going to be quite a big time sink, and that's going to be 5 fully detailed days, starting with Asia session, with the simplicity approach in combination with both Asia range, our guide for the day, and the timing confluences. So that's going to be Frankfurt Open, London Open, MM1, MM2, New York Open, New York Trap, and London Close. So you can see why that's going to take a while. Obviously, these are just the tasks that you have to do as a minimum. This doesn't mean that, oh, I've done 12 markups of charts with relevant retail liquidity. Is this fine? Absolutely. You need to continue to do more and more. So maybe let's give some examples of these tasks. Perfect. So as you can see, this is just a fairly basic one, just showing us the timing inducements. So you see we have an inducement at MM1, inducement at MM2, New York Trap time, London Open inducement, MM1 builds equal highs with something on the left. New York Trap, we can see lovely inducement, and then we also have our London Open, London Close mitigation.
Yeah, and then of course get used to it already, make it a little bit more detailed also. Just show us what you know, the build up, awesome, breakout traders entering here, of course, inducing Asia high, timing, match manipulations 1, London Open stays inside. Just make it detailed for us so we can really see what you see, and so we can correct you, because if you don't make it very detailed, again, as Cam said, don't make it too detailed. Don't like oh, that's equal lows, 2 wicks. Oh no, like that's too detailed. Again, focus on the bigger picture. And again, that's something like build up. Okay, that's okay. That's okay. That's an inducement high to go lower into mitigation. Perfect. That's a new build up. Getting induced low a little bit to go further, breaking the structure, inducing people the wrong way direction. Does what? Mitigates in the order flow. Never took out Asia low. Perfect. Goes back, builds the equal lows in here. Again, channel being built up in here. Perfect. The day is over. We're not that much interested anymore, but they can make something like this also. Again, but the next day is more important. Build-ups, vector candles, again, whatever, giving like this fakeness in here, a little build-up in here as well. Again, there's your break of structure after. Again, Asia in this scenario induced all this liquidity already. Again, then showing, again, build-up, induced. Same thing literally as it happened here. Happening here also into the mitigation, order flow, perfect. London open inducement, of course, inducing this triple bottom and Asia low of the next day, medium inducement, boom, trading away. When does it happen? To the absolute minute. What a surprise. Then if you have trading view open, of course, you have to look to your left also what's going on there and stuff like that. And show us the New York trap reversal with timing, with the equal highs or whatever, this build up in here. Perfect, getting induced, boom, boom, boom. London close, mitigates, rule set perfectly aligned. You see, you can make it way more detailed. You have to go too crazy with it, but something like this for the 5 detailed ones, right? Such as maybe a little bit lighter one. Sokpo, if you want to go with that one.
Okay, so in this example, we have the example, of course, being the London close inducement. So if we go in the beginning of the day, the generic understanding is your build-up, again, in the form of a channel in this scenario. Again, I'm briefly drawing it. And what we have, of course, is London open inducement of Asia high being here. Then what we have, of course, is price then, of course, has its reaction. It starts inducing these greater levels of liquidity lower right there. What we have, again, perfectly is these equal lows. You can see it's tapped quite a few times over here. Price reacts again, this becoming our build-up, essentially. And then what happens? New York trap, perfect inducement low of Asia, as well as it being equal lows. What happens next? We get these mitigation areas in here, as well as equal highs over here. Price induces with these nice vector candles. And then towards the end of the day, again, 5 p.m. UTC +2 being London close, we of course get the inducement high, taking out everything to the left. And then, of course, the reaction bearish, with a mitigation zone, of course, to enter off. Again, it's important to be conservative of your TP as it's the end of the day. Of course, volatility runs low at that point. So essentially at these mitigation zones like such, you can, of course, close your trade.
And then to show you an example of the simplicity approach markup, Cam, if you want to do that, Sokpo, if you want to remove, or let me remove it for you. Okay. So, and as you see already here, it doesn't need to be too crazy. As you can see, that shows everything we need to see in order for you, first of all, that you understand what's going on. You don't make it too crowded. But Cam, if you want to cover that.
Of course, let's go into it. So obviously we're showing you it at step 4. We're not going to go step by step, but let's just go through it a little bit. So in Asia, we build up our long trend, build up also these equal lows, channeling. And then coming into London Open, what do we have? We have our inducement. Okay, then we can look to choose possible mitigation areas. This one would obviously be without your break of structure, but your break of structure would be down here. And then you get another potential mitigation right here. So we're trading away. Then we identify again. What do we go into? Another build-up stage. We induce the build-up to the downside, and then we induce the build-up to the high side. We come down, we build equal lows. So an entry like this would have been very nice, but as you can see, just missed, happens, but that's fine. We get another inducement to the downside, building equal lows. We've also got Asia low on the left. So we can be quite confident that this is going to be a false reaction from this. Then we have this mitigation zone, lots of imbalance, price comes back in, taps the mitigation zone, and then break of structure again to the downside after our mitigation. And then we can begin to play order flow until at least here, maybe, oh, sorry, I see the wick, at least here. Maybe we even have targets lower, and then again, one final build up before we induce low again.
Exactly. And that's all you technically need to show us. And you see, everything is in there. Again, maybe just also This baby Vic in here, Cam probably didn't see, also led to the break of structure that what makes this zone valid for now, right? But just show us the stuff so we can see, you understand what's going on, and don't make shit up. Again, like don't go too crazy with it. Just show literally what is there and don't go too crazy. Again, that's the key to keep it simple. That's why it's called the simplicity approach and not the too crowded, going insane approach, right? So then maybe one last example, and then I think everything should be clean, right? So for, again, that's already a little bit too much, right? In terms of this, we just want to show that's a little bit too much, but you can see still what's going on. Then keep it simple on the day of the Asia range, right? Just one channel, perfect, getting induced to the high side to go what? Breaking the focus structure, induce people long. To do what? Induce with vector candle. So you go here, make an arrow and say vector candle, right? Perfect. Timing. Oh, what a surprise. Next channel, getting induced low. To do what? Vector higher. Perfect. Didn't take out Asia high. So we know, okay, it should still go higher, but at least it's good for a pullback. The pullback has what in it? Equal lows. What a surprise. That's your buildup. That's your inducement low. That's again your internal buildups, baby buildups, into inducement, into mitigation, perfect. Another channel, vector candle. In this case, we had two. Happens also rarely, but sometimes it happens, especially if you look to your left and there's not a clean target you can take out, right? So sometimes they give this fake, whatever, technically not fake, but very nice vector candle. But again, that's why we have the break of structures in place also, and then leads to a new high, and this becomes 100% your small money trap then. This is your potential area you would be interested in, and then the cycle is completed in here. But you see, simplicity, that comes to power. The power literally comes out of simple stuff. Same thing with the smart money traps and the for fuck's sakes. Just show us that you understand it. Again, if you have this imbalance zone in here, smokes right through it, for fuck's sake, perfect. What is this though? Asia low, right? Again, double bottom in here, or even triple bottom, or even quadruple bottom if you see it like this, right? So guess what? Getting tapped after an inducement smoked the for fuck's sake into timing aspects, right? Looks more like a Frankfurt in here, but we have like the quadruple bottom on the bottom. So of course, this will not gonna hold. It will give a reaction though, induces the areas, induces high to do what? Go lower, right? Show us that stuff that you understand it. So the same thing as this one. Smart money trap because it gives a reaction. The whole thing gives a reaction. So smart money trap. But guess what? The next imbalance area gets completely smoked, becomes a for fuck's sake. So just show us that you understand these differences. Look again through the task. They should be in the description. And you also should have by now then the template for it, right? So look first, before you do the task, go to the next video. It should show you how to put in the name in Discord, how to use the template, and then the charts will look exactly beautiful as ours with these beautiful colors, beautiful boxes. Everything is automated. You just have to put your time to UTC+2 as well. But of course, we show you everything in the video. So enjoy the tasks, put them in properly, and enjoy. Suck Cam.
Yep.
Lovely jubbly.
Enjoy.
There you go. Enjoy the hustle, and we catch up very soon. Have a good one. All right, so in this video, I will show you how to get the legendary timing template indicator, whatever you want to call it. So you don't need to waste your valuable time with drawing these crazy boxes for Asia all the time and all that stuff and figuring out like, oh my God, when is London and when is New York trap time and all that stuff. So of course, you will get all that effort taken away from you with our beautiful timings indicator, so it can look like poof, like this, right? Beautiful. So how do you get it though? So first thing what we have to do, you have to write in the Discord your trading view name. So you have to find out your profile name. How you do that in TradingView, if you're logged in already, you just hover over here and then it should appear. It should says for me, and obviously I'm logged in as RemFX right now. So just one of my accounts, so don't spam me on there. Okay, it's not my main account, so don't even go too crazy about it, right? But just hover over there and it should say your name of your TradingView account, or you can just click it as well. Click this one and then it also should say it. But obviously for privacy reasons, I will not show you this account. Right, anyway, so do that and then go to, let me just show you this one. And just go here and then go, again, I show you exactly how to do it. Then you go just to week 2. All right, so you see this week 2 section in here. Then you just obviously go in here and you see how people making fun with our retail cups in here, which again, by the way, you cannot buy. That's a little achievements you have to get, my beautiful chopper brothers, right? So how you do it then you just write in, hey, and then you add a black belt, right? So you say black belt. And here is my TradingView name, right, for the timing template. And then you just say your TradingView name, whatever. So that's the name, okay, for whatever reason, interesting name. And then you just send it in. Hey, woo, that's it. Okay, and then you just wait, and the moment we give you like this check mark, boom, then you know it is checked. So the moment you see this check mark, I just remove it now, right? The moment then you see this check mark, that means you already got access to it. So we gave you access. If there's no check mark yet, then there's no access to the template yet. So the moment you see this check mark, then you know, okay, I can come back to my TradingView. Perfect. And then how you get access to it is you just click on here, whatever language you have your TradingView on. That should say something like indicators or whatever. Then you just open this. Okay. And then it should say on invitation. So that's German. It just means on invitation. And just click on this. Then obviously you see one of the other accounts we have. And then you just click on this. So you see we already have the entry helper and the timing. Okay. So the first one you will get in week 3 is obviously timing. Week 2, right? So for week 2, you obviously get the timing one. And in week 3, you will get the entry helper. Okay, so for now, you only will see the timing one. And then for week 3, it's the same process. And then you also will see the entry helper in here. For now, then again, the moment you see the check mark on your TradingView on the Discord message, you see the timing in here. Just click it once, just like this. Okay, that's all you have to do. That's it. And nothing more. Then you just close it and you already can see magically the beautiful boxes appear. And then again, here you also see I had one on as well. And here now, second one I just included on is here as well. If you don't want to see it, you just click this eye. And if you want to edit it, because you can play around with it as well, you can either press this wheel in here just for the settings, or you can obviously double click it as well. And that gives you all the settings. You have to play around with it. If you say, whatever, I don't trade a London session for whatever reason, then you just say, okay, I don't want the London box to disappear, to be visible. Or if you say, oh, I don't care about magic manipulation minutes too much. And again, here you see magic manipulation minutes would be these gray lines in here. If you say, oh, that looks like a wick to me, it confuses me. If I have like a thing in here, I don't want to see timing to the minute, then you can untick the magic manipulation minutes, and then these lines disappear also. Same thing for London close. This purple one, you can say, I don't care about this one, right? Then it disappears as well. Definitely, obviously, you have to let Asia session ticked, because that's the major one. And this one, the shift time, that is for daylight savings. So if that will appear, obviously we'll let you know. Then you can change the settings. Overall, if your time is at UTC +2, that should already be adjusted. Again, just double confirm for yourself go to TradingView here, confirm that you are on UTC +2, then go to Asia range where it starts, and then just look on the bottom, the timing, and Asia should obviously start at 11 p.m., right, like this. And if this matches for you on the UTC +2 timing, then everything is correct. Again, if you're in a different time zone, just change this timing down here to whatever Berlin or whatever you want. If you want Belgrade more or Amsterdam, then do that. Not London, because that's UTC +1. Okay, so use one of those UTC +2. If you like Malta, choose Malta, whatever. Just UTC +2. Wherever you have the most ladies from, that's perfectly fine to match their time zone, and then just confirm everything is right. Then again, if you want to mess around with that, change the colors to it. Say, oh yeah, Asia line has to be, I don't like purple. It should be green. Then change it to green, right? But here you see the the color themes we use. So if you want to make your charts look beautiful, then stick to hours, right? Then again, you can also have more features of that. Here you can say, oh, I want to see weekly highs, weekly lows. So you can see, oh shit, okay, this one was a weekly low. Interesting. So that's why it smoked through there, because it's a huge liquidity zone. What is that? London knockout. By the way, took this trade, 1-to-100 trade. Perfect. Okay. So not a surprise, but guess what? You can make it even more visible for you as well. And by the way, also these bubbles, they go of course away. So it looks a little bit more fancy, right? So then again, we don't want weekly lows, weekly highs for now. They open price like this line in here or this line. If you don't want it, just uncheck it. Then you can whatever boxes. No, I just want this one. Obviously you want boxes, lines. No, if you don't want the Asia high, Asia mid. Okay, so you see you can add literally everything you want, and obviously that will help you a shit lot. Gives you the proper overview and the proper guide how we use it, and of course that will save you a shitload of time also to not change drawing in all these boxes, especially if you have multiple multiple currency pairs you look for. Just drag and drop it on all of them and you should be good, but obviously you can change the pair also. It should automatically be on it. Then just one thing, sometimes the timing gets a little issue and it will give you like an explanation mark in here. If that appears, just change the timings and then it refreshes the thing already. You don't need to go crazy about it. If there's like says like error or whatever, no, don't freak out. Just wait a few minutes or whatever, or change the time frames. It should fix itself from time to time. That's just sometimes TradingView wants to mess around. Just again, change timings and then everything should be fancy. Okay, so write your TradingView name in the Discord, wait until it's checked, and then use the timings and never ever dismiss timings just by a minute.